UK hiring data not degrading after 45 months or so of a worse hiring situation. It looks like there's modest improvements. We're watching UK recruiters on the back of that. And GEA Group coming through with an adjusted earnings picture slightly better than the estimates. Watch that company as well, Guy.
Okay, let's price all that in, figure out what it looks like this Monday morning. This is what the opening trade looks like. Let me show you some numbers. FTSE 100 was expected to be down by 0.3%. At the moment, it's up by 0.1%. So maybe not what the futures were signalling. We'll see how it goes in a minute or so and see whether actually it dips into negative territory as anticipated. Stock 600, nothing to see here. Below the surface, there are some stocks that are going to be worth focusing on. We'll get to Tom in just a moment as the FTSE ticks negative. The AEX, I wonder whether it's positive because of ASML. The IBEX is down, but again, not by much. The DAX is up 0.2%. Again, was expected to be flat. I would say if you are really looking for a glass half full kind of story this morning, it could have been worse. We could have been down 0.2%. We're down by less than 0.1% of 1%. Maybe I'm reaching here, but that's kind of the narrative we're looking at first thing this morning. Basically, at an index level, Tom, we're going nowhere in a hurry.
Okay, well, you talked about ASML and what we're seeing on the AEX. So ASML is playing that role. It's currently up 1.2%. So a decent move for a company with a market cap, of course, of that scale and size. On the back of decent numbers coming through from one of its key clients, of course, TSMC. So tech as a sector is up 0.6%. It's the best performing sector so far. Healthcare gaining 0.4%, basic resources up 0.3%. Majority of sectors, though, in negative territory, not by much. Food and beverage is the biggest loser right now across your sectors, down 0.4%. Top of the list, then tech up 0.6%. A bit of a positive uplift coming through from the numbers from TSMC. And again, ASML is playing that part, Guy.
Yeah, it's ASML. In terms of the biggest points gains, it is the biggest points add. But you've also got Infineon doing relatively well this morning. It's certainly helping out on that narrative. Schneider's in there. ABB's in there as well. On the kind of AI data center build out, electrification, transformation sort of story. So all of those stocks are definitely playing their parts. And tech is by far and away doing the heavy lifting. So the banks are quite mixed this morning, which I think is interesting. You've definitely got some downside within the banks, and some of the industrial names are softer as well. So Airbus, BAE, Rolls, these are kind of Safran, those kinds of industrial names, maybe showing some signs of weakness this morning.
Okay, let's get more analysis across these markets and bring in Dan Scott, CIO and multi-asset head over at Untitled Asset Management. Dan, good morning. Thank you for your time. So global stocks back to near record highs. It's a bit lackluster in the European session. We wait, of course, for inflation data out of the US later this week, CPI on Wednesday. What is your level of confidence that global equities can continue to grind higher from here, Dan?
Tom, thanks so much for having me. Pleasure to be on the show again. So looking forward from here, it's a very pertinent question because increasingly you need to get a bit uneasy about the complacency that you have in markets. We still have a cautious overweight on equities, still invested in equities, but if you look at things like non-farm payrolls, you can see that there are some cracks. And it seems like markets are a little bit schizophrenic, if anything. Honestly, things that we've been looking at for years to gauge where we are in the economic cycle, like Michigan Sentiment Survey, which, if we believed it now, would be pointing towards a recession, I think just show that, nowadays you can't just have beta exposure and hope for the best, because very clearly there's a divergence there is U.S. consumer spend, which is actually doing quite strong, but only from the wealthiest segments. And down below, towards the lower ends, is where you see then also what we just learned from non-farm payrolls. You actually have a drop in the number of jobs added. So things aren't necessarily going perfectly all the way through. However, the amount of fiscal stimulus that we've seen and AI CapEx stimulus we've seen has gone pretty much straight to corporate balance sheets. And I think that's why it makes sense that if you look at any of the indices, whether it's the S&P 500 or NASDAQ, whatever index you want to choose, almost the Russell 2, trading at around 20 times. So not necessarily expensive. The question is really just how you want to granularize your exposure there on equities, where the further upside comes from, and then we start having discussions about AI and private credit as we try and deal with the nuances here on how to be exposed to any further upside from here.
Where does Europe sit in that granular exposure then, given the relative resilience we're seeing in the economy, given the decent earnings growth we're seeing for corporate Europe? Where does that sit in terms of how much exposure you want to be getting to European equities?
Yeah, so, I like Europe. We're neutral in terms of our positioning right now to our SAA on European assets. I like Europe just because valuations are not as high here as they are in the US, so there's some valuation upside still. It's more of a cyclical recovery play if you wanted to gain exposure. So the headwinds, if anything, are structural reform. And honestly, for the past 25 years, I've been talking about the need for structural reform in the Eurozone. So I imagine that's going to continue to be a headline, that Europe just lags in terms of the structural reforms it's willing to push through. We haven't reached the political catharsis yet for the Eurozone to really push through meaningful reform. On the other hand, I think that, as energy costs go back down again, and hopefully they will, then the Eurozone at least is able to recover a bit in terms of its industrial recovery. And on the AI front, the reason why it's been lagging is because, on the intelligence layer is where it doesn't necessarily have much of the exposure. But if you take a look at what's been happening to token prices, Google, AI, and Anthropic, they've all been cutting token prices dramatically. And part of that's because of competition from China, like DeepSeek and others. But really, I think what it shows is that you're starting to get a commoditization of the intelligence layer. And it's starting to look like, it's the infrastructure layer where most of the profits are going to be captured. And Europe has plenty of exposure there, of course.
Good morning, it's Guy. We try and analyze these markets kind of rationally, fundamentally. But is that the right framework? Because, again, last week just seemed to prove the point. It just depends on how much leverage the hedge funds, the pods, are prepared to put on. It depends what's happening in the options market rather than what's happening in the cash equity trade. Aren't fundamental investors just being driven by what is happening with those kinds of metrics rather than anything else? They try and sort of act rationally. They try and talk about, the market's being complacent. But we're all being pushed around by just how much leverage there is out there. Isn't that the only way to look at what is happening here and act accordingly?
Absolutely. That's why you need to position because, like you say, money supply, leverage, these things are all driving the markets. And the outlook for these remains fairly benign. Rates really aren't restrictive, are they? And we're looking at a situation where now we're starting to price out a September hike from the Fed. So it doesn't look like things are going to get much tighter in terms of monetary policy. And then you have to wonder, well, so let's look at the health of balance sheets. And actually, corporates still look very healthy on aggregates. But if you look at, for example, lending, you can see that there are some cracks emerging. We've watched it in the private credit space, and that's why issuers are coming back to the bank loans markets. Where you see some cracks, though, is in the triple Cs. That segment is starting to look like, it's not doing as well. And so that's really where the strain's going to come from. It's early days. It's really quite far out on the horizon right now, as it seems.
Okay, so that's the point that John Authers is making in his piece this morning on the Bloomberg Terminal. It's a point that Torsten Slok has been making as well. You look at what is happening in the credit space. Is hyperscaler credit, is AI credit the metric that you want to watch in terms of how worried this market really is, rather than looking at the stock market and using it as a way to judge sentiment?
Absolutely. I mean, I think it has a lot to do with money supply and who's tapping and where we are in the cycle. So if we want to use the dot-com bubble as the playbook here, then we need to be very vigilant on balance sheets and leverage. And so far, things actually looking quite healthy, although we've had a pretty historic swing from massive amounts of cash on balance sheet to being just about neutral, and then starting to tap debt markets. Has happened very quickly. Leverage isn't an issue yet, but it very quickly could become one. So that's something that needs to be watched, because so much of the stimulus for this market is coming from the stimulative effect that you have from that cash on balance sheet having been spent. That's something that creates these massive wealth effects, which then in turn drive U.S. consumer spend and other consumer spends. The amount of wealth being created by this massive spend on a new technology that hasn't really proven itself yet, or at least hasn't matured anywhere close to, that's the thing that we need to watch. That's going to be a rocky ride. I mean, so far it's been smooth sailing because it's just all been big spends. But at some point, it's going to get a bit more volatile. So that's why we'd say the outlook right now for equities is good. Remain overweight equities. Modestly, we express it through an overweight emerging market equity. But it's also time to be looking at income and more defensive ways of being exposed to markets. Because, on a multi-asset portfolio, if you're up 10% year to date, balanced, mid-August, I mean, you're doing pretty well historically, and maybe you shouldn't get too greedy. Maybe it's time to look at some downside protection, at some hedging in the portfolios, or at least running a barbell strategy.
Dan, do you find protection at the long end of the yield curve? What level of yields are you looking for on a risk-adjusted basis? When does the 10-year, 30-year start to look attractive?
Yeah, thanks so much for bringing this up. This is another one that confuses, right? I mean, you see yields up and then the dollar not stronger. Things just not going by the historical rhythms that we're used to. So, I find fixed income increasingly difficult as the, traditional way to hedge the portfolio. Obviously, I still have treasuries and portfolios and other traditional fixed income debt, but the debasement trades, even though it's had a difficult time this year with gold not really performing, I don't think that debasement trade is dead. I think G7 indebtedness forever is a topic. And so therefore, I think really you want to be exposed to liquid alts, whether that is, emerge ARB fund, or whether it is a catastrophe bond or some gold in your portfolio, or just commodities in general, I think are a way to get diversification and some protection for portfolios.
We're going to talk about catastrophe bonds in the show a little bit later on. Thanks for the tease, Dan. Dan Scott, Vontobel Asset Management CIO and head of multi-asset over there as well. Quick look at the core six. This is what is happening. This is the picture we find ourselves with. A story around chips certainly dominating. Louise is going to talk about that in a second, but you can see ASML up at the top of the pile this morning, doing quite well, up by 1.3%. So let's get some more detail around what is happening there. Louise Moon is here with more.
I'd say chips are dominating this morning. ASML, Infineon, STMicro, all the usual big names rising into the green as markets open, obviously on the back of TSMC's earnings overnight and that calming some of those worries in the space. So all higher into the green across Europe. Away from chips, we're also looking at the UK recruiters, so the likes of Hayes, Michael Page, Robert Walters. This is after hiring steadied in July, ending a 45-month downturn for the industry. So boosting Hayes and Michael Page, not quite for Robert Walters, but these two into the green after that. So a bit of hope there for the industry after that report this morning. Sticking with the UK, we're going to also look at Plus 500, the online trader. Shares quite a bit higher, almost 5% higher. Now that is after their first half earnings, saying that it was outstanding. Customer accounts boosted almost 10%. So really, really benefiting their shares up almost 5%. And then finally, a quick look at Vistry, the home builder. There's been a report that one of their credit insurers is cutting cover on some of their suppliers, and that is really weighing on their shares, down almost 7% into the red.
Louise, thank you. On some of the stocks on the move this morning, Louise Moon with that roundup. Coming up, a spate of rogue AI attacks is pushing cybersecurity to the forefront as companies look for round-the-clock defense against the new threat. More on that story next. This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Earnings season is here.
There are earnings galore.
Some areas have done well. Equity trading has been an area of resilience.
Bloomberg is first to break the numbers.
Diving through the details of these earnings.
That is the weakest growth in more than 3 years.
With the smartest insights.
Are we seeing dislocations that point to something a little bit more severe?
If you look at where global growth expectations are, compare them to the start of the year, they're actually pretty similar.
But there is this uncertainty, and we haven't seen it in the results.
Continuing coverage on Bloomberg.
"17 minutes into the equity market session, this is the picture. As you can see, we are not going anywhere in a hurry, to be brutally honest, at an index level. Below the surface there, there's some quite interesting things happening. Chips are certainly where the action is this morning. ASML is leading. We'll come to the details as to why in just a moment. Elsewhere, you've got Pharma having a fairly good morning. Astra's up, Roche is up, having a fairly good day. But it's hard to get a sense at a sector level, other than tech, of anything really kind of giving us a clear kind of line of sight on where we're going.
Well, let's show the European tech names then, because there has been a bit of a lift forward, a bit of a pull forward in terms of the numbers, in terms of the stock reaction on the back of these TSMC sales. We'll get the details shortly, but you can see, as Guy was saying, ASML up 1.5%. You're seeing the Nokia's benefiting, Infineon as well, as is STMicro over in Paris, up 1.7%. So TSMC reporting a 45% rise in monthly sales, in a sign, of course, of sustained demand for AI hardware amid that market volatility that we saw that was so pronounced in July. The report comes after TSMC raised its spending projection for the year last month, when it faced questions on whether its AI-related expenditure would deliver meaningful returns. We're joined now by Bloomberg senior strategist Neil Campling. Neil, walk us through the numbers from TSMC. We are seeing a bit of a lift then for European names on the back of this. It seems to be read positive by the market so far.
Yeah, so 45% for the monthly sales data. Analysts are at about 47% for the full quarter when it comes out. To put that in perspective, for a $1 trillion company, it's a pretty high growth rate. And it's on track to be the highest top-line number since Q3 2022, so the best in 4 years. So that's very supportive of that, helping the chip equipment stocks today in Europe. And for those chip equipment stocks, let's remember that we have the likes of Applied Materials, ASML's closest comp really, reporting results later this week. And we'll get other AI clues from other earnings in the US this week.
Who does TSMC make chips for? Just because this is the critical thing here, really, isn't it?
TSMC are making the AI chips for NVIDIA. They're making the chips for AMD. They also make the chips for the smartphones for Apple. So they're not the memory trade, which is where there's a lot more volatility around. These are the core logic, the brains that go into the AI systems and that go into...
Why are we getting less volatility there than we're getting in the memory?
Because memory is more cyclical over the course of longer cycles. And also in memory, they're all raising their own CapEx forecasts. Yeah. And that's actually going to impact in terms of the supply side dynamics and probably pricing going forward. Meanwhile, AI tokens have come down about 40% from the highs. So the actual use of the AI tokens is getting a lot cheaper. And there's a disconnect between memory pricing and token pricing at the moment. And I think market participants are betting that the sort of supply going up in memory means that pricing for memory, DRAM in particular, will come down over time.
Yeah, over time is the question, isn't it? Over what kind of time frame? TSMC, the read across in terms of sales from other foundries, the likes of Samsung, do we expect Samsung to perform it similarly well in terms of the sales numbers they're seeing, particularly when it comes to the GPUs?
We certainly would, because Samsung also does not just memory but logic as well, and it has a leading edge fab out in the US, giving it a good local footprint in the US market. So TSMC and Samsung are the two leading logic foundries that should be benefiting substantially from this high demand and these high growth kind of estimates that are out in the marketplace. So it's positive for both, and definitely I think investors prefer that to the memory cyclicality.
Okay, so the big question around all is the AI trade back on? Because it was off for a while, and it feels like it's back on again. Is it back on again?
It was off for a while you were sort of sunning yourself out down in Cornwall, Guy. And I think part of it is we got the accelerating growth coming out from Microsoft. So to justifying that CapEx, we had good accelerating growth coming from AWS, from Amazon. So there's definitely some comfort from there. But the big question about when we're going to see these big returns on the invested capital from these hyperscalers does remain to be seen. Not all of them can benefit from the AI build-out, but there's certainly some encouraging signs in the meantime.
Yeah. We'll wait and see. The one note that while I was on holiday, I read was the one from Torsten Slok talking about the fact that basically kind of the growth is still being funded by investment. It's not being funded by sales to consumers at the end of the line, which is you've got to get to that point. It's
like Anthropic. They're looking at, I mean, their sales, their ARR. I mean, the sales are incredible for Anthropic, and OpenAI is not far behind. So you're looking at potentially $100 billion of sales from 10 billion last year. So 10 billion to 100 billion this year for Anthropic.
Is that enough to? Because at the moment it looks like the hyperscalers are cash flow negative. So at the moment, that's where the money's going. It's going up the chain to TSMC. It's going up the chain to NVIDIA. At some point you need to have it coming into the hyperscalers, then going up the chain. That seems like the missing piece in the puzzle right now. Anyway, Neil, thank you very much. Updating me on what we saw last week. Senior strategist Neil Campling. Let's talk about another aspect to all of this, which is the recent spate of rogue attacks by three makers of sophisticated AI models that has put the potential threat of this new tech back into the spotlight. It's been a story over the last few weeks. An attack on Hugging Face obviously made the headlines. That was an OpenAI model. We saw similar breaches reported by Anthropic and Meta, fueling calls for more thorough safety when it comes to AI models and how we test them. Let's talk to Bloomberg's senior cybersecurity reporter, Jordan Robertson. I thought a sandbox was meant to be secure. How are these things getting out? Do they want them to get out? Do they not want them to get out? How tight is this?
Yeah, it's been a fascinating couple of weeks. I've written about cybersecurity for a really long time. And to your point, I never imagined I'd be talking about sandboxes.
Yeah.
At this stage of the cybersecurity industry, sandbox is a piece of software that you use to run dangerous software inside. Protecting it from the internet is very well understood science. To answer your question, the reason these rogue AI models have gone rogue in the first place largely has been because of mistakes by the tech companies or their third-party providers in allowing these things access to the internet. Now, sometimes those mistakes were kind of intentional. Like, in order to understand what these models do, in some cases, you need to see what they look like when connected to the open internet. And now you're supposed to monitor that, and you're supposed to protect against harm on the internet, and they didn't do that. So you're seeing some very basic security mistakes from some of the wealthiest tech companies on the planet. It's kind of mind-blowing.
Okay, so that part of it, that part of it is maybe a challenge when it comes to the regulatory field as well for these frontier labs. Do we expect, so we OpenAI, Hugging Face, then there were reports that other models, other frontier labs had similar breaches. Do we expect more is this just to be expected, more to come as they test these increasingly powerful models?
Yeah, absolutely. I mean, we have no idea how many of these incidents are happening right now on the internet. We know of a few examples that these companies have disclosed. There's almost no visibility into what China's doing with its AI tests and how many of those tests may have gone rogue or not, or how many other tests from these, American and European tech companies may have gone rogue. There's just no good way to measure that. So we know of a few examples. We know these models are incredibly powerful and creative, too. Like what we've seen in the last couple of weeks has been these models exhibiting extraordinary creativity and ingenuity and imagination in kind of how they proceed toward their goals. And the reason for that is they're trained on us. They're trained on, humans and books and TVs and movies and things like that. And so anything a human is capable of in terms of exercising its creativity, these AI bots in theory could do as well. And we're seeing that now for the first time play out. But we've never seen that before.
I was listening, Lizzie talked to you a little bit earlier on, and you said, did I hear it correctly? These guys outsource this work to some third-party company.
There's a third-party company at the heart of many of these incidents that we're talking about. It's called Irregular Security. It's a new startup. It's built by experts in machine learning. So a lot of these companies, again, I've covered cyber a long time. A lot of the players have been very familiar until right now. They've been cybersecurity professionals. What we're now seeing is companies like Irregular Security that are machine learning and AI experts getting into security. So they're experts, and they're amazing at AI, but they've made some very basic mistakes on the cyber part. And so Irregular Security, what all of these companies have said was that there was a miscommunication with Irregular Security that allowed these AI models to access the internet. Now, again, there can be good reasons to allow these things to access the internet. In this case, the tech companies are saying there was a miscommunication with this provider.
Sounds like we need some regular security.
Yeah, I was about to say the brand, they may be considering a name change at this point, Irregular Security. All right, Jordan Robinson, with a really interesting breakdown on what we're seeing in terms of these cyber attacks and these breaches by some of these frontier models. Bloomberg's senior cyber security reporter. Coming up, as Europe grapples with wildfires, we're going to talk to Tanya Roche, head of cat bond portfolio management at 12 Capital, about the rise of catastrophe bonds. That is next. This is Bloomberg.
Is the Vivian Tom clientele? Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world. Why do you position your products for this group of women? When I started, designing, I always want to do something that is empower women. When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example. My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome back. This is the opening trade. We are 30 minutes into your Monday session. Across the benchmark, that stock 600 essentially flat. Maybe there's a bit of a holding pattern ahead of that key inflation data out of the US on Wednesday. The DAX is up just a 1/10%. The laggard is the FTSE 100, down just 13 points so far. Over in France, the CAC current is flat as well, 8,713. There's a little bit more interest when it comes to the tech sector, where you're seeing a little bit of a gain. Guy?
You know, I said it was a quiet Monday. Okay, it's now a quiet Monday, and I have data to back that idea up. Look at the volume. We're down really sharply. You can see that in these figures. In terms of the way that the market breaks down, it's kind of 2 for 1 nearly in terms of the losers versus the gainers this morning. Tech is doing a lot of the heavy lifting on the upside, but volume is super light. We are mid-August. We have some catalysts later on this week, but we're not there yet. TSMC is a catalyst, though, first thing this morning. Nordic Semi is one of those that is responding to that catalyst and is outperforming along with the rest of the chip sector, doing fairly well. I saw a note talking about plus 500 as well, talking about the idea that maybe it has turned a corner. That's one of the stories out of London as well. And if I take a step back, you can see Imovio. I think there's a Bernstein upgrade in the market this morning on that related to the car sector story. So it is up 4.5% on the back of that. Plus is up by 5.5%. Nordic's up by 4.5%. So some decent numbers, at least when it comes to the upside. Downside, I think there's a Mundi downgrade this morning. It is down on the back of that. We're down by 2%. Coca-Cola, the bottling company, down by 2.78%. And BAT. You're kind of leaning more towards chips, which means you're more leaning away from stocks like BAT. I think that probably is the narrative that we are watching there, Tom.
Okay, here's what else you need to know this morning. Oil holding recent gains. It's around $83 a barrel right now as a final deal to reopen the Strait of Hormuz between Iran and Oman remains elusive, while Tehran ruled out direct talks with the US. President Trump says Washington is, quote, semi-negotiating and can wait for Iran's economic suffering to soften its stance. The yen is underperforming all of its G10 peers, putting traders on alert for the risk of further intervention by authorities. Meanwhile, the Bank of Japan has flagged the risk of inflation heating up in the summary of views from its July meeting, with one board member noting the possibility of a faster pace of rate hikes. Typhoon Dolphin made 2 landfalls in eastern China on Sunday after Beijing issued its highest storm alert. The storm has forced the evacuation of over 390,000 people in Taizhou and over 100,000 people in Shanghai. Flights throughout eastern China remain heavily disrupted today, with almost 1,200 flights cancelled at Shanghai's 2 airports. Guy?
Well, let's stay with the extreme weather theme, but focus more on what is happening here in Europe. Battling, as we know, increasingly frequent and increasingly devastating blazes, wildfires. Insurers are now turning to catastrophe bonds, cat bonds, to offload the soaring financial risk to private investors. Industry experts say it's only a matter of time before the continent adopts this strategy on a much wider scale. We've seen it in the United States, and it's proved to be very effective at funneling capital into an emerging area of focus. Tanya Roche is the head of cat bond portfolio management at 12 Capital and joins us now. Tanya, thank you very much indeed for your time. How would you compare? Let's just kind of start comparing kind of apples with apples or apples with oranges. How does the European cat bond market compare with that over to what we see over in the United States?
It's really vastly different nowadays still. So the cat bond market is very dominated by U.S. risks, and we do see U.S. wildfire risk among them, but we have very few cat bonds covering European risks overall, and as of today, we don't have any European wildfire cat bonds in the market. So very different level of coverage.
Is that going to change, and how quickly can it change?
Well, the points are really in the direction of a change because the need is clearly there to have more of that European risk also transferred into the capital market. But it does take time, and the wildfire that we're seeing right now is a very good example of a peril that is not as mature as we'd like to call it, kind of in the modeling space. So it's very hard to underwrite as it currently is. And even if the market is very quick, it's certainly going to take another few years for it to be part of the cat-bond market.
Tanya, good morning. Could this ultimately, longer term, could this be bullish for the cat bond market?
I would definitely say so. It's a very effective measure to share those very peak risks that are very hard for societies or governments to carry on their own. If we transfer that to the capital markets, and going to need that because of the climate change and those catastrophes becoming more frequent and more severe, this is a very good case, fundamental case to drive the market for further growth.
And you mentioned the modelling. Are we getting closer to a point where the modelling is better at adjusting for the risks? What needs to change in terms of the modelling around some of these climate events?
Data. We need data. That's the big difference that we have between the US wildfire situation and the Europe wildfire situation. In the US, we have many years of claims data, actual events, including their insured costs, and that's really what's missing in Europe right now.
How much, in terms of what is happening in Europe right now, how much of it is property, things that need insuring? How much of it is vegetation? I'm just trying to understand, as I watch the wildfires around Europe this year, how much of what has been burned would have needed insuring and could have been covered by cat bonds, Tanya?
That's a very good question. So far, thankfully, in Europe, it's just a smaller part. So most of what we have seen is burned vegetation. It's really forest land, it's rural land, and the fires have not reached that densely populated urbanized areas, which is really the contrast to the wildfires, for example, last year around LA, that made the difference in terms of insured values.
So can we assume, though, that at some point we are going to get to where we are in the United States, that these fires are going to increasingly affect urban areas? When you look at the modelling that's being done, when you read about what is expected to come here in Europe, do we have a window of opportunity before that starts to happen to get this market sort of up and running and generate some coverage for when that happens?
Exactly. That's really the challenge that we're facing. It's probably, unfortunately, just a matter of time until there is a fire that we cannot control, and it does cause more property damage, and then there is this window opportunity, as you said. But we've seen with these fires in Europe, and again this last year as well, that they become so much more frequent. The conditions, the weather, driven by climate change, is just so conducive that the race is really a challenge.
Yes, and the heating and the rising temperatures in Europe most pronounced, of course. Tanya, if we get to a point where there is better data, where the modelling improves, what is your sense of the appetite amongst investors to get exposure to this asset class?
I would think that the appetite is very high. Generally, cat bond market investors are very open and welcoming to new perils and new regions because they are diversifying for their portfolio. So it's really seen as a benefit, but really on the basis of a statistical confidence, and that, as we discussed, needs a maturing modeling landscape.
Okay, so we need the data on the modeling. The investors are largely there. So what is your sense of how this is going to evolve now, Tanya? Is this something that we're going to watch evolve over the next couple of years? Is it going to take a decade? What is the timeline?
I would assume something like maybe half a decade, to do something that's of scale, because we have seen some similar timeline in the US, where the wildfire used to be a secondary peril with very low underwriting confidence. It was not really welcomed by investors, and that really has changed over a couple of years, let's say the better of a decade, and we are now really urgent in Europe, and I think we have a lot of media and regulatory attention that might speed it up a bit more. So my best guess would be something 3, 4, 5 years, hopefully, to have this as part of the market.
Okay, so maybe three to 5 years. Tanya, before we let you go more broadly across the cat bond market globally, there's been, I think I'm right in saying, record issuance. Are we seeing are yields being compressed? Are investors being rewarded for that additional risk?
Yeah, generally, for issuance that has been offered to the market, it has been very well received by an equal amount of demand for the risk. So in terms of supply and demand, we've seen a bit of a normalization from the incredible record spread levels that we have seen in 23 and 24, but we're at normal levels, long-term levels of spreads, and it's very attractive and it remains decorrelated. So the attractiveness of the asset class, I think, is there and is continuing to thrive.
Tanya, thank you very much indeed for your time. Tanya Roche, Head of Cat Bond Portfolio Management at 12 Capital. Coming up, markets, Mal, a murky outlook still for a deal to reopen Hormuz. We're going to get the latest from the Middle East next. This is Bloomberg.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent. But when she's here, she can have her app open, and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Welcome back. 44 minutes into the equity market session here in Europe, and I don't have a great deal to report in terms of things that have changed, certainly at an index level. We've got tech on one hand doing fairly well. The more staple side of the market is doing less well this morning. Pharma's actually having an okay kind of a day. In terms of the US futures picture, remember we had a very strong kind of end to the week last week. Currently, S&P E-mini futures are up by 0.2%. The Nasdaq's actually climbing a little bit. We're up by 0.4%. So that TSMC read across not only affecting Europe this morning, but also feeding through into Nasdaq futures as we start a new week stateside.
Okay, let's get some detail on how some of the energy producers in the Middle East are adjusting in light of the continuing tensions, of course. Region. ADNOC Gas considering a new export facility outside the contested Strait of Hormuz in Abu Dhabi's latest move to build infrastructure to avoid the critical waterway that has been largely shut, of course, during the Iran war. The CFO spoke to Bloomberg earlier where he discussed the challenges and impacts being faced.
But the company, of course, has a focus on managing today challenging environment, which you've seen the numbers, has resulted in very strong net income of $600 to $65 million. But at the same time, we look forward. We look forward with that investment in that we announced today, new facilities, and also, to your question, looking at how can make the company even more resilient, whereby you would look at options of locations on the east coast of the UAE.
The reality of the situation in the Strait of Hormuz is that ships are still getting attacked or are at the risk of attacking. The latest from this weekend, including an ADNOC vessel. So when you factor all of this in, do you put in additional costs to your balance sheet that you have not previously accounted for?
So, good question, because there are, in our estimates that we give to the markets, always ranges. Example, 600 to 800 million for the third quarter of net income. For the full year, $3.5 to $4 billion. Those ranges have all to do with how many ships can cross the Strait of Hormuz. And that crossing or lack of crossing does sometimes have an impact on cost. So far, we have seen that the suppliers, vendors, people are quite flexible and are starting to adapt. You cannot deny that there is an impact, but at the same time, when we look at our investment programs, we use EPC contracts, whereby we very much manage the schedule, but an EPC contract provides us with a lot of protection for cost increases.
That was the ADNOC Gas CFO speaking to Abir Abu a little earlier on today, and she joins us now. As we watch oil holding on to recent gains, we're trying to understand where we are with the reopening or not in terms of the Strait of Hormuz. We were expecting progress. We have not had that over this weekend. Iran very much, once again, ruling out direct talks with the United States. On the other side of the world, President Donald Trump saying the White House is only, quote, semi-negotiating with Tehran. So where do things stand this Monday morning? Let's get an update on that. Abir's back. Where are we? We're getting a press conference that's taking place. The Iranians are giving us more details. What do we know?
Yeah, good morning, guys. So I'm looking at those lines that were just crossing across the Bloomberg terminal. The foreign ministry saying that they're demanding compensation if they want to reopen the Strait of Hormuz, really standing in line with some of the concessions that we had heard over the weekend. And that really leads me to just some of the reshuffling, Guy, that has happened in the echelons of power if you were in Iran over the weekend. So Mohsen Rezai was appointed as the new leader of the Supreme National Security Council, replacing
releasing Mohammed Bagher Zolgadar, who is a fellow hardliner. Now, why this is important, those two hardliners, the reshuffling there, they were asking for those concessions, or return really to some of the things that we were hearing during that MOU signing in Switzerland back in June. So they're demanding a permanent end to the war, lifting the U.S. naval blockade, a withdrawal of all U.S. forces, ending all sanctions, freeing Iran's frozen assets, and paying compensations to Iran. Now, all of these concessions are going to be a really hard sell for the United States. But then when it comes to the actual deal that is being negotiated between Oman and Iran, what we've been hearing over the past week or so is it is at the final stages. We have been expecting the formalized final draft of that. What we understand it is it will be some kind of mechanism to help ships cross their way through the Strait of Hormuz. A lot has been reported about what exactly are going to be the intricacies of this mechanism. But Guy, it's just important to note that nothing is formal yet. The foreign ministry has been speaking over the weekend. The foreign minister has been speaking over the weekend about those negotiations. But it's just important to note that we need to see the formal final draft of this document to be able to determine what the impact actually is going to be on the Strait of Hormuz and inevitably on those energy prices.
Abir, what is the pressure that the US is currently putting on Iran?
Well, there is the question of what kind of pressure it is trying to put on Iran. President Trump did say that he is waiting for the economic woes in Iran to start taking their toll on the officials there and therefore soften its stance. Now, that is, a return to what President Trump had been laying out at the beginning of this war. And two important things here, Tom. We've been reporting, of course, and multiple news agencies have been reporting on the U.S. running low on ammunition, something that President Trump and other U.S. officials had refuted multiple times. And then going back to a state of putting pressure on Iran, that's really betting on the fact that Iran will succumb to the really high inflation levels, 77% year on year, for example. But then we can't forget the fact that it takes a very cheap amount of money for Iran to produce those drones that have been attacking ships in the Strait of Hormuz. Up until the weekend, we were talking to Peter Van Driel earlier, as you heard, and we were talking about the ADNOC ship that was hit in the Strait of Hormuz, killing one person and injuring over a dozen people. So it merely takes Iran the threat, the idea of a threat on those vessels and ships for energy supplies across the Strait of Hormuz to be disrupted for a continuous period of time. And so that bet from President Trump is, according to a lot of people, a long shot. But we wait to see what we will hear further from the Iranian side. They maintain for now that Washington is not involved in those negotiations. They're merely a mechanism between themselves and Oman.
Can you just also walk me through what damage we're seeing done as a result of what the Iranian-backed Houthis are doing as well? On the other side of Saudi Arabia, we're seeing refineries being hit. Now, refineries are critical at this point. And also the damage, I'm just wondering how permanent that damage is going to be, how quickly these refineries can be brought back in terms of the capability that the Saudis have.
Yeah, that's a really good question, Guy. I mean, we were talking to ADNOC, who have had their facility in Abu Dhabi hit during the peak of this war, Habshan. Now, the CFO did tell us that it was the progress there in restoring that is going faster than scheduled. But then when you talk about Saudi Arabia particularly, which the Houthis have been targeting over the past 3 weeks or so, the latest we know is that an Aramco plant in Jizan was hit over the weekend. So that would mean that it would be twice in a month that plant was hit. Now, we don't have a confirmation from Aramco or the government that it was the Houthis that hit it, but the Houthis have claimed that they have hit it. What we know is that there is no damage reported. The fire was extinguished quite fast and there were no fatalities there. But again, the threat of the Houthis themselves attacking those facilities within Saudi Arabia or the Red Sea, where Saudi has resorted to throughout the past 5 months or so to get its shipments across, that alone is enough to disrupt those energy supplies even further. We talk about the Strait of Hormuz quite often on this show and other shows, but then then Bab el-Mandab, which is close to Saudi, which is in the Red Sea, is another crucial waterway that is now under the threat of not just the Houthis, but militia that is backed by Iran and other parts of the Arab world in the Middle East. So really, the notion here is that the parameters of this war have been widened significantly, and the escalation could be dangerous if it happens again this time around, possibly even more than what we had seen at the peak of this war in April, May.
Okay, Bloomberg's Abu Omer, thank you for the update out of the region. Meanwhile, let's look ahead at what else we are watching throughout the week. Tomorrow, US earnings from Supermicro Computer and CoreWeave. Wednesday, IEA oil market report and OPEC's monthly oil market report. We'll also crucially get US CPI on Wednesday. Thursday, it's UK second quarter GDP and then US producer prices, plus earnings from Applied Materials stateside. Friday, we are going to be watching US retail sales. Let's bring in Moena Coniam now, editor for Bloomberg Markets Today. Moena, is the inflation data out of the US that is the biggest data point for the markets this week? How much of an adjustment could we phase out a September hike if the inflation data comes in line with expectations or below?
Well, I think it's important to note that there is actually seeing a slight pickup in inflation from last month, although it was quite a sort of reassuring drop. So I think it would probably have to be quite a big surprise to make a huge amount of difference. I think it is expected to be reassuring. So arguably it's probably therefore priced in already. But we have seen quite a bit of movement in rate hike bets over the last couple of sessions, particularly with that softer than expected US jobs data. So again, whether there's much more mileage for that, I think it also depends on the oil price, which has obviously been creeping up again. So there are quite a lot of factors at play, but people will be looking very closely at that CPI data to see if it paints a more reassuring picture. And so far, actually, the higher inflation that we have seen this year in the US hasn't really been impacting growth. So that will be something to obviously look carefully at in terms of any further commentary on that too.
Talking of growth, UK GDP out on the 13th, isn't it? Expected to tick a little bit up, isn't it, on a year-on-year basis?
Yeah, so we're expecting that on Thursday, and I think we are expecting it to have actually showed a continuous expansion after last quarter. So this is the second quarter. But it will be a slightly slower pace. That's actually quite a normal pattern that we've started to see, where the first quarter averages at about 0.6, and then the second quarter a little bit less than that. That's partly because we often see a bit of a slowdown at the end of the year, a slower pace of expansion with concerns around the budget. So it was quite an interesting piece out by my colleague Tom Rees this morning, sort of pointing out that actually with the new Prime Minister as well, there's going to be a lot of anxiety around the budget in the latter half of the year. So you do sort of see this typical pattern. But we're expecting to see a bit of a boost from the World Cup, of course, for June, probably before you get into a very steamy summer.
Yes, okay. And gilt markets relatively well behaved, at least in today's session. No doubt that volatility will come back to the fore ahead of that budget. Moena Coniam, editor for Bloomberg Markets Today. Thank you. Currently, you're looking at, Guy, European markets flat across the board when it comes to the headline basis. US futures, though, a little bit more positive. You pointed this out on the back of what we're seeing with TSMC. So NASDAQ futures up by 0.4% after, obviously, a very strong session on Friday.
Yeah, they ticked through, and it's the continuation of that trade versus what we saw Friday, which I think is interesting as well. It's the market does seem like it continues to drive that one forward. The CEO of State Street Global Advisors is going to join Surveillance a little bit later on. Make sure you pay attention to that interview, 1:30 p.m. London time. That's it for us. We're back tomorrow. The Pulse is next. Francine Lacroix. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg. Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
What happened was you were up. Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
No deal on Hormuz. Iran rejects talks with the U.S. and an agreement with Oman remains elusive, pushing oil prices higher once again. U.S. CPI dominates the agenda this week after soft jobs data eases expectations for a Fed hike. Plus, Berkshire Hathaway spends $4.5 billion buying back its own shares. In the second quarter, we'll look ahead to European earnings. So first thing is first, there's quite a lot going on in the markets. Happy Monday, everyone. Stocks trading near a record high again at the start of the week. Asian shares really tracking Wall Street gains after we had some weak data on Friday, which curbed bets on federal interest rate or the Fed interest rate hikes. Now, U.S. futures pointing to small gains at the open. Of course, the focus in terms of data points now turns on to U.S. consumer data due out later this week for more clues about what the Fed does next. Euro dollar 115.61, and then of course we look at the Strait of Hormuz with the Brent actually at 83.73. Now, overall, we did see a bit of a boost on stocks and bonds on Friday after that U.S. jobs print was a bit softer than expected. That did definitely ease concerns about an imminent rate increase from the Fed. If you look at European markets, so we're seeing a little bit of pressure on the DAX. Actually, the CAC 40 and the FTSE down some 0.2%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, oil is holding its recent gains as a final deal to reopen the Strait of Hormuz between Iran and Oman remains elusive. Tehran ruled out direct talks with the U.S., and President Trump says Washington is, quote, semi-negotiating and can wait for Iran's economic suffering to soften its stance. Well, Iran's foreign minister says an agreement with Oman is very close, but negotiations with Washington cannot yet begin.
At present, we are not engaged in any negotiations with the United States. As long as the American violation of the Memorandum of Understanding continues and the U.S. does not make amends for its violations, there is no possibility of resuming negotiations.
Well, for more, we're now joined by our Abir Abu Omar in Dubai. Abir, so talk us through the latest back and forth between Iran and the U.S.
Good morning, Francine. Yeah, it continues, the back and forth between Iran and the U.S. You just heard the Foreign Minister Abbas Araghchi saying that a return to the negotiating table with the United States cannot happen unless the U.S. ends its hostilities. President Trump also over the weekend saying that he will wait for the economic toll to take its weight on Iran, and therefore they will have to go back to the negotiating table. So again, a lot of back and forth between the two sides. Iran maintains that Washington is not part of those negotiations that are taking place between itself and Oman to restart movement in the Strait of Hormuz. What we understand and what we have reported on over the past week or so, Francine, is that the two are discussing a mechanism of some sort to start or to restart the movement of ships and tankers through the Strait of Hormuz. That remains elusive. Both parties have fallen short of reaching a final draft, and we don't yet have the details for that. Meanwhile, of course, we're monitoring the traffic or the lack thereof in the Strait of Hormuz. We have reported multiple times that ships are hardly making their way through. We've reported over the weekend as well that an ADNOC flagged ship was hit with one person killed and multiple others injured. And so those are the things that we have reported when it comes to the overall agreement. And then within Iran itself, and what perhaps is the most important out of this weekend, is some reshuffling that has happened in the echelons of power. They're reshuffling of some real hard liners. One of them is the new political advisor to the Supreme Leader, Mujtaba Khamenei, who has said that in order for Iran to come back to the negotiating table, the U.S. would need to permanently end the war, lift the naval blockade, unfreeze those blocked assets, lift the oil sanctions. And so a lot of concessions that are going to be a hard sell for the United States. A lot of back and forth, a lot of complexities in the region, yet again, a widening of the parameters of the war. But for now, what we wait for is that final draft between Iran and Oman and some much needed movement in the Strait of Hormuz, Francine.
Abir, thanks so much. Bloomberg's Abir Abu Omar there with the very latest on the Middle East. Now, global stocks continuing to trade near record highs. U.S. jobs data helping to ease concerns about a rate hike by the Fed. Let's bring in our Justina Lee, our markets reporter. Justina, good morning. Happy Monday. Ongoing uncertainty in the Middle East does not appear to have dampened the stock rally.
Yeah, that's right. I mean, we look at the chart here, the MSCI World Index has hit another record high. And it does feel like investors are generally taking a glass half full approach to the conflict in the Middle East, just as they are with, U.S. economic growth. I feel like there's this sense that maybe we're in this Goldilocks zone where we don't have to worry about a U.S. rate hike just yet. But at the same time, even with the payrolls number that we got last Friday, they're not so worrying that people are worried about U.S. economic momentum. And in fact, today we got the news that JP Morgan has raised their S&P 500 year-end target from 7,000, which of course the index has entirely blown past, to 8,000 on the back of a stronger than expected earnings season. And also what they say is, pretty good monetization of AI by some of the hyperscalers.
Justina, it also seems that we could see a major shift underway for European stocks.
Yeah, that's right. We don't talk about European stocks that much. It's all been about U.S. and Asian lately. But if we kind of look at this chart here, we can see that while the U.S. economic momentum has kind of rolled over a little bit lately, more recently, Europe's economic surprise index has been on the up and up. So you can see pretty strong fundamentals for this part of the world. I mean, in addition to this, earnings growth has also been pretty solid at 17% this recent season. And so we can see here that, that is why even the Stocks Europe 600 has been hitting those record highs. But of course, an important thing to remember about European stocks is that they tend to be a lot more sensitive to oil prices. So they've probably been supported recently by oil coming down from the peak in July. But if anything kind of happens again in the Middle East that will disrupt that, I think that will be a headwind for European equities again.
Justina, thank you so much for the terrific briefing. Justina Lee with the very latest on stocks and positioning. Now joining us is Jennifer McCune, Chief Global Economist at Capital Economics. Jennifer, there's a lot to talk about, especially after that report on Friday in the U.S. Does that push back any expectations for interest rate hikes in the U.S., or is it just an imminent interest rate hike that's pushed back?
I think it definitely brings September into more doubt. We have been shifting towards a much greater likelihood of a September hike, but that fall in payrolls does change things a bit. Of course, the unemployment rate came down at the same time, so it wasn't a one-way report. It was a bit mixed, but softer than expected. Wage growth at 3.2% is probably not really strong enough for the Fed to be really pushing for hikes. So an awful lot depends really on the CPI print that's coming up. Of course, we have another payrolls report before the September meeting, so there's still a lot to watch for, but the likelihood has reduced.
Jennifer, how would you describe the American economy right now? Because there's a lot of, the participation rate actually fell quite significantly, and we're not sure why as well. So I don't know whether it's structural forces or what you could, are we producing quality jobs, or people don't want them and then leave the workforce?
Yeah, there's been an awful lot of volatility around younger people, especially in the US, and there are still huge question marks about just what AI is doing to the labour market. But I think fundamentally I would say that the US economy looks solid, looks pretty healthy. The jobless count hasn't been rising. It's not the case that the bottom's falling out of the labour market. And also, of course, we've got the strong AI story still, which, for all the doubts about how long that persists in stock markets, I think there's quite a long way to go in the macroeconomy for that to continue boosting US investment, which we're already seeing, but more importantly, US productivity growth as well. So I think the outlook is a pretty positive one.
What about the rest of the world?
The rest of the world, it doesn't seem to have been hit too hard by the Iran conflict in macroeconomic terms.
Which is really unexpected, Jennifer, right? Even just a couple of months ago, we thought that, I don't know whether it's inventory behavior or China behavior that's really kind of changed the positioning.
Yeah, both of those things. I think there has been some drawdown of inventories, both in China and across the OECD, which has helped matters. Consumers seem to be dipping into their savings a bit in Europe, which is unusual, but I think very much welcome. Justina was just saying that we've had some positive surprises out of Europe recently. It's been a while since that has happened. Retail sales seem to be holding up really quite well. I don't know how long that can continue. So there's a lot hinging on a deal happening, on flows through the Strait of Hormuz resuming, but for now at least the macroeconomy hasn't been hit too hard.
I mean, do you expect a lot of inflationary pressure coming if this lasts for longer? Or is there something in the economy, the way that we read things, that we should be rethinking?
I think we've got some more inflationary pressure to come in the UK, certainly, where the impact of energy prices tends to be relatively lagged. In Europe, we had thought that inflation had peaked, and with the oil price at $83 per barrel-ish, that's obviously a lot lower than it was at the height of the crisis. So it should be the case that the energy effects on inflation start to peter out now. But again, so much depends on a deal coming through and flows resuming.
What's your rate expectation for the Bank of England?
For the Bank of England, we're not expecting any rate hikes. And in fact, given the softness of the UK economy, we think that interest rates could come all the way down to 3% next year, which is really quite different to the market. So we're watching for inflation to ease off in the rest of this year. Core inflation has been pretty sticky in the UK, but the labour market really looks quite soft. So I think that should fundamentally translate into much weaker wage growth going forwards.
And that's, no matter what we get at the budget, because there's also this, we're trying to learn a little bit more about this new Prime Minister and the Chancellor, and 28th of October is the big day.
Yeah, of course, not no matter what we get, but I think what we will get will be a lot less than has been hinted at, simply because Burnham is restricted by markets. He won't want to be making the same mistakes that Liz Truss made, so he will need to be quite cautious, and I think these pledges, to the extent that they come through, will need to be funded. He'll need to find ways to fund these things. So I think we will see a little bit of a fiscal loosening, but not really enough to boost inflation and to change the picture for the Bank of England.
Jennifer, I mean, your take overall for equities is actually, this all-time high looks on a slightly firmer footing.
Yeah.
So what happens next?
Yeah, I think probably the rally has a bit further to run. I think we have seen a bit of a shift
in the extreme concentration in the equity market that we had seen in favour of tech stocks. That has eased off a little bit. It looks a little bit more balanced now. And fundamentally, AI earnings are still improving. AI investment is still picking up a lot. So I think, and AI use is picking up too. It's still at its relatively early stages. So I think we could have a further improvement to come. Our target for year end is 8,250. But that said, the equity market clearly looks very stretched. So I think it's not so much a matter of if a correction happens, but when that comes. And we think it's probably next year.
So when you look at the tech space, I mean, there's also, we forget a lot of the CapEx space, but also the economic growth in the U.S. comes actually from these AI hyperscaler spending. Is there worry that this slows down if the revenues don't match up?
Yes. So what we've seen is that equity markets, as they will tend to, have tried to bring forward the gains. So it's all about earnings expectations at the moment that's driving the S&P. You're not seeing that so much in the macroeconomy. It's a very different picture. We're at the very early stages. AI investment is relatively strong in the US, but not really elsewhere. So I don't think it's the case that the economy, the macroeconomy, looks too hot. If we get a correction in the equity market, which I think is coming, the impact on the macroeconomy depends very much on what's driving that. If it's about increased competition in AI, falling prices, then that hits the AI labs and that will hit equity markets. But it's a good thing for the macroeconomy, and that would mean that diffusion can pick up. I think the really worrying thing would be if there was a fundamental rethink about how AI can transform the economy and a fundamental shift in AI demand, and that's when you would see the macroeconomy hit hard, and I think that's less likely.
But overall, in terms of sectors, I mean, if you look at the exposure for other sectors to a possible AI earnings like bust, is it the big ones, or is there concern that there's something systemic even in certain parts of the markets?
I mean, it's possible, and there have certainly been concerns about private credit and private lending to AI, but I don't think this looks systemic. There's not huge leverage in the system as a whole. Corporate debt is relatively contained. So I think that we probably are looking at more of a kind of a concentrated correction, hopefully, rather than a broad tightening of financial conditions, something that would be really worrying for the macroeconomy.
Jennifer, I think one of the biggest stories for us over the summer is what's happening in Japan and actually yen. Yeah. I mean, what's your take? I don't know whether it's, because Scott Bessent is also intervening, whether he's worried about treasuries or whether it's just a Japan concern.
I think it probably is largely a Japan concern, but Japan's a very large market and important for overall financial market confidence. At a time of volatility, you don't want these kind of weaker links. No. So it's important to stabilise the system, and yen intervention does seem to be helping. Yeah. But I think it can only go so far. There needs to be a fundamental shift in Japan towards easing any concerns about the fiscal outlook, and reassuring markets that there won't be intervention in the Bank of Japan's independence, and that interest rates will be normalised in Japan.
Jennifer, thank you so much. A terrific briefing. Jennifer McEwen there, Capital Economics Chief Global Economist. Now, coming up, Berkshire Hathaway is buying stocks again. We'll have details next. And this is Bloomberg.
multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
At the NYSE, we pride ourselves on being the gold standard of listings. The micro caps was not something that was uniquely focused on the New York Stock Exchange. In fact, I don't know that it was that we were the home to many of the companies you've just referenced. It's why we've been so deliberate in continuing to look at our rule set and uphold the rules and listing standards that we have. It's why when you look at the New York Stock Exchange, the median market cap of our companies is 15 times that of our closest competitor. Because from our point of view, it is about providing responsible access to the best, most well-governed companies around the globe.
Are you seeing a change in attitude at all, or appetite in terms of dual listings, in terms of companies wanting to keep their hometown presence while at the same time tapping that US depth that you mentioned? Or do you find that companies just prefer that singular clean listing with the NYSE?
Well, we think the regional markets, particularly those in South Korea, play an incredibly important role, particularly when you look at the customers that they serve as their home base. So we've been really focused on continuing to further the dual listings, the ADR frameworks that have existed in the U.S. for decades, centuries, if you will, in the case of the New York Stock Exchange. And from our perspective, the regional markets play such a critical role from a capital formation standpoint.
So do you expect to see more ADR listings from firms here in Asia? And which markets do you expect to see those coming from?
Yeah, we're really optimistic about the pipeline that is generated out of Asia, out of this region, but also globally, as companies, as part of their capital formation, don't just look to the retail markets. They look at the opportunities that the U.S. capital markets, the deepest, most liquid markets in the world, present from a globalization of the investor base. So we see these opportunities continuing to play out for the remainder of 26, but importantly into 2027 as well.
Well, the NYSE parent company is looking at exploring partnerships with other groups like Polymarket, OKX as well. I understand you've also got an application in for 24/7 trading. Before we let you go, can you give us a quick update on those things?
Yeah, so if you look at extended hours trading, so we're leading the industry in the move towards the traditional markets going 23/5. That will actually happen in December of this year, where the securities markets will bring the regulated framework, the regulated protections that come with that framework, the stability, the resiliency to a 23/5 hours, which what that means is global investors will be able to invest in our regulated markets, ones that exist today, with a lot more certainty.
Well, that was Lynn Martin, the president of the NYSE Group, speaking to us exclusively. Now, Berkshire Hathaway has spent about $4.5 billion to buy back its own shares in the second quarter. It also purchased nearly $20 billion of equities. Signs that the chief executive, Greg Abel, is putting more of the firm's cash pile to work. Well, Bloomberg managing editor for finance in Europe, the Middle East and Africa, Tom Metcalf, is here. Tom, a million questions on Berkshire Hathaway. So it's put its cash pile to work. Let's start with the buyback announcement. It's significant. I mean, it's a big amount.
It's definitely a big amount, but then again, we are talking about Berkshire Hathaway, and I was actually talking about this over the weekend, and, you know, their cash pile is still something like $370 billion. So that's the kind of context we probably need to keep all these numbers in mind. But yeah, no, big buyback. They're actually, I think our Bloomberg Intelligence analyst was saying it's a little bit smaller than they thought. And then, yeah, the $20 billion being deployed. That's really interesting, right? Like, kind of, it's always the question, what is Berkshire going to do with its money? We've at least got a sense of what it's done with $20 billion, and kind of under the new CEO, obviously, is there any change there? So perhaps it's that $20 billion with, we understand, you know, $10 billion or so, I think, going to Alphabet, some money going into Tokyo Marine, an insurer, and then the question is, what did the rest of the money end up going in towards? But yeah, two sort of, I wouldn't say seismic shifts, but signs of how the company is, you know, adjusting to life under the new CEO.
Yeah, and as you're saying, I mean, we've had years where they were relatively quiet on the deal front. Actually, there were no deals, and suddenly we have a house builder and a tech deal.
Yeah, exactly. Well, and I think that's probably still the question, though, is what is going to be the really big deal that sort of moves them from just holding cash today? And there's no sort of sense yet of that changing, and for me that's really interesting. It's one of the conversations I have is like, what does that say about, you know, the stock market, that, you know, Berkshire Hathaway still hasn't, after however many years now, been able to find that kind of stellar deal? And, you know, probably Buffett's supporters would say, look, it just shows how disciplined they are, and also how, you know, it's a struggle to see that kind of no-brainer purchase in the current stock market.
Tom, thank you so much. Tom Metcalf there with the very latest on Berkshire Hathaway. Of course, earnings season continues in Europe. I feel like we've had earnings season forever, but there's been ongoing disruption in oil and shipping markets, and that's, of course, boosted energy majors and container lines, with Maersk expected to report strong second quarter results on Thursday. Let's get more with Bloomberg's Chloe Melly, who's been on top of all of the earnings. So what's been the highlight from this week?
Yeah, so this is the last very busy week of earnings season. After that, we can probably start to relax. But the big theme this week is renewable energy. So we've got, in terms of the wind power industry, two really big names reporting this week. So we've got Vestas, which makes wind turbines, and Ørsted, which is a wind farm operator. And so both of them should report quite resilient results, although for Ørsted, we do keep in mind the fact that they had a very difficult 2025 with the rights offering last summer. So they're still working on sort of restoring that investor confidence. And then in Germany, we've got RWE and E.ON, so power producers, energy companies as well. And there they are benefiting from this growing demand in electricity from data centers, of course, and then this rising investment in grid infrastructure throughout Europe as well. So there we're also expecting quite strong prints.
What about Maersk?
Yeah, so for Maersk, they already raised their guidance in June, and so that was off the back of those very strong container rates because of the disruption in the Middle East. Of course, that disruption continues, the tensions are still there, and so even though we're starting to see those container rates dip a little bit, we are still, 70% higher than we were a year ago, so they're going to continue to benefit from that. Although if we look kind of towards the rest of the year, that could come under a little bit of pressure.
Chloe, thanks so much for joining us. Chloe Melly there with the last week, the final stretch, and then it's properly August. I mean, most people are on holiday in August, but we're still here giving you earnings and looking at what the Fed does. Chloe Melly with the very latest. Now, this is a picture across the board. We're seeing a little bit, of course, pressure here in Europe, certainly compared to what we're seeing in the U.S. In the U.S. in general, I mean, stocks are trading near record highs at the start of this week. Asian shares were actually tracking Wall Street gains after some weak data on Friday. It did seem to curb bets that the Fed would hike interest rates anytime soon. Now, the focus in terms of data in the U.S. now turns to U.S. consumer price data due later this week, and that should hopefully give us a little bit more clues about what the Fed does next. The other couple of things we're watching out for, so of course it's the Strait of Hormuz, Brent crude 83.96, euro dollar 115.64, and then if we look onto elsewhere in Europe, exactly what's happening. They're looking not only at the oil price, which is rising as much as 1.7%, but European markets kind of on tenterhooks, so we're seeing a little bit of pressure, for example, for the CAC 40 and the FTSE FTSE down 0.2%. Coming up, why AI is becoming a difficult talking point ahead of the next Xi-Trump summit. That's coming up next, and this is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
When news breaks,
this is going to be a complicated report.
Bloomberg has you covered.
SpaceX, second quarter revenue, $7.8 billion.
For all the context and clarity you need.
A lot of speculation, what could happen with Tesla.
Hear it first on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. No deal on Hormuz. Iran rejects talks with the U.S., and an agreement with Oman remains elusive, pushing oil prices higher once again. U.S. CPI dominates the agenda this week after soft jobs data eases expectations for a Fed hike. Plus, Berkshire Hathaway spends $4.5 billion buying back its own shares in the second quarter. European earnings continue this week with Maersk reporting. So OpenAI is pausing internal work on one of its upcoming AI models to implement stricter safeguards after the system proved significantly more capable at cybersecurity tasks than expected. The move follows a series of incidents that have put AI-enabled cyber attacks in the spotlight. Well, joining us now is Jordan Robertson, Bloomberg senior cybersecurity reporter, and Parmi Olsen, Bloomberg opinion columnist. So thank you both for joining us. Jordan, let's start with you. These are breaches, right? And so we see more breaches by some of these AI companies. Are they just going to be more commonplace?
Yeah, the past couple of weeks have been pretty wild. I've covered cybersecurity a long time, and typically the actors are classically bad actors. They are criminals. They are spies. They are, kind of bad people. Now we're talking about companies hacking other companies, and some of the most richly valued AI companies hacking other companies. we only know of these few examples that we've seen. Like, it stands to reason that this is happening a lot more often than we're aware of. But I should make the note that what we've seen so far, these have been hacks. These have been actual hacks of organizations, of people, and things like that. They've not been catastrophically bad hacks. Right. They've been scientifically very interesting hacks. To see these AI models out in the world kind of unshackled and able to do whatever it is that they're able to do, it's been pretty fascinating to watch.
I mean, fascinating if you're an expert and student, I guess, of hacking. For the rest of us, it could be a little bit terrifying. So what have they taught you?
Yeah, I mean, what you see is that, you know, on a technical level, the AI models will do whatever they're told. And if whatever the mission objective is, they will pursue that objective at all costs, you know, kind of sparing no expense. But when these models have interacted with the internet, and that's really what's happened in the last couple of weeks, these models have gotten out into the internet, in some cases through kind of clever engineering, in some cases through mistakes or oversights. But once on the internet, they've done some fascinating things. They've interacted with people in very kind of creative, you know, ingenious ways. And it's one important point to make about these AI models is technically they're able to do a lot on their own, but they're not able to do everything on their own. At some point, many of these models do need interaction with a person in order to do real damage. And that's really where kind of some of the friction comes in. They need to socially engineer people, typically like open source developers, software engineers online, into doing things for them. And that's really what would take these hacks to kind of the next level of, you know, kind of true kind of large scale damage if that were to continue.
And probably, I guess the million-dollar question is who can actually get a grip on these?
I think it's going to be very hard to get a grip on it, particularly for the companies. First of all, I think Jordan makes a great point about how these models have an objective, and they will try and achieve that objective at all costs, including lying to people, which is what they've done in some of these recent examples, social engineering people. And these systems, from what we've heard in the cybersecurity world, they're not actually that great at hacking. They're not particularly stealthy, but they're great at manipulation and social engineering. And I personally would be more worried about that, about these systems potentially playing the long game on someone, you know, just socially engineering them for like months at a time. And part of the issue is this objective that they have as models and the way they're trained. There's a method called reinforcement learning, where these systems are given a reward in order to get the training and to achieve a certain objective. And some in the field have said, actually, this could be a problem. It's one of the reasons why these models can be quite sycophantic. And it's also why they sometimes might bend the rules. They're trained not to lie to humans, but in these latest examples, they did lie to humans. So they're doing that because they need to reach that objective. And so this question of can they solve it is actually really difficult. They can sandbox these systems as much as they want in testing. But the fundamental issue of training them to be aligned to human values is really difficult, because how do you even define what human values are? And that's one of the things that's really stumping a lot of these developers of AI models.
That's so interesting. I mean, last week, look, everyone was talking about Google and the fact that, you know, that there's, I guess, a Google AI reboot. I don't know what you want to call it, with people leaving and also Demis getting on a new role. Fundamentally, what does it mean?
I think it means Google is trying to shift the balance of power from London back to Mountain View, California. So last week we heard that Demis Hassabis is stepping down as CEO. He's kind of moving upstairs to become chairman. Fewer people reporting to him. He's going to be focused on his scientific quests of building artificial general intelligence. And at the same time, Jeff Dean is leaving. And to me, it really looked like Google is just trying to consolidate power closer to Sundar Pichai in Mountain View. You know, so Google does incredible work in innovation. They invented the transformer, which is the T in ChatGPT, but OpenAI exploited that technology and commercialized it. Google is this huge bureaucracy. People inside it often complain. There's too many layers of management, a perverse incentive structure for trying to keep products alive and thriving. And I think this is a huge problem that wasn't being fixed under Demis Hassabis. And so I think Sundar Pichai bet there needed to be some kind of radical change to streamline the company. They've been falling behind in AI coding, which is the most lucrative avenue that OpenAI and Anthropic are taking now. Google's way behind. So you needed to do something. They couldn't keep the status quo.
And Jordan, going back to some of these, cybersecurity breaches, I mean, is it a problem that everyone has, or are there certain models and companies that are more prone to it because of how it's built?
I mean, this appears to be an issue that most of these large models will face. Like right now, we have a handful of data points from the last couple of weeks of major companies, including Anthropic, OpenAI, Meta, disclosing issues with their AI models, and hacking. But in theory, all of the frontier models, would have versions of this problem. And we have next to no visibility into, for example, what are the Chinese AI makers? What do their tests look like? What does Moonshot's tests look like? What do, DeepSeek's tests look like? And so we've only gotten a few data points about what does it look like when these AI models are kind of left unshackled to go explore the internet. And we're very likely to see many, many more of these things. And there's also no good way to measure how many other of these incidents are happening right now on the internet. We have no way to know. The companies also don't have a great way to know, and they're just discovering this now. So I would expect to see a lot more of these. Now, the companies should get better at containing these attacks to some degree, but as Parmi mentioned, the old school way of doing cybersecurity was you throw this dangerous software in a sandbox, it's disconnected from the internet, it will never talk to the internet. The UK AI Security Institute made a pretty persuasive argument in a paper they released last week where they said to truly test these models, you have to connect them to the internet. Now, they should have monitored them more, and they acknowledge that, but that is a pretty convincing argument that you need to see what these models will do once they are allowed to talk to people and interact with people that can help them achieve their objectives. But they've acknowledged they have to monitor that better, because what was happening now is they were looking kind of backwards at it, and they were going after the fact and saying what happened on the internet. They need to know in real time.
Fantastic. Thank you both for joining us. Jordan Robertson, there, Bloomberg senior cybersecurity reporter, and Parmi Olsen, Bloomberg opinion columnist. I know we'll talk a lot more about this, so watch out for the next couple of days as we get Parmi and Jordan back together. Now, China is attempting to close the gap in the AI race with the U.S. tapping its $28 trillion capital markets. In recent months, regulators have fast-tracked IPOs for strategic companies and opened up more avenues to raise money through bond sales. According to data compiled by Bloomberg, Chinese tech firms raised about $217 billion through initial public offerings and bond sales over the past 2 years. Now, in Washington and Beijing, AI competition, of course, has become a key point of tension as Chinese companies seek to catch up with U.S. competitors. And with just under 2 months until President Donald Trump and Chinese President Xi Jinping are due to meet, tech is just one of the cracks spreading throughout the fragile U.S.-China détente. Francesca Giretti is director of the Europe-China Initiative at RAND. Francesca, thank you so much for joining us. I mean, I was looking at the numbers, and again, it just seems, incredible. China is tapping this $28 trillion capital market, so they do have quite a lot of money to be able to spend. Where are they first on AI? How far behind are they?
Right. So we saw at the World AI Conference back in July in Shanghai that the Chinese are somewhat catching up, right? Yeah. So with Kimi K3 obviously was the landmark example of this catch-up, the idea that is happening. And we do see that is happening somewhat across the board, across the different benchmarks. Now, obviously, the US still has a major advantage, which is computing and semiconductors production. They're still much more advanced than the Chinese, and that remains the case. One area where they both will begin to struggle in the next 5 to 10 years, depending on who you talk to, is data in order to be able to actually train these models. The big advantage that the Chinese have at this point is that they offer open source models, right? Yeah. So a lot of companies who wouldn't necessarily go and pay for the large amount of money that a lot of Western, specifically US models required, would either go for the open source models or they would go for some of the Chinese models which prices are much lower per tokens comparatively.
But Francesca, give me a sense. I mean, is it 3 months behind? Is it 6 months behind? And for me, 6 months is nothing.
That is an excellent question. It's difficult to answer in a sector where things move relatively quickly. So in 2 months' time, we could have a completely different picture compared to the picture that we have right now at the moment. I think one of the most interesting things that we've heard so far is that the majority of the economy and the majority of the companies do not need the most advanced models, right?
Exactly, and so they can make them cheaper.
Yes, exactly. They can make them cheap. One other thing that is happening in China, and I think is really important, is, however, there is some thinking around, should we be restricting some of the more advanced models that we are now offering openly. And the other part of the debate is we've heard, I think, last week from DeepSeek, one of the cheapest models, right, that they're considering raising the prices, quote unquote, significantly. DeepSeek is one of the cheapest, so what significantly means is up for debate. But that could also be one of the things that we're going to see in the future, Chinese models becoming more expensive compared to what we see so far.
But would it be as expensive as the U.S. one? I know we're going into the weeds of the details, but, you know, when you speak to a lot of banking chief executives, they're saying actually at the moment, and this could change, but they're using a blend of the U.S., you know, expensive like the Ferraris of AI and the cheaper Chinese models. Does this blend pose any security risk, and does it change?
So, okay, this is a very good question. So in first instance, no, they wouldn't become as expensive as the U.S. Alternatives. Price is really the edge that some of these companies have in order to increase market shares, and this is exactly what you've just mentioned. So even if they increase prices, it's very unlikely that they will become as expensive as the American options. Now, here we're talking about the whiteboard, not necessarily the frontier stuff. Again, that frontier stuff can be somewhat regulated from China and from the U.S. as well, we've seen. Now, in terms of using this blend, that makes sense, but in terms of security concerns, it's not as much a matter of whether the model is Chinese or American, and we could have a conversation around, you know, the different security implication. I know you've just had this conversation. It's really that when you talk about open source models, if you want to release a patch of those open source models, you can't really do that because the model is already out there. So every single entity who's adopted that open source model would have to somewhat readjust and find their own patches. Now, here we're talking about the companies who use the open source code rather than those that have some sort of subscriptions for tokens with these companies, right?
Francesca, do you have any doubts about funding? Because actually there's been so much money poured into it. If you look at the race, again, does it make a massive difference at this point?
It does make a difference. It always makes a difference. But so there are a couple of points. The first one is that, according to data, the Americans are still investing more compared to the Chinese into AI. The type of investments are still different, right? A lot of the AI investment are state-driven. We've just heard of some major banks in China becoming part of these investments. But in the US, it's still a lot of private capital that is driving this. So this is sort of the first point that is important. I think the second point, and here is where a lot of the debate will move in the next few months, is in terms of applications, right? It's not just the frontier, it's not just the most advanced models, but it's really China has been moving very quickly into the embodied AI sphere, right? So robotics powered by AI. And a lot of what we're going to see in the future is going to be in that direction. And in that specific application at the moment, China has somewhat of an edge.
Okay, what's your take on the Chinese economy? Because if that's slowing down,
yes.
Again, does it really impact the ability of them to generate some of these new AI models or updates?
No. So the economy is slowing down. So first part of the question, yes, it is.
But it's not touching the AI.
No. When it comes to strategic priority areas, those will not be impacted because of how the Chinese state and the Chinese system works. When we see some strategic areas of the economy, specifically technology, those are areas in which money will keep pouring in. And we've seen that as well most recently at the last meeting. What they announced is basically they're going to double down investments in 6 core sectors and in the AI Plus plan.
Thank you so much for joining us. Francesca Giretti there, Director of the Europe-China Initiative at RAND, to have a good look about this U.S.-China tech and AI race. Coming up, we'll discuss the future of critical minerals with mining entrepreneur Robert Friedland. As a scandium miner he backs secures U.S. financing. That interview is up next, and this is Bloomberg.
in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Welcome back, everyone. Now, shares in Australian scandium miner Sunrise Energy Metals have soared. That's after it secured as much as $400 million in long-term debt financing from the U.S. Department of War. Now, scandium is a rare earth metal that's critical to industries like defense, advanced manufacturing, and AI infrastructure. I'm delighted to be joined by Robert Friedland, chairman of Sunrise Energy Metals, executive chairman of Ivanhoe Electric's board of directors, and chairman and chief executive of iPulse. Robert, thank you so much for joining us. Now, look, when it comes to the commodities market, scandium is more of a niche commodity. The market is tiny, but why is it so important? And actually, I mean, I'm holding some here. It's light as a feather.
Yeah, well, good morning, Francine. So scandium is one of the 17 elements in the periodic table that's classified as a rare earth. And this particular asset is based in Australia. It's big enough to supply all of the Western world's demand for 30 or 40 years. So this is one element that we have in the Western world that no longer has to be produced or sold from China. So it's quite important to Western economies.
I mean, we're seeing a lot of these niche metals, you know, the funding coming from the U.S. administration. Should other countries do more, especially Australia?
Well, the U.S. economy is the biggest in the world. China's catching up. And so it's really great that the U.S. administration under Donald Trump is actually taking this issue seriously. They understand the supply chain. We had a big meeting in Washington, D.C. Last week, and the president was there, the Secretary of State, the Secretary of Commerce, Howard Lutnick, and I think that's the first time that's happened in the mining industry since the days of President Taft, which would be about 1910. So finally, people are waking up to the central importance of the supply chain and all these critical metals you need to run the studio and use your hand phone.
So what's your relationship like with Donald Trump? And because you've been at the White House, you know, quite a few times, what can you tell us about what exactly they want and need?
This transaction went through the Department of War. It used to be called the Department of Defense, and you know, they do really intensive due diligence because it's going into the supply chain for national security. But the same element is used for people like Apple Computer or Bloom Energy in fuel cells. There's a plethora of uses for this particular rare earth. The last time the Pentagon bought some from Rio Tinto, it was priced at well over $6 million per ton. So it's an extremely valuable element. You don't need much of it, but you need it. So just 0.5% of it in this aluminum enables you to 3D print it and turns aluminum into a material 4 times stronger than steel. So it's used in satellites, aircraft, and a number of modern technologies.
Robert, I understand that this deposit also has, I think, one of the largest cobalt, right, outside of Congo. So it also contains a lot of nickel. What will you do with those two?
Yeah, it's a strange geological beast. It's been known for a long time. It's the largest resource of cobalt metal in the world that's not in the Congo.
Yeah.
The Congo has most of it. It also has platinum and palladium and nickel. And in the future, I think all those other elements will also be developed. But the scandium sits sort of on a fringe. It took about 14 years to get the permits, engineer it, and design it, and develop it. So this company is an overnight success after 14 years of work, which is typical of the miserable mining industry.
But you're planning actually to start in 2028. So once then you have the ore, how long does it take to then process and sell?
Well, the mine's under construction already. We've been ordering long lead time items. And the upstream processing is near the little town of Syerston in the Australian outback. But the downstream processing will probably be done in the United States, all the way to scandium metal. A lot of it ends up in your Apple phone. Yeah. There's over 50 little electronic applications in a modern telephone. This whole studio relies on it in semiconductors. So it's typical of the elements that the average person has no idea that they're so reliant on.
Well, Rob, in terms of timeline, so you start production 28, and then you go and process it in the U.S. When are you full? So 20. So what? A couple of months afterwards, or does it take longer?
About the same time. Yeah, there'll be a processing facility. It'd be upstream and downstream, and it's very, very important because Australia and the United States have a strategic partnership for critical metals, and a lot of these metals don't exist in the United States. So America has to look globally to find these critical raw materials in parts of Africa, Kazakhstan, all over the world. People are searching for these metals.
And then you're looking at listing. So you have 3 companies at the moment. Which one do you see where you see the most growth?
Well, this is an Australian public company. It's up about 45-fold in the last 2 years. And we have committed with the United States government to list the company in the United States, and it may actually
fully list it or dual listing?
No, I think both. But I think it may become an American company because Uncle Sam likes these companies to be domiciled in the United States. iPulse, our other technology company, we've got some funding under the CHIPS and Science Act of 2022 that was passed in the Biden administration. That is a U.S. company, a private company, and Ivanhoe Electric is an American New York Stock Exchange listed company building the best new copper mine in the United States.
You like to keep busy. So what happens after this? A new Ivanhoe?
Yeah, well, I'm overworked and underappreciated.
Underappreciated, never.
Traveling
overworked,
all the time.
Perhaps.
Yeah, somebody has to go out into these remote locations and find these metals because the modern economy is really dependent on these critical raw materials. When Steve Jobs made the first Apple I, it only had about 18 elements in the periodic table, but this is an Apple 17, and it's got 74 elements, one of which is scandium. Scandium is used to distinguish the bandwidth so that you can have 6G and 5G wireless. So it's an absolutely critical material, and it's great news that Australia is now supplying a deposit big enough to supply the world economy.
In general, because of the data centers, infrastructure, and the use of AI, how much more of these critical or raw materials will we need?
We filled in 1 square in the periodic table. Yeah. We have about 35 more to go. So we have a lot of work to do.
So is this your new, are you going to focus on some of the specialists
Absolutely. We're working with a number of governments trying to solve this problem because the supply chain is being sort of balkanized, if not weaponized. And we lose our national sovereignty unless we have access to these critical materials. So it's a big shout out or kudos to the current administration that they're taking this seriously. The administration under President Trump announced a huge increase in funding for universities that are teaching mining engineering, metallurgy, geology, because without a fleet of geologists, we can't go out and do this. China's producing about 3,000 mining engineers per year, graduates. In the United States, about 150. So we have a huge amount of work to do to green our world economy and also provide the same metals for national defense.
But so do you see some of the big mining companies get into the space a lot more?
Not very much.
Why not?
They're mostly silly iron mining companies. They're like big elephants that trample a lot of grass and make a lot of money mining iron and copper. But these little ones, these hard to find materials, they really haven't been present. It sort of takes Indiana Jones, to go out there and find these kinds of metals that we need.
Okay, so if you're Indiana Jones, what critical material do you go for after?
It's not just the rare earths. There are a number of metals like niobium, tantalum, rhenium, scandium, many that you don't know of. You've heard of gold and silver, which are obviously very precious, but actually a lot of these other elements are more precious than gold and silver. If you want to have a hand phone, for example.
So are you scouting for mines now?
Of course. We've been doing it for 45 years.
How much cash do you have to put in new mines?
This is a fantastically high-risk, high-reward basis. This particular deposit, Sunrise, I've worked with Sam Riegel, our CEO, for 14 years. And in Australia, in order to mine this kind of thing, you have to make an agreement with the local Aboriginals who've been there 50,000 years. And that can take a decade, sitting down and playing the didgeridoo and getting to know each other and develop trust. So mining is a miserable business. It's not for intelligent people. Somebody has to go out and do this, or you won't have this modern studio.
But you have great fun doing it.
We love it, yeah. We love it, yeah.
Robert, thank you so much for joining us. Robert Freeland, Chairman of Sunrise Energy Metals. Up next, we'll have Bloomberg Brief. Look, there's quite a lot of that was a great conversation with Robert Freeland. We'll continue the theme on AI. The other thing we're watching out for is, of course, that data in the U.S. that we saw on Friday, really putting a little bit of a dampener when it comes to interest rate hikes in the U.S. We're seeing a surge in stocks holding near record highs, and also oil ticking higher because there's no end in sight with the negotiation between Iran, Oman, and the U.S. This is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Are you a different president from your father?
I have to be. It's a different time. There's fundamental lessons that I still hold close to my heart. But in terms of the practical things that you do, very few of those things apply any longer.
How is Mom?
She's
in her 90s.
Yeah, but I always say she's 95 years old. She didn't get the memo. She doesn't believe she's 95. And she's still very active. I mean, I still get calls from her, and she says, you need to do this, you need to do that. And she doesn't let her age hold her back.
Does she try to advise you, even as president of the Philippines?
Constantly. And, you know, I always learn something new with my mom. In my family, she's the real politician, and she's a natural. My father was an intellect, he was a statesman. And we always said that he lived in his head. You know, he was very, very, very deep thinker. That's where I learned. My mother, on the other hand, she has this uncanny ability to connect with any kind of person. Any person she runs into in the street, kings, presidents, anyone, her childhood friend, she doesn't know how to fight. She's very bad at conflict.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures gaining for the most part after a sharp slowdown in the U.S. labor market pushed stocks to fresh records. Oil higher now as uncertainty around the Iran-Oman shipping deal. President Trump leans on financial pressure as Tehran rejects talks with Washington. All of that as markets look ahead to the latest inflation data coming later this week. Well, the yen continuing to reverse some of those post-intervention gains. Let's get a check on the markets around the world. Here's Winnie Su in Hong Kong for the latest from Asia. Winnie.
Yeah, good morning, Bonnie. Well, as you just mentioned, nothing seemed to be able to really help the yen from weakening further. Now we are seeing the Japanese currency weakening by more than 0.5% today as it inches closer to that 159 level against the dollar. Now we did see a bit of a strengthening on Friday following those softer U.S. jobs data, but we are even also seeing the Bank of Japan's summary of opinions pointing to the upside of inflation risks as well as potentially earlier hikes. But those are not really helpful because investors are betting that the yen would weaken further given that wide gap between the U.S. and Japan's rate differentials. And for now, at least that hawkish tone from the Bank of Japan is being reflected in the bond space as we see the bond yields rising further. Now, flip aboard, we take a look at the broader Asia market, a bit more towards the upside, and we are seeing tech stocks doing the lifting, while Korean stocks actually underperformed a bit today as investors rotating into the small cap gauge Kosdaq, which is up about 6% today. Now, the onshore stocks are also seeing a bit of weakness as inflation numbers for July really coming through weaker than expected.
Yeah, same for China. Winnie, thank you so much. That's Winnie Su there in Hong Kong. Now let's get over to London for a look at Europe with Justina Lee. Justina.
Good morning, Bonnie. Now, it's a pretty quiet day here today with the STOXX Europe 600 essentially flat and kind of hovering near record highs. The strongest sector today, though, is tech, led by the likes of ASML having a great day. Now, one headwind ahead for Europe is that, with Iran and Oman kind of not reaching a deal yet to reopen the Strait of Hormuz, that doesn't just affect oil, it also affects the transport of those natural gas supplies that Europe is really trying to build up ahead of the heating season. And we can see here that Europe gas futures are up 5% today. Now, that could be a headwind at what has been a pretty good time for Europe lately. Now, if we flip the board here, we can see the Citi Economic Surprise Index for both Europe and the U.S. And we can see here that for the U.S., it's been rolling over, but for the Europe, it's been on the up and up, a sign that European economic data actually have been surprising a lot of economists despite kind of the gains in oil. And that's kind of been part of the reason why STOXX Europe 600 has been reaching record highs as well. But if we do see kind of further disruptions in natural gas supplies, that could be a headwind with the winter coming up.
Yeah, we're all for highs, Justina, but that 58 plus euros per megawatt hour not going to be very helpful to the European market this winter. All right, let's take a look at the United States because obviously we hit a record in the S&P on Friday, even after the weaker than expected jobs report. That said, JP Morgan is upping its price target now to 8,000 for year-end for the S&P 500, looking at better earnings, particularly from the hyperscalers, and suggesting that perhaps we'll see a 35% year-over-year growth when it comes to earnings per share for the entire year. That said, we are basically at JP Morgan's previous target, which was 7,800. As you can see, the NASDAQ 100 futures also pointing to nice gains. That index was up 1.2% on Friday, so the optimism continues apace even after the weak payrolls report. And we are pricing in a little bit less of a chance of a September rate hike now. Russell 2000 futures a little bit lower at the moment. Let's take a look at yields because we held on to those gains for yields. We did see a little bit of bond selling. The 2-year at almost 4.21 now, the 10-year at 4.65, and that 30-year remaining elevated at 5.20. It bears saying in this context as well that oil is higher today with Brent above $84 a barrel. All right, let's get to some individual pre-market movers now. For that, we'll go back over to London and Chloe Melly.
Good morning, Bonnie. Let's start with Berkshire Hathaway, which has bought back about $4.5 billion of its own shares. And this is seen as the company really putting its own cash pile to work. And we are seeing that being received. Reported a big jump in monthly sales, which is seen, of course, as a sign of sustained AI demand. And is probably quite reassuring as well to investors, given the volatility in the AI sector that we have seen recently. And so we're up slightly. The ADRs are up slightly as well this morning. And finally, space companies are in focus as well today because we have Rocket Lab earnings later today after the close. And so we are up in the green as we await for those earnings after the close today.
SpaceX as well, as you can see, up 2.6%. Chloe, thank you so much. Chloe Melly will be back later in the hour. Also coming up this hour, we'll look at the bond market and the upcoming CPI data with Terry Wiseman of Macquarie. But first, oil advancing as a final deal between Iran and Oman to reopen the Strait of Hormuz still hangs in the balance. Tehran also ruling out direct talks with Washington for now. Bloomberg's Abir Abu Omar joins us from Dubai for the latest. Abir, I thought we had an agreement between Iran and Oman. Why aren't we getting the details? Why is it not finalized?
Really good question, Vani. Good morning. Yes, so the deal between Oman and Iran, what we have reported on through the course of last week, is that it is in the midst of getting discussed. Now, there have been some delays. The latest we know from the Iranian side is that the deal is in the final stages of coming to that final line of materializing. We've reported multiple times, of course, on what it will mean for the Strait of Hormuz, the mechanism that will allow ships to start making their way through the Strait of Hormuz. Some details there about outbound ships and inbound ships. But the latest we know from Iran's Foreign Minister Abbas Araghchi is that for now, Iran is ruling out negotiations or wider talks with the United States. He's also said that the repeated violations from the United States on the ceasefire in June hinder any progress in the wider negotiations, that for now, the only talks that are happening are between Iran and Oman on that mechanism that would, according to the Iranian side, only temporarily open the Strait of Hormuz just to get a trickle of this much-needed movement of the oil barrels stuck in the waterway.
What should we read into the fact that Iran seems to be changing up its security team, Abir?
Yeah, so that's another thing that's happened over the weekend, Vani, right? The reshuffling, if you were, in the echelons of power in Iran. What we know, for example, is that Mohammad Bagher Sulghadar, who's a hardliner in the IRGC, was appointed as the political advisor of the Supreme Leader Mujtaba Khamenei. Now, he has come up over the weekend as this key figure who's mentioned some concessions for Iran to reopen the Strait of Hormuz. That includes for the U.S. to remove its naval blockade, for a permanent end to the war, for unblocking of those frozen assets, removal of the oil sanctions. That was not the formal line up until about an hour ago when the foreign ministry came up with a statement saying that the United States must end the war permanently against Iran, and some compensation for the violations that have occurred needs to be paid to Iran for the reopening of the Strait of Hormuz. So we're seeing a lot of conflicting statements, even in the minor negotiations that are happening between Oman and Iran, and what exactly it would take for the reopening of the Strait of Hormuz. Now, to answer your question in a nutshell, that appointment or those reshufflings that we've seen over the weekend, we don't exactly know what it would mean for the state of diplomacy between the United States and Iran. Now, that is already not in a good enough place because we don't have any formal discussions taking place, but it does look like it might pave the way for a more hardline approach, if you were, in Iran, which could be a dangerous or could lead to a dangerous and even more dangerous rhetoric in the wider negotiations that are, for the time being, not taking place.
Yeah, as the president said, the U.S. is only semi-negotiating with Tehran at the moment. Abir Abu Omar in Dubai, thank you so much. Staying in the Middle East, Israeli Prime Minister Benjamin Netanyahu rejecting a proposal for disarming Hamas. Netanyahu responding to a roadmap published by the Board of Peace, backed by President Trump.
Israel rejects the 15-point plan. The IDF will not carry out any withdrawal until Hamas is disarmed. And when I say disarming Hamas, it means the heavy weapons, the less heavy weapons, and the light weapons. All of the weapons. And we are talking about real disarmament, not a fictitious disarmament.
Bloomberg's Dan Williams joins us now from Tel Aviv. So what exactly is Israel responding to in the Board of Peace's plan, Dan?
It's responding to some degree of ambiguity around the sequencing, the scale of what would appear to be a proposal for a quid pro quo set of Israeli troop withdrawals in the Gaza Strip in response to Hamas disarmament. This roadmap was introduced about a week and a half ago. Hamas came back with a hedged consent. It said, however, it would only give up heavy weapons. It also tried to front-load onto that consent issues of Israeli withdrawals, sweeping Israeli withdrawals from the Gaza Strip, and the foundation of a Palestinian state, something that is well over the horizon when you ask most diplomats in this part of the world. What the Israeli Prime Minister has done is effectively harden the previous misgivings that he voiced into what sounds like an outright rejection. It sounds dramatic. However, it's actually of fairly little consequence, given that in the same breath the Israelis point out that they are not actually part of this roadmap. It is a bridging proposal meant to bring Hamas to disarm as part of the Trump proposal for peace in the Gaza Strip, a movement from the ceasefire of last October to peacemaking and stability and reconstruction and reconciliation with Israel. That vision also requires Hamas effectively to step away from government and to give up its arsenal. What the Israelis are doing is telling Hamas it won't be allowed to do things by half measure. It's telling the Board of Peace that as well. However, no one was expecting any serious movement on the plan before November, when the first new so-called humanitarian pilot is due to open in the Gaza Strip to house Palestinians or rehouse Palestinians who have been in tent cities under Hamas rule. That would be once they are presumably freed of Hamas rule one way or the other. November is a month after the Israeli election in October. It appears Netanyahu has his eye on that and on keeping his right-wing partners on side, given that the idea of an Israeli troop withdrawal really is anathema to that political camp in Israel, certainly as this election race heats up.
Yeah, and you wonder how the asks have changed post-war. Hamas always wanted Israel withdrawal, and Israel always wanted Hamas disarmament. Dan, thank you so much. Bloomberg's Dan Williams in Tel Aviv. Now to other top stories trending on the terminal this morning. Berkshire Hathaway spent about $4.5 billion to buy back its own shares in the second quarter, also purchasing almost $20 billion of equities. The move's signal CEO Greg Abel is putting more of Berkshire's cash pile to work. The firm's cash hoard falling from $397 billion to $365.5 billion in the second quarter. Taylor Farms is pulling more than a dozen prepared food items containing jalapenos from retailers over salmonella concerns. The company says it is no longer sourcing jalapenos from the Salinas, the company flagged as a potential source of a salmonella outbreak. The move comes just weeks after federal health officials tied Taylor Farms to a cyclospora outbreak. The commander of an Air India flight that hit severe turbulence last week is set to undergo a second round of drug screening. India's government is looking to confirm whether he was under the influence of a psychoactive substance. The incident left several passengers and cabin crew members injured. Coming up, AI demand alive and well. TSMC sales up 45% in July. More on that next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bloomberg Brief, I'm Vonnie Quinn in New York. TSMC reporting a 45% rise in monthly sales. The supplier for NVIDIA and Apple reached $14.5 billion in revenue in July. In a sign, demand for AI hardware remains strong. Joining us now is Matt Bloxham of Bloomberg Intelligence. How on earth, Matt, are these new customers or older customers just buying more? What's going on?
Yeah, I think this is primarily existing customers, continuing to put in big orders to the company. Now, obviously 45% year-on-year growth feels like a big number. It's actually a slowdown from the kind of 68% or so growth they saw in June, but it is significantly ahead of the year-to-date total, which is kind of around the 36% year-on-year. So momentum is really strong. I don't think this is a big surprise to the market because it's only a few weeks back that they raised full-year guidance on a dollar basis to more than 40% growth. The previous guidance was about 30% growth, and they raised their capital spending plans to kind of match the demand they're seeing. So I think this strong print is consistent with what we've heard from the company recently and reflective that near-term demand for AI, compute, and all the chips that go into that is incredibly strong.
Yeah, those CapEx plans, they're now looking at $60 to $64 billion this year. Is that in Arizona, in Taiwan? Where are the details for us?
Yeah, I don't think they kind of gave so much away when they gave that guidance, but I think it is across their full capability. Obviously, they are investing substantially in Taiwan, but they are also investing heavily in the US to kind of match that Made in America tag that the administration is going for. So I think that incremental spend is coming across a number of regions.
Matt, CXMT, the Chinese chip maker that rose 500% after its IPO, Apple looking to use it now in China. Is that a major customer for CXMT, or had Apple already been a customer?
So I think potentially Apple could be a major customer for them. I mean, it's interesting that Apple is looking to source local supply for chips for its major products. I think that's partly a reflection of the constraints on global supply for the technology they need, partly also that perhaps geopolitical sensitivities mean they might need to source some components locally. But supply is constrained, so I think their ability to tap into this company as a near-term supplier could be limited because that company is prioritizing local Chinese manufacturers. So I think this is perhaps more of a long-term play for Apple, recognizing that they need to continue to diversify their supply of key components across the globe to make sure they can meet demand wherever it is.
All right, Matt Bloxham of Bloomberg Intelligence, thank you so much. And staying with China, Beijing has been ramping up efforts to challenge U.S. dominance in AI by marshalling the power of its $28 trillion stock and bond market. Bloomberg's Lucille Liu joins us now for more. So I just mentioned it there, CXMT rising 500% in the few hours after its IPO. What's the significance of China now really beginning to use the heft of its capital markets as a policy tool?
Yeah, absolutely, Vonnie. It's really quite an extraordinary story, of course. CXMT displacing, the Industrial and Commercial Bank of China as the mainland's most valuable share when it listed. And of course, that we know going into that listing, there was this, tech sell-off that was sort of threatening to, ruin the momentum. And that's when Beijing intervened with, one of its broadest rescue efforts in years. And now we know that from people familiar reporting that, CXMT's debut was actually a factor in that decision to intervene. So, this combined with sort of these efforts to fast-track IPOs, to encourage, banks to back these science and technology bonds, it really shows Beijing's shifting strategy on how to finance its tech push and its AI push in particular. And so by leveraging, those household savings at $26 trillion at this point, it's the world's largest pool of household savings. Beijing is really looking to close that gap between U.S., tech listings, which really dwarf kind of what China has had in the past years, and really try to push forward in this AI tech race.
Yeah, a data point that really struck me was that Chinese tech firms have raised $217 billion through IPOs. For every dollar they secured, U.S. peers raised more than $6. But that's not that wide of a gap given where we're coming from. Can I ask you about the economy too, though, because we are starting to see a little bit of disinflation coming back into the Chinese economy. How concerned will policymakers be?
Yeah, over the weekend, we did have those CPI, PPI figures. Of course, we've seen this in June a little bit, but now it's become very obvious, you know, as the oil shock sort of fades, you know, China's deflation is, you know, coming back into the picture. So for producer prices in particular, this was the first time since March that we've seen a slowdown. You know, both are still in expansion territory, but they are slowing, and they did slow much more than expected in July. So, you know, analysts are saying, you know, the deflation pressures are coming back, and especially sort of, you know, as the oil shock fades in this post-oil shock era, having healthy inflation is still, you know, a long ways off. So, you know, we did have that Politburo meeting last month, and, you know, they did, you know, policymakers did sort of open the door for stimulus, although they didn't actually introduce any measures. So we are looking for that in the second half of the year.
Lucille, thank you so much for that update. That is Bloomberg's Lucille Liu in Beijing. Coming up, a look at what's making headlines in your front page news next. This is Bloomberg.
How do you see AI changing gaming and game development in the future?
Look, I think the biggest thing that I'm thinking about is how do we just make sure it's solving problems. On the game development side, I've gone to a lot of our studios, you know, big and small, and I'm blown away with how they're using AI in the production pipelines, how they're using it for iteration and prototyping. That's not production ready, there's still work. And so, you know, 30% of game development is software, and so there's the traditional applications that we see in enterprise. At the same time, I do not think AI will replace AAA games. I think it's entirely possible, though, that AI represents a new category of games and a new type of development and enables more people to create and participate. And we'll keep an eye on that, and we'll see how we best serve that.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheets.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York, and it's time now for your front page news. First up, the Washington Post reporting the Pentagon is pressing defense firms to rapidly escalate the production and delivery of weapons as the war with Iran depletes stocks. Deputy Defense Secretary Steve Feinberg has given industry leaders no more than 21 days to submit plans to drive faster delivery schedules. Next up, the New York Times reporting on President Trump's appointment of Will Scharf as White House counsel. Scharf, according to The Times, a deeply conservative lawyer, the current staff secretary. The Times says Scharf has embraced most extreme elements of Trump's agenda, but has thrown up flares over matters he believes could imperil the presidency. And finally, the Financial Times, leading with China's shipping group Sea Legend, starting a weekly service through the Arctic as an alternative to the world's traditional shipping routes. The route, branded the Ice Silk Road, will cut in half the usual 40-day sailing time between China and Europe, as melting polar ice shortens the journey. That's your front page news. Coming up, we're going to speak with Terry Wiseman about Friday's non-farm payrolls report and the Fed's journey.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom. This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlet Fu, reporting from America's biggest military shipyard. This is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures gaining for the most part after a sharp slowdown in the U.S. labor market pushed stocks to a record. Oil higher as uncertainties linger around the Iran-Oman shipping deal. President Trump leans on financial pressure as Tehran rejects talks with Washington. All of that as markets look ahead to the latest inflation data coming later this week. So let's take a look at those markets then, and bear in mind oil is higher with Brent above $84 a barrel now. So you have S&P futures continuing to climb. We're basically at JP Morgan's old target, and that's interesting because they just raised their S&P year-end target to 8,000 now on a strong earnings season, faster AI monetization, they say, and also revising their full-year earnings estimates higher, implying a 35% growth rate year over year. The Nasdaq 100 was up 1.25% on Friday, up another 0.5% in terms of futures today. Russell 2000 may be the laggard today. Let's take a look at yields because we're repricing a potential hike in September, but we're still at a 45% chance. That 2-year yield almost at 4.21. The 10-year yield holding on to 4.65, even after we had a bit of a sell-off on Friday. And the 30-year yield very close now to 5.21, creeping ever higher. For some stocks to watch now, let's get over to London and Chloe Melly.
Good morning, Bonnie. Berkshire Hathaway has spent about $4.5 billion to buy back its own shares. And this is the company essentially putting its huge cash pile to work. Some analysts are also saying this is a way for the CEO to really take the helm and assert himself. And so we are seeing this being reacted to quite positively by the market. We're up about 0.5% this morning for Berkshire in pre-market trading. We are also moving higher for TSMC. The ADRs are in the green this morning after the company reported a big jump in monthly sales. Of course, this is seen as quite reassuring for investors in the AI trade, given all of the volatility and the investor fears around AI overspending that we've seen in that sector lately. So we're up about 0.3% there. And finally, space companies are also in focus today and moving quite a lot higher. Both SpaceX and Rocket Lab are definitely in the green this morning, ahead of those earnings from Rocket Lab later today after the close. Both of those companies, this sector in general, is really benefiting from those rising investments in space programs and space defense as well. And so we have quite a lot of enthusiasm around that industry today.
Back up to 137 and change on SpaceX. Chloe, thank you so much. Chloe Melly there. Fed Governor Lisa Cook has warned on inflation just in the last week as we await the latest print on Wednesday. She said, quote, with 5 years of above target inflation, the risk grows that higher inflation may become entrenched in price and wage setting behavior, leading persistence that would be much harder for us to attack. Terry Wiseman of Macquarie weighing in, writing, quote, we believe that the median FOMC voter will drag Kevin Warsh to accept a rate hike likely in October. I'm pleased to say Terry joins us now at the desk. He's Global FX and Rates Strategist at Macquarie. Now, that was before the non-farm payrolls report, Terry. Did the weakness in the labour market cause any change to that outlook?
Yeah, well, let's start with the premise of your question, which is that the employment report was weak. It was weak in the sense that non-farm payrolls were negative. It was not weak, certainly, in the unemployment rate, right? We went from 4.2% to 4.1%. It's important to keep in mind that 4.1% is below where the Federal Reserve itself, in its summary of economic projections, believed that the unemployment would be at this time of the year. They thought it was going to be closer to 4.3%. So in that respect, the labor market may actually be tighter right now than the Fed anticipated a few months ago. That's important to keep in mind. The other thing that's important to keep in mind is one of the reasons why non-farm payrolls was weak, and in fact it was weak, it was a negative number, about negative 23,000, is in part because we have lower labor participation, labor force participation in the U.S. That was evident in the household survey. It's been falling, and therefore people are leaving the labor market. And of course, that's going to put downward pressure on the non-farm payrolls. So will the administration's immigration policies. I'm more inclined to just look and see what the unemployment rate is doing. In effect, the Fed has to be looking at unemployment. That's part of their dual mandate, not employment growth. So from that perspective, it wasn't a very dovish report.
So great points. The only thing is it's not just the unemployment rate, right? You have to look at the declining wage growth.
That's right.
You have to look at the supply. So if the supply isn't there, then maybe it's a different number that we need in order to keep the U.S. economy, ticking along in terms of the labor market. And so do we even know what a weaker labor market looks like these days?
It's very tough to admittedly, it's very tough to say what a weak labor market looks like. But that's exactly why the Fed and economists don't necessarily look at the quantity of labor, the things that we measure through the establishment survey, how many jobs were created. It's always important to look back to prices because those are the best signal, of course, of how tight something is. It's standard economics. If something is tight, of course, the price will go up. If it's loose, if the market is loose, the price will go down. That's another signal that the Federal Reserve should be using. If it does, I think it's inclined to still hike. Now, will it be September? I don't think so. I had said before the report that it was likely to be October, but that was because we had to wait until the October meeting to see the revisions in the personal consumption expenditure price index. Those are going to be revised 12 months with a 12-month look back. Now, with this ostensibly weak employment report, is it possible that we will not get a majority on the FOMC to hike in October either? Yes, that's possible. December doesn't look like the wrong time to do it, of course, either, because we have a new summary of economic projections, and the Fed likes to make bold moves or change the direction of policy concordant with the release of the dots and the SEP. So December is certainly a possibility as
And
well.
not that the midterms would have anything to do with it, but of course they would be out of the way, which also wouldn't hurt at the margin, right? So Terry, if that's indeed the case, you're assuming that a hike is the next step, that we will need to get inflation under control. What if the CPI data comes in a little benign?
Look, it's altogether possible that the CPI number comes in benign, but even if it comes in a little bit benign, if you look at let's say the four important measures that the market looks at, which is core CPI, headline CPI, core PCE price index, and headline PCE price index, three of them are above 3% on a year-over-year basis. So it would have to be a dramatic reduction in year-over-year inflation for this to really change the zeitgeist at the Fed, which has been very well articulated by some of the dissenters. They don't point to just inflation being high recently. They point to inflation being high for the last few years as the narrative that's compelling them to hike.
Yeah, it has been a long time, and it does feel like the voices are getting more vociferous as we're getting less forward guidance. The idea that long-end rates have been creeping higher and that that's a concern, why are people surprised? I mean, the market obviously was a little bit surprised because it's repricing, but many of the top hedge fund managers have been waiting for long-end yields to rise because of our fiscal situation.
That's right. The fiscal situation is part of this. The fact that the U.S. can't seem to get, in many countries, in fact, I shouldn't single out the U.S. here, cannot get their debt under control, and that they are looking towards several more years of heavy bond issuance should be something that should depress the price now. You certainly would not buy something today if you believe that the supply is going to be large in the coming few years. So I do believe that at least perceptions about the deficit play a role, but so do perceptions about growth. I mean, one can make a case that if growth is going to be high and productivity is going to be high, real rates of interest should be high to enable consumers to save more and not spend today. And also we have a situation where, although in the surveys, not all the surveys are pointing to high long-term inflation expectations, but some of them are. And of course, if you're holding nominal bonds and it's an inflationary environment, structurally, those are no longer as attractive as they used to be. So there could be a complex of three reasons why long-term yields are high. I like to think that a lot of this has to do ultimately with the structural trend behind inflation. There's a lot of things globally that are creating inflation. Deglobalization, demographic changes, climate changes, et cetera. And although we might get a productivity boost from AI, it's not clear that it's going to manage to offset all of the other inflationary forces that are out there.
Or how fast it will come, and we'll see the results of it. Terry, I have to ask you the outlook for the dollar among all of this. The Sell America trade was sort of trying to creep back in again at the same time, you know, with the war in Iran and oil prices and so on. Disinflation in China. I mean, there's a lot of challenges out there.
There are, and I think the key thing right now is in the short term is the price of oil, maybe even in the medium term as well, because what we have seen during the war, i.e. from the late February into early June, late May, was that high oil prices were actually good for the dollar, and that makes a lot of sense, as I keep repeating, because the U.S. is a net exporter of basic energy. When the thing you export, when its price goes up, you benefit. Incomes actually benefited in the U.S. Real incomes benefited in aggregate from that oil price increase. So in the meantime, right, if oil prices stay high and it compels the Fed to raise rates, because it's certainly part of the picture for them, I think the dollar will be, let's call it robust, steady. Okay. Looking into next year, though, if oil prices finally fall, we get on the other side of these French elections, and the dollar falls out of favor in large part because this war has been seen as something that has debilitated the perception of the U.S. around the world. Yes, then we can come back to that diversification trade next year.
Well, we will have many conversations before then.
Good.
Terry, thank you so much for your trip into studio. In particular, that's Terry Wiseman of Macquarie. Now to other top stories trending on the terminal this morning. Russia says 13 people were killed in a Ukrainian attack on a Tatarstan energy hub. The large-scale drone assault targeted industrial sites and residential areas, according to local officials, and left 40 people injured. Paramount has agreed to sign contracts with major theatre chains, guaranteeing it'll release 30 movies in theaters this year if it acquires Warner Brothers. Bloomberg learns that AMC and Cineworld's Regal Cinemas have been offered 3-year agreements, which state the movies would remain exclusively in theaters for 45 days and unavailable on streaming for 90. And U.S. wheat futures jumped to their highest in more than a week on concerns shipping disruptions in the Black Sea will create supply shortages. Turkey has temporarily halted its Black Sea transits over heightened security risks brought on by the Russia-Ukraine war. Ukraine has also stated that Russian attacks could cut exports of its agricultural products in half. Coming up, Iran and Oman remain short of a deal to reopen the Strait of Hormuz. We'll get the latest out of the Middle East. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
At present, we are not engaged in any negotiations with the United States. As long as the American violation of the Memorandum of Understanding continues and the U.S. does not make amends for its violations, there is no possibility of resuming negotiations.
Iran's foreign minister ruling out direct talks with the U.S., adding that an agreement with Oman to establish a shipping route through the Strait of Hormuz is, quote, very close. Bloomberg's Abir Abu Omar is back with us from Dubai. A little bit of a change in tone from Arakshi, who had always been the one to be reaching out and to be putting a positive tone on things. Abir, what has changed here?
Yeah, good morning, Vonnie. You're right. I mean, and even over the past hour or so, we have heard from the foreign ministry asking for compensation from the United States and a complete end to the war before they consider even coming back to the negotiating table. So you're seeing some reshuffling when it comes to the echelons of power in Iran. Over the weekend, we've reported on a few individuals who've reshuffled in the wider cabinet. That includes Mohammad Baqir Zulghadar, who is a hardliner, known hardliner in Iran. He accepted the new position as a political advisor to the Supreme Leader Mujtaba Khamenei. Now, this is someone who has said over the weekend that in order for Iran to come to the negotiating table with the United States, that the U.S. needs to end the war permanently, lift the U.S. naval blockade on the Strait of Hormuz, unblock those frozen assets, oil sanctions removed. So a return really to some of those concessions that we have spoken about during those MOU negotiations back in June in Switzerland. Those had obviously left the window, Vonnie, when we started discussing the Strait of Hormuz and reopening the Strait of Hormuz. And this is still front and center. I mean, it's noteworthy to mention here that while we have seen a return to a kind of harder approach when it comes to Iranian officials bringing those sort of requests to the table, front and center remains the Strait of Hormuz and the negotiations that you mentioned with Oman to establish some kind of mechanism to get a trickle of movement through the waterway. We understand that those negotiations between Oman and Iran are in the final stages. A formalized draft is yet to be here. We will be able to better determine just what exactly would happen to the physical movement of those oil barrels once we see what the formal statement from both sides looks like. For the time being, threats in the Strait of Hormuz are still very much there. The latest we know is a ship of ADNOC, the UAE oil company, that was attacked in the Strait of Hormuz over the weekend, killing one individual and injuring over a dozen people. So that threat that exists in the waterway is still very much there and is still at the top of mind for a lot of the countries in the GCC and then a lot of the ship owners that are trying to make their way through the Strait of Hormuz, even with their lights switched off.
Yeah, thousands still stranded of sailors. Abir, thank you so much. Abir Abu Omar in Dubai. Turning to tech, TSMC reporting a 45% increase in monthly sales, revenue reaching $14.5 billion as the Taiwanese chipmaker benefits from the global AI build-out. Let's bring in Matt Boxham of Bloomberg Intelligence for more. So Matt, another whopping sales figure. Is it existing customers buying more, promising to buy more, new customers?
Yeah, I think this is largely existing customers coming through with demand. You know, TSMC is the supplier to a huge range of companies, notably NVIDIA and Apple. So I think this is reflective of the amount of demand those companies are seeing for their products and services. It's a bit of a slowdown from the June month, which grew something like 68 or 69% year on year, but it's still well ahead of the year-to-date growth, which is around 35, 36%. And you're not that surprising that we've seen another strong print, given that the company not so long ago raised full-year guidance for revenue growth. So in US dollar terms, looking now to grow 2026 revenues by more than 40%. The previous target was around 30%. So momentum is really strong, certainly near term for TSMC.
Sony, back in the headlines, it's teaming up with TSMC now to build a $6.4 billion plant, a Japanese sensor plant. What would that be for, Matt?
Yeah, so I guess as you see the AI environment evolve and we get into physical AI, where you've got lots more robots, you've got autonomous driving, sensors is going to be a massively important part of how these bits of hardware communicate with each other and with the wider internet. And so I think along with a number of companies, both TSMC and Sony, seeing that they need to build a lot of capacity, both for their own products, but for the kind of broader market. So this wouldn't come on stream for a couple of years, but is anticipating that big surge in the need of sensors for all of these AI products that are yet to come onto the market.
Matt, I want to ask you about the CXMT story that the Wall Street Journal is reporting out. Apple potentially taking on CXMT semiconductors for its products in China. This could be the beginning of a whole new relationship, not just for Apple, but for other companies too, potentially, you know?
Yeah, it could also, with the geopolitical tensions, we're seeing, quite a polarization and a fragmentation of what used to be a global supply chain. Obviously, there's huge shortages for things like memory chips, and I think Apple here is looking to secure more of a strategic midterm local supply for some of that essential technology. I don't think this is going to make a big difference near term, because from what we've heard, CXMT is already maxed out on this year's supply and is prioritizing local companies such as ByteDance and Tencent. But they do have plans to significantly increase their manufacturing capacity over the next couple of years. So I think that could create an opportunity for Apple to kind of get some of that supply.
And interestingly, CXMT eclipsed ICBC to become the largest market cap company in China after its IPO just recently. Matt, thank you so much. Matt Boxham of Bloomberg Intelligence. Now to earnings, and Berkshire Hathaway's in particular, its latest report revealing it spent about $4.5 billion to buy back its own shares and also purchased nearly $20 billion of equities in the period. The increase in capital deployment signaling CEO Greg Abel is putting more of the firm's cash pile to work. For more, Bloomberg's Tom Metcalf joins us now. Tom, we're making a lot of this, but it's essentially a tiny, tiny portion of the cash reserves. Was it more of a statement that Greg Abel isn't afraid to make decisions, or is it really a belief that, you know, Alphabet is worth, you know, a couple of extra $1 billion in an investment at these prices?
Yeah, no, that's absolutely the right context. We're talking about a company here in Berkshire which has something like, close to $400 billion to deploy. So, whatever they're doing, broadly speaking, is fairly marginal until they really bring out the bazookas, whether on the buybacks or, perhaps on some absolutely ginormous mega deal, which would probably transform markets. But, there's some interesting sort of signs here. You've got a $4.5 billion buyback, shows, look, he's not afraid to, pull that lever. And then, of course, in terms of where they're putting a bit more money in their equities book, yes, Alphabet, an insurer, and sort of the other 5 to 10 billion, we're not actually sure where it's gone yet. But I think the most important thing to remember is if you're hoping for Berkshire to really spend, it down its cash pile, we're going to need to see a lot more kind of big swings than we've seen so far.
Yeah, I mean, still interested in Japanese companies. They were involved in the brokerages, and this deal was an insurance company. And also, of course, we can't forget the Taylor Morrison acquisition. That was a pretty big acquisition.
Yeah, exactly. That's an interesting one where they're, buying into the US house market. Again, it's a nice sign of what maybe Greg Abel's trying to do, in that, he looks like from that acquisition, he's trying to kind of almost make a vertical provider. He can go into the insurance, the financing, obviously do the house building themselves. And that's what some analysts are saying is actually, maybe that's how he'll leave his imprint on Berkshire Hathaway, is a bit like under, Berkshire Hathaway Energy, where effectively those companies all spoke to each other or were really aligned. In other areas of Berkshire Hathaway, these operating companies are effectively independent entities. And perhaps this is a signal that Abel sees, hey, there's a way we can kind of, push synergies, get everyone much more kind of closely aligned and talking together to each other even. And that would be a way, Berkshire is sort of transformed under his tenure.
All right, looking forward to more. Tom Metcalf, thank you so much for that. Coming up, we're going to get you set up for your trading week. This is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this week that we know of. First of all, we get tech earnings from CoreWeave and Supermicro. They're coming tomorrow. Then on Wednesday, the market will be looking at CPI data, followed by PPI and jobless claims on Thursday. And we get some more Fed speak this week from Beth Hammack and Tom Barkin throughout the week. Let's take a look at your macro picture as we head into a Monday following an S&P record Friday, by the way, with JP Morgan today upping its price target on the S&P to 8,000 from 7,800. Brent crude is above $84.50 a barrel now as things look just a little bit more fragile in the Middle East. Maybe talks breaking down or not happening. NASDAQ 100 futures, though, pointed higher. They're off their session highs, but nevertheless, after we saw that gain of more than 1.2% Friday, looking to continue those climbs today. The two-year yield also holding on to its elevation there at 4.21 after Friday's non-farm payrolls report. The market's still digesting that. That's it for Bloomberg Brief. Surveillance is next.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The good news in that is that you are seeing that broadening out of earnings.
What's happened with this AI trade is that we've extended the duration of equities.
I think the pressure on this market will resume.
You need bulls for bull markets. The question is not, can you get earnings, good earnings for 1 or 2 quarters? The question is, can you get it persistently?
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. Wall Street bulls feeling confident after the biggest weekly stock rally since April, with JP Morgan the latest to upgrade its year-end forecast for the S&P 500. The next test for rates coming Wednesday with the release of key inflation data following last week's disappointing jobs print and oil prices steadying. If with President Trump semi-negotiating with Tehran and low-keying it in the face of ongoing threats.
Basically, right now, what it looks like is that this administration wants to continue to use economic power. We didn't hear the president escalate once again in a military fashion, but just saying that they're broke and inflation is very high for Iran. But in order for there to be really a sense of relief, the Strait of Hormuz has to open. And even though we are close to potentially having a deal between Iran and Oman, Iran keeps tying it to just things that the United States cannot agree on.
You know, it's striking to see 2 consecutive weeks of oil prices coming down significantly, the sense that perhaps we're past the peak in terms of tensions, even amid all of this, and that's really going to feed into the inflation print on Wednesday and then again on Thursday with PPI. A question of how much that's going to bleed into the disinflation that might bail out this Fed from having to actually move.
Right, lower oil prices, all of this on the screen is definitely helpful for the Fed on Wednesday, which if Jonathan was here, I think he would say that's when the week really starts this week. It's going to be the anchor for the week in terms of everything is going to stem from this. It is incredibly important to this White House, and it is incredibly important to the Fed as they decide what they're going to do in September.
There's a lot of other things other than just that. If Jonathan were here, he and I would be arguing. Jonathan is off for the week, but he will be back the following week. That is kind of the key, right? That Wednesday and Thursday, PPI, CPI, and then PPI. Of course, we do get also bond auctions. I know that other people might say that they're not as interesting, but we do get 3s, 2s, 5s, and 2s, 10s, and 30-year auctions from the Treasury Department, which will be really important given the yield move we've seen more broadly.
Usually, maybe it's not as interesting, but I think this week it is very interesting. Not just that I'm sitting in your seat. I think this week it is interesting because you see the Treasury Department potentially have to borrow more so on the short end, and this Treasury Secretary who is concerned about rising yields on the long end.
Yeah, Treasury Secretary Scott Bessent making a point to talk about some of his efforts over the weekend. Right now, we are seeing in markets the sense of just this incredible exuberance taking a pause. Last week, we saw the best weekly gain going back to April 17th in both the S&P 500 and the NASDAQ, up more than 5% for the NASDAQ as well as the S&P. Today, building just a touch and that up 0.1%. You are seeing the dollar regain just a little bit, not just versus the euro, but also versus the yen. We'll be talking about that coming up as the intervention from last week, maybe not having as much heft as some people would expect, not sticking around. 10-year yields inflecting up just a little bit after what we have seen, which is actually much lower benchmark yields. 2-year yields down 10 basis points last week. 30-year yields down 7 basis points last week. Let's see what the inflation data is actually going to show us. Coming up, Aaron Kennan of Clear Harbor Asset Management, with equities holding near record highs. Colonel Wayne Sanders of Bloomberg Intelligence as President Trump claims to be semi-negotiating with Iran. And Sarah Kunst of Clio Capital as TSMC sales surge on AI demand. To begin this hour with stocks looking for direction ahead of more tech earnings, we also get that this week. Aaron Kennan of Clear Harbor Asset Management writing, investors are beginning to differentiate between companies simply exposed to AI and those capable of leveraging it to expand margins and generate durable free cash flow. Aaron joins us here in New York. Thank you so much for being with us.
Great to be here.
So let's just talk a little bit about some of the upgrades that we've seen. JP Morgan came out, the strategist said that 8,000 for year end. That isn't exactly a screaming buy, considering we're almost at their year-end target right now. What is it about the earnings season that makes people retain their bullish tilt?
Well, good question, Lisa. I think at the end of the day, we've seen massive growth, Q1 earnings, now Q2 earnings, even if you net out the extraordinary sort of Amazon and Google one-time aspect of the earnings, are still growing at well over 30% annualized growth rate. And it looks to me that, it looks like the market is suggesting as well that this AI revolution is very robust and is going to continue. That CapEx at $1.1 trillion on an annualized basis estimate is probably going to ratchet up again next year. and that we're going to start to perhaps see a shift in the momentum within the equity market, within the AI trade. And that's something that we're taking a close look at. You know, where's the return on invested capital going within the AI sort of stack? I think that's what the market's trying to decipher right now. A lot of the momentum in July has come back into the market, but there's sort of a question whether or not we're going to start to see more differentiation going on. How does AI impact the software sector? 2 months ago, it was called the SaaSpocalypse. And now we're thinking about the possibility that LLMs and the models, the cheaper ones that provide about 95% of what the greatest models provide today, may just be enough to be able to infiltrate the software companies and add significant value to those from an earnings perspective going forward.
Yeah, and 4 weeks ago, we were talking about the broadening out, not necessarily this concentration of performance in the hyperscalers and even the chip names, and suddenly we're back to the hyperscalers and the chip names. I mean, where are we going to go with that sort of toggling back and forth between who wins in this rolling ball of cash?
Yeah, well, I mean, it's a good question. Memory is still an extraordinarily high level of demand with limited supply. We think that's going to continue into 2027. But there's a question about momentum. And there's also a question when we look at the broader market where we're at essentially all-time highs as of Friday. The employment picture has softened on the margin, but remains relatively robust. I think, you know, one thing we haven't talked about at the open is we have retail sales this week. What is the consumer thinking? We had McDonald's earnings last week that suggested a softening consumer. So what's the sort of countervailing force beyond the AI forces that we're seeing, which is a huge tailwind towards CapEx spending, towards a big component of the labor market, both engineers and people doing the picks and shovels. But what about the consumer in the lower quartile, lower half of the economy? We're going to get a read on that this week.
You mentioned memory sector volatility in your note. Is that a domestic issue, or is that really just a Korea issue?
Well, I think it's a global issue, from Micron to SK Hynix to Samsung to even the Chinese producers that Apple's trying to break into and be able to have them serve as a source of supply for even the iPhones, for example. And this has been ongoing. Eventually, we're going to have a normalization. That it is a cycle. Is this a 2028 event, a 2029 event? I think the market's really trying to parse through that because multiples are still very low. But you look at gross margins, they're over 80%. Micron, SK Hynix. Can that persist into 2028, 2029? We think probably not. It's one reason, too, why we're seeing operating income across the broader S&P. Margins are expanding. But if we start to see gross margins in memory in 2028, 2029 just normalize, from 80 to 70 or 60, we're going to start to probably see margin contraction, or at least the productivity side of the rest of the market landscape is going to need to accelerate.
And you mentioned Apple wanting to get in on some of these Chinese producers. Also, those memory chips are a lot cheaper. Do you think at some point what brings potentially these numbers in is because there's just demand destruction because they're just too expensive for some consumer products?
I think there's less evidence of that, Anne-Marie, and I think there's just more evidence that there may be right now today with the dearth of memory, double ordering, triple ordering happening. What if we're just ordering to meet demand, and that's something that we start to see in 6 to 12 to 18 months? Could that, sort of spark a deceleration in a component of the AI trade? It actually could bring great cheer to many elements of the AI revolution beyond memory, beyond the chip space. And so we're very excited about that because we could see margins actually expanding within the software segment that's leveraging compute power. And that's very exciting for some of these companies.
So we're talking about the stock side of things, and we keep asking people how contingent is that on the yield space, and this idea that yields, at least if they are going up, are doing so in a controlled manner. And this week we have auctions as well as some of the retail sales, CPI and PPI. How important is it for you that the $25 billion of 30-year notes being sold on Thursday goes well, that we don't see evidence of this crowding out from some of the hyperscaler issuance?
It's an interesting question. I think we have to realize that the vast majority of new Treasury issuance is actually occurring in the front end of the curve, not the long end of the curve. Look at the front end of the curve year to date. It's up almost 75 basis points. The long end of the curve is up about half of that, the long bond. and the 10-year is somewhere in the middle. So I would be more concerned if I were the Treasury, that long-end rates, if they're going to be leveraging and you know, sort of leaning into Treasury bill issuance, into 2-year issuance, that long-end rates continue to go higher. Now, obviously, that's going to be predicated on inflation data, which we see this week, CPI and PPI, how the Fed sort of postures the question around AI. It's a near-term inflationary pressure, but it's a medium to long-term potential disinflationary pressure. That's going to impact the short end of the curve. And that's going to be really important to the Treasury, perhaps more important than the long bond.
It feels like it's been a long summer, right? I mean, it feels like it's just been incredibly tumultuous. It feels like it's been a long year. It feels like we're constantly dealing with new narratives and huge whipsaws in markets. And I looked at the VIX and I was thinking, you know, it's going to show this incredible whipsaw action, and it has fallen to the lowest level going back to early January. How do you make sense of that?
Well, what's interesting, Lisa, is that you're absolutely right. But if you look at the individual security level volatility, the drawdown year to date, the most significant drawdown for the S&P 500 has been 9%. But the average stock within the S&P 500 has had a 23% drawdown. If you look at the NASDAQ, it's been like a 42% drawdown, 42% average stock drawdown on the index, only having been drawn down within this year by about 13 percentage points. So there's a lot of volatility under the surface that sort of belies the VIX.
Aaron Kennan of Clear Harbor Asset Management, thank you so much for being with us. Always great to kick off the week with you. I mean, to me, that was sort of shocking, but it kind of speaks to what a lot of people are talking about, even with the bond space. The 10-year, we're wringing our hands, and yet we've seen this range of, say, 50, 60 basis point, despite everything that we keep hearing with the Federal Reserve.
Range bound, but as Aaron said, like all these stories, everything is under the hood. Julian Emmanuel this weekend, his first line of his note, low VIX is masking huge volatility underneath the index hood.
Which is why a lot of people are talking about single-name stock picking making its return. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Good morning, Lisa. Israel is rejecting a U.S.-backed peace proposal with Hamas. The U.S. plan calls for Hamas to lay down arms in tandem with the gradual withdrawal of Israeli troops. Israel's Prime Minister Benjamin Netanyahu saying the IDF will not carry out any withdrawal until Hamas is genuinely disarmed. The Pentagon is pressing major defense firms to speed up production of key weapons and missile defense systems. Concerns are rising about U.S. weapons stockpiles following the war in Iran. President Donald Trump denies the U.S. is running low on munitions. And J.P. Morgan is raising its S&P year-end target to 8,000 from 7,800. Strategists saying a strong earnings season and faster than expected AI monetization for hyperscalers is boosting its profit estimates. Ed Yardeni is still the most bullish on the street with a year-end target of 8,250. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. And we're almost there. We're almost to 7,800 to give you a sense of how people are catching up to where the market currently is. Up next, waiting for Iran to break.
I want to give them every last chance before decapitation.
I think it'd be very smart to make a deal. We'll see what happens. I'd rather make a deal because I don't want to kill people.
I think it's going to end pretty soon. I don't think they can go much longer.
Colonel Wayne Sanders of Bloomberg Intelligence joins next. You're watching Bloomberg Surveillance.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. In On Site with Haslinda Anand, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Trying to build on what we saw last week, which was the biggest rally going back to April. This morning, we're seeing a bit of a bounce on the S&P 500 thanks to earnings. That has been coming in strong consistently, and it's what every single strategist points to when they talk about upgrades. We're seeing about a 0.1% gain in the S&P futures. NASDAQ futures up 0.3%. That is where the outperformance has been for the first 2 weeks in a while. We're seeing the market cap weight outperform over the equal weight. The Russell 2000 lower by 0.3%. Despite some of the gains that we're seeing in the bond space, 2s, 10s, and 30s really taking its cues from what we saw last week. A huge decline when it comes to rates, at least in the front end of the yield curve, people repricing the possibility of some sort of rate hike in September. After a weak non-farm payrolls report, do we get a shift with the all-important CPI print on Wednesday? We're seeing just a marginal increase at the front of the yield curve, up a basis points to 421. But to me, ultimately, Anne-Marie, and we've been talking about this extensively, how much focus has shifted to the inflation read over non-farm payrolls? Yes, we saw the first contraction in headline jobs going back to February, but the unemployment rate fell to 4.1%. And there are a lot of asterisks under the surface about hiring on a local level, as well as leisure jobs that might have just been a time frame issue with the World Cup.
A lot of asterisks, but a lot of people have taken this as this was a dovish signal. And everyone was already looking towards the inflation print, because what we learned from the Financial Times last week, that for Kevin Warsh, that is going to be really the North Star. So as long as inflation continues to fall and we see CPI fall, then everyone's thinking, okay, we can get through September, it's going to be a hold.
And a lot of this is going to really have to depend on what's going on in the oil space, because even though the headline index in the stock market has not been volatile, oil prices whipsaw from place to place every single day. Today, just ticking up, inflecting higher by about 1% on Brent to $84.40. WTI up about 1% after last week seeing a pretty significant decline. Oil prices, WTI down 7.7% last week. Brent down about 5%. 2 consecutive weeks of declines now, seeing just a bit of a reflection of the increased friction in the region. Under surveillance this morning, waiting for Iran to break.
They want to meet, and we're meeting. We'll see what happens. There's a chance we can make a deal.
At some point, they're going to say, we just can't take it anymore. I want to give them every last chance before decapitation.
I think it'd be very smart to make a deal. We'll see what happens. I'd rather make a deal because I don't want to kill people.
I think it's going to end pretty soon. I don't think they can go much longer.
Here's the latest. President Donald Trump shifting from threats of escalation to, quote, low-keying it with Iran. In an interview with Axios, Trump saying he is ready to let economic pressure build on Tehran. Bloomberg's Abir Abu Omar joins us now from Dubai. Abir, what's your latest take on what exactly the shift in thinking is from President Trump?
Good morning, Lisa. Well, a lot of the analysts that we've been speaking to see the shift as giving credence to the fact that we had so many reports over the past week or so suggesting that the U.S. is running low on ammunition. Now, President Trump, other U.S. officials, as you know, have come up and said that that is not true. They've refuted that argument multiple times. But then when President Trump shifts from threatening to threatening the biggest attack since World War II to saying that he doesn't want to come back to the negotiating table with Iran, and plenty of those harsh remarks, to then saying that he is low-keying it with Iran, that he wants to wait for Iran to succumb to the economic pressure. And while it is true that Iran is facing massive inflation numbers, about 80% year on year, the fact that President Trump suggests that he wants Iran to succumb to the economic pressure is seen by a lot of analysts as an unrealistic argument, because it is very cheap for Iran, and we've made this kind a thesis multiple times. It's very cheap for Iran to produce those drones that have been threatening vessels and tankers in the Strait of Hormuz. And it only takes the threat, right? The idea of a threat for those vessels and tankers that have been stuck in the Strait of Hormuz over the past 5 months to start being a little bit more cautious, trying to make their way through the waterway. And obviously, they have been cautious, trying to make their way through the waterway in the midst of all this uncertainty about whether they're going to actually get hit or not. We've reported again that the deal between Oman and Iran that Iran had said Washington is not involved in is in the final stages. We don't have a formal agreement yet. We don't have a formal draft of what exactly that mechanism will be for ships that are trying to make their way across the waterway. For now, you're seeing traders a little bit cautious. On Brent crude prices, we're seeing them at around 83 when I woke up this morning in Dubai, and then $84 on the barrel. So a little bit of caution there with those threats in the Strait of Hormuz, but also in the Red Sea, the Yemen-based Houthis that have been threatening the movement there as well. You're seeing that elevate prices a little bit on energy and crude products.
Abir Abu Omar, thank you so much for taking the time. Colonel Wayne Sanders of Bloomberg Intelligence joins us now for more. Colonel Sanders, I would love your take on why the new approach from President Trump away from some of the more dramatic rhetoric and to a sort of we can wait and see mode.
Yeah, I think, we've talked about it on here before as well. When you're dealing with a government like Iran, right, if we were dealing with any other country in the world, this would already be over. But when you're dealing with a country like Iran, this theocratic government that's run, we've joked also about calling it a three-headed hydra. You have to deal with the IRGC, you have to deal with the president, and you have to deal with the Supreme National Security Council. And all three of those have to be in alignment to be able to do this. And I think that President Trump is really looking at it and saying, even if we tried to go the obliteration route, unless you are going to just turn Iran into a parking lot, for better terms, you're not going to be able to achieve the center of gravity that you want. You're not going to be able to achieve that mass effect because Iran has proven that they're willing to kill their own people. So from that perspective, I think they're trying to lift and shift. Abir is right, though. I mean, when you're looking at the cheapness in terms of building the Shahed drones does become an issue, and I think that's what's driving what we talked about a second ago as well about the start of this new production, the 21-day deadline that's being pushed from the Pentagon to the industry as well.
We've also learned that a former commander-in-chief of the IRGC is now going to be the new leader of the Supreme National Security Council. Do you think we're going to expect a more aggressive posture? Because at the same time, Washington says there's a real debate going on in Tehran about those who are concerned about the domestic issues like the economy and those who still want to maintain an aggressive posture with the United States.
Yeah, I think this is definitely a very strategic move by Iran to put somebody who is a stronger hardliner into that position, because I think when you were trying to look at the balance between the three parts of the Hydra in that normally you would look at that, the Security Council side of the House is actually one of the ones that's normally more balanced on the political side. And so now putting an IRGC former commander in there is pretty much showing that there's now two sides of it that's going to be leaning more towards the aggressive military posture, and the U.S. should be prepared for that in case.
What do you make of what's going on at the Pentagon, urging defense firms to accelerate weapons production? Does that just signal how low we are on inventories?
I think it's a little bit of an indicator of that. Obviously, it deals mainly with specific types of weapons, right? There is a ton of weapon systems across the military arsenal that the U.S. still has tons of stockpiles. So to say that we are not, prepared for additional fighting, that is not true. Now, if there are certain types of capabilities, especially when you look at PAC-3 interceptors, we know that there's definitely been a depletion there based off of how many we've used, as well as THAAD interceptors, the Terminal High Altitude Air Defense System as well. You look at those, a lot of munitions production facilities are now ramping up on that as part of these larger multi-year framework agreements. Lockheed has been asked to triple their PAC-3 interceptors, quadruple their THAAD interceptors. There's also a precision strike munition, which is a long-range munition. They've been asked to quadruple as well. RTX does a lot with SM-3s, SM-6s to at least double, if not triple, their capacity for those interceptors as well. So all of those pieces are taking place. This 21-day thing that you're seeing right now that's coming from Deputy Feinberg, one of the key things here is the fact that you have to have exquisite munitions, but you also have to have low-cost containerized munitions that can be something that's a little easier there, and then even some more investment into directed energy, the high-energy lasers and high-power microwaves. All of those things are going to be able to help create some type of offset compared to what Iran does with the Shahed drones.
Colonel Wayne Sanders of Bloomberg Intelligence, thank you so much for taking the time. I am struck, Anne-Marie, about how much oil prices have come down and how consecutively they've gone down week after week, even in light of the lack of a resolution. And it just highlights that people expect the peak of this conflict to already be behind us.
Wall Street has moved past it, even though clearly in the region, it is still happening. The strait is effectively closed. Then yesterday, you have the Houthis going after a Saudi oil refinery. You still have issues in terms of what's going on in Russia, Ukraine, the Black Sea, the Caspian Sea. Yet at the moment, Wall Street is moving towards it. But again, how many strategists have come on this program, the Jeff Currys, and saying, do not look at where Brent and WTI are trading. You need to look at where product is. And that's where potentially you see a lot more volatility and a lot more pressure.
Enter CPI on Wednesday and then PPI on Thursday. The expectation is about a 0.1% bounce back after a negative 0.4% decline in the prior read. If we get that, does that give a bit of a sense that maybe we're getting the pickup inflation, but low enough not to put the Fed on the hot seat? A real question here as we also get a slew of bond auctions, some earnings, CoreWeave coming into the end stretch of this particular earnings season. Coming up, we're going to be talking about the tech sector. Sarah Kunst of Clio Capital as hardware demand pushes TSMC sales higher. Plus, you hire Anna and back with your morning movers. Supermicro rising ahead of its earnings this week. Also, CoreWeave, a real question there with its debt profile. This is Bloomberg Surveillance. Good morning.
Wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Coming into another Monday with a lot of question marks with all of the data points coming. CPI really reigning supreme on Wednesday and then PPI on Thursday. It seems like this Federal Reserve is seeing this as the primary potential indicator. Right now, stocks trying to inflect higher after the biggest weekly gain going back to April as people take a look at earnings and say all of those geopolitical worries, all of the concern about leverage, it's behind us. S&P futures building on that, up 0.1%. Interesting to see how last week's intervention in the Japanese yen trying to support it prop up the valuation is not working. It continues to fade this morning with the dollar strengthening versus the yen, even with Bank of Japan meeting minutes coming out saying that they'll be willing to hike rates potentially as soon as September, indicating that they were potentially going to be in action later this year, earlier than expected. Emery, it's just notable to see it not really working with this move continuing to claw back to 158.80.
Right, and a lot of people are looking at the euro yen because the fact is that when the U.S. stepped in, it was to sell euros to try to prop up the yen. And right now, what you have this morning is actually the yen weakening against the face of a rising euro. And you look over these minutes, and now you have a lot of economists coming out like Bloomberg Economics pushing forward this idea that we're going to have to see rate hikes a lot earlier when it comes to the BOJ.
Unclear exactly what that will do for the currency, considering the potential ramifications for growth. You are seeing yields inflect higher, just a touch on the front end of the yield curve in the U.S., and oil prices also up just about 1%. 3 hours away from the cash open, here are your morning movers with Yahaira. Yahaira.
Hi, Lisa. We start with the AI server company Supermicro. Shares are up 3.5% ahead of earnings tomorrow, and the setup follows what we've been hearing across tech earnings, that the hyperscalers are committing more to AI and data centers, and Supermicro should be on the receiving end of some of that spending. The company already gave us an early look at what demand will look like this quarter, saying it booked more than $60 billion in new orders, and that should help it beat on the top and bottom lines, according to Bloomberg Intelligence. Another company reporting tomorrow is the Neo Cloud CoreWeave. Shares up about 1% in the pre-market. The expectation is its revenue should more than double from a year ago, but its tech and infrastructure spending will more than quadruple. And we know CoreWeave has relied heavily on debt to fund that expansion. And now that investors have become a little bit more cautious about funding some of those AI projects, it will put more pressure on CoreWeave to show that it is generating meaningful returns to justify all that spending. And we end on the space trade with SpaceX shares up 2.5%, extending a more than 20% gain over the past 5 sessions as that lockup expiration came and went with no meaningful pressure on the stock. So that's helping to remove a big overhang. But otherwise, that's also helping provide a lift for Rocket Lab, which is up 3.5%. It reports earnings after the bell today. Lisa.
Thank you so much, Yahaira. On our radar this morning, President Donald Trump signaling a strategy shift in the war with Iran, saying the U.S. is, quote, low-keying its approach to the conflict, letting economic pressure build rather than launching fresh military strikes. Meanwhile, the Bank of Japan weighing its options as inflationary pressures build, as we were just talking about. Minutes from the central banker's July meeting, where it held rates steady, showing one policymaker advocating for a faster pace of rate hikes going forward. You're not seeing the read-through, at least not in the yen. Meanwhile, China going all in on its push to challenge the U.S. in the AI race, tapping its $28 trillion in capital markets to close the gap. Fast-tracking IPOs for strategic companies like memory chip maker CXMT, which saw its shares surge by 500%.
And when you look at this story, it looks like because of what China's doing in terms of fast-tracking IPOs, letting these companies tap the debt markets, what they're doing is basically propping up companies like CXMT. And it comes at a time when we're really talking about this company because of what U.S. national champion Apple is looking to do. Wall Street Journal over the weekend saying they're starting to test these products in iPhones and other Apple devices. This would just be sold in China, But still, it's Apple trying to shore up some of these chips that they're going to need. And when you're looking at China, they're potentially going to be using a Chinese company.
Yeah, Diplomat-in-Chief Tim Cook talking extensively with Washington, D.C. about allowing them to use CXMT chips in Chinese aimed products. A real question, though, about what this means for some of the competition in places like South Korea. I mean, this really goes to the question of if you have margins that are too fat, you're going to invite competition, and that's what you're starting to see right now.
You're going to see the competition now, especially with China on the rise when it comes to things like CXMT, but also the national security issues. If they allowed Apple to do this in China, what other companies are going to be lining up and saying, we could potentially get cheaper chip components? We want to do the same thing.
Either way, chips still very much in vogue, and sticking with that sector, Taiwan Semi reporting a 45% surge in monthly sales, signaling sustained demand for its AI hardware. Matt Bloxham of Bloomberg Intelligence joins us now. Matt, it strikes me that you see some of these numbers, they seem surreal, but they're actually sometimes lower than expectations. What did you make of this earnings report and the CapEx that came in pretty much in line?
Yeah, so see these monthly sales updates are pretty light on detail. You just kind of get the revenue number and the sequential and year-on-year growth. As you say, 45% year-on-year growth. That was a slowdown on the June print, which was about 68%, but still tracking well ahead of the year-to-date average, which is about 36% growth. And yeah, let's not forget that a few weeks back, they upgraded full-year guidance on a dollar basis to more than 40% growth, and that was up from 30% previously. So, I think this is consistent with the positive narrative we've seen coming out of the company. Huge demand from the likes of NVIDIA and Apple for their contract manufacturing, and there's no near-term end in sight for that momentum. As you mentioned, they've increased CapEx guidance for this year. That's another strong sign that near-term demand is strong. Some of that investment is going into Taiwan, but obviously some of it is going into the US, where they've massively expanded their domestic manufacturing capability to meet demand from the likes of Apple and NVIDIA, and to kind of make sure that they're compliant with this Made in America push from the administration.
Matt Bloxham of Bloomberg Intelligence, thank you so much for the update. We'll be watching those shares throughout the day, especially ahead of CoreWeave and Supermicro. Sarah Kunst of Clio Capital writing, I've said for years, TSM is the linchpin of AI. It is essentially irreplaceable in chip production for the next 3 to 5 years, with no real competitors on the horizon. Sarah joins us now for more. Sarah, thank you so much for being with us. I want to take a step back, because what we've seen over the past week is a real sense that tech is safe again. We've had leverage kind of pushed out of the system. We've had earnings, particularly from the hyperscalers, that seem to confirm the story that they're able to monetize more quickly than people previously expected. Do you think that it makes sense to lean into the bull case with TSMC just one pillar of the overall positive?
I think it makes sense on a case-by-case basis. So I think TSM is in a pretty safe place as long as you think that the sort of overall demand for chips is going to stay pretty much flat or even a little bit up over the next few years. I think Alphabet is in a potentially really interesting situation when you look at the stock price versus the revenue. But I think that there are still a lot of other names in the space, like the SpaceX's, that are really, really overpriced and that make me nervous. CoreWeave's another one of those.
There's an issue right now. People are trying to imagine what the world looks like in an AI universe, and there's this question of hyperscalers versus the adopters, as Mike Wilson is talking about, that he's looking for. How are you expecting us to understand consumer products that might have AI? And I'm thinking about Google and their phone that will be coming out later this week, or potentially even Apple that's going to be talking about their foldable phone, but maybe with less AI coming out in September.
Everybody's making foldable phones and glasses. It is unclear if anyone wants them. But I mean, I think, one, it's a great reminder, hey, Google makes phones. And also Google powers the Android ecosystem of 3 billion devices, right? Google touches across a lot of their properties well over 4 billion people every month. And so that's one of the reasons why I do think that they will be ultimately the AI winner. They have a baked in user base across devices, across consumer products and enterprise that just dwarfs any of the competitors.
Can they be the winner when it comes to mobile phones because of where they are in the AI race?
I mean, are we all going to have Pixels? No. But do a huge swath of people, particularly globally, have Androids? Yes. Do we know that very often Apple has ambitions on its own and then sort of goes back to Google and says, actually, can I just borrow your OS? Can I borrow your search bar? I'll pay you for it, right? So we know that it is likely that Google at the end of the day will power, particularly in mobile, the vast majority of on-device AI. And I think that that is a pretty logical step in when you pull back and look at their dominance with the Android OS.
When it comes to mobile phones, Lisa and I were just talking about how there's this journal report over the weekend how Apple is testing CXMT memory chips to put in their product lines. Are we opening up a can of worms here in the United States?
In terms of Chinese chips, I mean, I think that we are going to sort of surface what has been happening underneath, which is we know that China gets their hands on a lot of NVIDIA chips that everyone swears they don't have. And I think a little bit of vice versa, which hasn't happened a ton in the last decade, is not shocking. I also think that it opens up the competition more to say, hey, maybe we have to drive these prices down. The reason that the Apples of the world are curious about using these other chips is largely because of price, and then obviously the political climate in China. And so if these chip companies have to be a bit more competitive on price, I think that is not necessarily a bad thing for the market, even though it might be a bad thing for their stock.
I'm glad that you mentioned that, Sarah, because it seems like increasingly the AI story is a financial market story and a capital intensivity story. The idea that you have to raise potentially $3-4 trillion in the next couple of years in order to build all of the hopes and dreams of these companies, how important is it going to be that margins compress in some of these places, whether it's memory chips or other potential components that go into this universe at a time where investors are that much more focused on rapid monetization before they hand out more cash?
I think it's going to be really important. I think that we're going to see pressure that, hey, look, NVIDIA, it's great that your margins are so big, but one, that means there's a lot more sort of competition happening. We know that, the Googles of the world, a lot of companies are working on their own chip design, but then on the other side, there's only so much that people can bear, right? And when we look at Apple having to raise their prices and because they can't get their hands on chips and everything else, a lot of these price increases are starting relatively small, but they eventually snowball against a consumer that is really feeling the pain. I think we're going to see more of that in the University of Michigan report this week. So I think that we are at this point where all the VC dollars in the world don't make a difference if at the end consumer, the end small business can't afford to buy what you're selling because they just don't have the cash.
It seems like Apple has been rewarded for a number of months for not having as much capital intensivity as some of the other AI-related companies. Do you think that can last? We're just seeing a report that a Jefferies analyst who's really tracked closely Edison Lee by the Wall Street community downgraded their expectation for Apple. You're seeing shares down some 1.2% in response. I'm just wondering if that makes sense to you based on its recent rise and frankly some of those questions that you were just talking about with consumer health.
So I think you also have to remember there's another big narrative happening inside Cupertino, which is they're getting a new CEO and they have a long beloved CEO who's done a really good job. And the new guy, while not new internally, is pretty new to the market. And so I think some of this is a little bit of a question mark, a little bit of a let's see what he's like. Do we like this new boss? And so I would put some of that downgrade, I would put some of those concerns in the bucket of would this be happening if Tim Cook were still in charge doing the same thing? And on the other side, I think there's a problem that Apple has, which is a good problem to have for consumers, which is their products are so good and they're relatively reliable that you're not constantly buying more. And so where do they get that extra money if your phones aren't getting stolen or you can get them back, right? And if your computer isn't breaking and you don't really need more memory. And so I think that's part of this problem for them, even though it points to the fact that their products are really, really good.
Well, hopefully our memory won't necessarily slow down in advance of another upgrade cycle. Sarah Kunst of Clio Capital, thank you so much for taking the time. Right now, let's get you an update on stories elsewhere this morning. Here's a Global Brief with Yahaira.
Hi, Lisa. ADNOC Gas is investing more than $8 billion to expand production as the UAE ramps up energy output after leaving OPEC. The Wall Street Journal reporting that the Abu Dhabi-based company will use the money to grow its gas, processing, and export capacity. Berkshire Hathaway spent about $4.5 billion to buy back its own shares in the second quarter. It also purchased nearly $20 billion of equities, a sign that CEO Greg Abel is putting more of the firm's cash pile to work. And the U.S. Senate passing a short-term spending bill to avert a government shutdown. It will keep the government funded through December 11th. The bill now heads to the House, where lawmakers are expected to take it up later this month. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. Up next, taming price pressures.
We saw the last inflation number for CPI was negative and the core was 0, so that the inflation numbers that we're seeing are really coming down rapidly.
Will that be enough for the Federal Reserve? Leslie Falconio of UBS joins us next. This is Bloomberg Good Morning.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Building on the biggest week of gains going back to April as we see this disinflationary tilt take hold of markets. This expectation, last week we also saw oil prices come down. We saw a disappointing payrolls report, at least in the headline number. You saw the probability of the Federal Reserve hiking rates in September go from about 57% to near 40% this morning. We're building on those gains this morning in the equity space led by tech. The earnings very much front and focus, up 0.3% on NASDAQ futures. A Russell 2000 underperforming, down about the same amount that the NASDAQ is up. And what we saw last week was a change from what we've seen earlier in the summer, which is we saw the market weight underperform and the market cap weight the equal weight continue to underperform and the market cap weighted outperform. Last week, we saw the S&P market cap 3.6% gain versus the equal weight of 2.4%. A lot of this has to do with what's going on in the bond space because of this disinflationary tilt and this question around exactly how the Fed is going to respond, even with pressures in the long end of the yield curve. We're seeing this morning two-year yields inflect higher by 2 basis points, 4.22% in the face of higher oil prices. Again, it comes down to the story of how long that's going to really feed into some of the inflation prints under surveillance this morning, taming price pressures.
People absolutely are feeling legitimate problems when they go to the grocery store. We saw the last inflation number for CPI was negative and the core was 0. The last inflation number for PCE was negative, so that the inflation numbers that we're seeing are really coming down rapidly.
Here's the latest. The White House downplaying cost concerns as investors went to Wednesday's CPI report. Bloomberg economists expecting inflation to slightly cool, although 0.1% is the expectation for the headline CPI increase. Leslie Falconio of UBS writing the near-term uncertainty regarding the Fed's reaction function will likely result in investors initially selling the rally in Treasury until the inflation path is clearer over the next few months. Leslie joins us now for more. Leslie, great to see you. Thank you for being with us. The irony in all of the confusion around the Fed is that a lot of people on Wall Street said they had a legitimate reason to stay on hold because inflation was on the margins when you look at core coming in. What's your expectation for how that relationship between the Fed and CPI plays out this week?
You know, I think it's important, and one of the things, as we know, is that the last CPI print came in well below expectation. You know, Chair Warsh, made a point of saying one number does not make a trend, which it doesn't. So we do think that this week's inflation number is going to be very important, more important than what we saw on Friday's payroll, although obviously that wage component, staying stagnant or not rising is one of the reasons why we don't believe the Fed, will hike in September. But I think that the upcoming wage numbers are really going to be very important to what the market's pricing in and in terms of some of the rhetoric we have at the end of the month from Jackson Hole.
That said, right now we are still seeing the expectation that inflation is going to remain above the 2% target from the Fed, even though we have Fed officials talking about how impatient they've become. So at what point is it enough progress to really take the pressure off the U.S. central bankers?
I think that's a lot of the questions that the chair was asked during the Q&A, and I think that's really important in terms of what the market's expecting in terms of some sort of communication. So there's a difference between, as we know, having the inflation above target and having, demand side inflation. So what is enough, I think, is really what the market is trying to really acknowledge and get that information from the chair. And that's why I think when we look at, say, the September Fed meeting, we can't necessarily assume, we don't think that they hike, but say hypothetically if they don't and they just stay stagnant, that we're not going to see that twist that we saw in the previous Fed meeting where the long end went up and that short end yield went down and correlations broke. And I think that reaction function is going to be very important.
When Lisa was just mentioning what's going on in oil prices, they continue to remain elevated. We're just in this status quo in the Middle East. Can the Fed just continue to look through this even if it goes to the end of the year?
This Fed is not just demand side. We know it's supply side driven. I think that the thing about the Middle East crisis, there's no question, and it's not just about the magnitude, but the duration has grossly been underestimated. But I think because we're not really seeing the cap that we saw in those oil prices, the market is more accepting. It also realizes as well that the floor is going to be higher also. I mean, we know from the last payroll report, we had some headwinds in terms of leisure. A lot of, economists are pointing to the rise in gasoline prices as a reason why we saw this decline. But I don't think that's really a driver right now in terms of this inflation side. The chair won't necessarily look through it, but I do think the demand side is going to be much more important.
So what are you expecting from Jackson Hole, given he said this is going to be a blank piece of paper? Do you expect him to explain his reactionary functions and try to gain some of that credibility that some individuals think he lost in the press conference?
I'm trying to keep my expectations low. So I think that there will be some, talk around that. Obviously, he has faced a tremendous amount of criticism. I do think there'll be a bit of clarity, but I wouldn't expect him to shift his entire communication style. I don't think that's what he's going to do. I wouldn't expect him to give more forward guidance. I think he's going to stay pat with his own style, but he might, learn a bit of lessons as new chairs have, communication issues, every time they come into the seat. His just has been magnified.
How concerned do you think right now central bankers and frankly our own Treasury Secretary is about the 10-year and the 30-year Treasury yields in light of the huge volume of sales coming from hyperscalers that a lot of people think are directly competing with the U.S. Treasury in terms of longer-term debt, as well as frankly the Bank of Japan and what's going on there, given if they raise rates, it could potentially push some of the domestic buyers away from the U.S. market?
I think it's very focused on it. I mean, there's a lot of structural changes that we've seen, over the past decade, Japan being one of them, from disinflation to inflation. They've recently had a very large bear steepener, which obviously rolls over to the U.S. market. As you mentioned, we've had a lot of hyperscaler issuance in that back end, which is, part of the reasons why Treasury yields are moving higher, not the main reason. I think it's a big part, and I think that's one of the reasons why you saw the change in language, in the recent refunding announcement. I know there are a lot of people on the street that, look at that as an open door to potentially cutting long-end supply in the future. We are not there yet. We still think the deficit is an issue, but the door is open for that. And I think if that has to occur, if in fact we bear steepen, say above that 5% threshold sustainably, I wouldn't be surprised if that's some of the actions that they take.
Leslie Falconio of UBS, thank you so much. That last point there is something that we've heard from Gennady Goldberg over at TD Securities and others, that sort of the ambiguity around the Treasury refunding announcement really had to do with just this idea that potentially that $25 billion of 30-year notes sold on Thursday could go down to what, 15, 20 billion? It could be continued to be reduced in light of what we're seeing in market.
It's so interesting, too, because this was a key concern Scott Bessent had before he was Treasury Secretary on then Janet Yellen, saying that they're issuing too much on the short end, but this administration is doing the exact same thing.
At a certain point, reality takes over some of the ideological concerns, especially as interest expense goes above the Defense Department budget in the United States and is expected to continue to climb. Right now in markets, more broadly, you are seeing a continuation of the good vibes, at least when it comes to equities and tech names. Maybe a little bit of a sell-off, though, in the front end of the yield curve as people take back some of the disinflationary deep breath that they took last week. Coming up next, Jim Caron of Morgan Stanley, Henrietta Trey's of Veda Partners, Emily Minister of Wellington Management, and Kathy Basancic of Nationwide. This is Bloomberg Surveillance. Good morning.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
You do have an economy that is moderated.
The labor market is softer than it appears earlier in the year.
Under the surface, there really is some strain, and I think it's important for the Fed to be listening to it, especially for the chair.
You don't hike to get credibility. You sort of don't shoot yourself in the foot to make sure your gun works.
This report will quickly become yesterday's news, and the more focus will turn to the inflation side.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Stocks inflecting higher after the biggest weekly rally since April. S&P earnings heading into their final stretch after delivering the biggest boost to both CapEx and earnings growth in years. And questions about the Fed's policy path remain, with a key inflation print on deck for Wednesday. CPI coming up. Emery, that's the event of the week, yes. But the week does start today.
The week does start today, but it is going to be the anchor for the week, because we already felt this way going into this week, when we know that Kevin Warsh, according to the Financial Times, people familiar with him, wants to look at that inflation data, and if potentially it's hot, he would be more inclined to potentially having that real robust discussion about raising interest rates maybe before the end of the year. But now, after we had the dovish, what people are looking at, the dovish employment report, it really is going to be, once again, all about CPI. And depending on whether or not the Fed potentially has this reactionary function in September to hike interest rates.
Yeah, the FT, the sources familiar with the matter, talking about how this is a Fed chair who'd be willing to hike rates should inflationary pressures remain consistent and resilient. What that means exactly unclear. Right now, stock markets are not waiting around to find out. We've seen an incredible rip in tech stocks in particular. A lot of the momentum that got eaten away because of situational awareness has now come roaring back on the heels of earnings. We get a slew of earnings, CoreWeave, Supermicro coming out later this week. But so far, the fastest pace of earnings going back to 2021 was some 30% growth. And it really goes to the question of, is this as good as it gets? And is that enough for people to keep being bullish?
And to reignite that, we have TSMC today reporting a 40% rise in its monthly sales. Sustained demand. It continues for this year and for next year, which is why you see the likes of JP Morgan having to elevate their year-end price target, because we're already at the levels individuals have already set at the start of the year, which is fascinating, given the fact that if I said to you at the start of the year, everyone's going to be in the middle of a conflict in the Middle East with oil prices rising, everyone's going to be saying, actually, we're going to boost our year-end target, you'd probably think I'm crazy. But that's what it is right now, because everyone is on this AI trade.
In the meantime, one place that has not been on the AI trade has been Apple, and it's been benefited as a result of it because of the CapEx that they have not had to spend on building out their AI story. Today, those shares are down 1.2%. after a Jefferies analyst came out and downgraded their price target. This analyst, Edison Lee, is saying that supply chain checks done by Jefferies suggest that the all-glass iPhone has been canceled due to low yield. This was a phone that was supposed to come out in 2027. And the key question for so many different analysts is, yes, we've seen a lot of resilience. Yes, we've seen an upgrade cycle, but how long can that continue at a time where people only need so many devices?
And when it comes to Apple, this is what gets people lining up outside the doors. When you have something that's so new and so exciting, and if you have this Jefferies analyst saying that basically this is they're not going to have this all-glass iPhone by this time, then potentially that's going to be a lot harder for Apple to try to get to some of these price levels when they just don't have that excitement.
Well, right now, markets have a little bit of excitement after last week's gains. Right now, we've seen S&P futures up by about 0.1%. You see the outperformance really coming from the NASDAQ with futures up 0.2%, though clawing back some of that on the heels of that Apple downgrade. And the Russell 2000 futures lower by about 0.3% after really sort of going nowhere in the face of all of the potential rate volatility and outperforming for so many weeks. In the rate space, 2s, 10s, and 30s ahead of some big bond auctions so far this week. We are seeing yields inflect higher at the front of the yield curve. Key question: how much is enough to take the Fed out of play for September when we get that Wednesday CPI print? It is expected overall to be a deceleration on core CPI year over year, but will that be enough? Two-year yields up 2 basis points to 4.22%. We've just been hovering around there for a number of weeks now. In the 30-year space, we're up just a basis point to 5.2%. And then in the crude space, a lot of people looking at sort of this low burn conflict as the new normal. Today, we're seeing oil prices up about 1.5% after last week's decline of about 8% on WTI and 5% on Brent. Just sort of a strange never land when it comes to this story. Coming up, Jim Caron of Morgan Stanley with stocks coming off their best week since April. Henrietta Trey's of Veda Partners as U.S.-Iran negotiations hit a lull, and Kathy Bosancic of Nationwide as investors pare back rate hike expectations. We begin this hour, stocks steady ahead of a big week for inflation data. Jim Caron of Morgan Stanley writing reduced communication by the Fed could result in more volatility. These changes may have valuation implications despite healthy earnings and broader market participation. Jim joins us now for more. Jim, great to see you. Thank you so much for being with us. How important is Wednesday's data?
I think it's critical. The reason is that this will be the hurdle that probably makes the decision whether or not the Fed moves in September. I mean, clearly the jobs data has been weak, but if you get a hot CPI number that comes out, that's going to create some problems. I mean, for right now, I think you can reduce the odds of a Fed rate hike in September. But, you know, core CPI coming in somewhere around 2.5, 2.4% consensus, then I think September is not going to be a meeting that's really a live meeting where the Fed will make any action. But if it does come out hotter than that and it shows that there are some lingering effects and that it's necessary for the Fed to hike to contain that, then that can really, create some uncertainty in the markets.
How much does it really matter? I mean, at a certain point, we've seen stocks continue to gain despite some of the volatility, or at least the increase of longer-term yields, and we've seen overall market volatility actually not materially go up. So how much do Fed rate moves really matter for equity space, for potentially other risk assets?
Yeah, that's a great question, because what's driving higher equity prices right now is that we have higher nominal growth. Higher nominal growth drives higher earnings. And we're seeing that in the first quarter and second quarter. So let's look at nominal growth in the first quarter. Nominal growth in the first quarter of this year was around 6.1%. Normally, in the past several years, nominal growth had been somewhere around like 4%, right, in the lower nominal growth period. Now, second quarter GDP comes out, and nominal growth, if you look at the GDP deflator, is 7.9%. If you use core PCE as your inflation metric, then nominal growth is somewhere around 6.5%. It's very strong. No matter what metric you're looking at, it's very strong. So that drives earnings, that drives valuations, that drives equity prices higher. If the Fed hikes rates 25 basis points in the midst of all this, is that going to derail the higher nominal growth and higher earnings that equities are seeing? Not at all. The move with the Fed is more of a bond market event than it is an equity market event. And I think that's what we should be really focusing on.
But isn't this all because of AI? I mean, you have this John Author's piece this morning talking about this Columbia professor who argues that without AI and the data center build out, the U.S. would be in recession. Where are other parts of the economy growing?
Yeah, look, I mean, anytime there's an expansion, you can single out one sector that's doing way better than others. Is that abnormal? No. And by the way, the markets have broadened, right? So it's not just about AI in growth sectors and things like that. And yes, the AI build out does feed into a broader economy, But also remember that we have, tax policy, we've got deregulation that's going through. A lot of this stuff is broadening the economy and the remanufacturing, bringing back manufacturing in an industry into the U.S. For every one manufacturing job you create 6 service sector jobs on the back of that. So the unemployment rate's relatively low. I know that some of that is based on demographics and a lower participation rate. But, there are many other metrics. Look at the NFIB, the small business surveys, where you're seeing a lot of strength in job hiring that's going on there. So, I really push back pretty hard on the argument that it's just about the data center build out. That's a very big part of that. But in every cycle, there's one dominant theme.
On top of that, Jim, how much is it real growth versus inflation just showing up in the deflator?
Yeah, that's exactly right. So when we look at nominal growth, you're including the inflation component of that, right? So it's not real growth. Real GDP is somewhere around like 2% or somewhere in there, and that's right about at potential or above potential. But the thing is that we live in a nominal world. We get paid in nominal dollars. Equities get nominal earnings, and that's going to still boost the prices higher, right? So it is true that it's not real growth, but from an index level and from the perspective of what do you think of the equity markets and can they move higher, then yes, with higher nominal GDP. Clearly, if inflation's too high, then it starts to peel back valuations and it lowers multiples and things like that. We're not seeing that at this point, right? We're in a sweet spot for equities with higher nominal growth where valuations tend to stay, relatively high.
In this kind of environment, Jim, is a 60-40 dead?
So I've been highlighting this for a while. 60-40 is not my favorite allocation for many reasons. The dominant reason is the 40. It's not the 60. The 40% in fixed income. If you look at fixed income returns, if you just look at the U.S. Ag, it's 0 for the past 5 years, right? It's actually slightly negative. If you look over the past 3 years, it's like barely above 0 in terms of positive territory. So what's happening with bonds is that as yields have started to rise and the correlations between bond returns and equity returns is very high, which means that your bonds are not hedging your equities as well as they used to. It also means that the contribution to return from fixed income is really, really low. So not only are you not getting a great hedge against your equities with fixed income, but you're also not getting a great return. That doesn't mean that you shouldn't invest in fixed income. You should, but you have to do it in a very tactical, active manner. Passive investing in fixed income is what's hurting you. But if you're active and you're very selective about your fixed income, that can be the greatest source of alpha, driving alpha in your portfolio. And that's something that we focus on. So 60-40 is not the magic ratio for me.
Jim, thank you so much for being with us. Jim Caron of Morgan Stanley. Have a wonderful rest of the week. Right now, let's get you an update on stories elsewhere this morning. Here's a Bloomberg Brief with Yaira. Yaira.
Hi, Lisa. Former President Joe Biden's cancer has spread to his bones and further. Biden's son Hunter telling the BBC his father's condition is, quote, very painful and debilitating. The president recently announced he is planning to release a memoir in November. Meanwhile, Apple is considering an overhaul to its smartwatch. Sources telling us here at Bloomberg, Apple is exploring watches without displays, as well as different screen types and sizes. The Apple Watch is the top-selling smartwatch, but it's facing more competition from companies such as Aura and Whoop. And Paramount is willing to guarantee it will release 30 movies a year in theaters if it acquires Warner Brothers Discovery. Sources telling us here at Bloomberg the agreement would require Paramount to release the films exclusively in theaters for at least 45 days and not make them available to stream for at least 90 days. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahaira. Up next, putting the squeeze on Iran.
I want to give him every last chance before decapitation.
I think it'd be very smart to make a deal. We'll see what happens. I'd rather make a deal because I don't want to kill people.
I think it's going to end pretty soon. I don't think they can go much longer.
Enrique Trays of Veda Partners joins next. This is Bloomberg Surveillance. Good morning.
at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Seeing people lean into the bullish take this morning, just a touch after the biggest weekly gain going back to April, with JP Morgan analysts upgrading their price target from 7,800 for the year-end S&P 500 to 8,000, kind of catching up to where we are since we're already at that price target. Today, we were up as much as 0.1%. We've clawed back much of that in the pre-market trading. NASDAQ futures up now only 0.1% after having been up as much as 0.3%. The Russell 2000 still down about 1/3%. When you take a look at what's going on in the bond space, you can see maybe some people speculating that last week there was a bit of an overreaction to just how much the Fed got a reprieve from non-farm payrolls that came in negative for the first time since February. Today, we're building back just a touch of those rate hiking expectations with 2 basis points of an increase in the 2-year yield at 4.22%, just a basis point on the 30-year yield. Ahead of that auction on Thursday, $25 billion of 30-year notes being sold. Meanwhile, in the oil space, what is going on? I'm not sure. We're on a wait and see. It's getting bad. It's getting better. It's sort of in the same new normal, up now 1.4% on both Brent and WTI. Emery, it feels like every single day there's sort of a new headline, but no clarity.
Well, it feels like we're going 2 steps forwards at times, and then we take a huge, giant step back. So over the weekend, there's all this talk that we're going to get to a final agreement between Tehran and Muscat when it comes to reopening the Strait of Hormuz. And then Iran comes out and gives a list of conditions and demands to fully reopen the Strait of Hormuz that it wants from Washington, D.C., which a lot of them are dead on arrival. So that is why you have this continuous purgatory. And as we've been saying on this show, it's not just the Strait of Hormuz we need to really worry about now. It's the Houthis that over the weekend hit a refinery in Saudi Arabia, they claimed. It's the Caspian Sea, the Black Sea, some of these long-range missiles that are going deep into Russian territory. There's lots of dislocation when it comes to issues in the oil market right now.
Under surveillance this morning, putting the squeeze on Iran.
They want to meet, and we're meeting. We'll see what happens. There's a chance we can make a deal.
At some point, they're going to say, we just can't take it anymore. I want to give them every last chance before decapitation.
I think it'd be very smart to make a deal. We'll see what happens. I'd rather make a deal because I don't want to kill people. I think it's going to end pretty soon. I don't think they can go much longer.
Here's the latest. President Donald Trump sitting back with Iran, saying in an interview with Axios, the U.S. is only semi-negotiating and watching financial strain build on the company. Bloomberg's Abir Abu Omar joins us now from Dubai. Abir, what does it mean to slow walk this, and why the change in tone?
Good morning, Lisa. Well, we've seen this back and forth multiple times before. You guys were just talking about how many times we've really seen Iran and the United States go back on their words and what exactly they're demanding to end this war. Now, what we understand from a lot of the people that we've been speaking to on the ground is that possibly the reason behind this shift in tone and President Trump really hinting that he wants the economic strain to catch up to Iran could allude to these reports that have been coming out over the past couple of weeks or so about the low munition from the United States front. Now, President Trump, other officials in the United States did deny the fact that the United States is running low in ammunition. But then when President Trump says the strain on Iran will eventually catch up to it, he said that he was low-keying essentially those negotiations that Iran is adamant are not taking place with Washington. That really gets to show that maybe he doesn't really understand the resolve of Iran. We've reported multiple times over the past just how cheap it is for Iran to manufacture those drones that it uses to threaten ships in the Strait of Hormuz. Iran can continue to manufacture those
possibly indefinitely. And the mere fact that it can just pose this threat on vessels and tankers that are making their way through the Strait of Hormuz, which is evident even now, that is enough to paralyze the movement there. Over the weekend, we also reported that a tanker flagged to ADNOC, that is the oil company in the UAE, was attacked, killing one person, injuring over a dozen people. But then Anne-Marie also mentioned that it's not just Iran that is attacking those ships. We also have the Houthis in Yemen, obviously backed by Iran, threatening movement in the Red Sea, hitting a facility, an Aramco facility in Jizan in Saudi Arabia over the weekend. That would be the second attack in a month on this facility. And again, this is the Houthi claim. Aramco did not confirm this. It did confirm that a fire was extinguished quite quickly and that there was no significant infrastructure damage. But then again, all these attacks, all these threatening, all the threats of this escalation just threaten the supply of energy that, again, in the Strait of Hormuz, for the time being, we're seeing either paralyzed or hardly moving. In any ship that is deciding to make its way through the Strait of Hormuz is either deciding to do so with lights switched off or having to seek permission from the Iranian side. And then when it comes to the Strait of Hormuz itself, that deal that we spoke about multiple times between Oman and Iran is still not formalized. We're still awaiting the final draft and what exactly will be the details in that document.
Thank you so much, Abir Abu Omar of Bloomberg in the Middle East. Henrietta Trays of Veda Partners writing, Iranian control of the Strait remains an unacceptable cost of the war with Iran. At the same time, Henrietta, we heard from J.D. Vance over the weekend that oil is $80 a barrel, a lot less than it was at $110 at the peak. So how do you pair sort of the incompatibility of the idea of a toll on ships with some of the rhetoric of slow walking it or potentially allowing this to be the new normal?
Thanks for having me, Lisa. You know, it's really not about the revenue. I'm a tax policy analyst. That's what I've been doing on Ways and Means and Senate Finance for 20 years. The revenue is not the issue that I care about here. The issue is the fact that now every Western banking nation, insurer, tanker, shipper, international alliances will have to work with an international state sponsor of terror, as designated by OFAC laws, SWIFT laws. It's that coordination that we are now all forced to do with Iran and the IRGC as a result of the president's decision to start a war on February 28th. That's the unacceptable cost that doesn't have to do with revenue. We've seen the U.S. consumer be able to adapt to $4 and higher gasoline, even getting all the way up to an average of $4.56, which was the president's breaking point earlier this year when he signed the MOU and called the ceasefire. But the U.S. consumer has been able to stand this. The revenue is not the problem. It's the continued coordination and the emergence of Iran into the global landscape that is the core problem here, and the U.S. is nowhere near resolving.
Well, Henrietta, the United States and its partners are not going to allow their vessels to pay these tolls, are they?
Yeah, the paying of the toll is exactly the problem. And again, it doesn't matter if you charge $1 or $50. It's the fact that Iran and Oman are coordinating, that they are closer to a deal on organizing and orchestrating the strait than the U.S. and Iran are in terms of control. And that is ultimately the spoil of war that Iran has gotten, which is, I think, in the long term, unacceptable to the United States. What I think of is the elections that are coming up. The president, in his first term, rightly said that democracy is a disadvantage as compared to communist China, or in this case, the IRGC. And that is exactly correct. If Iran has the ability to control even a fraction of what the cost is militarily to having control of the strait or the cost of gasoline in the United States, they have an ability to influence our free and fair elections. That's a disadvantage for a democracy like the United States, and that's a real problem the president has to address here.
Henrietta, what do you make of the blockade, though? Because CENTCOM has redirected, as of this weekend, 55 commercial vessels, disabled 2 ships, and boarded 2 others.
Yeah, the blockade is incredible. You mentioned at the outset of this, which is always so valuable, that this is not just the Strait of Hormuz. It's Bab el-Mandab, the Red Sea, the Caspian Sea, the Black Sea, the expansion into the Russia-Ukraine war. I mean, there's a lot that we're asking the United States to police here. I think it's fascinating that the emergency supplemental that the Pentagon requested months ago now has not been passed by Congress. And it really is going to be fascinating to see when lawmakers get back in mid-September, which is 5 weeks from now. 5 weeks of continued blockade. At the outset of this, if memory serves, we were talking about spending $10 million to protect each ship that came through the strait, whether that was our overhead helicopters, our naval preparations, any submarines that we had to help conduct flow through the strait. I mean, that's really expensive, and it's in the supplemental, but they haven't passed it into law, as you know. So it's going to be even 5 weeks from now until they get that passed.
How related is the budget concerns around the war in Iran to this meeting that was reported by a Russian state-run media about Steve Witkoff and Jared Kushner heading over to Moscow?
They're two very disconnected dynamics. I am, like I said, really surprised that we haven't gotten an emergency supplemental. The senators could have passed something. It didn't need to necessarily be through a budget. I've been working with Democratic staff and Republican staff all summer long to see if there are votes for an emergency supplemental, and I believe that there are, but they haven't coordinated or liaised between the White House and Capitol Hill sufficiently to get any of that money to start to flow. And 6 months into a war, that's pretty remarkable. And like I said, it'll be another 7.5 months, the end of September, before we get anything. So there's a disconnect between what the White House is doing and any urgency on Capitol Hill for additional spending.
Hannah Detrays of Veda Partners, thank you so much. And of course, there's a lack of urgency. They're all home for the summer.
Yeah, exactly. They're all home for the summer. When we say the end of the month, it's actually really September. It's August 31st when they come back. But this just kicks the can down the road because this is just a short gap funding measure until December.
Yeah, and at the time when people are saying that quite a bit more will be needed just for ammunition alone. Coming up next, Emily Bannister of Wellington Management. As investors become more selective in artificial intelligence-related debt, plus you hire Anand with your morning movers, shares of Apple lower by about 1.2% this morning after a rare downgrade to underperform on Wall Street.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
People are bullish, but fading a little bit from earlier excitement after the biggest weekly gain going back to April. We saw the momentum take stocks down, then they came all the way roaring back, and now people are reassessing and saying, what's next? S&P futures up about 0.1%. Dollar is actually gaining versus the yen. Watch this space after last week's intervention, the first coordinated intervention between the U.S. and Japan going back decades. A question here of whether it is effective, given the fact the Bank of Japan may be getting a little more hawkish, but isn't necessarily hiking anytime soon. The 10-year yield rising by about 2 basis points to 4.66% ahead of some auctions as well as key data coming out on Wednesday, and crude up more than 1% with this sort of slow burn in the Middle East. A real question about how much that's going to emerge in Wednesday and Thursday's CPI and PPI reports.
And also, when it comes to Fed speak, are they starting to really look at the fact that we have been in this war for 6 months? We have elevated crude prices. Gasoline is still average above $4 a gallon across the United States. At some point, is this going to become a bigger risk the Federal Reserve just can't look through?
Yeah, how many shocks can you continue to look through if it's shock after shock after shock? 2 hours away from the cash open. Here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. Jefferies is pouring cold water over Apple's 4-day winning streak, which shares falling 1.3% in the pre-market after the firm downgraded the stock. It says its supply chain checks suggest Apple has scrapped that all-glass 20th anniversary iPhone because it was just too difficult to manufacture at scale. And they say that's a major setback for Apple's plans to make more premium, higher-priced iPhones as it tries to offset those soaring memory and component costs. Meanwhile, it's a different story at HPE due to some sell-side action. We are seeing shares up 5.8% after analysts at Morgan Stanley upgraded the stock this morning. The bank basically saying they got the hardware trade wrong. They thought that soaring component costs would cause companies to pull back their spending. Instead, they say they're seeing companies that demand is holding up as companies basically replace aging infrastructure and spend more as they anticipate prices to go up even further. So 2 very interesting calls out this morning on hardware, with enterprise faring a lot better than the consumer side. And we end on space with SpaceX shares up 3% this morning, extending a more than 20% gain over the past 5 sessions as that lockup expiration came and went with no meaningful pressure on the stock. We are also seeing Rocket Lab up 3%, and it reports after the bell today. Lisa.
Thank you so much, Yahaira. On our radar this morning, President Donald Trump saying the U.S. is only, quote, semi-negotiating with Iran on the Strait of Hormuz, telling Axios the country is, quote, low-keying it as Tehran battles high inflation and limited funds due to the U.S. blockade of its naval ports. Meanwhile, the Pentagon asking major U.S. defense companies to boost production as shortage concerns arise. The Deputy Secretary of Defense writing in a letter seen by Bloomberg, quote, years-long development cycles are not acceptable, citing programs run by RTX, Lockheed Martin, Boeing, and others. And the AI spending boom powers on, TSMC reporting a 45% increase in monthly sales, signaling continued demand for AI hardware, with revenue for the chipmaker reaching $14.5 billion for the month of July. Notably, that 45% was a deceleration from the prior month. So even though it looks amazing and you are seeing the shares kind of barely moving, that's the reason why, maybe.
That's the reason why. Everyone thought it was going to be a little bit higher, but still, this is an incredible number. And I go back to what Sarah Kuhn said earlier to us at the last hour. This is the linchpin of AI. This is the linchpin of AI hardware, and TSMC is still doing well. I mean, it's been down since June, but I think since year to date, it's up some 50%. Everything stems back to Taiwan Semiconductors.
And frankly, the incredible capex that's being poured into building out AI-related capability. We've already seen a record pace of debt sales. But one thing that people say is that this isn't going to be necessarily the peak. The capital raise peak will probably come next year when it comes to debt sales. So this is only going to continue.
As Dan Ives would say, what are we in? The early innings. I'm glad you mentioned all these companies, though, because I can't get over the fact that they pledged nearly $2.4 trillion when it comes to the data space build out.
Yeah,
unbelievable.
It's something that we've seen consistently, and somebody's got to pay for that. Let's stick with that story. Debt buyers growing more skittish as AI as hyperscalers and developers look to borrow billions of dollars to fund new data centers. Underwriters now spacing out debt sales and signaling a slower issuance pace. Bloomberg's Tassos Vassos joins us now for more. Tassos, give us a sense of just how much pushback there's been to some of these massive $25 billion sales coming out of some of the big tech names.
Indeed, which, by the way, $25 billion, when you used to get it back in the day, it was, once in a blue moon situation. Nowadays, we see that every few weeks. Every time we have a new hyperscaler coming to the market, banks are speaking to investors, and investors are telling them one thing. I'm a bit concerned that this is becoming a bit too much. Because why would I buy a new issue when there could be another massive issue coming around the corner? I can just wait for that, because in the meantime, the new bond that I'm going to buy is going to drop in the secondary market. Nobody wants that. Irrationally, you wouldn't buy a new bond. You just wait for it to drop further. Barclays, the investment bank, asked investors, what do you think is going to drive hyperscaler spreads in the next 12 months? 60% of them said the supply cadence, which they meant the pace of supply. Whether AI is going to play out as an investment proposition was far lower. 25% of investors said that. So we have an immediate threat in the credit market right now, and that is the absolute sheer level of supply from AI hyperscalers.
At the same time, Tassos, a lot of people have pointed out that even though there's been some spread widening, even though investors have demanded more compensation, they're still willing to lend. And frankly, there is only an accelerating pace of issuance on deck, potentially even for 2027. So at what point is it too much for them to pay, or are we not even approaching that level?
Well, what AI companies are doing now, and JP Morgan Strategies called it the good news, to quote them, is that half of hyperscalers, whenever they come to the market, they then reassure the market by saying, don't worry, we're not going to do any more until the rest of the year, at least in the US market. And this is what they're trying to do now. They're trying to pace it more so that it becomes a bit more palatable for investors. Because for buyers of debt as well, you cannot escape it, really. AI, at least when it comes to the index and the market as a whole, is sort of the future. Its composition increases, its share of the market increases so much, it's becoming increasingly hard to even avoid it. You can't really avoid it. So the best you can do right now, as a banker, as a borrower, is to space out your borrowings. Otherwise, the market is reaching a level of indigestion.
Yeah, Tassos Vassos of Bloomberg, thank you so much for your reporting. Emily Bannister, the head of private credit, Wellington Management, writing, the bigger the AI opportunity gets, the more selective lenders need to be. This is becoming a market of winners and losers. Emily joins us now for more. Emily, great to see you. Thank you so much for joining us. Emily, what does it mean to be more selective when it comes to AI investment?
Well, one thing to really think about with the AI financing ecosystem that's going on right now is that it is incredibly broad. We are certainly seeing the large data center deals come, but we are also seeing opportunities to finance the AI build-out through multiple different lenses. You're seeing it in power generation. You're seeing it in cooling. You're seeing it really across all of the physical infrastructure that will be needed to support AI. And that means you have opportunities to really pick your spots. So when we hear things about one part of the market getting hotter or having a lot of issuance coming in the future, we are also seeing those other seams, those other areas where you can really structure something unique for a need that is supported by the same demand, but may have really different dynamics for a lender. And that's got us very excited about areas like within investment-grade private credit or commercial real estate debt, where you can really look at these themes and then look at the individual structures and investments and find the ones that are going to be the great opportunities for lenders going forward.
How do you immunize yourself, Emily, at a time when we're getting trillions of dollars of CapEx into an investment theme that, yes, everybody believes in, but is murky as far as what the end state looks like and exactly the degree to which it can be monetized? How do you evaluate the type of yield you need to offset the risk, also amid an inflationary moment?
I think you make a great point, which is that not every deal in the AI theme is going to go well. I think that's a guarantee from here, because this is a very broad space. And in many cases, we've seen some thematic ideas in the past where if you identify the theme correctly, you can invest across it and the rising tide will lift all boats and you'll do well. I would say AI is the opposite of that. AI is a place you need to be selective because it's becoming increasingly complex. When we think about underwriting a data center type deal, you need to think not only about the corporate exposure, because it's not only a corporate exposure. You're thinking about the tenant risk. You're thinking about the ability for construction to meet its milestones. You're thinking about what are the opportunities for power generation, how contracted are those? And you're thinking about the structure that you've agreed to and whether it protects you. In addition to your great point, what are you getting paid? What are the yields? So in a complex space like this, really being able to dig in is incredibly important. I think the best way to immunize yourself is actually to have a lens across markets, because this market is also becoming a place where markets are intersecting. We actually did some work on the more than 300 data center deals over the last 2.5 years. And we found something interesting, which is that about a third of those were financed by banks, about a third by the public markets, and then about a quarter by private credit. So this is an ecosystem that is getting financed by multiple different parts of our financing options. And you need a lens across all of them to see where are the structures right, where is the pricing right, and having a full picture across all of them, I think, is the way to immunize yourself going forward.
Emily, you mentioned a bunch of risks when you look at how to invest in AI. What about the political risks? You know, we're sitting here in New York, and there was a moratorium, a ban for a year, basically, on data centers. People don't want them in their backyard, and this is becoming a huge election issue, especially into the midterms.
Well, you couldn't possibly talk about something more fun for a credit person than risk, so definitely a good place to go. But I would say that really gets to the main point, which is that there is incredible complexity underneath data center financings, and each project can look different. They're in different geographies with different permitting processes, with different community engagement strategies, and we do expect that you need to understand what's underneath each deal as opposed to just investing thematically, because that's really where I think lenders can support great projects and do well over time.
Intel just came out and announced a proposed $15 billion stock offering. This isn't just a debt story. This is a financing story across the entire capital structure. We're seeing the shares lower by about 3% in pre-market trading. It just highlights how if there's trillions of dollars necessary over the next couple of years to build out the incredible tech infrastructure, it's going to be required to come from all places. Do these equity issuances, and we've seen this from other companies as well earlier this year, improve the profile of the private credit space, of the credit space overall, or potentially increase the risk of correlation between stocks and bonds to a degree that we haven't seen for a long time?
I think both are important considerations. What we're seeing here is a trend that even goes beyond AI and data centers into really one of the important emerging trends in private credit, which is the interconnectedness of markets. We're seeing increasing convergence between public and private credit. And to your point, we're seeing increasing overlap between issuer exposure in credit and equity markets, and really being able to understand how those are pulling together. And for an investor to be able to look across a portfolio and understand the aggregate risk that they have to a certain theme and to a certain issuer and to a certain credit profile is going to be one of the most important trends going forward for investors.
Emily, just quickly here, how concerned are you about leverage that's building out in the system that was really highlighted by situational awareness, but frankly has come roaring back since a small washout period?
Yeah, in many ways, what I'm seeing right now is a market that is really, because of its maturity and its increasing maturity in private credit, becoming a market that you can't tag with just one brush. So there are pockets of private credit and the overall market where we are seeing leverage increase. There are other areas where we're seeing really modest leverage and where we're seeing really strengthening profiles. And I think the breadth of the private credit market that has now moved significantly beyond sponsor-backed corporate direct lending to really include many other types of financing for assets, for projects, for high-quality companies, you get to see multiple different profiles, and that makes it much more important to be selective. There are certainly areas where you'll find stress or leverage. There are also areas where you'll find incredible growth profiles going forward.
Emily Bannister of Wellington Management, thank you so much for being with us this morning. We are seeing Intel shares lower now by more than 4% after announcing a $15 billion stock offering just moments ago. Let's get to an update right now on stories elsewhere this morning. Here's a Bloomberg Brief with Yahaira.
Hi, Lisa. The hits keep coming for Taylor Farms. It's pulling several prepared food items containing jalapenos from retailers over salmonella concerns. The recall, spanning more than 24 states, sold at major grocery stores after officials linked another distributor, Coast Citrus Jalapenos, to hundreds of illnesses. Meanwhile, TSMC sales jumping 45% in July. The company behind NVIDIA and Apple's most advanced chips posting $14.5 billion in revenue as big tech companies continue pouring money into AI data centers. And Meta introducing a new AI model that can be run on a single computer, allowing users to download and customize the technology. The new Muse Glimmer is a distilled version of the company's Muse Spark 1.2 model. Meta also interestingly announcing plans to set up a $1 billion fund to invest in U.S. communities where it owns and operates data centers, as it gets a lot of blowback. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahaira. Yes, I was just going to say, a fantastic direct-to-consumer lobbying effort. Up next, parsing through data.
It's actually remarkable how unremarkable the data is. I've been pretty adamant about I don't think the Fed needs to hike. I just don't see that as really effective trying to bring inflation down.
Kathy Bostancic of Nationwide joins next. This is Bloomberg Surveillance. Good morning.
How do you see AI changing gaming and game development in the future?
Look, I think the biggest thing that I'm thinking about is how do we just make sure it's solving problems. On the game development side, I've gone to a lot of our studios, with big and small, and I'm blown away with how they're using AI in the production pipelines, how they're using it for iteration and prototyping. That's not production ready, there's still work. And so, 30% of game development is software, and so there's the traditional applications that we see in enterprise. At the same time, I do not think AI will replace AAA games. I think it's entirely possible, though, that AI represents a new category of games and a new type of development and enables more people to create and participate. And we'll keep an eye on that, and we'll see how we best serve that.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
trying to build on what we saw last week, seeing a little bit of a gain, really led by the tech sector, although fading throughout the morning with a 1-2 hit. On one hand, we saw what happened with Apple being downgraded, a rare move coming from Jefferies, and then we saw Intel selling shares. Now, S&P futures almost flat on the day. The dollar gaining versus the yen, crude higher, and so are yields. Under surveillance this morning, parsing through the data.
It's actually remarkable how unremarkable the data is. I've been pretty adamant about I don't think the Fed needs to hike. I just don't see that as really effective trying to bring inflation down. You've got what I would argue is, yeah, maybe it's an okay labor market, but you know, you still need to grow faster. You need to put more people to work. And I think that, to me, is the philosophy that the Fed has to employ today.
Here's the latest. Investors paring back rate hike bets following a surprisingly weak July payrolls report. Wall Street now looking ahead to CPI and PPI data due out later this week. Kathy Bostancic of Nationwide writing, an easing in inflation pressures can give the Fed some breathing room to hold steady, especially since the labor market is far from overheating. Kathy joins us now for more. Kathy, great to have you on. What are you expecting is enough to take the Fed off the front burner when it comes to moving in September?
Yeah, good morning, Lisa. Well, I think CPI print and inflation prints going forward are really going to be the key. We're expecting a tame reading on Wednesday, both the headline and the core, 1/10 total, 2/10 at the core level. If it comes in higher, you know, if you start to see 3/10 print on core CPI and then PPI, you know, misses to the upside and that lines up a strong PCE price index reading, then that puts more pressure on the Fed. But so as long as we get these benign readings that seem kind of tame, I think that does still give the Fed some breathing room and just to wait and see how things play out.
Right now, we've seen the expectation for a rate hike shift down from almost 60% last week to now closer to 40% that they are going to hike rates in September. Do you think that it's surprising that we're even pricing in that much of a chance of a rate hike, given the sort of disinflationary elements of both the employment costs as well as the labor market?
Yeah, I think, you know, the market's a little unsettled here right now, right? It's not that they're missing the forward guidance per se, but they're not even sure the exact reaction function is, you know, was mentioned many times. And really, you know, Chair Warsh even went so far to question what inflation readings we should be looking at. So I think there is uncertainty in the market. I'm not completely surprised it's a little elevated, but from our viewpoint, you know, September seems very unlikely. Unless we get some surprise again in these readings for July. Later in the year, you know, perhaps there's some pressure, but, you know, our view is that we do have disinflationary pressures. And I guess we would agree with the sentiment that is, you know, what is the Fed going to accomplish by raising rates, right? They can't solve the energy issue, right? Supply demand, that's coming from the Middle East. AI investment doesn't look like it's slowing down anytime soon. That price pressure is still there. Higher rates aren't going to really make a big difference. And then the same thing with tariffs. So those are the three areas where we're seeing most of the inflation pressures coming. You know, slightly higher interest rates aren't really going to solve that.
But if you communicate it as you're taking away the insurance cuts of last year, then does it make more sense to hike interest rates?
You know, I'm not sure. I mean, I know I definitely, you know, have heard that argument, but I'm not sure. You know, look at the labor market, especially the readings. You know, we think it's healthy. I think there's diminished labor supply. So as long as the private sector, we're generating 30,000, 40,000 jobs per month, I think it's still a solid, healthy labor market. It's not dynamic, but it's not overly strong either. So I think, you know, we have to be careful. Those insurance rate cuts may actually be needed for the, you know, Main Street and for the labor market. What's happening in financial markets is very different than, you know, Main Street, and you see mortgage rates going up higher as well.
Kathy, as an economist, last week's Financial Times story, when we learned that Warsh, according to people familiar, would be prepared to hike interest rates in September if you were to see hot CPI. Did that give you some clarity following the press conference?
It did. It did tell us, it gave us some concrete reaction function and the measures of inflation, right? Because he started to question whether CPI and PCE were even the right measures. You know, maybe there's these real-time measures that the task force is going to bring forth, which many of us we already know about and watch. But you know, I think it did give us a little bit of clarity there. Certainly after the press conference, which was a bit more circular in its communication, it was very clear that if inflation, you know, beats on the upside, right, and surprises, then even, you know, Kevin Warsh would be prepared to raise interest rates.
Kathy Wasansik of Nationwide, thank you so much for being with us. And it's something a lot of people have talked about. How high is the threshold for consecutive inflationary reports? This just coming from Andrew Hollenhorst of Citigroup, coming out earlier this morning. Remember, he's calling for rate cuts, 2 of them for the remainder of 2026. His take, a second consecutive month of cooler monthly inflation and year-on-year core CPI falling within basis points of the mandate should help refute the popular idea that inflation is moving further above target and needs to be controlled by potentially tightening policy.
I saw that note. He also, how useful for Andrew and the team was the fact that when you got the jobs print, -20, a revision of more than 100,000 for the prior 2 months, he said also that's at odds with the narrative that the economy is overheating. So potentially, depending on where the data goes, he still thinks that there is this chance that the Fed actually cuts interest rates.
You know, I found that report really complicated because when you look at the internals, a lot of that came from state and local hiring tied to education, and the budgets have been slashed in part because funding is drying up and federal funding in particular hasn't come through. So how much are we looking at a government story versus the private payrolls that actually came in at a pretty healthy clip? I mean, these are some of the questions people are asking, aside from just even questioning the legitimacy of the data.
Right, and also leisure hospitality. You can say the World Cup, there was huge events across the United States and people are starting to wind that down. So yeah, a little bit murky, and as Kevin Warsh has said, one data point doesn't make a trend.
It doesn't make a trend, and right now people are uncertain of exactly where to go ahead of that data. Coming up, we'll get some certainty from Eric Johnston of Cantor Fitzgerald, Mig Dobre of Baird, State Street CEO Yijin Hung, and Matt Stuckey of Northwestern Mutual. This is Bloomberg.
Is there anything that humans today can do? Yes. That will change the lives of the humans currently on the Earth?
Well, first of all, people who switch over are getting the benefit right away. But coming back to the point about the fossil fuel industry and our debt to them, there's an old saying that came from the king of Saudi Arabia years ago. The Stone Age didn't end because of a shortage of stones. It ended because something better came along. Something better has come along now to replace fossil fuels, which are dirty and polluting and threatening humanity's future. The cheapest electricity in the history of the world is solar energy. Second cheapest is wind energy. And now batteries, the only thing that's come down in price faster than solar is utility scale batteries, doubling every single.
Why are we ending the wind farms that are now being built off the coast of the United States? We're ending them.
Because Trump is insane.
On another subject,
you don't want to explore that, but let me add one point on the solar. If you look at all of the new electricity generation installed worldwide last year, I often ask people what percentage of it was renewable, and people say, you know, they're looking for a high number, say maybe 30%, 35%. Correct answer is 93%, because it is taking over the electricity generation industry.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
The good news in that is that you are seeing that brought in and out of earnings.
What's happened with this AI trade is that we've extended the duration of equities.
I think the pressure on this market will resume.
You need bulls for bull markets.
The question is not can you get good earnings for 1 or 2 quarters. The question is can you get it persistently?
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the third hour of Bloomberg Surveillance. Stock momentum fading just a touch throughout the morning after last week's biggest weekly stock rally since April. Heading into the final stretch of the second quarter earnings season, J.P. Morgan, the latest Wall Street firm to upgrade its year-end forecast. The next test for rates and equities coming Wednesday with the release of key inflation data following last week's disappointing jobs report.
So this is going to be really important when it comes to inflation data, as a number of voices on the Fed have said this has been their primary concern. It's been, 5 years, and this Fed has still been unable to get inflation back to target. Now it seems to be a bigger concern than usual for this Federal Reserve, but inflation data has been cooling. It has been coming down. So if we were to see a hot print, then that would potentially be a bigger concern. The reason why everyone is looking forward to this, though, especially, is because we know that it feels like this is really the function and the idea that Kevin Warsh is just solely focused at the moment on inflation because he's really being pushed around a little bit by some of the hawks on the committee.
And a number of other committee members solely focused on inflation as a preeminent concern. In the meantime, we had seen the tech side of the story really outperform over the past 2 weeks. Right now, seeing a little bit of that backed out after earlier seeing the outperformance continue, and that's because of 2 names in particular. Apple, taking a look at shares lower by more than 1% after Edison Lee of Jefferies said he was downgrading the shares to underweight because of their supply chain checks, which suggests that maybe their all-Apple, all-glass iPhone has been canceled due to low yields. And then Intel coming out with a $15 billion share sale, and you're seeing those shares lower by 3% in pre-market trading. It's sort of both sides. If you don't have CapEx, well, ultimately you can't deliver the actual consumer good. And if you are going to do CapEx, it's going to cost you and dilute the shares.
Yep, and I love this Jeffries note. This is a major setback to efforts to bring in higher-priced iPhones amid soaring memory costs. Have this higher-priced iPhones, you have this higher memory cost. Well, okay, they have this new phone, all glass, no buttons. I don't know. I loved buttons. I loved the BlackBerry. But what's interesting is then, what is Apple going to do? What's the point of buying a new iPhone then if you don't have something new and exciting, which you could see why shares are dropping if they don't think this iPhone is ever going to come to market?
Yeah, you know, it's notable to me, the response in what we're seeing with Intel shares more than with Apple, because Apple's down by, 1% as a result of this downgrade. But you can see Intel and the fear of dilution, especially after how much those shares have rallied over the past 6 months. You can see that the idea of selling more equity just raises the specter that maybe all this CapEx isn't going to be monetized to the same degree that people had expected. You're seeing this in the stock market, you're seeing this in the bond market. Not that people don't believe in the story, but that the cost of it is becoming more real and people are not accustomed to paying for a build out of something like the railroad system.
And it's very, very crowded right now. Everyone is doing this on the equity side and on the bond side. And they're just saying that the money is going to be used for general corporate purposes. Progress in emerging areas, including physical AI, purpose-built silicon, advanced packaging, and external wafers represent significant growth opportunities for Intel. So a little bit soft on the details. Those are a little bit thin, and potentially that's also why people are a little bit like, not so sure about this one.
We're also getting a headline that Anthropic and Macquarie are inking a pact for data center platforms. So again, it goes to the question of the build-out. Right now in equities, we are seeing just a little tilt higher, bond yields tilting higher as well as people take a look at what to expect throughout the year. When you take a look at 2s, 10s, and 30s, it's not just going to be the inflation data, but also some of the debt sales that we're getting this week, the 2s, the 10s, and the 30-year, all coming to market. And then when you take a look at the oil space, inflecting higher as well as people take a look at the ongoing situation in the Middle East. Coming up this hour, Eric Johnston of Cantor Fitzgerald, with stocks near record highs after their best week in 4 months. Mig Dobre of Baird, downgrading Caterpillar, seeing major headwinds for data center construction, and State Street Investment Management CEO Yijin Hung as the Fed gears up for a key test on inflation. We begin this hour with stocks and bonds kicking off the trading week. Little changed. Eric Johnston of Cantor Fitzgerald writing, equities will need to battle the negative seasonality over the next 2 months. We think stocks can power through these headwinds and will be led by the tech sector. Thank you so much for joining us, Eric. Now for more, Eric, I just want to start on all of this financing that is expected coming out. We're seeing this from Intel. We're seeing this now from Macquarie and Anthropic. At what point does it get concerning based on just the ability to monetize in quick fashion?
So the amount of capital that is going to be required is clearly going to be, enormous. We're going to see a big step up in CapEx next year to over $1 trillion from the big four. But the bottom line is that what they're starting to show is the ROI. And this is what the market has been looking for. We saw it from Microsoft and Amazon's earnings, where cloud growth has accelerated. And so you're seeing margins expand, and you're seeing rent prices for compute starting to move higher. And so part of this story is about the cash flows from these businesses increasing and likely reducing the need for as much capital markets as people expected before. And so I think that's incredibly important. Now, the reality is that equity and debt is going to be needed, and that's been part of the pressure that we've seen on treasuries, because the amount of paper that's going to need to come to the market from a corporate perspective is going to be very significant. But I think the key point is that you're going to see these cash flows from operations increase, and that will likely reduce the need for the capital markets.
Eric, I just wonder what some of these companies know that we don't. Why are they front-loading all their CapEx now, unless it's a market that is frankly looking really good to them? In other words, they think it's only going to get more expensive for them to borrow, which means that yields are only going to get wider, which means that anyone who's buying in right now is probably going to lose money on a market value perspective, and the same sort of goes for the equity side of things. Why is this such a good time for the borrowers?
Yeah, I mean, they're starting to finally explain how this CapEx is going to work, and talking about how very soon revenue growth is going to exceed CapEx growth. And also the fact that, you brought the point about front-loading CapEx. When they're building a data center, there are parts of the data center that have a 30-year life. There are other parts that have a much shorter life related to the chips. But the point is that the CapEx requirements early on are a lot more than what they are in 2, 3, 4 years from now. And so that's going to likely inflect their free cash flow. We're already seeing it from someone like Microsoft, where their free cash flow this quarter came in higher than what the market was expecting. I think that's a trend that is likely going to continue in the quarters to come. And so that's going to be a very favorable dynamic from a borrower perspective. I would also say that although the amount of supply is clearly very large, and that has been part of the problem around the backup in some of these spreads, but the reality is that their balance sheets are still extraordinarily strong. And a year from now and 2 years from now are also going to be extraordinarily strong, even with all the spending they're doing.
Eric, every earnings quarter, it feels like for these tech names, the bar gets higher that they have to clear. But you think this last season was an inflection point. Why?
So part of it was how they actually handled the conference call in terms of really explaining the dynamics of the CapEx. The second thing is that margins are starting to expand. And so because the demand for compute continues to outstrip supply, pricing is going higher, margins are going higher, and you're also seeing it in the revenue growth. So if you looked, whether it was Google, Microsoft, or Amazon, they all came in higher than what the street was expecting, and the growth is accelerating. So you're seeing revenue growth, for their cloud business, depending on who it is, between 40 and 70%. And the likely scenario is that this acceleration is going to continue into next year. And that's, very, very powerful dynamic.
You're bullish on the momentum factor. You're very bullish on what's going on in the semiconductor sector led by memory. What do you make of Intel this morning?
So this was somewhat expected that at some point they were going to need to raise equity. So their business is a little bit, different than others because of this, foundry build out and this, thought to be able to build foundry here in the United States. And so I think this, the stock is, call it 30–40% off the highs. And so I think investors were, somewhat expecting this. Ultimately, it's a supply of equity. So I'm not surprised to see the stock, down this morning, considering this supply that needs to be absorbed. But I don't think it's necessarily a indication of what other, for example, semis are going to need to do. Most of them are generating significant cash flow, where they're going to be doing the opposite and actually buying back, shares. So we'll see how this plays out. I do think that the overall equity supply story is a real story, will be a headwind for equities over the course of the next year. And this is an example that's certainly, part of it.
Eric, have we beat any leverage out of the system since situational awareness, or has it all come roaring back in the 4 days subsequently after?
So I think we certainly have taken a lot of the faster retail money from a global perspective out of the market. Certainly you look at what's going on in South Korea, and some of these levered ETFs are down, 75–80%. Significant number of brokerage accounts have been shut down. The margin calls have been of, significant proportion. And then here in the U.S., we saw a major de-risking, not only, from a little bit from retail, but really from institutions who were in this momentum trade. And the momentum trade ultimately is, highly correlated to the AI infrastructure trade. And so I think what we saw was a pretty significant event that we think was a clearing event from both a positioning standpoint for the momentum trade, and it's for a group that it was crowded for good reasons. The fundamentals are really strong, and we think the fundamentals are going to continue to be strong. And so now you have this cleaner positioning that I think is going to allow this group to work in the coming, weeks and months.
Eric Johnston of Cantor Fitzgerald, thank you so much for being with us this morning. Right now, let's get to an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira.
Hi, Lisa. President Donald Trump signaling he's prepared to let economic pressure build on Iran rather than launching new attacks. Trump telling Axios, quote, "We are low-keying it and only semi-negotiating with Tehran on the Strait of Hormuz." Iran's foreign minister saying direct talks with the U.S. are not possible for now. GameStop is thinking about withdrawing its $56 billion bid for eBay. Sources telling us here at Bloomberg, the company CEO, Ryan Cohen, is looking into options, including a partnership or joint venture that would enable eBay to leverage GameStop's roughly 1,600 U.S. locations. And Intel is selling $15 billion of common stock. The company is looking to take advantage of renewed interest in its business prospects thanks to the data center boom and its soaring share price. Intel says the money raised will be used for general corporate purposes. Shares down 3.6%. That's Bloomberg Brief. Lisa?
Thank you so much. Yeah, Intel shares up 175% so far this year, so maybe a good time for them to raise some more capital after that price appreciation. Up next, the morning calls, plus Mig Dobre of Baird downgrading Caterpillar as pushback grows on data center construction. That's next. This is Bloomberg Surveillance.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
What's driving higher equity prices right now is that we have higher nominal growth. Higher nominal growth drives higher earnings. If the Fed hikes rates 25 basis points in the midst of all this, is that going to derail the higher nominal growth and higher earnings that equities are seeing? Not at all. That's what we should be really focusing on.
That was Jim Caron of Morgan Stanley, looking forward to a week that is really going to be marked by Wednesday, where we get that we get the inflation read, CPI, and the PPI coming out on Thursday. Right now in equities, we are seeing a little bit of a lift, although basically unchanged on the S&P futures. Right now, we are seeing the dollar gain versus the yen. Watch this space as it indicates just how much the intervention last week was or wasn't effective. Yields higher by about a basis points on the 10-year, and Brent higher by 1.7%. What is going on right now in the Middle East? It seems like we're slow walking this, according to President Trump. At the same time, still some skepticism, concern about exactly what's percolating there.
Low-keying it is what he told Axios, which makes me think that the United States is not on the forefront when it comes to these negotiations right now. And when it comes to the reopening the Strait of Hormuz, Iran is having these talks with Oman. But at the same time, they're setting conditions for it to fully reopen that the United States would need to hit, which are not going to happen. So it feels like we're taking 2 steps forward and one big step back.
Yeah, what does this look like if this is the new normal? In the meantime, people are shifting their focus to single-name stocks, as that is where the drama has been this year. Time now for the morning calls. First up, Jefferies downgrading Apple to underperform, believing the tech giant will have to cancel next year's all-glass iPhone model due to supply chain issues. Those shares lower by 1%. Next up, Morgan Stanley upgrading HPE to overweight, the firm updating market preferences towards storage over servers and PC. Those shares higher by 4.5% in pre-market trading. And finally, Canaccord trimming its price target on Oklo, the nuclear energy company, planning to bypass the utility grid by selling power directly to the customer as it faces a massive AI data center build-out. Let's stick with the data center build-out. Pushback growing across the country. A recent poll from Politico finding that 41% of Americans oppose data center construction within 3 miles of where they live. That is up double digits from January. Mig Dobra of Bayer downgrading Caterpillar, citing those political headwinds. He writes, state and local regulations could further limit the ability of hyperscalers to deploy CapEx. This is a recipe for further multiple compression. Mig joins us now for more. Mig, thank you so much for being with us. Interesting that we haven't seen more of this in terms of price targets as a result of the political pressure. What made you act on this now?
Thank you for having me. As you've noted, there's been very quickly shifting consensus when it comes to public opinion surrounding data centers. And what we've observed in our analysis is that this is a bipartisan issue. It is happening in red states. It is happening in blue states. And what has gone from just local community online movements, now it's becoming more and more of a legislative issues. We are seeing various moratoriums pass at state level. But when you actually look at local level in terms of what various townships or city councils are doing, the regulatory framework is becoming increasingly more difficult for data center development.
We've seen this, though, over the past couple of months, and increasingly this is a campaign issue, and yet Caterpillar just reported results that were incredibly good, robust, and talked about a pipeline that was massive. What makes you think that between now and the end of the year, the political pressure could actually affect that massive pipeline?
Yeah, a lot of it has to do with what is actually going to get built in the future, right? We're talking about 2027, we're talking about 2028. Remember that the results that companies are reporting today or even next quarter are all based on projects that have been approved and started some time back. So the way to really think about this upcoming midterm election, this is likely going to be the first AI data center election and the first of many. With many of these regulations, while not entirely stopping data center development, potentially pushing it out and slowing it down, right? This is a bit like throwing sands in the gears of progress.
At the same time, we do have this Trump administration, which is really doubling down on AI. They want to see the expansion of this trade and data centers. Do you at some point expect the federal government to get involved when you see pushback from states like New York?
I think that's possible, but again, this is going to become an electoral issue for Republicans as well as they consider 2028. So as I mentioned earlier, the thing that's to note here is that this is increasingly becoming a bipartisan issue. And at the end of the day, all elected officials have to be responsive to the needs of the voters. There are ways in which data center development can be done and can be done in a manner that is harmonizing their interests with the interests of local communities. And I think this is probably where the broader framework in terms of how these investments are made needs to evolve.
As we have this conversation, we just got news that Anthropic and Macquarie have formed a partnership for a data center platform. In that press release, Anthropic is saying that they are going to make sure that they pay for the electricity prices of the consumers. Do you think that is the path of travel for these companies? If you want to build a data center, you're going to have to really help the consumers that live around that product.
I think that's absolutely part of it, and I think that's a very good move on their part. Concerns do extend beyond just electricity prices, though. You know, local communities are concerns with broader impacts. that the construction of data centers would have, everything from traffic to noise to other types of pollution to water usage. So I think this is a multifaceted issue. Electricity is part of it, and I think it's a good thing that's being addressed, but it's only one of the items that have to happen here. And in my view, the most important thing is transparency around all of these other issues.
And Emory, to your point, BlackRock also signing an agreement with organized labor for some of its data center build out. We heard earlier of some of what Meta's doing. So clearly there is an eye, Emory, toward some of the potential concessions by these companies.
You have to assuage the concerns of the consumers there, because not my backyard is a real thing in politics, and people will go out and fight this, whether it's data centers because they don't want in their backyard because of increasing electricity costs. You have to get local communities involved and for them to see a real tangible benefit in order for you to do this.
At the same time, Meg, yesterday, or I should say on Friday, when we got the non-farm payrolls report, the bright spot was construction jobs. More than 20,000 new construction jobs were created because of this hot area of data center build-outs. We've seen the performance of Caterpillar shares year to date. Are there entities, companies that you cover that you still think are the potential winners of this build-out, even amid some potential political pressure?
Absolutely. And let's be frank, data centers do have positive impacts on the communities in which they're being constructed. There is a tremendous amount of jobs, not just in construction, but in other sectors that are being created. As far as my coverage goes, I think the best spot to look is at equipment rental companies like United Rentals, Herc, Sunbelt, Equipment Share. They are all benefiting from mega projects writ large, but from data center construction specifically. And while we are talking about the pace of growth in data centers, the trend towards more construction is not going to go away. And I think that is what's going to benefit all the equipment rental companies and frankly support their growth through 2030.
Mick Dobre of Baird, thank you so much for being with us. And right on cue, Caterpillar Financial announcing a new benchmark debt offering. So, might as well strike while the iron's hot.
Yeah, exactly. But, what Mitch is looking at is basically not this year. And you brought that up. When their earnings came out, they were talking about all this construction for data centers. He's worried about 2027. How difficult is that story and that narrative going to be for 2028? When you have a presidential election, blue and red states both pushing back on this, so their candidates from Democrats, Republicans are going to have to push back on this. It's going to be a very challenging year.
Which you're hearing from a lot of companies. There's a race to break ground before those potential political pressures really build. Coming up, we've got State Street Investment Management President Yi Jin-hung looking ahead to a key week for the Federal Reserve and a key week, one of the final weeks of the earnings season. Plus, Yahira Anand with your morning movers. Shares of Intel sliding on plans to sell $15 billion of common stock. Those shares lower by almost 4%. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
It was a quiet morning, and then Intel and Apple happen, and suddenly there's a data center build out, and it's all the money grab for the AI center. And what you're seeing is the gain that you had been experiencing in equity futures just rolled over a touch. S&P futures now essentially flat. The dollar gaining versus the yen. Watch the space after the intervention last week. Seems to be fading in terms of its efficacy. Yields slightly higher, up 2 basis points on the 10-year to 4.66% on the heels of this. Oil prices rising yet again. 1.4% after an almost 8% decline in WTI last week. 1 hour away from the cash open. Here are your morning movers. Yahira's got them for us with more. Yahira.
Hi, Lisa. We start with Intel. They are falling 4% on fears of dilution after it announced that massive $15 billion stock sale, but you can see why the company is tapping the market now. Shares have nearly tripled this year, and that rally, and it can now use that rally to raise a ton of cash without taking on more debt, so it can invest more at a time when the capital needs are enormous while protecting its investment grade status. Meanwhile, we are also seeing Meta shares rising 2% in the pre-market after rolling out a new smaller AI model that can run on a single computer. It's called Muse Glimmer, and of course comes at a time when the company is spending an enormous amount of money to build out AI infrastructure, and you have investors just waiting for that payoff. So what I think investors are seeing here is that this will get more people using Meta's models today and will eventually generate more revenue in the future. So it's getting a boost this morning. And we are seeing Jefferies pouring cold water on Apple's 4-day rally, with shares falling 1% in the pre-market after the company downgraded the stock. Jefferies saying its supply chain checks show that Apple has scrapped its all-glass 20th anniversary iPhone because it was just too difficult to make at scale, and that this is a major setback for its plans to sell pricier phones in order to offset those soaring memory costs. Lisa?
Thank you so much, Yahira. Meanwhile, a big week ahead for the U.S. economy, headlined by Wednesday's CPI inflation data. Michael McKee joins us now for more of the alphabet soup that is the preeminent data.
Yeah, Lisa, we have a kind of a slow start to the week, but it's going to pick up on Wednesday with CPI, and that's going to be the most important number of the month for the Fed because they have said they're focused on inflation. Inflation in the pipeline comes up Thursday when we get the PPI. We also get jobless claims on Thursday. We'll see if we continue that run of staying below 200,000. And then we also get retail sales. How's the consumer doing given affordability questions? And Michigan sentiment, we know that'll be depressed, but we'll look for what's happening with the inflation expectations parts of that. Now, the interesting thing about all this is that the numbers for this week are the most important for the Fed, but we're not going to hear much from the Fed at all. Beth Hammack of Cleveland has a couple of appearances. She is going to be talking this morning on Yahoo Finance. But compare this to last year. Last year we had about 9 different Fed events, 6 different Fed speakers. This year, just 2 Fed speakers. It doesn't tell us much about what's going on. Is this because the new chair doesn't want them to talk a lot, or is it just because everybody decided this is a good week to go on vacation? I guess we'll have to wait to find out. But remember, we're only a couple weeks away from Jackson Hole.
Michael McKee, thank you so much. And that is going to be interesting in Jackson Hole, the blank sheet that so many people are talking about. What people are going to do ahead of that is what we want to talk about right now with Yijing Hung, President and Chief Executive Officer of State Street Investment Management. Yijing, thank you so much for being with us. Always a pleasure to speak with you. One of the reasons why I love speaking with you is because you can take a look at the flows and just how much people are rearranging ahead of some of this data and, frankly, in the wake of the performance that we've already seen. I'm just wondering how much you're seeing people withdraw cash following the momentum unwind, or frankly, taking cash that they had in money market funds and starting to deploy it in more significant ways.
You know, what we've seen all year is that money is moving into money market funds. It hasn't really shifted, even though the market regime has changed. And I think in large part because expectations of yields remaining at more elevated levels than they've been is attractive, and it's an opportunity to leverage it for opportunistic moves into the market, but it is becoming what we see as a durable asset class.
So it's a durable asset class at a time where people are expecting the Fed to likely remain on hold or potentially raise rates at some point. I'm just wondering what it would take to unlock that $8 trillion in money market funds or wherever it is right now to go into the financing of the data center build-out that we see every single day, with Intel necessarily raising another $15 billion in equity, as they were just announcing.
Well, you know, what we've seen is that investors are really wanting to barbell their portfolios, so they're leaning into a lot of the AI story, where the growth is in the market, and second quarter earnings are a really good example of that. Same time, lots of money are flowing into the fixed income market, but we see asset classes like cash, gold, commodities, private markets as sort of like the anchor to a lot of portfolios. So I'm not sure we're necessarily going to see that much of a shift.
Private markets is the anchor for individual, like wealth portfolios, or institutions, or both? Has that sort of shifted since earlier this morning? Earlier this year, I meant.
Mostly from an institutional standpoint. You know, we've focused a lot on private credit. We continue to see institutions move in large part because private credit tends to have floating rate interest rates. So that's attractive in this environment. Where we've been focused as a firm is really on the investment grade sector, introducing modest exposures into 3 ETFs we launched with Apollo, and introducing private equity, private credit, and real estate into our target date fund series. Modest amounts, 10%, but it adds added diversification and an opportunity for individual investors to take the longest horizon investment that they have and benefit from the value creation we're seeing in the private markets.
When you look at financial markets, and this year alone, do you think it would matter if the Fed raised interest rates? Would that change your allocation?
Not significantly. We are overweight equities today, U.S. first primarily, emerging markets secondarily, and I think it's really on the back of tremendous corporate earnings strength. We think that the economy is in pretty good shape, although from our perspective, we believe the Fed really should hold steady on rates, and that's what we're calling for the balance of this year. But to the extent the Fed does move, and it's already indicated it has a more inclination to move faster, but gradually, we think the economy is robust still, but at the same time, where our worries are on the labor market, and so that's why we view interest rates being steady is the better case.
What are you so concerned about with the labor market? It's been kind of this no hire, no fire paralysis really for a while.
Exactly. And, you know, I think with the Friday report, it showed the labor economy being a little bit weaker. It's not a really strong source of inflation. And it's really that inflation picture that guides us to say, this is not a time to be raising rates.
You know, there's a big discussion right now in the Federal Reserve and frankly in markets about artificial intelligence and how inflationary it's going to be versus the productivity boom that a lot of people are talking about. We're seeing, for example, the idea that you are seeing growth continue to accelerate even with some of the inflationary components tied to labor, for example, come in. What are you seeing at State Street in particular of how you're deploying some of the AI tools, the efficiency versus the cost?
You know, I think it is still early days for a lot of companies. I mean, clearly, every single company is investing heavily, as we are at State Street. Where we see tremendous opportunities is with, you know, very significant processes, data-intensive, sometimes very manual efforts, enormous efficiency gains. But we also see revenue opportunities, too, as we think about streamlining our investment process, post-trade, if you will. And then also customizing to clients, being able to provide what we do for very, very large institutions all the way through to individual investors.
We've seen already the financial industry contract a little bit on a headcount front. I just wonder from your vantage point, how you think about the growth of State Street as it surpasses $6 trillion and its footprint, its headcount footprint, in response to the greater efficiency that you can do? Is it just grow the assets by keeping the footprint the same? Is it potentially shrinking the total size of the employee base versus the overall assets?
You know, we see AI as just an enabler, enabling our people to be able to do more. And so we don't see this really as a headcount reduction play, but more so a benefit to be able to serve our clients even better on a global basis.
When will you know that it's fully worked, all of your AI investments that you're putting into the firm? Do you see it now? Do you actually see employees being more productive on a day-to-day basis?
We're gradually seeing it, but as I said, I think it is early days. Once we really see meaningful moves in terms of whether it's margin or revenue acceleration, I think that'll be the time. I expect that'll be maybe a year, 2, 3 years out.
Given that you don't see it as a headcount reduction within State Street, do you see that in the broader labor market as well for other firms?
I think what's happening is that companies are slowing down their level of hiring as they are also undergoing this AI journey and determining ultimately what are their headcount needs and where is that headcount going to be really focused.
Has this summer been quiet for you?
Summer has not been quiet.
Is it normally quiet?
I would say a couple years back it was quiet, but these last couple of years it's been nonstop.
You know, the volatility of VIX has gone down, but are people feeling that way, or are people very engaged and they feel like they're trading on a continual basis?
I think people are incredibly engaged. I mean, these are the kinds of conversations we're having with clients every day. What do we think about the concentration of returns? How do you diversify portfolios? What is the worry that's coming behind what's happening today? How do you protect against it?
Yeah, this seems like it has been a summer that has gone by very quickly on one hand, but on the other hand, I don't know. It seems like every single day is a different story.
It is. You see, obviously, what's going on with the Middle East. You see this massive debate, a change of the guard at the Federal Reserve, all happening at the same time this summer as we head into a really important election when it comes to the midterms.
How would you characterize, Yijin, the overall temperament of investors right now? Are they optimistic? Are they bullish? Or are they more skittish of the potential risks coming into the second half?
I would say, on balance, more optimistic. Obviously, you know, the concerns about stretch valuations and the amount of financing that's happening on the debt side. But at the same time, you have to go look at fundamentals, and fundamentals are very, very strong. And so from that standpoint, I would say that the concern levels have actually lessened as we've moved in throughout this year.
Yijin, thank you so much for being with us this morning. Yijin Hung of State Street Investment Management here in New York. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Former President Joe Biden's cancer has spread to his bones and beyond. Biden's son, Hunter, telling the BBC his father's condition is, quote, very painful and debilitating. The president recently announced he is planning to release a memoir in November. Anthropic, Macquarie, and GIC announcing a strategic partnership creating Theseus Infrastructure, a new platform to develop, operate, and lease data center infrastructure at scale. The group will identify and build new sites with Anthropic as the anchor tenant. And Minnesota Lynx guard Kayla McBride breaking the WNBA single game record by making 10 three-pointers. McBride finishing the game with a career-high 43 points. The Lynx beating the Dallas Wings, becoming the first team to clinch a playoff spot. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira, and thank you for this morning. Up next, setting you up for the day and week ahead. Plus, Matt Stuckey of Northwestern Mutual with stocks hovering near record highs. This is Bloomberg Surveillance. Good morning.
exploring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
When we look at the broader market, we're at essentially all-time highs as of Friday. The employment picture has softened on the margin, but remains relatively robust. We're going to start to perhaps see a shift in the momentum within the equity market, within the AI trade.
That was Aaron Kennan of Clear Harbor Asset Management. We've seen a shift since earlier this morning in the market. Earlier this morning, we saw the NASDAQ up as much as 0.3%, now lower by almost 0.1%. You're seeing a similar move on S&P futures, lower by about 0.1% in the wake of a couple of key tech stories. We'll get to them in just a second. The dollar gaining versus the yen, 158.86 after it reached north of 160 last week, inviting in that intervention coordinated with the U.S. and Japan. Question about how effective that was at this point. 10-year yields up 2 basis points to 4.67%. Brent crude higher by almost 2%. Let's take a look at the why behind some of the moves in the tech sphere and why we've seen the momentum lose some steam throughout the morning. Intel, a big piece of this, announcing a $15 billion share sale after its shares were up some 170, more than that percent so far this year, highlighting just the need for incredible capital raise. Right now, those shares, Intel, lower by about 4%, maybe a little bit less at this point. But that, to me, is going to be a key question, Anne-Marie. How much do you start to get increasing pushback to all the potential capital raises?
Right, and we saw that pushback when it comes to companies that were tapping the debt markets instead, and now other companies like Intel tapping the equity market in this $15 billion in common stock. I'm also struck, Lisa, by Kevin Hassett, the president's obvious chief economist, speaking to reporters, says basically the president will decide when the United States sells their Intel stake. I wonder, seeing a move like that this morning, if maybe they thought, maybe we should have sold it Friday after the close.
At a certain point, you get these 5, 10, 15% moves after just huge run-ups in the names. Counting down to the opening bell, here's a trading diary for the week ahead. Tuesday, tomorrow, we get earnings from CoreWeave and Supermicro, as well as the kickoff of bond auctions. Wednesday, CPI data, the key indicator of the week. Thursday, PPI data, plus another round of jobless claims and Fed speak from Hammock and Barkin. Friday, we get retail sales and the University of Michigan Consumer Sentiment Survey. Traders gearing up for the next big data print, which is going to be potentially the CPI print on Wednesday. Matt Stuckey of Northwestern Mutual writing, near-term markets may remain choppy, but we are positive on the immediate term on strong and broadening earnings trends, reinforcing the case for diversification. Matt joins us now for more. Matt, I want to start with just the amount of capital being raised by some of the AI companies, and I want to stay on Intel, the idea that they're going to sell $15 billion of equity, and you're seeing the shares markedly lower in pre-market trading. Do you think this is the path of travel now now when there are new capital raises for the likes of Intel or even the Amazons, Alphabets, and Microsofts?
That's a good question. Good morning, Lisa. Look, I mean, I think a lot of these companies have stretched as much as they can stretch in terms of using all operating cash flows to, further their investment ongoing needs. And so if you want to go beyond that, you have to tap the equity markets and the debt markets. The response to that has been mixed, though. It's you're seeing this morning with the price of Intel and how Google's behaved over the summer. There is some pushback on the part of investors. I think part of the concern is kind of what's happened, with companies like Oracle as an example last few years is, painting a picture of several years worth of negative free cash flows and then hoping that on the other side that there's this big hockey stick higher in free cash. That is an underwriting exercise that some investors just, are pushing back against. I think if you're going to go forward with, that type of financing structure, you have to be able to reports incremental operating margins to the likes of what we're seeing some of the hyperscalers like Amazon, like Google, like some of the others in the space that are posting, operating margins incrementally north of 50%. That's okay. But if you can't point to that direction in the nearer term, it's just a tougher pill to swallow from a financing perspective.
At this point, do you think that there still is a lot of financing to do that is going to be hard to swallow, that is going to cause these hiccups in markets? And I'm thinking, for example, of CoreWeave that's going to be reporting earnings later this week, and potentially, Caterpillar coming to market and selling a benchmark bond offering. I mean, everyone has their hand out. So where are you going to most likely see this indigestion?
Yeah, I think it's going to be more in the fringe players than it is the core players. And here's kind of the reason why is if you're looking at the likes of the largest, most well-capitalized, most entrenched players in the hyperscaler space, let's take Amazon and Google as examples, what you're going to likely see is in the coming 12 months, their monetization levels of their compute infrastructure continue to uptick. And the reason being is that rental prices for GPUs are on the rise and contracted rates that they have on their books are likely going to be moved higher and marked to market higher. And that's a critical kind of financing mechanism that hopefully does kick in, that kind of eliminates some of the stress that's been out there in terms of these financing pressures. But that's the core players. The more fringe players, those are more difficult. The financing costs are higher just due to the balance sheet situation as well as diversification of their profit pools. And so that is going to continue to be probably a little bit tougher sledding for them. But it is a strong market in terms of the demand for compute. And so if you're operating in the space, it's a good place to be running your business, but you are stretching the limit in terms of the financing availability.
What would happen if we were to see higher interest rates in this space?
Well, I think in terms of the ongoing kind of concern about how much more market sensitive this build out has become over the years, I think those are valid concerns. In 2023 through 2025, most, if not all, of the infrastructure spend has been operating cash flow centric. Now as you're using the debt markets and the equity markets to finance more of this, you naturally make it more market sensitive. And so higher interest rates are incrementally going to be somewhat of a headwind on further growth in CapEx. I would say, though, that's incremental, though. The vast majority of the investment that's happening in this space is still financed with operating cash flows. It's just the incremental growth above and beyond that is more market sensitive than it used to be.
Is this what you're primarily focused on as a potential risk for the end of the year? Are there other concerns for you?
I think it's one of the risks. I would say alongside of that, you always need to look at what's happening with the labor markets and what's happening with interest rates. Corrections are almost always sourced from a sharp backup in higher rates or in a higher unemployment rate in terms of where the direction of travel goes for the near term. But if you're looking at just what's really pushed and powered the U.S. economy forward the last few years, it has been the ongoing build-up of artificial intelligence infrastructure. So if there's any kind of wobble in the sentiment or the CapEx growth plans that are there, it naturally pushes some of the economic growth worries higher. Not that they're happening today, but it's certainly in terms of evaluating risks on an ongoing basis, it's something to continue to monitor closely.
So how do you plan to set up heading into CPI on Wednesday? In other words, is this going to be a major data point for equities, or is it more peripheral? Because ultimately, what the Fed doesn't matter as much if it's just one 25 basis point rate hike.
Well, I think it still matters for sentiment. Even if it's only 25 basis points higher. Look, I mean, I think that sentiment does have a lot to do with kind of near-term performance. And so if there is a continued tame kind of inflation reports that we saw similar to last month, that goes for a long way for continuing to diminish the likelihood of a September rate hike. If you look at just the last a couple of labor market reports plus what we saw in June's CPI, policymakers are likely to be able to stay on hold if you get another benign report, and that matters for sentiment. And so to me, I think it is still worthwhile to closely monitor those near-term inflation updates that we're going to get this week.
Matt Stuckey of Northwestern Mutual, thank you so much for being with us this morning. And really right now what you're seeing in markets is this push-pull. On one hand, we've seen earnings that have been incredibly positive, and we've seen a bit of retracement coming from some of the high flyers after the leverage washout, as some people call it, post-situational awareness. And then you have this anxiety about the capital raise that is coming down the pike and whether or not it potentially will dilute some of the valuations we're seeing.
And we're seeing that front and center this morning with Intel, with shares down some 4%, even though they had really an incredible year in terms of this run out. But you bring up this great point. Does this just dilute some of the other shares? And that's really a concern. We saw it on the debt side. Now we're seeing it on the equity side.
Yeah, and potentially a lot more going forward, given the trillions of dollars still required, given that we are not necessarily even halfway through the total CapEx buildup required for artificial intelligence. Coming up tomorrow, Marvin Lowe of State Street will be joining us, plus Kelsey Barrow of JP Morgan, Libby Cantrell of PIMCO, and David Tinsley of Bank of America as we count you down to Wednesday's CPI print, PPI coming on Thursday, a slew of earnings and bond auctions, the week just getting started. This is Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Dani Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. And how much work do you get done?
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Futures very fractionally lower. We're essentially at records in the stock market. 30 minutes until the start of trading. I'm Bonnie Quinn. Dani Berger is off today. Bloomberg Open Interest starts right now. Coming up, Intel offering $15 billion in common stock as it races to capitalize on booming AI demand. Meanwhile, oil advances as President Trump leans on financial pressure while Iran rejects talks. All of that as stocks hover near records ahead of the latest inflation data later this week. Let's get to some individual market movers now. First, let's take a look at Apple. It's been downgraded by Jefferies. As you can see, we are at underperform for Jefferies and an underperform today on that stock itself, with that stock down about 1.4% in the pre-market. Meta Platforms, though, a different story. It is higher. It's just released a new AI model that developers can download and run on their own computers, a home computer. The company's stepping up its push into open source AI. And Intel down almost 5% of the pre-market. It's raising $15 billion through a common stock offering, though, not debt, to help keep up with growing demand for its AI products. Let's begin right there and bring in Bloomberg Tech's Ed Ludlow in San Francisco. So it's choosing to go the stock route. Ed, you might say, well, obviously the stock has tripled. At the same time, this is going to dilute, and investors are clearly not happy. Why?
Yeah, I mean, well, the stock down 5% on that dilution factor, clearly. You know, this is timing and being opportunistic for Intel. You're right that the stock has tripled year to date. And it helps them to fund a $20 billion CapEx program. So it is a $15 billion equity offering, but there's a 30-day underwriter option, which could add another $2.25 billion. So the total $17.25 billion. And if you just go back to what we learned last quarter, the data center business is growing 59%. It's a CPU story, but they're basically saying there's a great opportunity here in the AI world for Intel. And so knowing that their CapEx commitment for this year is $20 billion and it will go up in the coming years, this is them funding that.
Let me move to Meta, because we also just got the news that it's releasing Muse Glimmer, which is an open source model that anyone can use. Is this a land grab, essentially, a territory grab?
So bigger picture, Mark Zuckerberg, the Meta CEO, wants AI to be accessible, more democratic, more evenly distributed to everyday people, not just a few handful of companies. So with Muse Glimmer, this is a $30 billion parameter model, but the idea is you could just run it on your laptop. Just need one single GPU. Everybody could do it, not just in aggregate in a big cluster in a data center. And that's kind of what Meta's plan is, right? They've historically backed open source and open weight models as being a big necessity. But this is them kind of reinforcing that idea that they want AI to be accessible. And in this kind of memo, Zuckerberg outlines these 4 principles of how AI is more democratic in that sense. But it was interesting to see the stock push higher once Meta had communicated that.
Yeah, and it's unrestricted. It's certainly going to be an experiment. The other thing that Meta announced is that it's going to invest $1 billion in areas of the country where it has data centers and so on. Will this do the trick, PR-wise?
It's called the $1 billion Future is for Everyone Fund. And I think the idea of the $1 billion is to invest in those communities where there are data centers in proximity, you know, rather than the data centers themselves. And, you know, I think going into the midterms this year, there is a great consciousness among those in key races that the electorate is not sort of very pro-AI when it comes to the negative impact of data center build-out, which ranges from higher electricity prices to water availability impact and just basically the activity that's going on. So Meta are addressing that head-on because Meta, one of the biggest operators of data centers in this country.
Let me ask you about Apple. We obviously saw the downgrade from Jefferies, but it's also looking at reinventing basically the watch, the smartwatch.
Yeah. Yeah, so Mark Gurman's Power On very much focuses that Apple is going beyond the screen, or getting rid of the screen in some cases, having products that don't rely on that part. Where it relates to the Jefferies downgrade is that Jefferies is pretty concerned about Apple's ability to raise average selling prices overall. One part of that strategy is what Jefferies describes as the 20th anniversary all-glass iPhone. Remember, Bloomberg's Mark Gurman has been all over this for 2 years. Project Glasswing, the idea that it's just a very high glass content phone. And what Jefferies is saying is that in their supply chain checks, they don't think this this all-glass iPhone is going ahead, because Apple cannot guarantee that it will be able to have volume yields at a level that make it sustainable, production yields that make it a worthwhile project and product. So the stock did fall, right? We're down 1.4% in the pre-market, but the moment that the note hit, you know, the stock went from basically being flat to that decline. So clearly it's being taken seriously.
Yeah, absolutely. Ed, thank you so much. That is Bloomberg Tech's Ed Ludlow. This week, investors will get a fresh read on inflation and the health of the consumer with the latest CPI print. Joining me now is Michael McKee, Bloomberg's international economics and policy correspondent. So, Michael, if we get consensus readings, right, which is for, again, inflation to come in above target, the optics may not be great, but at the same time, if Warsh is putting less emphasis on CPI, does it matter as much?
Well, we don't know that he's putting less emphasis on CPI. He's mused about other indicators, and the Fed is always using every other indicator they can find to figure out what's going on. But for right now, it is the CPI because it's the most detailed view of inflation that we get. So they'll peel that apart and try to figure out where inflation is still a problem. We get that on Wednesday. Thursday, we get pipeline inflation, what's happening with PPI. And Friday, the Michigan sentiment indicators also show the idea of inflation expectations, and that will be important to the Fed as well. So we can call this inflation week. Now, what everybody's going to look at once they strip apart the CPI is what they call the CPI supercore. We used to talk about this a lot, haven't in a while, but it's basically services in CPI X housing because of the way housing is measured. And as you can see, it has still, even though it's come down some, it still remains sticky. That is the blue line is the year over year. And so the hawks want to see that come down solidly before they say we're going to get to 2% or not. Interestingly enough, Fani, we have not very many Fed speakers reacting to any of this week. We've got Beth Hammack today, and then she'll speak later in the week, as will Tom Barkin. But you see how many we had speaking last year at this time. Big difference. Don't know if it's Kevin Warsh's influence or if people are just on vacation.
For August, the calendar does seem to be quietening down. Michael, thank you so much. That is Bloomberg's Michael McKee. Turning to the Middle East, President Trump is leaning on economic pressure rather than fresh strikes on Iran now, as Tehran rules out direct talks with the U.S. for now. Joining us is Colonel Wayne Sanders, Bloomberg Intelligence Senior Defense Analyst and retired Army Colonel. Colonel, sure, the IMF is projecting 6% contraction for Iran for the year. We have reports of runaway inflation, people below the poverty line, and so on. At the same time, this is causing economic pain in the United States as well, and we're just 3 months away from the midterms. How long can the U.S. bear this?
Yeah, I think at this point in time, that's kind of the game that we're playing right now, is a game of chicken economically. The U.S. can still, from a military readiness perspective, do quite well. I know that people are talking about munitions depletion, but that's only a specific handful of capabilities, while the rest of the weapons stockpile still remains well. So I think it's really going to be along the lines of more on the political side of the house as to how much more the U.S. population is willing to continue to go back and forth. Hey, we almost have a deal, or we don't have a deal, and then obviously we're dealing with the Houthis, the Iranian strikes, and then IRGC just changed over as well. An additional IRGC former commander is now in charge of the National Security Council in Iran as well. So 2/3 of that Hydra now kind of changes. So you still have the president, but then IRGC commander, and now the National Security Council. All three of them kind of have to agree if you're trying to reach some type of agreement.
Well, domestically, according to reports, the Pentagon has given several defense companies 21 days, no more than 21 days, to come up with fresh solutions to some munitions shortages. How can they ramp up the production of munitions if this has been a problem for a while and they haven't been able to do it?
Yeah, the needle has already started to move. We have seen that. Right now, RTX is being asked for their standard missile series, the SM-3, SM-6, to double and almost triple their capacity. Lockheed looking at their PAC-3 interceptors for the Patriot, as well as the THAAD system, triple and quadruple their rates. So they've already started doing that. They've started pushing towards 620 is the PAC-3 interceptor numbers right now, trying to make it all the way up to 2,000 over the next 7 years. Obviously, they're going to reach that before then, but it's not something that takes place overnight. Really what Deputy Secretary of Defense Feinberg's asking for right now is looking across the supply chain, whether it's solid rocket motors, whether it's batteries, whether it's some of these other additional components, working with their Tier 2, Tier 3 suppliers, and then finding out whether or not there's innovative solutions to bring down that number as well. You also saw Secretary of the Army Driscoll put out that they're changing up test range requirements to bring in some of these munitions earlier into the process as well. All of those things, I think, will help bring capabilities to the left. Tech disruptors are involved in this as well. You see Anduril, Leidos, Co-Aspire, Castilian, and Zone 5. They were given a low-cost containerized munition demand as well to say we need to be able to up-ramp that as well.
All right. Colonel, thank you so much for joining this morning. That's retired Army Colonel Wayne Sanders of Bloomberg Intelligence. Let's get a check on markets now. About 20 minutes before the opening bell, as you can see, we are fractionally lower on futures, but the S&P 500 closed Friday at a record, as we saw a gain for stocks in general. The Nasdaq itself was up more than 1.2% of the stocks, now up 75% year to date, although it is down 16% from its June highs. As you can see, Nasdaq 100 futures also pointed fractionally lower. The 10-year yield up another couple of basis points today, 467.19. That yield is creeping ever higher, even as markets price out to some extent the possibility of a September hike. We're still at about 45% probability of a hike. And then if you look at Brent crude, well, that is partially to blame. We have Brent back above $85 a barrel now, as it looks like there is complete stalemate with perhaps Iran and Oman coming to an agreement, but nobody else. All right, let's get a look at some other movers on our radar with Bloomberg's Nora Melinda.
Good morning, Vonnie. A few stocks on the move this morning. First up, GameStop might just be rethinking that deal with eBay. Sources are telling Bloomberg CEO Ryan Cohen is considering pulling his $56 billion offer for the company, and he might propose a partnership or JV instead. You're seeing shares of GameStop to the upside, up about 2.8% in the pre-market trade, though. We are seeing shares of eBay down a bit more than 1%. And from there, we're heading over to HPE, higher after an upgrade over at Morgan Stanley. Morgan Stanley is saying that the company, it likes it and all that AI spending. It keeps rolling in. Vonnie, I guess that AI spending story gets a pass today, apparently. Shares up about 4.8% this morning. And finally, TSMC lower. That's even after monthly sales jumped 45%, thanks once again to strong AI demand. Last month, we know the company already raised its spending and revenue outlook for the year as big tech companies keep pouring money into artificial intelligence. Apparently, even a 45% jump isn't enough to impress investors these days, Vonnie.
Was considered even a little light. Isn't that interesting? Nora, thank you so much. That's Nora Melinda there. Coming up, Berkshire spends $4.5 billion on share buybacks as Greg Abel puts some of its cash pile to work. We'll have more on that next. This is Bloomberg Open Interest.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Now to high interest to look at what's making headlines around the world. President Trump naming White House Staff Secretary Will Scharf to be his top lawyer. Scharf is set to replace David Warrington as White House counsel next month. Since Trump began his second term in office, Scharf has become known as the person who hands him executive order documents in the Oval Office. Israel is rejecting a US-backed peace proposal with Hamas. Prime Minister Benjamin Netanyahu told his cabinet the Israel Defense Forces will not carry out any withdrawal until Hamas is, quote, genuinely disarmed. President Trump has touted the proposal as an historic agreement. Berkshire Hathaway's latest earnings report revealing that it has spent about $4.5 billion to buy back its own shares and purchased nearly $20 billion of equities in the period. The increase in capital deployment signaling that CEO Greg Abel is putting more of the firm's cash pile to work. Joining us now is Bloomberg Investing editor Amanda Cantrell. Amanda, thanks for joining. So the fact that we got a decent-sized buyback, and we haven't had a decent-sized buyback in quite some time from Berkshire, does that mean that suddenly the shares look intrinsically undervalued?
Well, they do to Greg Abel, at least. He did say at Berkshire's annual meeting in May that they would start engaging in buybacks once they felt that the intrinsic value was above where the market was pricing it. And clearly they do think that's the case. They sort of stuck a toe in the water in the first quarter. They bought back about $235 million. Obviously, this is a big step up. Still a little bit below what some analysts were hoping, but there is some indication per analyst that they have been buying back some shares in the current quarter.
Now, the stock is up 20% in 2 years. The S&P in that time is up 45%. I think one of the reasons everyone is so interested in this is because they want to extrapolate and say, well, that means the broader market is perhaps not overvalued or too overvalued. Can we extrapolate anything like that from this particular action?
Well, it's with Berkshire, you know, they are sort of a bellwether for the U.S. economy, given all of the various business lines that they're in. We know for sure that they feel like their own stock is personally a buy. They also, this past quarter, bought $20 billion worth of equities, which is the first time they've been net buyers of equities in some time. So that does seem to indicate that they're finding something of value to buy.
And hopefully we'll know more when we get details of those filings.
We will know more when their next quarterly 13F filing is due, yes.
We do know, though, that they upped their Alphabet investment. Now, does that signal that Greg Abel is just more comfortable with technology investments? Alphabet is undervalued? What does it mean here?
So it's interesting. Warren Buffett actually took credit for that, thinking of that investment on an earlier TV appearance. I think he's has expressed regret in the past for not investing in it sooner. So clearly they do think there is some value there.
Greg Abel, obviously quite happy to sort of come out swinging here. Also the acquisition of Taylor Morrison, and then the continued love affair with Japanese brokerages and insurers.
That's right. They did acquire Tokyo Marine. That's one area that they definitely see as a bright spot, Japan's.
Amanda, thank you so much.
Thank you.
That is Amanda Cantrell there, our investing editor. Coming up, strategists continue to boost year-end targets as earnings season wraps up and a Fed rate hike looks maybe unlikely anytime soon. Ethan Devitt joins us next to discuss. This is Bloomberg Open Interest.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
JP Morgan strategists the latest to raise their S&P 500 year-end target. They see the benchmark topping 8,000 by 2027, up from 7,800, which is basically where we're at now. JP Morgan says AI monetization is accelerating, and that will boost profits for hyperscalers before broadening out to other industries. Let's bring in Moneta Global Wealth Managing Director, Ethan Devitt. So, Ethan, does this seem plausible that we will not have any kind of a major drawdown, at least imminently, if we're to reach 8,000 by year end?
Well, interestingly, that was my forecast at the beginning of the year, 8,000. It seemed a little outlandish at that time. I think increasingly more likely now as the year builds some steam. What could we see? I mean, I think in a way, every potential threat that could be thrown at markets has been thrown at markets. It has been shown to build resilience, to the point of which commentators are suggesting resilience is not always a good thing, because it suggests that there is a lot of hardship out there and a lot of challenges. But we've seen that markets are resilient to tariff threats, to geopolitical threats, to a high oil price, and to a really shape-shifting Fed. So at this point, we've seen that definitely a lot is riding on earnings. And I think that's probably still could be the chink in the armor here, something unraveling when it comes to AI earnings. But I think now with a mere 4 months left, 4 and a bit months left, I think we could be looking at a fairly steady run to 8,000.
Ethan, this seems to suggest that monetary policy won't be an issue, and yet the market has never been as confused about what's happening next at the Fed, right? So yes, it took in its stride, perhaps, as you say, the shape-shifting nature of the Fed, but we really haven't fully digested that yet, and there are 2 more meetings before the midterms and more after that before the end of the year.
Well, certainly we're not getting many signals, and that's by design, and that I think has thrown markets a little bit. We know that the bond market was really not taking the chairman's word necessarily and did not think that there would be much inroads made on inflation. Now it seems they're a little bit more calm about that prospect, and it seems that the prospects of a rate hike now have come down significantly. We're looking at one move in either direction, and I'm not sure that that really signifies a particularly strong direction of travel. So for that reason, I think some of the most extreme projections have come into line around monetary policy. Maybe that's why there's a bit more calm out there in the bond markets.
Ethan, you say that we've managed each challenge as it comes along, and the market has just completely dealt with it in a very calm way. But each next incremental record that we hit, are we putting ourselves in a more precarious position?
A great question there. I'd say what we're seeing is more profit taking, certainly as we hit new highs. And we're seeing more rebalancing. We've seen that for some time, rotation out of the hyperscalers into different parts of the AI value chain at times, and into other sectors such as the European stocks, for example, some of the old economy stocks, some of the healthcare at other times. So we're certainly seeing this rotation happening, suggesting that there is money being taken off the table.
If we get a rate hike, either in September or in October, what does that do to the rotation trade?
I think that accentuates the rotation trade out of some of the more high volatile, hyper growth stocks and into more defensive stocks. I think one thing we do know is there is no bottomless pit in the world, even in the world of AI, even in the heady world of AI. There is still a need to raise capital. And we know just from some of the messages coming out of Meta today that the pricing at which even these hyperscalers can raise financing is increasingly getting more and more expensive, which is good news for the private credit managers providing this financing, but it shows that there is going to be a higher price to pay for borrowing. And as we see rates go up, that price is going to really have a higher floor underneath it, which will put pressure. If it puts pressure on the cash-rich hyperscalers, think of the pressure that would place on the ordinary midstream corporate that also needs to borrow. Think of the pressure that would place on the consumer already at the pin of their collar with their mortgage. So I suggest it will be a very unpleasant message that we get should rates go up.
All right, Aoife, we are going to continue this conversation just on the other side of the market open. Aoife Devitt is sticking around. Let's take a look at those markets now ahead of the opening bell. Just 30 seconds to go. And we are coming into Monday at a record on the S&P 500. Will it hold? We'll see. We're down, but very, very fractionally, just 0.1%. A few stocks under pressure today, including Intel, for example, on that dilution announcement. But also oil is higher today as we continue to see a standoff, basically, in the Middle East. Brent crude above $85, and that surely will have an impact. And yields are higher, with the 10-year yield now at 4.68.
What is Mira Murati's vision for the future?
You know, predicting dystopia or utopia to me feels very, very simplified, because the truth is we actually have a lot of agency in how we build this technology, in the tools that we're building, how we're deploying it. It's not a predestined outcome. There are certainly those risks. We all understand the potential for greatness that comes with building frontier AI systems, and that's why we're working on them. There's been a lot of talk around the uncertainty, around the downsides, and I agree with a lot of these risks. And perhaps where I might disagree or take a different path is that I think we have a lot of agency. Like this period of time where both humans and AI systems have their hands on the wheel and we can collaborate is a very important time to get right. And the more that we can reduce the discontinuity that comes from new capabilities and huge change in capabilities, the better. And this is why we took this approach with Thinking Machines and why the company exists.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading this Monday session. This is Bloomberg Open Interest. I'm Bonnie Quinn, stepping in for Danny Berger. And you can hear the opening bells right now as we see stocks fractionally lower in the pre-market. This, of course, as we're coming into Monday at a record for the S&P 500. The stocks as well was up 2.2% in Friday's session. All right, let's get to see those opening bells and who exactly is ringing them. We'll start down at the NASDAQ. We have Advisor Shares, actively managed shares. That's Dan Aarons there, portfolio manager at Advisor Shares. They do thematics, so things like psychedelics, cannabis. I saw an HVAC ETF there earlier on. So congratulations to them ringing the opening bell. And then on this side, a 65-year celebration. So J.B. Hunt, the transportation and logistics company, celebrating 65 years, and that's the president there, Shelley, celebrating with her team. She has a commentary in Fortune today, if anybody would like to read a little bit about the history of J.B. Hunt, one of the oldest companies in the United States as it stands right now. All right, let's get to some stocks to watch as we begin just the first few minutes of this trading session. Apple down 2%. It was downgraded at Jefferies, down to underperform, in fact. Jefferies supply chain challenges for higher priced iPhones. Meta up 1.2%. This is interesting. It's just released a new AI model, an open source model. Developers can download and run it on a home computer. Anybody can download it. It's going to help with things like file management and so on. The company stepping up its push into open source AI and trying to gather those eyeballs for that before anybody else does. And then Intel down 4.5%. That's likely to put some weight into the averages today. It's announced basically a dilution. It's raising $15 billion or so, it hopes, by sending some shares into the market, some common stock into the market, and that is Intel down about 4.5%, trying to keep up with demand for its AI products and obviously take advantage of the tripling in its stock price just in the last year. So with that in mind, let's bring back in Moneta Global Wealth Managing Director, Ethan Devitt. Ethan, we've had this massive run-up in these chip stocks, right? I mean, we're talking about the semiconductor index being up 75% year to date, and that's even after a 16% drawdown. Can we stay at these price levels, or is there much more price discovery to happen to bring some of those, exorbitant levels down?
I would say we're getting pretty close to having had full price discovery there. There's a lot of uncertainty regarding all of this in the demand and supply areas. So I'd say, though, in terms of transparency, getting information out there, that these cycles have just got so short in terms of what analysts need to see. So I don't see much in terms of unknowns. But what we will see is a continued rotation down the value stack. We've seen it go into the chips, and now I see it from here going firmly into the infrastructure and into the providers of finance, like we discussed earlier, the banks, where follow the money, essentially, when it comes to this. And then even at another area of abstraction into the power supply for all of this. We know that this has not been resolved, how we will power these data centers. That's where we see the next leg, shall we say, of this rotation through the value chain.
It all presupposes, though, the optimistic scenario presupposes that all of this build-out happens without incident, right? And we already know that states are putting up fights, communities are putting up fights, hence why Meta is offering $1 billion to these communities at the moment.
It is. It has become an arms race of sorts. Now it seems to become a sweetener race in terms of who can get there without causing as much disruption. We know this is a huge wedge issue. At times it has bipartisan support, depending on where you look across the US. Plus the elections are coming. And then there's this kind of rumbling in the background that we cannot get behind in this race in the US because China is not going to have the same level of restrictions, is going to have the ability to build data centers. And we know this race is on. I will say I'm sitting in Europe here, and Europe also knows it's in the race too, but perhaps it's lagging on a third place there behind the players I mentioned earlier. So a lot to play for. And I'd say we also forget that none of this is ever straight line. There is always going to be overextension and correction in any infrastructure build out. And I think that's an important reminder when we look back. If AI infrastructure build out is now about 2.6% of GDP, it's a massive slice relative to other industrial revolutions in the past. So it can be very meaningful, but there were fits and starts there too.
You mentioned Europe. Europe has definitely been an AI haven trade. What hasn't so much in the past several months, although recently it's becoming one, is gold. Why has gold been rallying just all of a sudden out of nowhere?
It's interesting. You mentioned some of the tensions and perhaps the threats to markets earlier that are circulating. I'd say gold has always been there as a hedge against currency debasement, against central banks not being able to control their deficits. And it really has been, it's at times has looked like a risk on trade when the technical factors suggested that it was retail money that was really driving this, as well as central bank holdings. Then it went out of favor and it seemed that it wasn't marching in sync with equity markets. I would suggest that the strength we're seeing recently, up 7% last week, is a sign that it is starting to look like it's good old-fashioned diversifier hedge trade again. And I use the word shape-shifting. Maybe this is also shape-shifting in terms of the role it plays in a portfolio. But I think it is notable that investors are starting to realize that some of these problems around the budget deficits have not gone anywhere.
Yeah, and to that point, we're seeing bond yields rise quite substantially, right? Ethan, how concerned are you for, those with bonds in their portfolio that you manage, that we have yields just rising and not any end in sight? We have the 30-year yield at 5.21 and change now.
It's a great question. And I'd say at Moneta, we always have a bond slice in the portfolio. It's not huge. It certainly doesn't correspond with the old-fashioned notion of how much bonds you would hold in a portfolio. It has been running down over time. But the way we hold bonds is really more of a buy and hold strategy, a cash flow generator. We see it as a good place to leave cash. And because we have laddered bond portfolios, we're not typically forced to sell into a market as funds would be. So the way we hold bonds is slightly different, but we do have to manage expectations in terms of what they can yield and how volatile they're likely to be over the course of time. But having a laddered portfolio of municipal bonds is really a pretty safe haven trade for private wealth clients.
Ethan, is the surprise as palatable in Europe as it is here? And why is that? I mean, I feel like this market, or at least some participants in this market, have been waiting for long-end yields to rise substantially for a long time, given the fiscal situation.
I'd say in Europe, there is obviously the yields are rising for different reasons. There's a lack of confidence in some governments. We've seen that in the UK. We've seen that in France. Quite a lot of movement there around just the inertia in Europe, the lack of growth, this stagflation, the term that's gone out of favor now, but was in favor just at the beginning of the year. So I'd say there has been some concern about that rise, but also I wonder whether it's contamination and just this contagion from the rest of the world, or whether there's something very particular to Europe. And we hear advocates on both sides of that. So I wouldn't say there's a particular surprise. I'd say there's some relief that yields haven't gone higher, in fact, because a lot of Europe, as I mentioned, this anti-tech index, a lack of growth, a sense of falling behind. There's a lot of negative, I'd say, headlines, but actually on the ground, more positive news.
Well, exactly. So Europe, it's quite obvious, I think, why yields are rising. And it is in the United States, too. It's just that they were so depressed for so long that I'm curious, why is there surprise that U.S. yields, particularly long-end yields, are rising so much?
I think the surprise has come from the fact that the bond market has now taken on a life of its own again. It is no longer essentially obeying the Fed's direction. It's telegraphing. It is starting to act out on its own. The bond vigilantes in action, perhaps. And that's maybe where some of the surprises come from, that the bond market and the equity market are diverging in terms of the optimism that each is feeling. The equity market has been, we mentioned resilience, just boldly resilient time and time again. And it has captured trades. There's a lot of technical factors, money on the sidelines, a real tendency to buy the hype, believe the hope, and not stay out of the market, a sense of FOMO. The bond market has been really rebelling against that optimism for some time. So maybe the surprise has come from the fact that it is so resistant to that hype trade, and that it's really striking out on its own, and the fact that now that the Fed is not exactly giving guidance, it really is an uncharted path it can run the bond market right now.
All right, Ethan, a very comprehensive chat with you this morning. Thank you so much, Moneta's Ethan Davitt. All right, let's get a check on the stock market right now. As we know, the S&P finished Friday at a record despite that weaker than expected jobs report, although, as one guest pointed out earlier, the unemployment rate was not that weak. So we are seeing today a very fractional decline for the S&P 500, but will it hold throughout the day? We'll have to see. We're seeing plenty of energy stocks, for example, higher on Brent, above $85 a barrel. We're seeing the software companies continue to gain as well. It's this continued trend. You've got Palo Alto Networks, Palantir higher. We have Berkshire Hathaway rising 2%. And as you can see, the stocks that are doing well are doing much better than the stocks that are doing poorly. So you have 209 stocks higher, but they are higher by a bigger percentage point gain gain, then these stocks are lower by a percentage point loss. Some of these stocks include Apple, a little maybe challenge ahead. Jeffrey certainly pointing that out, but Apple has been doing well. It's been doing just fine in terms of market cap. Nvidia just down about 0.5% as well, but also that's made back some of its losses in the last few sessions. Intel definitely weighing on this sector, and also the broader market today down more than 4% after it said it's going to dilute. But again, all of these stocks have had massive gains. So you're going to see probably a little pressure on the chips. But don't forget, we did have the SOX index up by 2.5% on Friday. Now for some sectors, let's have a look. As you can see, it's reflected there again. Energy, healthcare index, we're having some nice gains for some healthcare companies, including Vertex Pharmaceuticals, the financials, and then on the downside, the real estate index and consumer staples, as we perhaps get just a little bit more trepidatious about the consumer post that non-farm payrolls report. All right, coming up, traders leaning into momentum as leveraged ETFs take off, especially for chip stocks. We discuss with Eric Balchunas from Bloomberg Intelligence. This is Open Interest.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start in the third floor or the lobby. You actually have to start in the basement.
Latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg. At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting, rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Time now for our top calls. Here's Bloomberg's Nora Melinda with some of the analyst action in focus this morning, Nora.
Hey, Vonnie, first up, looking at shares of Apple, they're lower. That's after Jefferies downgraded the stock to underperform. Now, this is the latest sign that Wall Street's getting more cautious on Apple. Jefferies says the roadmap to a higher price iPhone looks challenging. Vonnie, as if iPhones weren't expensive enough already. Next up, Morgan Stanley upgrading HPE to overweight. The firm said it likes what the AI boom is doing for the hardware business and thinks that HPE is in a good spot to benefit. Vonnie, these chip makers can't have all the fun. We're seeing shares of HPE higher by about 3.5%. And finally, over to retail. Wells Fargo upgrading Dick's Sporting Goods to overweight. Shares of Dick's up about 1%. Believe it or not, Nike is actually part of the reason why the firm thinks that Dick's could benefit from a Nike comeback. Well, there's still plenty of room to improve Foot Locker. And Nike could use that comeback, Vonnie. The stock is down more than 30% this year. Those are your top calls. Vonnie?
That's the thing. You have to have a chicken and egg situation with that. Does Nike have to make the comeback first? Or...
Right.
All right, Nora, thank you so much. Now to the leveraged ETF boom. The funds are adding to market volatility as traders profit from intraday momentum strategies. But the trend may be losing steam with total assets under these funds off their record highs. Let's discuss with Bloomberg Intelligence ETF analyst Eric Balchunas. Not tongue-in-cheek, but is it because so many retail traders have lost their shirts?
Yeah, well, it's very complicated. When you unpack the leveraged ETF space, which has been around forever, but it's gotten a little more risky with single stock leverage. But all told, it's about 160 billion. So that's 1% of all ETF assets. So it's a small area, but it accounts for 13% of all the trading, which is probably good. You should trade these things. You don't want to hold them because they have vol drag, because they reset every day. Long story short, the people who use them, I think, are using them pretty correctly. In the semiconductor space, which is where a lot of the volume is lately, Soxel is the big one, 3X Semis. It's trading as much as like a Mag 7 stock these days. Like, there's a lot of activity. When there was a downturn, the people piled in. Then when it goes up, they take their profits. So all told, they've made money in the ETF, believe it or not. I know that goes against what people think, but these traders are smart. They do the opposite of performance chasing. They go in when it goes down, and they buy when it goes up. Now, if it kept going down, that's when they would lose their shirts, and there has been money lost, no doubt. But net, these things have made $60 billion for these traders. That's why they use them so much.
But is it all for Jane Street? I mean, the thing is, you don't know when going down is going to stop, right? That's the problem.
True.
Otherwise, you'd be in SOXS, right?
So part of this whole market is that the dips keep going up again. You know, the Vanguard people know the same thing. They just keep buying dips, and so do the degens. So like, people have been accustomed to dips going back up, and they keep going up. So you're right. Until there's this long, prolonged bear market, my colleague Athanasios, we refer to it as a hard rain. If there's a hard rain, a lot of this stuff will go away because it will hurt too much. But for now, as long as the dips kind of keep coming back, this will just keep, it's like chum in the water. Volatility is chum in the water for these traders who really love these products, and they deliver the leverage every day. And that's why, so I think they get a bad rap, and I equate them to like fast food or alcohol. They're not healthy, but they're legal. And you know, if you want that quick hit and you're looking to trade, they do work day to day.
Absolutely. Bitcoin, it's been trading in this range, $60,000 to $67,000, you know, for months now.
Yeah.
The last catalyst really was that legislation back in October. Was it just overvalued then, and is this sort of its value now?
Yeah, I mean, the market says it's worth, what, 65,000? We called it the silent IPO. When Bitcoin got to 125,000, it had gone up 400% in 2 years. That's a lot. I mean, it doesn't go up that much normally. So it had to blow off a little bit. But a lot of the OGs who sat through multiple hellish downturns, I think, cashed out. I mean, they're a little older, so they probably were like, hey, I'm 35 years old now. I want to get some money to buy a house. I was
going to say 65. 35 is considered older in Bitcoin world?
Yes. Oh, believe me, that's like a boomer right there for a Bitcoiner. So 35, 40, maybe they're getting a mortgage. So I think that we call it the silent IPO. The ETFs were kind of the IPO of Bitcoin. And a lot of the money went from the early people who were like VCs into the hands of institutions and people who use ETFs like advisors. So right now, the ownership of Bitcoin is changing more to advisors and retail and professionals and institutions, and some of these OGs have cashed in. Now, what happens now, we'll see. This cold card hack is fascinating. Somebody hacked an actual wallet wasn't even connected to the internet. That's scary. This, I think, will drive some flows to the ETFs. I think even the Bitcoiners are gonna be like spooked by this and be like, you know what, honestly, I'd rather trust Larry Fink and BlackRock to hold my Bitcoin versus this Canadian company that had 5 employees.
Unless you're a believer and you just believe in decentralized currency,
you could do a little of both.
Go and give all your.
I agree. There are some real hardcore. There's different spectrum of believers. If you're really all in, that you could never give your money to BlackRock.
Never give your money to.
But there's people in the middle, or they put some maybe with an ETF, and then keep the rest on-chain.
It's just a fascinating story. Eric, thank you so much. That is Bloomberg Intelligence analyst Eric Balchunas. And don't miss Eric on ETF IQ later today. That's at noon right here on Bloomberg TV. Coming up, GameStop may pull its $56 billion bid for eBay, but it has something else planned. More next. This is Bloomberg Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
This is Bloomberg Open Interest, a check on stocks now more than 20 minutes into the trade. And of course, we finished at a record Friday after the jobs report. We are so far off our lows of the day that we are trying to be in the green here in the S&P 500. We had an upgrade in terms of a forecast from JP Morgan strategists. They're now looking for 8,000 by the end of the year. And certainly today, we may just see another record, although for now, fractionally lower. Same thing for the NASDAQ 100. We were up 1.2% on the NASDAQ. We were up more than 2.5% on the SOX index. And yet it's just less than 0.1% lower today, even as some major stocks do sell off. The Russell 2000 lower as well. The dollar index just a little bit higher. We do have, of course, in the background, the geopolitical tensions. Nothing seems to be happening, at least regarding Iran and the US, although there is an agreement between Iran and Oman, apparently. Still have to see those details. In terms of stocks on the move, Apple is lower. It's had some great times recently, but today it's got a downgrade from Jefferies on higher costs, and we know that Apple has been touting the fact that it's going to have to increase its purchase prices for many of its products. We also have Nvidia lower, that obviously the proxy for the AI trade. Intel down 4.7%, a little bit of dilution coming to Intel, $15 billion worth of common stock being injected after the stock price tripled in the last several months. Meta Platforms, well, it's coming out with $1 billion for communities that it's investing in data centers in, and also, of course, secondary to that is that it's going to give you an open source AI cheaper model. In fact, it's going to be free. You can use it on your desktop at home or on your mobile phone even. GameStop and eBay, this is an interesting one. So GameStop very slightly higher, eBay down about 3%. Ryan Cohen changing his attitude just a little bit. Sources say GameStop is considering withdrawing that bid for eBay. CEO Ryan Cohen, though, may instead propose a partnership that would let eBay leverage GameStop's 1,600 US retail locations. Joining us now is Bloomberg's Bailey Lipschultz. Bailey, this is interesting because this might actually be, in fact, doable, whereas the previous suggestion didn't seem to be that doable.
No, that's spot on, Vonnie. This was a deal that, when announced, kind of went viral for all of the wrong reasons. If you're Ryan Cohen and if you're the members of that GameStop team, the big question was, how do you fund and take over? Again, not necessarily taking out a company, but going out and acquiring a company worth magnitudes more than you are worth. But this does kind of strike the kind of balance between what Ryan Cohen has been arguing is that eBay, poorly run in his view, really needs new blood, new life, and this is a partnership that, as Liana Baker broke out, could benefit both companies, because you're looking at eBay, which is kind of doing fine, and then GameStop really has these brick and mortar stores that they could benefit from selling products. So they've leaned into things like getting baseball and trading cards graded, leaning into other kind of levers to pull as people buy video games more and more on the system. So this could be a big step forward. As you mentioned, though, GameStop basically flattened eBay down about 3%.
Well, that's the thing. Does eBay need physical locations? I mean, wouldn't that change the business model entirely for eBay, which has been an online marketplace?
It certainly would, and I think that's why the argument of kind of a partnership, kind of balancing both prospects, because when you think about an online marketplace, what could you benefit from having brick and mortar? Is ability to kind of check out products? Is it an ability to use a third-party seller? When we think about the GameStop that people of my generation knew to love and also dislike, was the ability to sell and trade in video games. So you're bringing in a product to then get store credit to turn it around and make another purchase. Is that something that Ryan Cohen is thinking about? Perhaps, but to your point, if you're eBay and the whole argument is to be an online marketplace, what's the point?
Yeah, I mean, I'd have to look at the Real and see what happened there, right? Did the physical location help for the Real? And maybe that might be some kind of an example for us. Can we talk about Intel? $15 billion in common stock. Is this major dilution? Is this something that will annoy existing investors? Obviously, the stock is off today, but not by that much. Really.
No, stock's not off that much today. Again, as you had mentioned, it has basically tripled in a few months. This was relatively not unexpected. This is a market where you don't raise when you need to, you raise when you can. So when your stock price is up 3x, and as we've seen with SpaceX, Oracle, and a number of other companies, kind of, and Google kind of top of mind, leaning away from tapping the bond market, they have a lot of capital they need to raise in order to build out Foundry and build out some of their other products and kind of the entire investment in the US. So if you're Intel, this is a good lever to pull to bring in equity investors and also raise quite a bit of money. Again, this would be more similar to the Google deal where we're expecting it to price later this evening.
All right. Well, we'll see how the stock reacts throughout the week. But for now, at least, it's being digested somewhat by investors. That is Bloomberg's Bailey Lipschultz and all the capital markets action today. Coming up in the next hour, we're going to speak with Bonrian's Shayna Sissel on why she's so keen on alternative investments. Plus, we get a read on tanker traffic and Amazon's new freight services with FreightWave CEO Craig Fuller.
People have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank, it's super important to have trust and then public companies are trusted more compared to private companies. So that's the reason.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Nearly 100 large fires are currently burning nationwide, the bulk of them in the West, where more than 3 million acres have burned this summer so far. ABC's Kana Whitworth says it's not just in the United States, though.
Northern Canada in an emergency.
Oh, man, it's going crazy.
Canadian authorities confirming an 80-year-old woman died as a result of the wildfires while trying to evacuate her home. The Bald Range fire in British Columbia forcing evacuations for more than 20,000 people as flames race toward homes.
The UK and France are bracing for their 5th heat wave of the season. Temperatures repeatedly soaring across Europe since May. July was Puerto Rico's driest month in 120 years. In fact, they've begun rationing water, says ABC's Victor Oquendo, who's there.
In San Juan and other cities, hundreds of thousands of residents having their water supply cut off 48 hours at a time. Tankers being used by the government to deliver much-needed water throughout the territory. We asked Sonia Maldonado Renta how many times a day she fills these plastic bottles. Morning, noon, and afternoon, all the time. This is unbelievable. We're in a developing country.
Iran says it won't reopen the Strait of Hormuz unless the United States, quote, meets its conditions, which include full reparations for the war. A powerful 7.4 magnitude earthquake struck western Colombia today, prompting evacuations. No word on damage or injuries yet. There could be some tropical storms on the horizon. Here's ABC's Jim Ryan.
The Atlantic map at the National Hurricane Center features 2 areas of disorganized showers and thunderstorms that forecasters are watching. Models suggest the 2 may merge toward the middle of the week and give birth to a tropical depression by the weekend. Where it's headed is anyone's guess.
Checking the markets this hour, the Dow is down 62 points. You're listening to ABC News. Widening recall of jalapeno peppers amid a salmonella outbreak. And, says ABC's Elizabeth Schulze, now the company behind the lettuce recall is also recalling its peppers, too.
Taylor Farms says it got the jalapenos from Coast Citrus Distributors. The FDA, we know, had already linked that company to the salmonella outbreak. It's made 375 people sick across 27 states. Up until now, we had only been aware of potentially contaminated jalapenos sold at Chipotle, Qdoba, some other restaurants which removed them. Now this list is clearly expanding.
Jury selection is getting underway in Las Vegas today in the murder trial of Dwayne Davis, who's charged of being involved in the death of rapper Tupac Shakur 30 years ago. ABC's Alex Stone with more.
Davis now pleading not guilty
to 1 count of murder.
And I'm being held against my will. I'm supposed to be out there enjoying my twilight.
Prosecutors allege Shakur and Death Row Records founder Suge Knight assaulted Davis's nephew, and then Davis set out for revenge. He and 3 others in a white Cadillac allegedly finding Shakur and Knight at a stoplight off the Vegas Strip. Shots were fired, Shakur dying within days. Prosecutors say while Davis did not fire the bullets, he provided the gun and ordered the hit.
Davis actually wrote about the hit in his memoir. Amanda Knox, convicted and then acquitted of the murder of her roommate Meredith Kircher in Italy nearly 20 years ago, is hosting a one-woman comedy show about the whole thing. She debuted it at Edinburgh Fringe Fest this week. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube, streaming live at Bloomberg.com as well. Scarlett Fu is off today, not to worry. Stacey Vanek Smith, Bloomberg News. She's going to sit in with us today. Stacey, thanks so much for joining us here for the next couple of hours. We'll have some fun. Coming up, we're going to start off and we're going to check in with Ethan Bronner, Bloomberg Israel Bureau Chief, get the latest on the Middle East. We have boots on the ground there, which is good. Dana Dioria, co-CIO and Group President at InvestNet Solutions, get her thoughts on these markets. And then we're going to talk tech, media, telecom, tons of headlines out there. We do that with Matthew Blockson, Bloomberg Intelligence Senior Tech Analyst. Saget Miner, NIAC's Chief Financial Officer on NIAC's quarterly earnings coming up as well. And then it's Monday, which means we talk to Sam Fazeli. He's over there, Bloomberg Intelligence over in London. He is the pharmaceutical and biotech analyst, with always news coming out of that space. So a lot going on over the next couple hours. Bloomberg.com subscribers, guess what? You can now shape the conversation on Bloomberg Radio. How do you do that? You submit questions for the experts and guests on our show. Visit Bloomberg.com/AskRadio. It's an exclusive feature for Bloomberg.com subscribers and terminal clients. Visit Bloomberg.com/Ask Radio to join in on the conversation. All right, let's kick this thing off, folks. We'll do that with Matt Piper and a Bloomberg Business.
Hey, Paul, thank you. This Bloomberg Business Flash is brought to you by IBKR. Trade election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. Stocks are kicking off a new trading week on a low point right now after the S&P finished last week at a new all-time high. Let's go to the numbers. The Dow right now is down 124 points. The NASDAQ is down by 7. The S&P, the only thing in the green right now, up 4 points. Gold is trading at $43.91, down about 1/10%. Oil is holding on to gains as Iran and Oman remain short of a deal to reopen the Strait of Hormuz. Brent trading at $86 a barrel now. WTI went above that $80 mark as well. Just in, Imperial Brands is said to be planning thousands of job cuts throughout the U.S. and Europe. As for stocks for watching, Intel, taking advantage of the AI data center boom, says this morning they will be offering $15 billion in common stock amid renewed interest in its business prospects. Intel says the money will be used for general corporate purposes. Its shares have nearly tripled in value so far this year to about $101. As it works on a turnaround of its business, Intel right now is down about 4%. Other chip stocks for watching, Super Microcomputers is up about 6%. Marvell Technology up just 0.4%. We'll talk about paging the parents, guys. A Toronto-bound Porter Airlines flight was canceled after a child remained standing in a seat. The plane had left the terminal, but it did not end up taking off as no one could get the child to sit and buckle up. By the time Porter removed the parent and the child, it was past the airport's runway closure. So that happened.
That's some solid parenting right there.
That's a very pained look on your face right now, Paul.
Who needs flown across country with 4 kids over a span of 30 years? I got it down to a science.
Who needs Spirit when you have Porter? Yeah. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper. That's a Bloomberg Business Flash. Back to you.
All right, Matt Piper, thank you so much. We appreciate that. Stacey Vanek-Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Bailey Lipschultz. Bailey, what are you looking at?
Let's start with Hewlett-Packard Enterprise, ticker HPE, right now up about 5%. This did come after Morgan Stanley analyst upgraded shares to overweight from equal weight. The big driver for this that stood out to me, at least, increasingly clear, according to the analyst, that enterprises are viewing memory chipflation as a structural headwind, and rather than delaying or deferring some of those purchases until pricing cools, they're actually pouncing on the ability to get their hands on it. So, again, HPE upgraded company. Morgan Stanley also upgraded shares of Everpure. But the big thing, again, going back to what we've been hearing from these companies, is people are showing up and buying. If you want compute, if you want chips, if you want pretty much anything under the sun to build out AI infrastructure, you need to pay top dollar. And HPE right now up 5%, trending back towards those June highs. Stock's up 171% in the last 12 months.
Some stock, why not?
Yeah.
Google's doing it.
What else are you looking at this morning?
Intel, ticker INTC, down about 4%. This does come after news that the company is going to sell $15 billion in common stock to help fund some of those ambitions. Paul, I mean, listen, I'm just a lowly journalist, but if I were a banker, and I was on the phone with Intel, I'd say, you're up, what, 3x in the last 8 months? Why are we not tapping the equity market?
I had a boss who had us make those calls all the time. If a stock moved like X%, X number of days, just get on the phone.
Which, it's also interesting because, again, this is almost a $500 billion company, so $15 billion follow-on. If you kind of strip out some of the crypto-y deals, and you're really looking at, alongside the Google deal earlier this year, Boeing's massive funding package from a couple years back, T-Mobile, and some like Charles Schwab deals. So $15 billion in stock that we expect to price later this evening. Another example of some of these AI companies leaning away from debt to try to raise some funds.
All right, one more.
Barrick Mining, ticker B, down 8.5%. Biggest drop since earlier this year, back in March. Earnings were fine, but this does come, we've been kind of hotly anticipating it on the ECM desk, partnership, a JV with them and Newmont Corp to spin out and carve out some of their North American assets. This deal reflects the Barrick stake at $1.95 billion. The street was looking for closer to 3.85, so a big delta there, about 2x. So Barrick shares down 8.5% today.
Billy, thanks so much. Appreciate that. For more conversations like this, subscribe to Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Stacey, I'm seeing oil move higher here. We're up, Brent crude up 3.2%, $2.70, now $86. So it's telling you that part of the world, I think the oil market's telling you that part of the world, it's far from a solution.
Yeah, investors are worried, and it looks like the Strait of Hormuz once again going to remain at least mostly closed for the foreseeable future.
That's the point. Let's get to right on the ground there. Ethan Bronner, Israel Bureau Chief for Bloomberg News, joining us from Tel Aviv. Ethan, I want to start with a Bloomberg News story about Israel Prime Minister Benjamin Netanyahu has rejected a proposal by U.S.-backed mediators for disarming Hamas, saying, quote, Israel does not accept the 15-point document. Can you give us the latest reporting on that?
Sure thing, Paul. You know, basically, I think that this it's a complicated situation in which Prime Minister has two constituencies he's dealing with. One is the president, and the other is his voters and people to his right. And my reporting suggests that this is a little bit of a nod and wink situation in which the Americans have allowed him to, quote unquote, reject it while on the ground doing what they want him to do, which is to stop attacking Hamas activists, which they were doing. They were killing them pretty actively until about a week ago. So it looks like in order to win his election, he thinks he needs to sound tough and stand up to the United States, tell his voters that he's willing to do what needs to be done to protect those who live in southern Israel. And to the United States, he is quietly agreeing to do certain things to move the process forward. That seems to be the situation.
On the Iranian side, the president has signaled that he's going to let economic pressure build on Iran rather than launching military strikes. Do you think that's an effective tactic? Do you think Iran is feeling economic pressure right now?
It's the good news is it's not my job to tell you whether it's going well or not. I don't know. I mean, I think that in fact this is the great mystery of this conflict, which is that both sides claim to have time on their side, and one of them may be right. It's hard to know. It does seem like there's an awful lot of economic pressure on Iran. It's hard to know what that's going to lead to. It's yielding to President Trump's requests and desires, just as I think there is a lot of pressure on President Trump, and it's hard to know whether he's going to do what they want him to do. I don't have an answer, but clearly each side is sort of thinking you can, as he say, slow go it for now. And I think basically a lot is going to sort of go slow until the Israeli election on October 27th, and then the American election in early November.
Ethan, what are your sources telling you about the expectation for President Trump? A lot of folks, I think they probably started out this conflict saying, at one point, President Trump's going to wake up one morning and just say, I've had enough, and get everybody home. That hasn't happened, and it doesn't appear that it's going to happen anytime soon. So what do the folks in Israel think about how this may end?
I think it's fair to say that the people in Israel are as mystified by President Trump as everybody else in the world. So let's start with that they really do not know. And they are trying to be careful not to annoy him too much while protecting what they consider to be their core interests. But I do think that those around Prime Minister Netanyahu, those who have dealt with Trump most since the beginning of the first administration and now this one, do believe that in his guts, he really does care about stopping Iran from being the power that it has become, going after its nuclear program, and going after its oil. So I think that they are reasonably optimistic while acknowledging that nobody knows what President Trump's going to do from one minute to the next.
What about the economic impact across the world right now, especially with the prolonged uncertainty? Do you see that changing, or is that what it has been for the last 7 months?
No, I think it's a huge problem. No, I think you're right to worry about it. I mean, this is why there are so many balls in the air here. This is causing great difficulties around the world. Obviously, both in terms of oil and a whole bunch of supplies that matter to the global economy. Absolutely. At the same time, if you play the long game and you believe that Iran is a malevolent actor in the global economy, then, you keep at it. So that's certainly the Israeli argument to the United States. And for the moment, it doesn't feel like it's losing the argument.
Ethan, thank you so much. Appreciate it. As always, Ethan Bronner, Israel Bureau Chief for Bloomberg News, based in Tel Aviv. And Stacey, just looking at oil here again, just looking at the international Brent, up $2.43. It's 2.9%. Let's call it $86 a barrel. It's kind of going the wrong way, and it's suggesting that I think what the market's reading into this, if the president's willing to give it more time to let economic sanctions work, that means higher for longer, presumably, as it relates to the Strait of Hormuz.
Yeah, shorter supply for a longer period, so more of the same.
Yeah, so that's a concern for the energy markets, bleeding into the bond market, as it's wont to do. Got the 10-year Treasury up 4 basis points, sitting at 4.68. So if you wanted to refinance your mortgage, good luck with that. And it's kind of bleeding into a little bit into the equity markets, but not too much. You got the S&P up 7 points, the Dow down 100, and the NASDAQ up at 12. So we'll keep an eye on that. Coming up, we're going to check in with Dana Dioria. She is the co-CIO and group president at Investnet Solutions. Get her thoughts on these markets here. And then we're going to check with Matthew Blocks, a Bloomberg Intelligence senior technology analyst, on some of the tech stories that are out there. Lots going on, including that equity raise from Microsoft. That's going to be really interesting to see that price, because they don't come to market very often with that equity. They hold that pretty dear. So we'll pay attention to that after the close and see how that prints. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Matt Piper. Stocks are mixed at this hour with trader anxiety building just days ahead of key inflation reports. Let's get to the numbers right now on Wall Street. The Dow right now is down 61 points. The S&P is up by about 9. The NASDAQ is up 13 points. So those two are doing better than the first. The Bloomberg Dollar Spot Index is at 1203. The 2-year yield is up 3 basis points. The 10-year yield is up 4 basis points. Oil prices are edging higher this morning with Brent now above $86 a barrel. WTI is at 80. This as investors await major updates from the war with Iran. As for stocks we're watching, Berkshire Hathaway, its new CEO Greg Abel spent a significant chunk of the company's massive pile of cash as it invested $10 billion in Google's parent company and repurchased about $4.5 billion of its shares. It says its quarterly profit more than doubled. Shares in Berkshire Hathaway right now are up 2.5%. Also, Rocket Lab is what we're watching. The rocket launch developer is set to report earnings after markets close. Rocket Lab right now is up about 0.7%. Well, speaking of space and looking up, in case you want to play hooky in 2 days and fly across the pond, Paul and Stacy, we here in the U.S. had that solar eclipse in April 2024. So now a total solar eclipse will be visible from Greenland, Iceland, northern Russia, Spain, and a small corner of Portugal on Wednesday. Total darkness is expected to last 2 minutes, 18 seconds. Wow. So in case you want to fly over and check it out, good luck. No Airbnbs, no hotels available, I'm sure. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Paul and Stacy.
All right, Matt Piper, thanks so much. Appreciate that. Stanley Vanek-Smith sitting in for Scarlett Fu today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube here. We've got a lot of cross currents out there in the marketplace today in a quiet trading day. Let's go to a professional here and get us set up. Dana Dioria, she is the Co-Chief Investment Officer at Envestnet Solutions over there in Berwyn, PA. Dana, talk to us about the AI trade. What does it mean for you today? It's kind of morphed, I think, over the last 4 years or so, from simply buying the chips to maybe thinking winners and losers and who might be at risk and that type of thing. How are you guys thinking about it these days?
Yeah, I think you're absolutely right. I mean, I think, for a long time, the AI trade was characterized, what I'll say, by the supply side. And, it's one thing to be building out with your CapEx, as we all know, around creation of AI tools. It's quite another for there to be consumers of those AI tools. And then a third, kind of development would be those consumers actually realizing progress, and realizing productivity increases. And the more that we see companies actually come out and say, okay, these tools that we're paying for, these tokens that we're paying for are actually increasing our productivity, kind of adding to the bottom line, I think that becomes more or less the vindication of it. I don't think we're there yet, but I do think you're starting to see, to your point, more of an interest in, software providers using these tools. Obviously, that was, one of the first places that AI was going to potentially increase productivity. So I think you're starting to see more of that buy side, reaction.
What about the Federal Reserve? Obviously, we got some news that the markets really loved about interest rates. How is the market processing that right now, as well as the bond market?
Yeah, it's the bad news is good news, right? It's such a bizarre phenomenon, but we're all so accustomed to it. We get a jobs report that's not really exciting on any front. Unemployment did go down, but that's because labor force participation was down. And you're not, we're not hiring, right? We're not seeing as much firing, but we're not seeing hiring. And the jobs report, especially the revisions, more than 100,000 down, was not positive. And of course, the Fed has a dual mandate, and the market reacted. Great, they're probably not going to have to raise rates. Of course, we have inflation data this week, which could easily trump that, right? And not inflation data that could easily, sort of supersede it. and the Fed could in fact raise rates. But I think, look, Warsh has been clear. He wants to see if he can get the market to react on its own, which it has to a large extent. So I don't think it's a foregone conclusion, even if the inflation data comes in a little hot, that they raise. But I do think, the market has done a lot of the work already, to Warsh's point. And so, the unemployment data coming in where it did kind of gives the Fed some leeway not to have to raise.
So, Dana, we're just finishing up what has been a stellar second quarter earnings results from corporate America. Q1 was excellent as well. How long can corporate America keep this up?
That's the million-dollar question, right? Because the markets, of course, at this stage of the game, you have to look at what's going on and say, okay, you're not likely to see, bear market or recession when corporate profits look like this. Now, of course, we've been living in this world where there's clearly an expectation that the AI trade pays off, as we discussed before, on the buy side, right? Where the consumers of AI get productivity increases. And, this $500 billion plus in spending, now we're at, $700 billion, right, for 2026 alone, actually pays off for the economy. I think, the earnings holding up is fantastic. It's what's buoying this market. It is, at the end of the day, the fundamental strength of this market. But there's, pricing in this economy clearly expects, and for the most part, when you have investors that we have, right, at the end of the day, retail investors, these are their life savings oftentimes, and they are heavily concentrated in this AI bet, whether they like it or not, right? Whether they're in a passive vehicle, even active vehicles, active managers can't stray that far from the benchmark. And so when you look at earnings, it's fantastic. But at the end of the day, these savings, this financial capital that we're all invested in are heavily dependent on this AI trade paying off. And at some point, that's going to have to come to bear. And it might even just be a timing mismatch. You can believe that AI will pay off over the long haul. That doesn't mean it will pay off soon enough, for markets.
So, Dana, we were just talking about oil prices and the fact that it looks like oil prices are going to remain high for the foreseeable future. Is that impacting markets at all, or is that already priced in?
Yeah, to a certain extent it is. I'll be honest with you. I think the trajectory we've seen in oil prices and the reaction of this market to, the constant back and forth, Lucy pulling the football away, we have an agreement, we don't have an agreement, it surprised me. I won't say it surprised me. It's kind of how markets are, right? It just, but it validates something you don't want to see, which is this sort of knee-jerk reactionism around every announcement, even when you're repeatedly seeing that you can't trust, kind of an announcement, right, in and of itself. You really have to see an actual end to the hostilities, which we're just not seeing. Right. So has the market, to a certain extent, priced it in? I mean, the truth is the market is pricing it in, but in a very volatile way. There's a lot more noise around that signal than you wish that there would be. So I would say yes, but, continue to expect volatility as a result of that.
Dana, thank you so much for joining us. Always appreciate getting a few minutes of your time. Dana Dioria. She is Co-Chief Investment Officer at Investnet Solutions out there in beautiful Berwyn, PA on the main line. Let's get a little techie for you. The NASDAQ's up 14 points today. Not much going on out there, but there's a lot of news flow out there in the tech space, as there typically is. And for that, we'd like to check in with our buddy Matthew Bloxham, Bloomberg Intelligence Senior Technology Analyst. He covers a bunch of stuff, and he does it from London. Hey, Matt, thanks for joining us here. I mean, Intel coming to the market. Here's another big tech company coming with a big equity raise. It seems like these guys have an insatiable need for capital.
Yeah, they do. That's right. So, $15 billion, roughly 3% of the market cap. So it's not that big, but, I think it's still always a little bit surprising when these companies come to market for equity. They raised, I think, $6.5 billion in debt early this year. Fairly expensive coupons, kind of 4.65% through to 6.2%. So I guess, they're looking to balance their capital needs across different parts of the balance sheet structure. The valuation's pretty full right now. I mean, if you look forward a couple of years, it's on 50 times earnings. So I guess, the management team taking the view that, you know, if there was ever a time to raise some equity, this is a relatively quote-unquote cheap time to do it. You know, that they, along with everybody else, have quite substantial investment needs. You know, compared to some of the other big tech names, their capex is pretty low. You know, probably about $20 billion this year, maybe rising to $26 billion next year. But you know, this gives them a good cash cushion to pursue the current projects, and who knows, perhaps even consider some acceleration of what they're doing.
What about Meta this morning? They've just introduced a new AI model called Muse Glimmer. I guess it's an open source AI model meant to compete with the Chinese model DeepSeek. It's up this morning. How do you feel about it?
Yeah, you know, I think we're at a fairly early stage of how the whole AI foundational model play is going to evolve. Yeah, this is quite a different position to the likes of OpenAI and Anthropic, who work with closed models. Gemini, Google with Gemini is a little bit kind of mixed. Have some open source models and some closed models. And Meta very much kind of pin their six fortunes to the flag of the open model, and you know, really trying to kind of make a big difference. And Mark Zuckerberg today, in an essay, being somewhat critical of some of its competitors, you know, saying that really we should be democratizing AI and putting it in the hands of the user. So I think, yeah, open to see how widely adopted this will be, what it means for the kind of longer term economics, both for Meta and the industry. But so it's certainly an interesting move. And I think as much as anything, the language and the rhetoric that Zuckerberg is using around this push.
Matt, you know, as being in these markets for 40 years, it's always surprised me in a negative sense how Europe writ large basically missed the whole technology revolution. All the tech is in the U.S. and in Asia and things like that. Is the same thing happening with AI? Will Europe just kind of outsource it to other people and not participate?
It does, unfortunately, seem that way. You know, we have Mistral as, I guess, the most well known, you know, European AI model, but you know, it sits in the shadows of the US and the Chinese alternatives. So yeah, you know, it's a perennial problem for the region. Obviously, there's a kind of really big introspective process going on right now about Europe 2035 and what funding is needed to kind of really close the gap and genuinely make Europe competitive enough. Yeah, the numbers are eye-watering, and even if the money was there, yeah, I think there's so many kind of structural and cultural issues about the way Europe works that are very serious obstacles they have to get around, and all the time they're trying to figure those issues out. You know, the US and China are running full steam ahead. So it does, I would think that, you know, the base case scenario would be that Europe continues to be a taker of technology from other parts of the world.
Yeah, it's just amazing there, with a couple of exceptions. You know, it's just been a waste. They haven't really developed the technology. It's just amazing. Matthew Bloxham, Senior Tech and Media Analyst at Bloomberg Intelligence. He hasn't missed it. He's there. He knows what's going on. He's over there in London running the shop there, and we appreciate him coming on. Give us a few minutes there. Again, we're going to look at Intel after the close. Price a $15 billion deal. They got all the usual suspects, book runners, all the big investment banks. I think JP Morgan's probably running the books there. They're going to make a handful of phone calls this afternoon, folks, and then boom, that will be done. That's how quickly they can do it. Stock's up 175%, that being Intel. So great time to raise equity. So good job. S&P up 10 points. The Dow minus 60. And NASDAQ up 16 points. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Matt Piper. Stocks are kicking off a new trading week after the S&P finished last week at a new all-time high. The stocks right now, let's get a look at the numbers. The Dow is down 47 points. The S&P is up 11. The Nasdaq is up by about 15. Gold is trading at 44.05, up about 0.1%. The Bloomberg Dollar Spot Index is at 12.02. Oil is holding on to gains as Iran and Oman remain short of a deal to reopen the Strait of Hormuz. Brent right now is trading at $85 a barrel, just shy of 86. WTI is at $80 a barrel. Stocks we are watching. Apple. It has been downgraded to an underperform rating as Jefferies due to concerns about the outlook for the company's iPhone. Jefferies says introducing new form factors in the iPhone to drive higher average selling prices is more difficult than expected. The consensus recommendation for Apple stands at 3.88 out of 5. That's the lowest since 2019, with fewer than 60% of analysts recommending buying the stock. Apple stock right now is down about 2%. Earnings expected after the bell today include JBS Foods, Hims and Hers Health, and Trump Media, which runs the president's Truth Social platform. The big event this week, Wednesday's inflation report for July. Economists expect it will show consumer prices up 3.4% from a year earlier. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Back to you.
Hi, Matt Piper. Thanks so much. Appreciate that. Stacey Vanek Smith sitting in for Scarlett Fu. I am Paul Sweeney. We got all that together. We're here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, I'm seeing more and more points of sale where there's no cashier there, and there's just a machine to run your credit card. Like at airports, when you go buy, I guess still on like the honor system. You go pick up your sandwich and a drink, and you just kind of pay.
It's a lot of trust.
Yeah, there's a lot going on, and I think our next guest knows what's going on here. Sagit Manor joins us, Chief Financial Officer, and the company is named NYAX. It's a publicly traded company. NYAX is the ticker for your Bloomberg terminal. They reported some numbers last night or this morning. Stock's down 10% today, but it's up 23% this year, 46% over the trailing 12 months. Sagit, thanks so much for joining us here. Talk to us about NYAX and kind of where you guys fit in that point of sale experience.
Good morning. So first, let's just set the stage as who we are, and exactly as you said, we're the global leader in the unattended space, and what that is. It's the vending machine, massage chair, EV charging, and many more when there's no cashier in front of you. So exactly as you said, when you probably traveled recently at the JFK and bought a drink in a vending machine, you probably used one of our NYAX yellow devices. We have more than 125,000 customers, serving them in 120 countries, and really have 1.5 million devices out there combined to our platform. And our message is very clear and simple. We want to help our merchants increase their revenue, decrease their cost, and create that loyalty stickiness with their customers.
Well, certainly the self-service payment is on the rise. EVs are on the rise. It seems like you are having a bit of a tough morning. What are some of the challenges in your space?
So first of all, the market opportunity is simply amazing. We're able to show, this is a growing business from a cash-to-cashless perspective. Recent analysis that we have done, there's 48 million devices out there in the unattended space, growing to 60 million by 2029, and we have 1.5 million of those. So the market it's a blue ocean, and we are there in 120 countries to capture market share and to be able to put, again, the only global company in that space. We never look at one quarter as a trend. We've done 30% on the revenue since the beginning of the year. We're growing 24% organically. So this quarter was amazing, and I'm sure that the investors community would appreciate, and it's going to bounce back.
So, Sagit, on August 6th, NYAX announced that it applied for a bank charter in the U.S. What's the strategy there?
So this is a great question. So in the financial services area, maybe a step before, we are providing an end-to-end solution from an hardware to payment processing and to the software, the management suite that runs the business, and again, help our businesses to simplify their day-to-day work. Now it's the time for adding financial services to it. And financial services are around issuing, which we have a company for that, financing, which we have that solution as well, loyalty, which we are great, and now it's the banking. And just to be clear, we're not planning to be a regular bank that's B2C. It's only for our customers. It's B2B. And the idea is to provide them the ability to lend, to manage their business a little bit better, save for them some of the banking costs and whatnot. This is very critical for this time because we do work with acquirers around the United States, but as you know, each state has its own regulation. So now having through the application that we put in the Bank of Connecticut or the Connecticut Department of Banking, the idea is to create that one solution that ties to all of our American customers.
Most of your money, from what I understand, comes from fees. Would that possibly change if you become a bank and expand your services?
So actually, most of our revenues come from recurring revenue that, as you said, some of it is processing revenue, which is a take that we take for every transaction that goes through our account, but also from services that we provide. So that's our 72%. The rest is hardware that we sell with a nice margin. This can definitely help with our recurring revenue in the years to come. It's not going to be an impact for 2026. It's going to take 6 months until the approval will come through. But I can definitely see that helping our growth in 27 and 28 to reach a very strategic goal that we put to ourselves years ago, to reach $1 billion revenue company with 50% margin and 30% adjusted EBITDA by 2028.
Sigit, on the electric vehicle charging marketplace, most of those payments now are done by app as opposed to having a payment processor right on premises. Is that changing, and where is that changing the most?
So thank you for asking about probably the most exciting vertical. We are in 44 different verticals. This is definitely a growing one. We've done an acquisition late last year in a company named Linkwell that is very strong in this space. Actually, their platform is being used second in New York, third in Northeast, and seventh nationally. So really proud to invest in this, which now we are double the pace of investment. So definitely that space of hardware now and processing and payment later creates a great opportunity to take market share. You know that even if you look today on what number of EV chargers that exist out there is maybe 1 or 2% from the number of electric vehicles that will be here by 2030. And now you're absolutely right that most of it is done through app, but the underlying is the fact that you have to have also the yellow device outside in order to allow guests to pay without the need to download an app. And also, you know, it's the management suite that we are being able to provide to the CPUs, the charge point operators, to help them manage their business better.
Your business is mainly EVs right now, and I guess some vending machines. Are you looking to expand into other areas, or are you going to continue to focus where you are?
Actually, we are in 44 different verticals. EVs, maybe one of the verticals that are growing, but vending machine is still majority of the revenue for us comes, as well as car wash, laundromat, a massage chair, and you name it. Everywhere that you have, you know, you're in front of a machine and there's no cashier in front of you, this is probably a Nayax device. I see those EV charging points as an example will continue to grow. Right. Car wash and family entertainment centers.
Sigit, thanks so much. Appreciate it. Sigit Manor, Chief Financial Officer of a company called Nayax. They were out with some earnings last night as they look to point of sale where there's no sales attendant there, so you got to just swipe your card. There you go. S&P up 15 points. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Stacey Vanek-Smith sitting in for Scarlett Fu today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, and we are streaming live on YouTube and streaming live at Bloomberg.com as well. Here's a story that got my attention, and one of the top read ones on the terminal. Bank of America Corporation allocates millions each year to provide GLP-1 obesity medications for employees, with CEO Brian Moynihan calling it an investment in workforce health and productivity. They did not do that when I was there at Merrill Lynch as a lowly banker. Wow, that's pretty cool. Sam Fazeli joins us here, Director of Research, does all the healthcare stuff for Bloomberg Intelligence. He's over there in London joining us via Zoom. Sam, what do you make of the story at the Bank of America here? It's kind of interesting.
I mean, what a forward-thinking CEO here, right? Yeah. $250 million, about 15, or roughly % of their healthcare spend for their employees. Look, Paul, you know that I've been a fan of this drug class, GLP-1 class. You know that they are more than just an obesity drug. They help you reduce your craving for alcohol and, God forbid, any other substance that you might want to try. No. And no, but you can increase the quality and decrease the volume. How's that? You spend the same amount of money and just drink the better stuff. Yeah, but you've also got a drug that has potentially longer impacts on health that we still don't know about. One of the interesting things I thought in the piece was somebody asked, well, some of these are such long-term effects. Well, what if the employee leaves? I mean, it's just like making an investment in the employee's education, etc. You're not going to just think about the day they leave because you need them to be productive today. So this is great. And I'm pretty sure a lot more CEOs will be thinking the same.
I mean, obviously, GLP-1s have been one of the superstars of the healthcare sector, and the healthcare sector has been a real sort of shining light for especially the job market here in the U.S. How big a part of the healthcare sector are GLP-1s right now? Is it a huge, I mean, I imagine it's a pretty formidable part of it.
They are. If you take the sales numbers, if you look at the impact on the share price of Eli Lilly, specifically when I look at the terminal here, there have been, and I think there's a whole bunch of R&D investment going into it by a whole group of other companies trying to get into the space and push their way into what's currently a duopoly. And I think that we'll see some of that come through. What's interesting is I heard Paul say on the last segment that pretty much nothing's going on in the market. That may be true today, but have a look at the share price charts of Merck, AbbVie, Johnson & Johnson, and see what they're doing in terms of share price performance. A lot of us look at AI, of course, that's skyrocketed, et cetera, and all those things, at least until July. But look at those share prices. There's been a meaningful re-rating in the pharma space. Some of it's to do with this, but much of it is to do with the fact that a lot of these companies are delivering, excuse me, and they're showing the growth that they should have been doing, excuse me. So that's where I think the pharma sector is.
Is AI... I would think AI could be meaningfully improve, accelerate how drugs are developed, brought to market. Are these companies going to be a lot smarter? Are these scientists going to be a lot smarter going forward?
Well, yes, and they'll have a lot more productivity gains to come and have already from the application of AI in a whole host, from managing their day-to-day lab work, from testing their ideas against an agentic, well, that's a relatively new thing, and I don't know how many people have had that installed. But if you think about this podcast that I do as part of our Vanguard of Healthcare podcast, you listen to that question I asked from the pharma executives. Everybody's at it, and everybody's looking for 20-30% productivity gain, not just from speed, but also from increasing the probability of success, increasing the ability to find drugs for things that you couldn't easily find drugs for before. And this has been a continuum. It's not just AI. There was machine learning before. It's been going on for a while. Now it's just accelerated. So I'm convinced 4 or 5 years from now, we would see quite a lot of fruits of this.
Do you think we should expect to see that productivity replacing jobs? I ask because it's been such a positive force in the U.S. job market.
Yeah, that is not the impression I get from folks when I talk to them. I think their idea is that maybe they won't need to keep hiring folks or new employees or new R&D personnel, but you still need that human to make the decision between doing an experiment or not. I spoke to Fiona Marshall from Novartis, which hopefully will air quite soon. And she said that, look, at the end of the day, what I don't want to happen is that the AI decides what experiment to do next. I just want the AI to speed that experiment up. And I think the fully automated lab that doesn't need a human being, I don't think there are many people who are going to be looking for that necessarily, at least not in the foreseeable.
All right, real quick, Sam, I'm asking for a friend. The labs, the scientists, they figured out the obesity thing. How about the male baldness? Where are we on that?
Oh, yeah, well, look at the best performing share price of, God, you called me. I just can't remember the name. The recent IPO, best performing share price since IPO, which was this year, 190% up. So I think it's a bit late for me, but I think you still have some options there because you still have follicles that are working.
All right. I'm just asking for a friend here. Sam, thanks so much for joining us. As always, Sam Fazeli, Director of Research. He does all the healthcare stuff there for Bloomberg Intelligence. He is based in London. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment, and we've got pretty much mixed out there. S&P up 3 points, Dow minus 30 points, and the NASDAQ down 50 points. That's 0.2%. Oil, it's higher.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
All right, hour 2 of the Bloomberg Intelligence program. Stacey Vanek Smith sitting in for Scarlett Fu. Scarlett will get back Friday is what her people are telling me. I'll believe it when I see it. A lot coming up here in this hour. Checking with Anurag Rana, senior tech analyst of Bloomberg Intelligence, get some more color on some of the tech stories. Apple cut at Jefferies on sell ratings, piling up for that name. I don't know. Interesting. Matthew Palazzola, Bloomberg Intelligence analyst, who covers the property and casualty insurance guys, and that includes Berkshire Hathaway. Looks like Berkshire's putting some money to work a little bit more aggressively here. Terry Spath, founder and CIO at Zuma Wealth, will discuss kind of her thoughts on these markets. We got a lot coming up in this hour. Remember, folks, Bloomberg.com subscribers can shape the conversation on Bloomberg Radio. Submit questions for the experts and guests on our show. Visit Bloomberg.com/AskRadio. It's an exclusive feature for Bloomberg.com subscribers and terminal clients. Visit Bloomberg.com/AskRadio to join the conversation. Let's start the conversation with Charlie Pellet in Bloomberg Business Lab.
Hi, thank you very much, Paul and Stacey. Indeed, you mentioned Apple. That stock down now by 2%. However, the Bloomberg Mag 7 index holding on to gains up 0.2%. But right now, we are looking at an advance of 2 points on the S&P 500 index, just about flat on the day. We've got the Dow now lower by 41 points, down 0.1%. NASDAQ down 47, drop there of 0.2%. Any closed green, however, for the S&P today will be another record. Currently, the index is at 77.60, up under 0.1%. We've got the SOX, the Philadelphia Stock Exchange Semiconductor Index, trading lower by 1.8%. The VIX holding just above 15, Wall Street's so-called fear gauge. The 2-year, 4.22%, with the 10-year, 4.68%, and the 30-year, 5.23%. Gold, meanwhile, flat on the day as well. Little changed, up under 0.1%, 43.44 the ounce. An advance for crude, perhaps the major market story today. WTI back above 80.75 a barrel right now. Crude WTI up 3.3%. Barrel of Brent crude, the global benchmark, 86.18 right now, up by about 3.1%. Well, next up for Wall Street will be Wednesday's consumer price report, data that will be closely watched by investors and Fed Chair Kevin Warsh for any signs of inflation. Dana Dioria is co-chief investment officer at InvestNet, and she was a guest this morning right here on Bloomberg Intelligence.
Warsh has been clear. He wants to see if he can get the market to react on its own, which it has to a large extent. So I don't think it's a foregone conclusion, even if the inflation data comes in a little hot, that they raise. But I do think, the market has done a lot of the work already, to Warsh's point. And so, the unemployment data coming in where it did kind of gives the Fed some leeway not to have to raise.
Dana Dioria of InvestNet, interviewed right here on Bloomberg Intelligence. Intel says it will be offering $15 billion in common stock, taking advantage of renewed interest in its business prospects during the AI data center boom. Today, we are looking at shares of Intel trading lower by almost 4%, and Microsoft planning to, quote, significantly increase production of its next-generation AI chips. That's according to the information citing sources. Microsoft today up by 1.8%. Recapping, S&P holding on to a gain, barely, up now by 0.1%. I'm Charlie Pellet, and Stacey and Paul. That is our Bloomberg Business Flash.
Very good, Charlie Pellet. Thank you so much. We appreciate that. Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. As Charlie's reporting, we've got some red and green on the screen out there. But let's take a look at some of the stocks on the move today. We can do that with Christina Aquino, managing editor for Markets Live, joining us here in studio. Christine, what are you looking at today?
All right, Paul, let's kick it off with Intel, ticker INTC. Definitely one of the stocks in the red this morning. That is because we did get news about the company offering $15 billion in common stock. Apparently, the proceeds will be used for general corporate purposes, and they're saying in their statement that there is progress in emerging areas, including physical AI, purpose-built silicon, advanced packaging, and external wafers that represent significant growth opportunities for Intel. But of course, the share move today, a -1, probably speaks to a lot of investor concerns around the dilution of existing shares and really what the returns are going to be in the process of raising this money. But we do have Bloomberg Intelligence analyst Robert Schiffman weighing in on this. The proceeds will provide substantial capacity to fund AI, Foundry, and other projects without adding leverage. So perhaps that's a good thing for some of the bondholders, but not a positive reception from our stockholders here.
All right, Christine, what else are you looking at this morning?
All right, let's take a look at eBay, another stock in the red this morning. So ticker EBAY. Those shares are now down more than 4%. And that's because we did get news that GameStop is apparently considering withdrawing its $56 billion bid for eBay. So instead, GameStop CEO Ryan Cohen is proposing a partnership or a joint venture that would allow eBay to leverage GameStop's roughly 1,600 U.S. retail locations. Now, GameStop, we know, is one of eBay's largest shareholders, so they would probably also seek representation on eBay's board. This is according to exclusive reporting by Bloomberg.
All right, one more.
All right, let me give you Akamai Technology, which is a stock in the green, so ticker AKAM, and those shares now up 5.9%, so nearly 6%, extending some opening gains. We did get a couple of downgrades for that stock today. Price target was cut to 140 from 175 at Susquehanna, but that is still a 27% increase from its last closing price, and an HSBC cutting its recommendation to hold from buy. But we heard from a company last week, reported earnings that beat estimates, and Bloomberg Intelligence analysts seeing the positives, particularly in the compute space, which is apparently rapidly emerging as a new source of growth for the company. And sales are set to pick up on new deals to manage AI workflows, including inference. So green on screen for Akamai Technologies today.
All right, Christine, thanks so much. Christina Aquino, Managing Editor for Markets Live, giving us the latest there. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's stick with technology here. I'm looking at Microsoft. This is a name, Stacey, Tom Keene and I, for the longest time were saying, just as of a week or two ago, why is this stock down 25% year to date? This is Microsoft. I guess it was thrown out with a lot of those software stocks that thought AI was going to put them out of business, but this is Microsoft. And
it's Microsoft, and it's one of the Magnificent Seven.
Yeah, I mean, so sure enough, they put up a good print last week, good earnings. Stocks erased all those losses, now up 3 or 4% on the year, 5% for the year. So how about that? More news out on Microsoft today. They're going to raise next-gen AI chip production next year. It's pretty interesting. That's according to the information. Anurag Rana joins us, senior tech analyst for Bloomberg Intelligence. Anurag, it's really amazing how the market has kind of gotten a new appreciation, if you will, for the Microsoft story that I think was really, people were questioning, is Microsoft at risk from AI? How do you think about it?
Yeah, I mean, you're absolutely right. There was that risk of disruption for some of its product from AI. But there was another risk, or there was another narrative that when you look at the 3 hyperscale cloud providers, Google, Amazon, and Microsoft, Google's chip has just taken off. I mean, their TPUs are all the rage in the market, and Amazon's actually come out with their own print that, they are making tens of billions of dollars with their own chip as well. So what happens is when you are looking at this fight of everybody expanding into AI data centers, they do need chips. They're all running to NVIDIA, but 2 of the 3 providers talked about having their own chips. Now, Microsoft was not in that game at that point. They have their own chip, but it's not widely embraced. But today's report, when it talks about that they're going to go out and increase the production of their own chips, which means customers may be ready to use those. And if that's the case, their cost of spending into that capital expenditure boom will start to go down, in a sense, down on a relative basis or per token basis. So it's a very good news for them in the long run.
Well, Microsoft might be having a very good day, but Apple is having a pretty rotten day. What's going on with them? Apparently it has something to do with hardware not coming out the way that they're hoping?
No, I don't. I mean, I think that's somebody's downgrade. That's a different story. But when you look at Apple, and let's go back to that time period when Paul talked about when Microsoft was down, 25% or so for the year, or, At that time, what was happening was everybody was worried about ROI on AI trade. This is before earnings season. You saw Google, everybody was worried about them. But at the same time, everybody loved Apple because they were not spending that much money. But after the results, what's happened is people are relatively more comfortable going back to the AI trade or going after the risky assets. And given Apple's valuation where it was at that point, it was well in the 30s. We are seeing some sell off on that and people buying more of the AI trade. So I think there's a little bit of factor shifting there, not so much about one product or the other.
Do your clients, your investors in big tech companies, do they like free cash flow? And are they upset if they don't get free cash flow?
So two different things. Ones that are looking at this massive capex going in, they're seeing what is the benefit of that for these companies. So if Microsoft was able to show sequential improvement in Azure sales growth, Amazon was able to show that, Google was able to show that. So I think they're getting a little more comfortable that these companies know what they're doing when they're spending, hundreds of billions of dollars at that time. The second group is somebody who doesn't want to be a part of this trade and say, you know what, I like Apple. I have $100+ billion in free cash flow over there. They're buying back that stock. iPhone's doing well. It's gaining share in China. So you could say there are a couple of buckets of people who are looking at this trade from different lenses.
What about in the hardware sector? Apparently, there's a big smartwatch lineup that's getting ready to be released. Obviously, there's the folding phone everyone has been waiting for. How is Apple looking in the hardware sector?
So when you look at the watch itself, it doesn't move the needle for Apple. It's an accessory that goes with the phone along with it. I mean, you're not going to just buy a watch without being in the Apple ecosystem. That's a very unlikely thing. But one of the things Mark Gurman's talked about it, when you look at some of the other wearables, you look at the Oura Ring, which is just a phenomenal product right now for a lot of people to track their sleep. You're looking at products that are coming out in the market without a screen. Garmin just launched one. I mean, I've ordered it, but it's on backlog for me. When you look at a Whoop, these are all bands that you could use to track a lot of these, sleeping and, just your normal vitals without the need of a screen-oriented product. And that's what I think you're going to see down the road. But that, to be honest with you, does not move the needle. The foldable does, because Apple's been behind. They don't have a foldable phone right now. And iPhone accounts for over 50% of Apple's sales. So if they're able to come out with a foldable device, I think it's going to create a lot of buzz next year, especially in emerging markets where if people are not worried about the price of it, which Mark Gurman thinks is going to be around $2,500, I think that's going to be a very, very cool factor that we will see within the next 1 month.
All right, Anurag, thanks so much. Appreciate it. As always, Anurag Rana, Senior Tech Analyst for Bloomberg Intelligence, giving us the latest there in the world of tech. Berkshire Hathaway, they had their investor kind of meeting yesterday where they reported some earnings over the weekend, like they tend to do for some reason. Matthew Palazzolo, it's his job to figure all this stuff out for us. He's insurance analyst for Bloomberg Intelligence. So the headline, Matt, I'm seeing on the Bloomberg terminal is new CEO Greg Abel. He's spending some money here. Talk to us about what he's doing and how that may be a little bit different from Mr. Buffett.
So, he's opening up the checkbook a little bit. Berkshire still has incredible amounts of cash that is still undeployed, but we expected them to buy back some shares in the quarter. There was some disclosures made by Buffett around his ownership that gave us a clue. Okay. We thought it would be more, but essentially what happened is some of that was pushed through to the third quarter. So it was about $4.5 billion of buybacks. We thought it was a wide range, but we thought it could be anywhere from 5 to 12. We were thinking maybe it was like 8. Turns out they did 4.5 in the quarter, and then at least another 3 in July. So kind of close to what we thought, but it's just more spread out through the quarters. Coupled with that, Berkshire was a net buyer of stocks for the first time in several years.
Wow. Okay.
They might have been a net buyer of stocks in the first quarter as well, but what they had done was they unwound a bunch of positions by one of the former managers, investment managers who had left. So they sold a lot of his positions, and they bought some, but it ended up they sold more than they bought. But in the second quarter, they bought more than they sold, and there's about $12 billion worth of stock or stocks that they bought that we don't know what it is yet. There'll be a 13F next week that we'll perhaps see. Sometimes they hold things confidential, but if not, we'll get some more color on what, if it was new positions or added to existing ones.
I mean, they have such a legendary reputation for knowing where things are headed, especially knowing positions that other people don't necessarily take. Do we have any idea of what they're buying or what they're bullish on?
So I could say this. In the first quarter, they started a new position in Delta.
Really?
So, yes. And Buffett has had a history with the airlines. In the first quarter, they did Delta. Their airline-related businesses that they own have been showing some acceleration. So I don't know. I can't say if I agree or disagree with them doing that, but perhaps that's something to think about. They also made an acquisition we didn't talk about. We made an acquisition in the first quarter that will pay in the third for Tyler home business. That is a complement to their existing business. So they own a business that builds manufactured homes. So they build a home and then they bring it to you. This company they bought, $6.8 billion, I believe was the number. They build homes on site, and it's more higher end than the business that they own. So they like to be in these kind of essential businesses. So home building, homes, we're going to need homes as home demand. Airlines going to need airline demand. Energy, always energy demand. So those would be maybe three places that I would say would be potential clues.
And speaking of Delta, I'm just looking at the holders page for Delta. They bought a 40 million share block. They're now the number 3 shareholder in the company, 6% position. So they got in there in a big way. I tell you, if they want to deploy capital, just invest in AI, data centers and stuff like that. I mean, the people are spending tens of billions of, at a clip here.
They also made this year 2 investments in Google, so or Alphabet. That was initiated by Buffett, apparently. So he's still working. He's still the chairman. He's still working with Greg Abel. That position was initiated by Buffett. They bought open market, and then they did, as part of Google's equity raise, they did $10 billion in that as well. So that's who placed in the quarter.
Is there any reason to believe Greg Abel is going to materially change the cash return policies? Let's just say the day after Warren passes. Should we expect to see a policy shift?
Maybe. So I think Abel is much more. I think, look, Buffett was older, getting old, stepping away. I don't think he was, up for any material changes. Right. He was never a fan of dividends. Greg is very much cognizant of keeping the ethos of Berkshire alive. So I don't think he wants to do anything that directly contradicts Buffett immediately. I do think over time, though, with so much extra capital, maybe a special dividend every once in a while or something like that, I think it's possible.
All right, very interesting. Read the tea leaves. Matthew Palazzola, senior analyst who covers insurance companies, including Berkshire Hathaway, for Bloomberg Intelligence there. S&P up 4 points, the Dow is minus 20 points, and the NASDAQ is minus 57. Boy, that feels like a Monday in August, doesn't it? WTI crude oil up 3.5%, $81 a barrel. Not good. This is good.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, they're both higher. Oil is rallying right now. West Texas Intermediate crude up 3.5%, 80.90 a barrel. Brent 86.34. Brent crude up by 3.3%. S&P holding on to a 5-point gain right now. It is up by just under 0.1%. The Dow up 22, up by 0.1%. Any advance today for the S&P, by the way, will be a record. NASDAQ currently trading lower, down 0.2%. NASDAQ 100 index down 0.2%. The Bloomberg Mag 7 index up 0.2%. 2-year at 4.22%, the 10-year 4.68%, the 30-year 5.23%. Gold up $7 the ounce, $43.49 right now, up 0.2%. Crude, big story, closing in on $81 a barrel on WTI, up 3.5%. Barrel of Brent right now, 86.38, up by 3.4%. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. Recapping, S&P up 4 now, up by about 0.1%. And again, West Texas Intermediate crude 81.03 a barrel, up by 3.6%. Paul and Stacy, that is a Bloomberg Business Flash.
All right, Charlie Pell, well, thank you so much. We appreciate that. Stacey Vanek Smith sitting in for Scarlett Fu here today. I'm Paul Sweeney live in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. I love this phrase. We continue to be rationally euphoric about the U.S. stock market. Who said that? Our next guest, Terry Spath, founder and CIO at Zumo Wealth out there in Malibu. Terry, thanks so much for joining us. I love that, rationally euphoric. What, in your mind, what does that mean?
Well, I guess it's a way to, yeah, we do continue to be rationally euphoric about the U.S. stock market because there's a couple of things that are really, that we're paying attention to. We're seeing really fabulous earnings momentum, and that bull market has an earnings foundation. That's very comforting to us to have that support. You know, the earnings calendar is getting much lighter, but earnings drive stock prices in the medium and long term, so that's our focus. And year-over-year earnings are sky high, 47%, a number that's heavily influenced by that chip sector. But the fundamental backdrop for equities remains strong. Valuations are certainly elevated, which is why we're saying we're rational about this euphoria that we're seeing in the market. But if earnings continue to surprise positively, we believe that the market can continue to move higher because the denominator in the valuation equation is really catching up with price. So the question isn't really whether stocks are expensive, because they are. The question is whether earnings can continue to grow fast enough to justify those valuations. And I'll just say one more thing. I mean, even if our fundamental view, you know, you can poke holes in it, the technical support that view of strength in the market. The S&P 500 is well above its 50-day moving average and its 200-day moving average. Our RSI relative strength is robust, but it's not overbought. 2/3 of the S&P 500 are above their 50-day moving average, so that confirms breadth. So between our fundamental view that earnings are fantastic, the technicals also support that view. So overall, you know, we continue to be constructive and, you know, like we like to say, rationally euphoric about the U.S. stock market at this point in the game.
All right. Well, I do not want to harsh your euphoria, but I do want to ask about some of the kind of economic fundamentals happening right now, especially the job market. We got some pretty disappointing job numbers last week. Is this something that you are concerned about or watching?
Well, I'm glad you brought that up, Stacey, because that is a risk. I don't want it to come across that we don't think there's any risks in the market. And the one thing that we do think that investors could be overlooking is going a little bit deeper on that job report that we had on Friday that really flipped the probability of a rate hike in September, at least from the market's point of view, from likely to not likely. But we think that the market should be a little bit more focused on what's going on in the job market. People are dropping out of the workforce. Wages aren't keeping up with inflation. So we're concerned that the number of long-term unemployed, those who have stopped looking for jobs, and don't get counted has been climbing. And if we have that in combination with weaker wages, that might be signs that the labor market is starting to show signs of stumbling, that the consumer could be stumbling. And if we do see weakness in the consumer, these might be the early warning signs, and that's something that we're paying attention to at this point in the game, because we do think that that could be a risk for stronger earnings down the road.
Terry, what are you doing in the fixed income market these days?
And fixed income. Well, the interest rates are back up again. We're in that higher for longer environment. So we do think that it can make sense to add a little bit of safety and stability into your portfolio. And so certainly on the shorter end of the curve is where it might make sense. We do think you might get a chance again in September. We think that the market could be underestimating the probability of a rate hike in September. So you might get a little bit higher rates. So we would, be cautious, careful in fixed income, but you can get some nice yield right now. And so that always helps on the side of the portfolio, but we're not overweight in any area of fixed income at this stage of the game.
What do you make of the bond market right now? There's definitely been a lot of movement there and a lot of multi-year highs.
Right. Yeah. I mean, one of the things that we take a look at as kind of a referee of the bond market is the high-yield corporate bond market. And that has not been an area of particular strength, surprisingly, in this market. We've seen it typically, moves nicely along with the equity market. And that can be a nice way to get some safety, but also great total return on the high-yield corporate bond side of things. But we're not seeing that. So that's I guess, a benchmark that we're taking a close look at, that we're not involved in right now for client portfolios, but we do think that that could, potentially be an area to make money, but not right now. So we're very light, actually, when it comes to fixed income at this point, because of the rising rate environment, the fact that high-yield corporate bonds aren't doing a whole lot. So it's not taking a large part of, we're not overweight, like I said, in any area of fixed income at this point.
Terry, thanks so much for joining us. Always appreciate getting a few minutes of your time. Terry Spath, founder and CIO of Zuma Wealth Management out there in Malibu. Here's a piece of news from last week I totally missed. And it's big, I think, for the AI story. Texas Governor Greg Abbott's surprise call to pause all new data center connections until the full pipeline undergoes a, quote, audit could put up almost a fifth of the U.S. data center pipeline at risk of delay in the intermediate term. I totally missed that. That could be big.
That could be really big. Yeah, I mean, I think data centers are kind of a choke point for AI right now.
Yeah, when we saw Governor Hochul of New York kind of put a one-year moratorium. But when you think about Texas, I thought it's build, 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 build. Derek Flackel joins us here. He is a policy analyst for BNEF. Those are the Bloomberg folks that study energy transition and energy markets on a global scale. They're the absolute best. He's down there in D.C. Derek, talk to us about this story here. Is this a big deal, what's going on in Texas?
Sure. I think there's two ways to look at it. There's the sort of market impacts and there's the presidential impact, right? So right now, what Governor Abbott has asked, and so far the Public Utility Commission of Texas has complied, is more information disclosure about, electricity draw, cost increases, water draw, and tax incentives for data centers. Now, a lot of this information already has to be disclosed by a lot of data centers under what's called SB 6. That's the state's big framework, and that affects things in the Electricity Reliability Council of Texas. That covers most of the Texas grid. It's independent. There's also about half of Texas's data center load that's outside of that, in places like El Paso or in the Southwest Power Pool portion of Texas. That's where the big Fermi data center project you might have heard of is from. So there are some people who are saying this is, not that much information has to be disclosed, fairly reasonable. But the question is how serious this audit and verification is. If it requires dotting every I, crossing every T, looking super closely at all these projects, that could result in, at the very least, a multi-month delay. And we've done some modeling. If you assume that most of the data center pipeline in Texas is, for AI, which has about 10x the rental costs of a traditional, rack for other services, you could be looking at between $8 and almost $15 billion of costs if you see everything for the next 3 quarters delayed into the second quarter of next year. So it depends very much financially on how serious the audit is. On the other hand, as you said, the fact that Texas, which is very pro-business, very pro-building. It's really a sign of the political times that Governor Abbott is following in the footsteps not only of governors like Democrats Kathy Hochul of New York or J.B. Pritzker of Illinois, but also Ron DeSantis of Florida in sort of channeling some of this populist backlash towards data centers and imposing either new rules or new restrictions.
Yeah, talk a little bit about the populist backlash, because that's definitely something we've been seeing all across the country and does seem to actually potentially throw a pretty major wrench into the development of new data centers, or potentially not. What do you think?
I think it depends on the way that backlash is channeled, right? So in Virginia, near where I live in D.C., there was a long debate over tax incentives for data centers. One side wanted to repeal existing tax incentives, others wanted to condition them on environmental progress. And ultimately what happened was the governor wanted to keep the incentives, but they added back in a new tax on electricity usage by data centers that covers about a quarter of the fiscal impact on the state's budget. So you can see this manifesting not as an outright halt, or even if it's Hochul, you know, that was a 1-year pause on data center development that basically got around a more permanent legislative moratorium that would be more severe. You see these sort of intermediate solutions kind of emerging as a bit of a sweet spot, but the question is whether local activists and communities are going to be satisfied with that. And certainly in a lot of local jurisdictions, even counties in Texas, you're seeing local moratoria pass, even if they won't at the state level. And then another question is this just like squeezing a balloon where the data center development is going to go elsewhere? A big challenge that we have is that there are a lot of projects that are basically copy-pasted from one jurisdiction to another, and it's not entirely clear which of these are simply picking a different location to proceed in, and which projects are not going forward because of this backlash. So time will tell as we get a more realistic sense of what the real pipeline is, how big the impact of these moves is going to be.
Hey, Derek, we've got about 30 seconds left here. What's been the response from, quote unquote, the industry, whoever is building these things?
Yeah, depends on your point of view. If you're looking at the power sector, they've been fairly sanguine, you know, these are reasonable rules. If you're looking at the builders, the data centers, I think some of them are saying they continue to embrace responsible data center development. These are reasonable asks. Again, a lot of them do already have to disclose this. But privately, honestly, a lot of people are worried. They want to make sure they can find communities where they have actual social license, and that's really a growing consideration for this multi-billion-dollar industry.
All right, very good. Derek, we really appreciate Derek Flacco. He is lead U.S. policy analyst for BNEF, so it seems like a little bit of a wrinkle being put into this rapid development of data centers.
It does.
And it feels like it's become a little political.
Oh, yes.
Because people there's a little bit of not in my backyard. We had that with cell towers, for example, and now potentially here with these data centers. And what you hear from all the hyperscalers is we need them now. We need them like yesterday.
And our economy's kind of depending on it.
Yeah, it's a big source of growth has been the capital being invested into AI across a whole number of verticals. So we'll keep an eye on that. Looking at the market here, kind of mixed here, not a whole lot going on here, a little bit of red, a little bit of green. Coming up, we're going to check in with Dan Ahrens. He is Managing Director at Advisor Shares and Portfolio Manager of Advisor Shares Pure U.S. Cannabis ETF. How is the cannabis investing game going? I kind of lost track of where all the legislation is as it relates to cannabis, because they need more deregulation as well. They need the financial services aspect of it. We'll have that coming up this week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We now have the Dow, the S&P, NASDAQ. They're all in the red. We'll throw in the NASDAQ 100 index and the Russell 2000 index. Little change, though. Perhaps the key takeaway at this hour. We're seeing a renewed advance in oil prices. That has left U.S. stocks wavering. The S&P right now swinging between gains and losses. Looking at a loss right now of 1 point. Little change there, 77.56. Any advance, by the way, today for the S&P will be another record. Dow Industrials 54,000 even right now, down 35, drop there of 0.1%. We've got NASDAQ down 0.3%, with the NASDAQ 100 index down 0.2%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, it is down now by 1.8%. The VIX, Wall Street's so-called fear gauge, trading just above 15. Your 2-year at 4.23%, 10-year 4.69%. Gold, little changed, up $9 the ounce to $43.50. Crude, though, the big story. West Texas Intermediate crude, as traders keep an eye on the Middle East. WTI, $81.20 a barrel, up 3.9%. Barrel of Brent, $86.76, now up by 3.8%. As for the market backdrop, Terry Spath is the founder and chief investment officer at Zuma Wealth. Moments ago, right here on Bloomberg Intelligence, she told us she is, quote, rationally euphoric about the U.S. stock market.
The technical support that view of strength in the market. The S&P 500 is well above its 50-day moving average and its 200-day moving average. RSI relative strength is robust, but it's not overbought. 2/3 of the S&P 500 are above their 50-day moving average, so that confirms breadth. So between our fundamental view that earnings are fantastic, the technicals also support that view.
Terry Spath, rationally euphoric of Zuma Wealth, interviewed right here on Bloomberg Intelligence. GameStop said to be considering withdrawing its $50 billion bid for eBay and may propose a partnership or joint venture instead. GameStop down 0.1%, eBay down 3.7%. Stacey and Paul, that is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Stacey Vanek-Smith sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio and streaming live on YouTube today. Cannabis, weed. Cannabis just crossed a threshold few thought possible a year ago. With federal regulatory clarity finally taking hold, I want to get to that. Cannabis companies are now able to list on the New York Stock Exchange. So there you go. That's a milestone here. And to talk to us about that, we check in with Dan Ahrens. He is the managing director at Advisor Shares and a portfolio manager of the Advisor Shares Pure U.S. Cannabis ETF, joining us live here in our studio. So, Don, talk to us about where we are with the cannabis industry. I want to go where we are from a federal level, because I know it's state by state. Give us an update there.
Well, there's an awful lot happening, and it's very, very interesting. President Trump signed an executive order back in December calling for a rescheduling of cannabis, and we saw a multi-step approach where acting Attorney General, now seems like becoming permanent Attorney General, Todd Blanche, signed off on a rescheduling of medical cannabis, medical only. And what that means is, and it gets complicated, the DEA has a schedule of all drugs. And a Schedule I drug is supposed to have no medical uses whatsoever. And it's, hard drugs, opioids, and things that have no medical purpose, really. So he rescheduled the medical only. And that means that these medical only cannabis companies, many of which are public, that our fund invests in, no longer have this overbearing 280E tax. Most people don't even know that these cannabis companies typically, until this, could not deduct any business expenses, no salaries, no rent, nothing. They're taxed as narcotics traffickers. So a couple companies did some corporate action to divide up their business, and a company called TrueLeave listed on the New York Stock Exchange. And shortly after them, another company called Glass House listed on the New York Stock Exchange. It is momentous. It's a big occasion. But now we are waiting on another step, which is the potential rescheduling of what we call adult use cannabis. That means everything else, the recreational, if you want to call it that. But most companies have adult use and medical operations. And the federal government, again, with the executive order from Donald Trump and a follow-up from the DEA recommendations, the people making those decisions want to put a bow on it a little bit, if you will. They want to make it not contestable easily, because there's going to be lawsuits. There's people going to contest it, things like this. So they had an administrative law judge, set of hearings, witnesses. The DEA asked for the rescheduling, and those briefs are due by next Monday, August 17th, and we're expecting positive outcome, and we're expecting a lot of dominoes to fall very shortly after that, a rescheduling, still regulated, but a rescheduling of cannabis.
I believe you were coming here fresh from the New York Stock Exchange where you rang the opening bell.
Yep.
Talk about what you were doing there and what the significance of that is.
It's a huge occasion, and we've been here at Advisor Shares doing business with NYSE and with the NASDAQ for 15 years or more for various funds that we have, and we've done bell ringings before. And the New York Stock Exchange has been a great partner for us. They worked on rule filing amendments, things like this, to help us get our cannabis ETFs launched on their exchange. Great partner. But they said, no bell ringings. No bell ringings for cannabis.
Just too ceremonial or
Well, it's, cannabis was, again, they were a partner. We were able to list there, but they just thought, well, technically it's still federally illegal. Most of the banks, there's no banking for U.S. cannabis.
That's where I wanted to go, because that's the big stumbling block for this industry to grow, is to actually get access to banking. How does that happen?
A couple different ways, and this is another one of the frustrations of cannabis investors in the U.S. over the last 5 or 6 years. We've seen almost safe banking acts passed, and then they barely did not at the last minute. And it's a great question, because banking means a couple different things. Banking means being able to use a regular credit card and do a regular transaction in a dispensary. And some people say, well, you still can. No, you got to go to an overly expensive ATM in their lobby, pay some fees, and then walk over to the next window and do a cash transaction for your weed, if that's what you're buying. And that also makes these dispensaries cash-heavy businesses, targets for armed robbers, all sorts of things. There's been some horror stories going on with robberies of dispensaries. But banking means another thing in this. The stock that we invest in as a fund, they are usually blocked at most of the major wirehouse / banks, because we all know B of A owns Merrill. Look at JP Morgan, look at Morgan Stanley. They're all involved in big banks. Those stocks typically cannot be custodied, transacted at those. Because most of the U.S. cannabis companies are listed on secondary exchanges in Canada. They're traded OTC in the United States. And so the headwinds that these U.S. companies have faced for 5, 6 years has been rather outrageous.
So just real quickly, if cannabis gets rescheduled, is that kind of the key issue? Because then everything else will follow?
It is a key issue.
Okay.
There's going to be multiple steps, multiple dominoes. But what a lot of people don't realize is most of the major firms that have a formal cannabis policy, most of those formal cannabis policies are tied to the exchange listing. It gets really interesting. Okay. Our fund custodies with BNY, formerly known as BNY Mellon, one of the biggest custody banks in the world. Right. They have a formal cannabis policy, and behind that policy, it says if you are listed on the New York Stock Exchange or NASDAQ or even the Toronto Exchange, we can trade you and we can custody you.
All right, Dan, fascinating story. He's talked about this a long time, lots of layers to this. Dan Aarons, Managing Director at Advisor Shares and PM at Advisor Shares, pure U.S. Cannabis ETF, joining us here in studio. S&P up 2, the Dow minus 51, and NASDAQ down 62. We'll have more coming up. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, we've got Stacey Bannock-Smith sitting for Scarlett Fu today. I'm Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Seems like it's a quiet day, but there's a lot going on out there in the equity capital markets. Intel started this morning. They're going to sell $15 billion in common stock to fuel some of their AI demand boom. We've got some IPO filings. We've got some stocks I thought were meme stocks. I'm not sure if they still are. But we had Bailey Lipschultz in to kind of explain it all to us. Bailey Lipschultz, Bloomberg News, senior equities reporter. First, was GameStop's potential bid, $56 billion for eBay, was that ever considered real or legit?
It was always kind of laughed at, really speaking.
That's what I was doing.
It was a market. I don't want to bash it too much, but it was basically seen by most on Wall Street as kind of a marketing campaign from Ryan Cohen, who is the now head of GameStop. He was a big driver behind that 2021 meme stock mania around GameStop, become the largest shareholder, one of the largest shareholders leading the company. He was a co-founder of Chewy, made his name through that. So it was broadly seen as kind of a interesting thought, but resoundingly rejected by eBay back in May. He said he was going to come for him one way or another, and ultimately, according to our reporting, now considering pulling that bid.
Why does GameStop want eBay? I mean, the market seemed quite disappointed this didn't happen or isn't going to happen, potentially.
Well, the big debate always was, you want to make a $56 billion takeover when you have a market value of $8 billion and you have cash and equivalents of $8 billion. So there's a huge gap that you have to bridge at some point. Yeah. If you work on Wall Street, there are levers you can pull. But the reason I think we're seeing eBay shares down a little bit again is just given kind of that option, the call option potential of this being something that could work out. Cohen basically has really been vocal in bashing eBay management, talking up the potential synergies that they could see. Again, eBay downplayed those. Banker or analysts were really like $2 billion in proposed synergies. Still feels like a bridge too far on the potential merger. This is a company that Cohen has been either publicly leading or behind the scenes leading for quite some time. And the big question has been, what does it actually look like? What do you look like if you're a game retailer in an era where people download games?
All right, data center company Switch, good name, filed confidentially for a U.S. IPO. What do we know about Switch?
Data center REITs are hot. Anything around data centers hot. We had reported back in July, early July, the company was kicking off a private funding round led by Andreessen Horowitz. That would raise $2 billion equity value, or enterprise value, approaching $50 billion. So our reporting that they filed confidentially on Friday, working with B of A, Citi, Goldman, JP, and Morgan Stanley, the who's who, and that funding round was either complete or near complete, and that Ben Horowitz, co-founder of Andreessen Horowitz, would be joining the board. So now the big question is, as we reported, targeting a November IPO, how quickly does that come together? Will the market still be there? And if you're doing a $2 billion private raise, IPO is probably going to be much larger.
All right. Well, apparently Form Labs, which makes 3D printers, is also in early talks with potential advisors for an IPO. Talk about that business, the 3D printer business. Is that the next big thing?
3D printing was all the rage. I want to say in 20 and 21, everyone went public.
My 30-year-old son was doing, probably still is doing it.
And that was the big push. You just look at 3D Systems, trades under the ticker DGD. It hit its peak at $55 a share, trades for less than $4 right now. So the time had been much hotter in 20 and 21, but Form Labs, backed by SoftBank, did have bankers come in for a bake-off. We have at least one person saying they should target a raise of about $500 million. The big question comes back to, they are profitable and they are a SoftBank company. So what problems are you solving for? Why are you going public? SoftBank has a number of needs. And if you're a 3D printer company, could be interesting to just see if you want to scale. They did announce that they had annual revenue north of $250 million.
Tom from the Upper East Side writes in and asks for a SpaceX quote, $133. We're getting close back to that IPO price of $135. What does that mean for kind of the IPO market in general?
The broader sentiment has become mixed, partly because SpaceX traded below, partly because SK Hynix, the largest non-U.S. company listing here, with their record fundraising, trades a lot like an EKG. The big question now is, we are expecting Anthropic to go public September, October timeframe. How can the market digest and write down another, large IPO, OpenAI kind of waiting in the wings potentially early next year. We're in an IPO market that still is hot, but very much can be touch and go, and SpaceX kind of is emblematic of that. Again, 133 now, just south of 135, but popped up like 50%.
Do we have any sense of that insider shares that were eligible to be sold last week? Do we know what happened with those? Did anybody actually sell those shares, or do we know?
Well, we won't know, because normally you would know if an investor owns more than 5%, they have to file. Elon Musk is the main one, and then Valor, who's taken on their own share sale project, and then Google are the only three, according to our data, who would have to file for that. So a lot of this could be happening behind the scenes, but when you see a stock rally like it has after the lockup expired, it's broadly seen as either A, short covering, investors were hoping for more of a kind of dash to the exits, or B, just simply insiders not rushing to sell.
All right, very good. We'll keep an eye on that one. Always worth a look. Bailey Lipschultz, senior equities reporter for Bloomberg News, joining us here in the studio. All right, folks. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM channel 121. Access the world's only digital global auto business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Stacey, thank you so much for sitting in today. Appreciate it.
Thanks, Paul.
I think Scarlett's back Friday, so we'll see about that. So we'll piece it together for the remainder of the week. S&P up 9, the Dow down 23, and the Nasdaq down 14. We'll have more coming up. This is Bloomberg. Good morning.
From ABC News, I'm Michelle Franzen. A major earthquake in western Colombia is blamed for at least 20 deaths, according to local officials in two hard-hit towns. The 7.4 magnitude quake was centered about 3 miles east of San Jose del Palmar, rocking a key coffee growers region. ABC's Lama Hassan has more from the foreign desk.
We understand that the Colombian president, he says that he's on his way to Bogota right now to lead the search and rescue operation. He has also ordered an emergency center to be set up immediately. That's the information that's coming into us right now.
In the city of Cali, the mayor says at least 20 buildings have collapsed and residents are trapped. President Trump and his administration continuing economic sanctions against Iran, along with warning that more strikes could be taken if Iran doesn't reopen the Strait of Hormuz. ABC's Stephen Portnoy says Iran is also listing its own demands for reopening the critical waterway.
In past weeks, we've heard the president talk about a last chance for Iran. In recent months, since the war began in late February, he's talked about a complete surrender that he's demanded. And now you have the Iranians trying to put international pressure on the United States, on the global economy, by threatening to choke off traffic through the Strait of Hormuz, now demanding reparations and an end to the blockade.
Extreme heat and dry conditions fueling dangerous wildfires across much of the country and leaving firefighters stretched on the front lines. Here's ABC's Kana Whitworth with more.
Nearly 100 large fires burning nationwide, scorching more than 3 million acres as exhausted firefighters race to contain the flames. Most of them in the West, nearly 50 in Oregon and Washington alone, while evacuations are being ordered near Reno, Nevada, as the bug fire torched more than 15,000 acres over the weekend.
In Las Vegas today, jury selection beginning in the murder trial of legendary rapper Tupac Shakur 30 years after the fatal shooting. One-time South L.A. gang leader Dwayne Davies, who goes by Keefe D, denies the charges. You're listening to ABC News. widening recall of jalapeno peppers possibly tainted with salmonella. Stores include Kroger, H-E-B, Walmart, and Albertsons now rushing to remove the peppers from shelves. ABC's Elizabeth Schulze has more.
Taylor Farms says it got the jalapenos from Coast Citrus Distributors. The FDA, we know, had already linked that company to the salmonella outbreak. It's made 375 people sick across 27 states. Up until now, we had only been aware of potentially contaminated jalapenos sold at Chipotle, Qdoba, some other restaurants which removed them. Now this list is clearly expanding.
Taylor Farms, the company linked to the record cyclosporiasis outbreak, is also recalling additional foods with jalapenos like guacamole and salsa. California is offering a new tax incentive for electric vehicle purchases. Here's ABC's Monica Madden.
Now, Californians will automatically get a $3,500 tax credit on a new zero-emissions car, or half of that for a used EV. The state set aside just over $135 million as a one-time investment, with partnering automakers matching that amount. It's part of a pledge Governor Newsom made before President Trump took office for a second term, ending the $7,500 federal EV rebate.
The tax break applies to drivers who buy an EV for the first time. An unusual flight cancellation for airline passengers traveling from Victoria International Airport in British Columbia to Toronto. The flight canceled after a child refused to sit down and fasten their seatbelt. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Don't worry, we're low-key in it. Welcome to the Monday edition, as President Trump says as much about Iran, suggesting that he will wait for economic pressure to build rather than bomb the country into submission. And as Israel rejects a disarmament deal in Gaza, oil prices are back on the rise today, and we'll have a lot to talk about with Bloomberg's Jennifer Welch. Our geoeconomics analyst will be with us just moments from now. Mark Zuckerberg says the U.S. should keep the reins off AI. Democratic lawmakers are saying the opposite. We're going to walk you through the latest spat with Washington when we're joined by Bloomberg's Mike Shepard, and it appears Congressman Max Miller will not be moved. We'll talk with our political panel about the Ohio Republicans' decision to stay in the race, despite calls for him to step down. We start on Wall Street, though. Charlie Pellet takes care of that for us. Our first check today, the Monday trade here on Balance of Power. And Charlie, how's it looking?
Right now, looking at a record, Joe Matthew, but any advance today for the S&P 500 index will be another record. But in the green right now, it's 77.64, up 7 points. That is a gain of 0.1%. The Dow, however, lower. The Dow just below 54,000, now down 55 points, a drop there of 0.1%. NASDAQ is down 0.1%. The NASDAQ 100 index is turned around, up now by about 0.1%. The Bloomberg Mag 7 index is gaining 0.3%. All of this with the 2-year at 4.23%, the 10-year 4.69%, and the 30-year 5.23%. We've got gold up $15 the ounce, 43.57 on the precious metal, up 0.4%. West Texas Intermediate crude, big story today. Joe was just mentioning the rise in crude. WTI 80.88 a barrel, up 3.5%. Brent, the global benchmark, right now trading at 86.42 barrel of Brent, up by 3.4%. So oil is higher as Iran and Oman remain short of a deal to reopen the Strait of Hormuz. All of this with the average cost of a gallon of gasoline now at $4.09. According to AAA, it was $3.13 a year ago. Iran has been reiterating that conditions are still not in place to allow free passage through the Strait of Hormuz. Henrietta Trays is Director of Economic Policy Research at Veda Partner on Surveillance this morning. She told us there is no way any payment should be made to Iran for ships to sail through the Strait of Hormuz.
The revenue is not the issue that I care about here. The issue is the fact that now every Western banking nation, insurer, tanker, shipper, international alliances will have to work with an international state sponsor of terror, as designated by OFAC laws, SWIFT laws. It's that coordination that we are now all forced to do with Iran and the IRGC as a result of the president's decision to start a war on February 28th.
Henrietta Trays of Veda Partners. Meanwhile, the cost of hiring a supertanker to carry oil on the Middle East to China route has now approached $500,000 a day due to the Iran war. Oil higher, and so are oil super majors. ExxonMobil up 3.4%. Chevron also up by 3.4%. ConocoPhillips rallying by 3.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
Okay, my friend Charlie, thank you so much. Charlie Pellet, live from New York, high atop the Gilded Tower of Bloomberg News. Coming off the best week for stocks since April. So, you can only ask for so much around here. Charlie will be back in about 15 minutes. We've got a few more important earnings reports to chew on this week. Got one over the weekend, as a matter of fact. We're watching Berkshire Hathaway. It's got a bid, of course. I curled up with a Coca-Cola and poured a bowl of See's candy on Saturday to review the results. They don't do the big Warren Buffett confab like they used to, although I guess Greg Abel will keep doing the annual shareholder meeting. I did not get to Dairy Queen over the weekend, although it did sound pretty good. Berkshire doing nicely, up over 2%, $11 here, as they deploy the cash pile. You'll hear more about that over the course of the day on Bloomberg. Along with, of course, politics. And we've got a lot to distill here on this 10th of August. It's just us left here in the capital city. This is the good stuff. I love August in Washington because everyone's gone. The Senate finally left over the weekend. The House was already off, and they're going to be gone, well, until after Labor Day. This is like a 5-week slog here. With 85 days left to the midterm elections, the store's closed, guys. White House will be doing something on the days that the president is engulfing for the next couple of weeks. But even when it comes to the war in Iran, we're low-keying it, says the president. Remember about a week ago, we were going to be blowing up power plants and water desalination plants. We were going to bring Tehran to its knees. 13 times we threatened that, only to back off for one reason or another, climb down from the top rope. In this case, it was Iran's neighbors asking us to cool it. Just give it a minute here. Because we were on the verge of a deal, remember? It was going to be 1 or 2 days. Quick, he said. Might even be today. That was a week ago. Monday, today, a week ago. Now, the president sat down. Of course, we did not get a deal last week. Iran's been talking to Oman, not the United States. The Strait is in a sort of abstract state of limbo here. And if you were wondering, maybe we go into a hot weekend, it was quite the opposite. When the president sat down with Axios, we are low-keying it, saying the U.S. is only semi-negotiating with Tehran about the Strait. He had more to say about this being the next phase. Quote, "We're just watching Iran with its huge inflation and the fact they have no money," he said. This was an interview that took place yesterday, saying the blockade of the country was deepening its financial woes. So we're low-keying. It reminds me of Han Solo in Return of the Jedi. Remember, fly casual? Keep your distance, but don't look like you're trying to keep your distance. He said, fly casual. Chewbacca didn't know what he meant by that, and we're not sure what the president means by we're low-keying it. Maybe Jenny Welch does. I'm glad to say we start our week with one of the best minds in the Bureau here. Bloomberg Economics Chief Geoeconomics Analyst, Jennifer Welch. It's great to have you back. I'm guessing when you were working in the White House for the last administration, that was not a technical term, low-keying it. How do you interpret what we're talking about?
I mean, I think I interpret it, first of all, a set of interesting mastery of military science and diplomacy in this administration, from low-keying it to a ceasefire is when you shoot less at the other party. So we're all learning new things here.
Right.
I think what I would interpret it as, the administration's trying to take attention off of the war. That is not going the way that they want it to, and they're running out of good options. And in particular, the president's talking about now just letting economic pressure do the work for it.
Yes.
Well, we've had a blockade in place for months. We've had sanctions on Iran for 46 years. Those haven't forced Tehran to capitulate. Yeah. It's hard to see why they would work now, especially when the messages that we're getting out of Tehran are that they are more emboldened than ever, and they are pushing for more than they ever have before in terms of what they want from the United States before they even consider reopening the strait.
When you consider the idea of semi-negotiating, we know that Iran is talking to Oman. Are there back channels? Have we stopped talking?
I sense that, first of all, Iran always says that they're not talking to the United States, even if they are perhaps indirectly talking to the United States. I think certainly the U.S. is talking to Oman and probably getting a lot of information from Oman about what's happening in those conversations. But I'll remind everyone that the MOU that the United States agreed to with Iran did not include the United States in this portion of the agreement that was about deciding what happens to the future of the strait. That was left for Iran to work out with Oman and other kind of Gulf countries. And so the U.S. has written itself out of this intentionally. Now, maybe in hindsight, that wasn't the best strategy, and the U.S. actually does want to be part of those conversations because it's a lot of weight to put on Oman to secure the freedom of navigation through the Strait of Hormuz with Iran.
Yeah. What do you make of this promotion? The Ayatollah's military advisor, Mohsen Rezai, if I'm saying it right, former Commander-in-Chief, Islamic Revolutionary Guard Corps, now named the new leader of the Supreme National Security Council. This, according to state news, this is an advocate for full Iranian control of the strait. What does the promotion mean?
I think what this suggests is two things. First of all, he's replacing another hardliner who had put out these very stringent conditions from Iran on reopening the strait. And so I think there were some questions about, if that former leader is being pulled back, is that a signal that maybe Tehran isn't pushing that hard? And no, I wouldn't read that into it. These are both hardliners. I think the second thing is that it further underscores that the Islamic Revolutionary Guard is very much empowered in this new regime in Tehran, and this is a further signal of them kind of consolidating that power by taking over this new, very important posting.
I want to ask you about Israel, because this is an important component of any deal, is to have Israel conduct at least what was outlined in a proposed peace deal for Lebanon. And of course, it's not the Lebanese government we're talking about, it's Hezbollah. This 15-point plan is apparently a non-starter now. The president of the United States had announced that this was a deal, it was done. Benjamin Netanyahu, not so much. Listen to him from over the weekend.
Israel rejects the 15-point plan. The IDF will not carry out any withdrawal until Hamas is disarmed. And when I say disarming Hamas, it means the heavy weapons, the less heavy weapons, and the light weapons. All of the weapons. And we are talking about real disarmament, not a fictitious disarmament.
Wow, we apparently got a voiceover artist to be our translator. That was amazing. That was not the prime minister. That was a translator. Hamas was to lay down its weapons in exchange for Israeli withdrawal. But nobody's going to hang up the phone first. And now apparently this deal is off?
I think this points to a repeated pattern we've seen of the Trump administration trying to broker a deal, saying that they have a deal, and not having their partners fully on side. This is also what happened with the Iranians on Lebanon. The MOU said they were going to end the war on all fronts, and in particular for Tehran, that meant including Lebanon. The U.S. said, maybe it does or doesn't include Lebanon, and Israel was very opposed to that. They didn't feel that they had been really fully consulted. They weren't part of those negotiations. And so that was another friction point and led to some of the exchange of fire that then led to the MOU being declared dead by both sides.
And without this, you're not getting back to the peace table with Iran, are you?
No, and that's Iran, again, feeling very emboldened. It has made Lebanon a red line for it, that it wants to see the war end on all fronts, including there, and that's going to be a no-go for Israel. And so I think the question is, how far is the Trump administration willing to push Israel on that?
Oil prices are higher today, and we've got a heck of a headline. The U.S. Strategic Petroleum Reserve has fallen to its lowest level since 1983. I'm old enough to remember that. That was a long time ago. Fallen below 300 million barrels. We're looking at oil prices rise, gas prices follow. You're a geoeconomics analyst. Is this the new normal?
I think that this is a really important to clue in on, because gas prices, oil prices did not rise as high as we were expecting them to in the initial stages of the war, in part because of the cushioning effect provided by reserves. Those reserves are now running out, and not just the United States, but around the world. And I think markets may not have fully reconciled with the fact that you still have the strait closed. Now you have disruptions in the Red Sea, too, where a lot of the diversion had been happening, and that cushioning effect is going to start running out.
Wow. Well, we're going to be in touch with you on this one for a long time. Remember, we started talking about the war in Ukraine. We're still talking about that one 2 years later. Jenny, thank you so much. Jennifer Welch runs Bloomberg's geoeconomics team here in Washington. Some of the best we have, and fascinating to watch this story evolve or devolve depending on the day. We've got a lot more to follow on the Monday edition of Balance of Power, and awfully glad you joined us here on Bloomberg Radio, streaming live on YouTube. If you want to dial us up, Shep is on his way in. Search Bloomberg Business News Live. As we look at Democrats versus AI, coming up next, live from Washington on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got the S&P 500 index higher, barely. We are seeing a renewed advance in oil prices. That has left stocks wavering. But for now, the S&P is higher. Any advance today will be another record on the S&P. Currently at 77.58. It's up under 0.1%. Dow Industrials lower by 108 points. The Dow now down by 0.2%. NASDAQ Composite Index also down 0.2%, with the NASDAQ 100 Index down 0.1%. The Bloomberg Mag 7 Index, so higher, up 0.1%. The SOX, the Philadelphia Semiconductor Stock Exchange Index, down now by 1.5%. The VIX, Wall Street's so-called fear gauge, holding just above 15. Two-year yield, 4.23%, with the 10-year 4.69%, the 30-year 5.23%. Gold, meanwhile, up 0.5%, 43.63 the ounce. While West Texas Intermediate Crude, major story today, WTI surging by 3.8%, 81.15 a barrel on WTI. Brent 86.66, up 3.7%. Oil gaining amid anxiety about a deal with Iran. Meta Platforms has introduced a new downloadable AI model that can run on a personal computer, adding fuel to a debate over whether the increasingly powerful technology should be freely available or kept under tighter control. A topic we will be exploring coming up right here on Balance of Power. Recapping, S&P higher by 2 points now, little changed, up under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, many thanks, sir. Charlie Pellet, the voice of Wall Street and the New York subway. We'll be back in about 20 minutes' time with another update on the markets. If you're with us in Washington, if you're listening to us here on 99.1, you're probably not drinking water. Do we get a boil water alert at some point here? I just saw a video from one of our team. They're flushing this orange water into the street. What the heck happened over the weekend? I've got my bottled water here, maybe like you do as well, because I don't know what happened in the pipes over the weekend there, guys. Is this tied to the Potomac River, James? Remember that whole story? We stopped talking about that, too. Anyway, we'll let you know. Maybe there's a data center they put in Northeast Washington. Thanks for joining us here on the Monday edition. Yeah, I guess the city's got some kind of water issue, so pack your bottle. We're live in Washington, of course, and around the country. Every day here on Balance of Power, you can find us not only on Bloomberg Radio, but on YouTube. Dial us up right now. Search Bloomberg Business News Live. You know, you're right about that, James. Orange water, small price to pay. Did they hack the water system? That's a real question to ask. We found cyber attacks on municipal water systems, several of them last week that were tied to the Iranians, and it's just adding to this feeling of angst over anything that has to do with cyber and AI. My God, think of the conversation I had here last week with Shep about AI models colluding to break out of the sandbox, find their way online, and hack a company called Hugging Face. That story just gets better by the day. And of course, that followed the Anthropic models that got out of the sandbox. And there are big questions about the role that Washington is or is not playing here. Mark Zuckerberg is already worried about whatever the answer is, and he's out with a more than 6,000-word manifesto. Think of Jerry Maguire. Everyone got it in their mailbox this morning. It's called The Future is for Everyone, the path to a positive AI future. We're fortunate, he says, to live at an incredible moment in history. In the next few years, people will be able to use superintelligence beyond human capacity to create and discover extraordinary new things, build new businesses, express new ideas, learn new concepts, advance our health and quality of life. Is that how he's beaten these UFC guys? He's using AI? I saw him fighting and did some sort of lake fight over the weekend. What a life, Mark Zuckerberg. So he goes on to talk about Washington here and the risks of over-regulating. He says, I'm personally more worried about centralization than I am about any of the specific risks others are talking about. Imagine a central clearinghouse here, a government arbiter of AI. He doesn't like that idea. He wants to distribute widely. Unleash open source. Do not delay releases. Bernie Sanders sees it very differently here. He's got his own letter, and it's not 6,000 words long. I've got it. It's to Mr. Altman, Mr. Amadei, and yes, Mr. Zuckerberg. He says, in the interest of humanity, stand by your words. Pause AI development. It's not too late to avoid disaster, or as he would say, disaster. Stop building machines humans cannot control. This is more Terminator stuff. Let me be very clear, he writes. If you do not take appropriate action now, my colleagues and I in the U.S. Senate will. And there's another letter. We've got 3 of them here we're playing with. This one from House Democrats. A whole bunch of them on this. Again, to OpenAI, Anthropic, and other AI companies, lawmakers say they have serious implications for American safety and security. Congress has so far completely failed to respond to the threats posed by AI development. In all of them, well, both of them, the Sanders letter and the Democrats in the House, they point to these hugging face type of episodes that we've been describing here. The technology has already gotten out of our hands. The horse is out of the barn. That's what Democrats are saying. And, you know, if you talk to most Republicans, unless it's involving data centers, they're probably going to be on the side of unleashing American excellence and winning the AI race. Shep talks about this all day, and he's usually ahead of the stories when we sit down and talk with him, and I bet he's going to add something to this as well. Of course, this is what Mike Shepard covers all day. Thank God he has this beat. Our senior editor for technology and strategic industries. Great to see you, Shep.
Great to be back.
I mean, we can't get through a show without you. So it's emblematic. I just put all of these together of the push and pull here between AI, said to be our future, and Democrats who largely want to put some reins on this and act responsibly, if not throw out the whole technology. In this case, he says pause it altogether.
Yeah.
We're not on the verge of Washington making a difference, are we?
We are not. The Senator Bernie Sanders is saying that my colleagues and I will.
Yeah.
We have a lot of skepticism about the degree to which they would be able to do so. The Trump administration has shown no appetite for slowing the role of AI development.
Mm-hmm.
And in large part, Joe, it comes down to the geopolitical competition. It boils down to this challenge from China in the arena of artificial intelligence, which is seen as something, and Mark Zuckerberg goes into this in detail in his missive, and I recommend it. I've got it here with the all the letters, including one from Senator Jim Banks, a Republican who's also concerned about these episodes you were outlining. But Zuckerberg talks about the competition geopolitically and says it's too important a technology, Joe, to not have American values infused in it. And what's interesting in his manifesto, and it's important also to note that today Meta released a very shrunken version of its open source model. It's called Muse Glimmer. It has 28 billion parameters, and that might sound like a lot to you and me, but if you wanted to download Moonshot Kimi K3, and we were talking about this just a few weeks ago, that model to download into your personal space for your personal use, not accessing it through an API, it's 2.8 trillion parameters. So it's much bigger. This is smaller, and this is part of what Zuckerberg sees as the solution. Look, you want to address these risks, whether it comes to safety, whether it comes to employment, whether it comes to a lot of other concerns you might have, including on security, to AI. Democratizing the technology really is the answer.
Part of the Zuckerberg note, he actually aims some fire against Dario without mentioning him at Anthropic. Quote, I do not understand why anyone who believes that AI will eliminate most jobs and much of humanity's relevance would rush to build that future. The House Democratic letter is asking them to come here to testify. You've got Amadei, Sam Altman, Mark Zuckerberg. I would love to watch that show, and I'm guessing you would too.
We would. And
they're not coming, are they?
It's unlikely. And part of the fear that they have, and we saw Jensen Huang decline an invitation from Democratic Senator Elizabeth Warren to appear before the Banking Committee, where she's the party's ranking member, in part because they're concerned that they will be turned into, piñatas, essentially, and used rather than used for political gain, rather than to conduct a conversation that's thoughtful, that really tries to get to some answers, and that they will be subject to the kind of invective that we have seen repeatedly over the years in these congressional hearings. And it might not be the kind of constructive give and take that they would hope to achieve. Remember, from the view of both policymakers and the technologists behind this, we're building the airplane as we're flying it.
That's correct.
And we're also in competition with China. When you think about it from their point of view, that, look, they have to move fast. It is very uncertain. And Mark Zuckerberg in his missive also gets into some of the uncertainty of that as well. Like, hey, look, we may not get this all right, but the worst thing that would happen is if we allow China to gain that advantage permanently, it would be far worse than anything that we might suffer in terms of bumps in the road on the way to deploying this technology. And that is, in a way, is his answer to Sanders' concerns about the, some of the recent episodes.
It does make you wonder How many of these stories have happened in China that we've not heard about? How many hugging faces have there been?
Well, there was at least one disclosure of I think a moonshot model that escaped its sandbox, its guardrails. So far in these incidents, we haven't seen like a grave outside world consequence. And, for example, in the hugging face episode, we know there was access. We know that there may have been a little bit of unauthorized, viewing of whatever Hugging Face had to offer in its platforms, but it doesn't seem that there was any actual physical damage done, that there was any theft of technology or anything like that. But simply the fact that the access took place is a big problem. But it is sort of like the old Rumsfeld dictum that, it's not the things you don't know, it's the things you don't know that you don't know. And there is still a lot we need to learn. And that includes in some of these other episodes, for example, including Anthropic's models. Who were the counterparties in those instances? Who are the other hugging faces that might have had this happen to? And we also haven't heard from Google either.
That's right.
Have they had any models slip their bonds and get out there in the world? And the thing is that in many cases, they may not even know either. It took OpenAI some time to figure out that this had happened. The developers were unaware. The models kind of went out, as we talked about on Thursday last week. The models just kind of did what they wanted to do. And think of it this way, Joe. If you're in your kitchen, you tell the toddler, look, you can't have any more cookies. We're going to put the cookie jar on top of the fridge.
That's right, yeah.
As soon as you leave the kitchen, what do? They get the chairs, they stack them up, they climb up there, and they go get it because they're determined to do the one
and
thing
part of you says, attaboy, this kid's
Right,
smarter than
very
I thought.
creative,
But now
right.
you're grounded. Mike, thank you so much.
Thank
It's
you,
great
Joe.
to have you. We have a lot of letters to dig through. How come, by the way, why isn't Elon Musk on this letter? How come Google's not on here? It's Altman, Amadeus, Zuckerberg. I guess we'll have to
Those
ask
are the
Senate.
three who had the models get out of
that's right.
containment.
So that's, I guess, Saturday detention. Shep, thank you, as
Thank you,
always.
Joe.
We've got headlines on the terminal. President Trump taking to Truth Social, likewise demanding compensation from Iran for all the people they have killed and gravely wounded, and responding to the ask for compensation to damage in reparations by Tehran. We'll assemble our panel next, right here on Bloomberg.
12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks lower across the board right now, with the S&P 500 index pulling back from a record, trading close to session lows now, down 9 points at 77.48. That is a drop of 0.1%. Dow Industrials now down by 100 points, down 0.2%. The Nasdaq Composite Index is down 111, down 0.4%. The Bloomberg Mag 7 Index just turning negative, down 0.2%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 2%. The 2-year, 4.23%. The 10-year, 4.69%. Gold is up $14 the ounce to $43.55, up 0.3%. West Texas Intermediate Crude, 81.32 a barrel, up now by 4%. Barrel of Brent, 86.84. It is up by 3.9%. Wall Street firms, including as well as NVIDIA, are partnering on a $500 billion AI infrastructure financing deal. That's according to the FT. Now, right now, NVIDIA shares are down 3%. But among some of those firms being reported by the FT, we do have shares of Goldman Sachs down 0.6%. Blackstone up 1.4%. KKR up by 0.3%. And it's certainly a political issue that falls at the intersection of politics and markets. That is the expansion of data centers. The AI revolution is being fueled by the need for power and data centers, but there's been a lot of pushback at the state and local level. Mick Dobre is a senior research analyst at Robert W. Baird. He has downgraded Caterpillar, citing those political headwinds.
There's been a very quickly shifting consensus when it comes to public opinion surrounding data centers. And what we've observed in our analysis is that this is a bipartisan issue. It is happening in red states. It is happening in blue states. And what has gone from just local community online movements, now it's becoming more and more of legislative issues.
Mick Dobre of Robert W. Baird interviewed on surveillance. Caterpillar shares down now by 0.1%. Again, recapping here, S&P 500 index just about at the day's low, now down 11. Drop there of 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
Okay, Charlie, thank you so much. Charlie Pellet will be back with more on Wall Street coming up top of the hour, 1 p.m. Eastern Time, as we welcome our global television audience to the program. Glad you're already here. You chose wisely. Our first hour is always fun here on Bloomberg Radio and on YouTube, where you can find us by searching Bloomberg Business News Live. Park anywhere you want. No traffic to worry about today, because they're all gone. This is the 2-week span, the period of time we have in August, when both lawmakers and school buses are taken off the roads. Parking spots open up. People breathe a little easier, even if it's hot and humid outside. You can get the table you want at the restaurant. And for lawmakers, well, they don't have to be here in the swamp. They get to be with their families, and they get to run for re-election. That's what you do, right? You go home, you raise money, you march in parades. They don't call it recess, the lawmakers themselves. Well, they do when we're not on the air, but because they like to call it the home district work period. Constituent services, right? You get in the district office and keep it real instead of being bogged down by all this madness here in Washington. They'll be back after Labor Day. The Senate wrapped things up, well, I guess it was in the wee hours on Saturday morning, and made their way home over the weekend. And, well, for Chuck Grassley, it was bittersweet. He did finish his work here in the nation's capital and was happy to get home, but only in time to learn that he had lost a loved one. We all found out about it on social media when the senior senator from Iowa announced that Beth was no longer. The 92-year-old's vacuum cleaner, Beth, which cleaned the floors for him loyally and effectively for more than 50 years, named after a Senate staffer, finally reached the end of its useful life. As Chuck Grassley wrote with the photograph on Twitter, "You will see Beth no more. See black," he writes. That's from electrical sparks. The charring on the vacuum was there for all of us to see. "It's not safe to use anymore," he writes. "Goodbye, Beth. You've been a real workhorse. Your namesake still is hard worker. I will miss you. Sad day at Grassley household, he wrote. I was pretty upset about it. I don't know if we can show the vacuum here, but I mean, it looked pretty banged up. There's been some of the most viral Chuck Grassley videos over the years have involved Beth. But just when we thought there was nothing to look forward to, I believe it was Mahatma Gandhi who said about death and renewal, birth and death are not two different states, he said, but they are different aspects of the same state. And just like that, Grassley posts on Sunday, Beth the vacuum cleaner may be dead, but apparently there is another. The American people are so caring, he writes, I have offer of a used Hoover for a good Iowan in Sioux City. It won't surprise anybody, all caps, but I accepted. Beth is back, but newer model. I'm very excited about this one, if you can't tell. Now, normally I would come off a story like this and turn to something very serious before we go to our political panel, but I know they want a piece of this. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. I'm happy to report they're back together off the weekend. Rick is our Republican strategist partner at Stone Court Capital, and Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Jeannie, there's a happy ending on this one. Who says there's no good news?
That's right. And, you know, I can't even make fun of Senator Grassley because, Joe, you know I name my cars. I never heard of naming a vacuum cleaner, but I may adopt that one, you know. So there we go. Good for Chuck Grassley and Beth. I guess, do we call her Beth Jr. now, the new one?
Yeah, I don't know. I was going with Beth, too. I bet you've got some great Grassley stories, Rick Davis, and I won't try to pull them all out of you here, but how many Chuck Grassleys are left on Capitol Hill? I mean, it's absolutely incredible. He's become his own show on social media. The characters that he uses, he made a character out of a vacuum cleaner. What's this 92-year-old got to teach the rest of the Republican Senate conference?
Well, the fact that you indicated that some of his most viral moments was with a Hoover vacuum cleaner is a little bit intimidating to me. I somehow don't think that our culture is being renewed by that kind of thing, but that's just Rick Davis. Look, he got reelected at this ripe old age for a reason, right? He's just as cagey as he used to be. Man can get around. He has an encyclopedic memory of Iowa, and honestly, someone who has really grown to be concerned about the aging Senate. The only exception I'm going to give you is Chuck Grassley, because every time you think he's slipping a little bit, he'll throw you a Hoover.
Well done, sir. Well done. Yeah, boy, where did that come from? Cece's showing me some pretty great Chuck Grassley tweets. You know, when he's eating out for pork chops or for an ice cream cone or something, it's always on social media, and we kind of love him for it. He tweets a lot more than I do. But I want to ask you both, going back to Sunday morning television here, about 2028, because this seems to be getting away from us here, guys. We're walking up to a very important midterm election cycle, and the political conversation is very frequently about the one that follows. Think of all the ink that was spilled about J.D. Vance last week, and whether the president was actually going to be endorsing him to be his heir apparent or not. We can't get through a day without someone on Capitol Hill asking AOC if she's going to run. It's in the tip sheets every morning, and sure enough, it came to a head on Sunday morning, ABC This Week, John Carl with AOC. Let's watch and listen.
But, I mean, do you see this as something, I know you said you're open to it. Is it a realistic possibility for you?
I haven't ruled out the possibility, and I'm very humbled to the tremendous amount of support out there. I think that we have a responsibility to remain focused on the midterms and not on our individual aspirations or plans.
And running for Senate against Chuck Schumer, is that also something that's possible?
I mean, I think that anything is possible at this juncture.
Okay. So anything is possible. We got that, Jeannie. I just wonder how much of a distraction these conversations are to some pretty important elections that are going to take place a couple of months from now. 85 days to the midterms. Why are we so obsessed about 2028?
Because it's never too early to talk about 2028, Joe Matthew. We should do it all the time.
Okay,
You know,
all right.
It's interesting because she left open, as you just played, both the presidency and if Chuck Schumer resigns, you know, running for his seat, or maybe if he doesn't resign and she challenges him. But I think it would be a resignation situation, speaking of generational change. And of course, she topped that poll in New Hampshire as a 28 contender not that long ago. So she's very much there. And, you know, it's very interesting because you talk about, you know, Chuck Grassley going viral with Beth. And what is AOC going viral for? Because she is on Instagram Live freezing her eggs, talking about fertility at the same time she's talking about potentially being a contender for 2028. So this is the moment we find ourselves in.
Well, that's right. And look, the one person on this program who's run multiple presidential campaigns is Rick Davis. And I'm wondering your thought on this, Rick. It gets a little earlier every year, and the fact that this is an open election, I'm sure, is going to exacerbate all of this. But we're really feeling for leadership on both sides, right? This is why we're talking about it now, because it's so wide open.
I don't know how wide open it is, and it is absolutely fool's gold to be talking about presidential politics before the midterm. And especially on Sunday, you're never right when it comes to prognostication of presidential primary activity. And I would say if Chuck had just asked her the third question, are you prepared to start your own colony on Mars? She'd probably say, I haven't ruled it out. I mean, like, what in the world is she talking about? I mean, like.
That's great.
So look, at the end of the day, she's picking up some juice, no question about it, about the lurch to the left of the Democratic Party. There's lots of evidence of it, and she's a manifestation of it. And Bernie's too old, and she's right in the slot. So the reality is she's got something to talk about, but she is undermining her own party's efforts in the midterm to get control of the House of Representatives that she's currently in. Forget all these other jobs she's looking at. And the more she talks about herself, the less the Democrats are going to talk about the candidates who are actually on the ballot who need the help this year.
Yeah, well, I'm happy to play with some fool's gold here, Jeannie. Typically, the people who are rising to the surface at this stage of the game are not the ones who end up there. We've been talking about Pete Buttigieg, Alexandria Ocasio-Cortez, say her name, Gavin Newsom, and I don't know, maybe Mark Kelly. None of these people, based on history, will likely be front runners in the presidential campaign, will they?
Probably not. I mean, let's just ask Jeb Bush how that went. You know, once you rise, you can get your head chopped off. So that's always a risk. You know, not literally, Joe, just politically. No. But you know, that's always a risk. But this is the position she finds herself in. And when Jonathan Karl is going to ask her these questions, I give her credit for not saying, you know, no, never. I mean, she honestly kept it open. And that's one of the things that voters here, I'm in New York, have long liked about Alexandria Ocasio-Cortez. She really is very authentic and open, and she does not play this political game, you know, oh, woe is me, I can't even imagine, and then run a year later. She says it like it is, that she's considering it and she's not closing any doors. And that's what voters like about her.
How important will she be as a surrogate between now and November, Jeannie? She's already been out there at a number of special elections, and we've seen her impact in a lot of states, including Michigan. What's she got left in the tank for this election, not 28?
Well, and she's also held endorsements in several key races, including this Wisconsin race. So, you know, she is being careful. She said in that interview, and I listened to it very carefully, her focus is on winning in the House, taking back the House. And so she is trying to focus on that. And like I said, she's been more judicious than she has been in the past with her endorsements. But she is the second to Bernie Sanders as a leading left-wing Democrat, and she is going to use that power, and right she should.
And with 30 seconds left, Rick, that means that Chuck Schumer will be able to sit back and watch this happen because he hasn't been having that much of an effect.
I was going to say, he might as well just be sitting back and watching it happen because he hasn't had any effect.
There it is. Rick Davis and Jeannie Shanzano will be back in our second hour. Our Bloomberg Politics contributors are together off the weekend, and we've got a lot more to talk about as we'll turn back to the war in Iran. The president saying that we are low-keying it. Josh Wingrove will have a report live from the White House straight ahead here, only on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
The president demands compensation from Iran. Welcome to the Monday edition as President Trump answers Iran's demand for reparations with a brand new call to compensate the U.S. for the killing of Americans. Negotiations appear to have come to a standstill. We'll get the latest from Bloomberg White House correspondent Josh Wingrove. He's on the North Lawn right now. Lawmakers have left town to campaign full-time. We'll talk midterms and the congressional agenda with Congresswoman Susan Del Bene, chair of the Democratic Congressional Campaign Committee, with insights from our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour. And we start, as always, on Wall Street. with Charlie Pellet, his view on the markets from World Headquarters in New York. Charlie, how's it going?
Right now, Joe Matthew, looking at a lot of red on this back-to-work Monday. S&P was at a record Friday. Right now, retreating from that record. But the key takeaway, little changed right now. We're off session lows, down 4 now on the S&P at 77.52. That is a drop of under 0.1%. If things turn around and there is a move higher, any advance today on the S&P will be another record. So right now, the S&P at 77.51, down under 0.1%. Dow Industrials are off by 0.2%. Nasdaq is down 0.4%. The Bloomberg Mag 7 Index in the red, down 0.2%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 2%. The 2-year, 4.23%, with the 10-year, 4.69%. The 30-year, 5.24%. Spot gold is up $15 the ounce to $43.56. That is a gain of 0.3%. Big move for crude, keeps on going, up another 4.2% today. 81.49 a barrel. Brent, the global benchmark, back above 87 now. 87.12 barrel of Brent crude, up by 4.3%. Oil higher as Iran and Oman remain short of a deal to reopen the Strait of Hormuz. And by the way, the cost of hiring a super tanker to carry oil on the Middle East to China route is now approaching $500,000 a day because of the Iran war. The oil majors all advancing along with the price of oil. ExxonMobil up now by 4%. Chevron up 4%. ConocoPhillips up by 3.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet, the voice of Wall Street and the New York subway. We'll be back in about 20 minutes' time with another check on Wall Street. Coming off the best week for stocks since April. Worth keeping that in mind. We were in record territory when we closed the lights here on Friday night with the S&P 500 up last week about 3.5%. So we'll take things in stride today as we gear up for the next round of earnings, with our eyes, of course, on oil prices, and Charlie pointing us there on a daily basis. Up over 4% for both WTI and Brent today. WTI now looking at 81.50. Brent's knocking on $87 a barrel here, and a lot of it has to do with the news or lack thereof from overseas. Remembering a week ago today, President Trump was just climbing down from the latest threat to obliterate Iran, having been asked by Iran's neighbors to not go all in with the full-on strikes that the president was threatening. Now he's talking about economic pressure as the play, with no formal negotiations underway. In fact, Iran is talking with Oman about a new world order in the Strait of Hormuz. The president sitting down with Axios to say that the U.S. is only semi-negotiating with Tehran, and in fact, we are low-keying it, is the quote. Watching Iran, he says, with its huge inflation and the fact that they have no money, unquote. Now, there have been a couple of updates ever since that took place, with the president now on Truth Social asking for compensation. This was just in the last hour. I see, he writes, that representatives of the Islamic Republic of Iran are asking for compensation for the damage done to them during the last 5 months of military conflict. He goes on to write that it's an interesting idea because now I am likewise demanding compensation from Iran for all of the people they have killed and gravely wounded with the roadside bombs and many conflicts for which they are famous, as led initially by General Soleimani. There's more where that came from, with Bloomberg News now reporting that the president has extended a waiver allowing foreign ships to transport oil and other commodities around the U.S. for 90 more days, albeit with new limits. This, of course, with an eye on energy prices. And before we have our conversation with Congresswoman Susan Del Bene, we're lucky to have Josh Wingrove on the North Lawn of the White House right now, Bloomberg White House correspondent Josh Wingrove with us live. Josh, it's interesting to hear the president's evolving posture 1 week after we threatened total obliteration. Now we are low-keying it. What does he mean by that?
The beholder, I guess. The goalposts keep moving. Whether they're still on the field or in the stadium is not entirely clear, but the president seems to be reacting to what he thinks was a goalpost shift on the part of the Iranians by seeking these damages, and so he's meeting them tit for tat on that. As you noted, Joe, people are reading into his low-keying it comment as a bit of a shift potentially, because that suggests he's comfortable with the status quo as opposed to preparing to sort of pivot back to this threatened massive attack on some part of Iran that has either been only partially or not attacked until now. And so it is sort of just tea leaf reading at this point. The president's events today are not public, although he's got an EO signing. Those have a track record of opening. So maybe in the 2 p.m. hour, we'll still have a chance to hear from him. That is after his scheduled swearing in, of course, of his new attorney general. But Vice President Vance, of course, saying over the weekend that we're still in the middle of the game on this. And I think that is basically just the operative MO right now. We just do not know how much time is left, when these sides will reach to some sort of status quo agreement. The U.S. has sort of remained opaque on what current traffic levels are in the Strait. Remember, of course, a couple of weeks ago they were bragging that more ships were getting through under the cover of night and American protection than Iran cared to admit. And that, of course, will be a pain point on it. So continuing to watch this one. Gas prices, of course, remain high here in the U.S. Republicans will not be very comfortable with that if that continues to be the case for the coming weeks as the midterm talk continues to ramp up.
We're right at $4 a gallon nationally today, Josh, and likely going to move higher based on the increase we're seeing in crude today. It's interesting timing, the low-keying it following an extended conversation about munitions, our stockpiles, particularly of long-range weapons like our ATACMS supply has apparently dwindled to almost nothing. There's a Defense Department memo that was obtained by the Washington Post that shows the Deputy Defense Secretary writing to defense contractors, giving them 21 days to submit plans to drive significantly faster and deliver weapons more quickly here. To what extent, Josh, and I don't know if you can even weigh in on this, are strategic decisions being based on munitions levels?
I don't think anyone knows publicly, but there's been this weird dichotomy, right, where there's been all this reporting that to at least some extent concerns are starting to grow around U.S. stockpiles, not only what they have for themselves, but the line of allies and other like-minded nations that are waiting for certain supplies of their own, and that line's order keeps shifting, it seems, from month to month. The U.S. has been pushing back on this publicly, Trump saying we've got more weapons than we know what to do with. There's just not a lot of evidence to really support whether that's the case, but also going so far as to accuse the outlets that are saying this of treason, essentially, and threaten to go after them for reporting it. And so it has really muddied the waters, but I guess it's the position of the administration that these leakers need to be prosecuted, but that the information they're leaking is inaccurate, which of course doesn't really square very easily. But there are a lot of signs that there are at least some ongoing concerns around the pace at which America produces these weapons, not only for itself, but for its allies. And I think we're just going to continue to be in that. Whether that is forcing Trump's hand or influencing Trump's hand in any way in Iran, no one can say right now.
Just a minute left. Josh, you mentioned Todd Blanche, the president's new attorney general, now acting, will be sworn in for the full permanent position today. Do we know what happens to Bill Pulte, the man who's been keeping the chair warm for DNI and was floated at one point to be installed as an acting AG if they couldn't get this confirmation process through?
Bill Pulte is back at FHFA. In fact, never left it. Now that his DNI is confirmed, he's back to that original role. Remember, there's been an ongoing question, Joe, as to when or if the administration will seek to do some sort of public offering of Fannie and Freddie. Yeah. I think now that Pulte's back in that full time, that question is certainly, in my mind, coming back up to speed. Mortgage rates, of course, are at or near the highest level they've been in the Trump administration. That's a huge affordability question for this administration. So I think the question is, what, if anything, they'll do on the housing file now that he's back to only wearing one hat.
Great to have him back on the North Lawn. Josh Wingrove, thank you, my friend, as always. Bloomberg White House correspondent. Never low-keying it, God knows. And we'll have more on the war with Iran and the lack of negotiations when we talk to Bernard Hakel from Princeton University a little bit later on this hour. We focus now on the drive to the midterms. If you haven't heard me say it today, 85 days left, knowing that Democrats are seizing on unity coming off of a bruising primary for the Senate race in Michigan. This was all the talk at the end of last week. Unity breakfasts, unity events, after Abdul El-Sayed beat Congresswoman Haley Stevens in the march to get the nomination for the Democrats' in the United States Senate race in Michigan. We actually heard from Haley Stevens over the weekend. She showed up on the weekend show to talk about getting back on course. Here's what she said.
I get why you're asking the question, but one person doesn't define the Democratic Party. We are a big group. The Republicans are a big group, and then there's this independent chunk that just kind of swings. And we got to, honestly, at the end of my primary, I was saying, no American is my enemy. And I got my first bill signed for early childhood education in science, technology, engineering, and mathematics. Christmas Eve 2019, signed by Trump. A week after the first impeachment, he still signed it. Hey, that's America, baby.
That's America, baby. Haley, I haven't talked to Haley Stevens in a while, and I was very pleased to see her back on Bloomberg over the weekend. It's where we start our conversation with Susan DelBene, whose job is to get Democrats elected to the House. The Congresswoman, of course, from Washington, is also chair of the Democratic Congressional Campaign Committee and joins us now live on Bloomberg TV and radio. Madam Chair, it's great to see you. Welcome back to Balance of Power. I'd like to start there with this argument between, I guess, the progressive wing of the party, dare I say socialist, and the more mainstream or more moderate Democrats, as I think you might describe Haley Stevens. I saw a notice report out there today that the Democrats' re-election strategy is to be normal. What does that mean?
Well, I think our strategy is to talk about the issues that matter with people on the ground, understand the challenges that they are facing. And right now, number one issue across the country is people are struggling to get by. Housing, food, healthcare, childcare, energy costs, gas prices, all skyrocketing because of actions taken by this administration and Republicans in Congress. And having candidates who understand that, who are connected to their communities, that's how we win. The path to the majority in the House is through these swing districts, these purple districts across the country. And I think it's also important to remember there are no cookie cutter candidates. It's having folks who are closely connected to their communities and who are going to DC to actually represent their communities, not be a rubber stamp for Donald Trump. So if you look at our candidates, it's farmers, ministers, veterans, mayors, even a award-winning musician, folks who have differing backgrounds but share their desire to represent their communities and to stand up for them in Washington, D.C.
Well, I've found this whole conversation very interesting. And I remember when, Republicans were talking about a big tent when the Tea Party movement was taking place. And I'm wondering how you're seeing this. Shouldn't the passion and the energy around a candidate like Abdul El-Sayed, whether you wanted him to win or not, be a good thing for Democrats in the sort of net when you look at involvement, turnout, what actually gets people off the couch to pull the lever on behalf of Democrats? Is that how you see this, or is it distracting from your message?
No, people want candidates who are going to stand up for them, who are going to fight for them, who understand and empathize with the challenges that they face and are speaking about these issues directly. And of course, my focus is on the House of Representatives and taking back the gavels in the House of Representatives. And you look at our map, it is these purple districts across the country that are our path to the majority. And that's why I said there are no rubber stamp, folks out there who are running on our side. They're running to serve their communities, and they are uniquely connected to their communities and pulling people together. And, they have to have crossover appeal in these swing districts to win. And those are exactly what our candidates are like. And they have earned the support of a diverse community across their districts.
One of the issues that's been bubbling up for populists on both sides of the aisle, Congresswoman, you don't need me to tell you, is data centers and then more largely AI. And it's interesting to see this letter signed or led off by the chair of the Progressive Caucus in the House to Speaker Johnson, demanding an audience with major CEOs of AI companies. There are quite a few folks who signed off on this to get the Amadeus and Altmans here to Washington to testify. Bernie Sanders is out with his own letter. I know that's not your chamber, but you didn't sign off on this, and I'm wondering if you share their concerns, how important this will be for elections in November.
Well, we absolutely should be bringing folks in. We should be having the discussions about what's happening out there. Congress is behind on putting in policy regulations to make sure that we are keeping up with the way the world works today and keeping up on making sure that we're protecting consumers and communities. So absolutely, we should be having discussions about what's happening, what people are going to do differently. But also we need to make sure that Congress is doing its part. I think we're behind on putting policies in place like consumer data privacy. We still don't have a federal consumer data privacy law, and we still don't have policies in place making sure that consumers and communities are protected. Data centers, making sure that local communities aren't impacted with energy prices, that consumers aren't paying utility prices for these for data centers, to make sure that we aren't losing farmland, rural communities are negatively impacted. These are all things we need to be having discussions about, that local communities need to be having a say on, but we also need federal policies in place. And we are woefully behind.
It's not lost on us that you were an executive at Microsoft for some time before you entered politics. You were no stranger to high tech. Do you feel like this technology is one that's moving too quickly, is one that needs guardrails?
Well, absolutely, we need to have guardrails in place. And I'd say it's critically important that we have a Congress that is putting policies in place, learning what's working and not working, and continuing to adapt and move forward. That's part of our job. And when we have leadership like we do now in Congress with Mike Johnson, who is only interested in doing whatever Donald Trump tells him to do, we have a Congress that's not standing up and doing its job in terms of the oversight and policy making that we need to be doing for our communities. That's another huge reason why we need to take back the House, because we are behind, and the longer we wait, the further behind we get.
Just got a minute left, Congresswoman. I see you're out with 12 new targets, and we talked about it last week when you updated your battle map, your battlefield for 2026. 12 new offensive targets, including French Hill and Mike Flood. Are these realistic seats you plan to flip, or is this getting to be a wish list when you include the chairman of the House Financial Services Committee?
Well, I think it's reflective of what we're seeing happening across the country. We have 58 districts across the country that we have opportunity, where we're on offense, where we have opportunities to take back the House. And yes, some of these are districts that were Trump plus 11, Trump plus 15, even higher than that. And it really reflects how people are reacting to the broken promises of Republicans. They have all become a rubber stamp for Donald Trump. They are not interested in serving the communities. We are an independent branch of government. We need folks who are going to run to step up for them, and in every part of the country, even in these traditionally red
Susan
districts.
Del Bene with us live on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Little change now on the S&P 500 index, down under 0.1%. But the Dow, the S&P, NASDAQ 100 index, and yes, Russell 2000 index, they are all in the red. S&P retreating from Friday's record. Right now, it is down 3 points. The index down under 0.1%. If there is a reversal, any advance today will be another record on the S&P. So currently holding close to a record at 77.53. The Dow now below 54,000, 53,896. Dow Industrials down 141 points, a drop there of 0.3%. NASDAQ Composite Index also down 0.3%. The Bloomberg Mag 7 Index down 0.1%, with a VIX, Wall Street's fear gauge, holding just above 15. 2-year at 4.23%, the 10-year 4.70%. Gold, meanwhile, up $17 the ounce, up by about 0.4%. Spot gold currently trading at $43.59 the ounce. West Texas Intermediate crude now up by 4.3%. WTI 81.54 a barrel. Barrel of Brent 87.13, up by 4.3%. Shares of Apple are trading lower right now. Apple has been downgraded to an underperform rating at Jefferies due to concerns about the outlook for the company's iPhone. Apple shares today now lower by 2.1%. Recapping, stocks lower, oil higher. West Texas Intermediate crude up 4.3%. S&P down under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, we appreciate it as always. Charlie Pellet will return with more on the markets in about 20 minutes' time here. Big part of our program every day, live from Washington. This is the Monday edition, and glad you joined us. You know what is moving higher? Cyber stocks. Both CrowdStrike and Palo Alto are up over 5% each as OpenAI, I should say, takes to Twitter to write, "We're expanding our cybersecurity initiative Daybreak and introducing GPT-5.6 Cyber, a new model for advanced authorized cybersecurity work." OpenAI writes, "As the threat landscape evolves, we're putting frontier intelligence in the hands of trusted defenders before attackers can deploy offensive AI at scale." Interesting timing here as the letters fly in Washington. I'm not even sure which one to start off with. Mark Zuckerberg seemed to get most of the juice in coverage this morning with a 6,500-word manifesto headlined, "The Future is for Everyone." Subhead, "The Path to a Positive AI Future," calling this an incredible moment in history. The use of superintelligence beyond human capacity to create and discover extraordinary new things, build new businesses, express new ideas, learn new concepts, and advance our health and quality of life. He's very careful to point to what he sees as the threats of regulation and a clearinghouse, if you will. Centralization, he says, that he's personally more worried about than any of the specific risks that others are talking about. The idea of a clearinghouse in Washington becoming the arbiter of AI models. Not going to work, he says. Distribute widely and unleash open source AI. Now, on the other side of this are largely Democratic lawmakers, beginning with Bernie Sanders, out with a letter to Mark Zuckerberg, along with Sam Altman and Dario Amodei. He sees this very differently. "In the interest of humanity," Sanders writes, "stand by your words, pause AI development. It is not too late to avoid disaster. Stop building machines humans cannot control." He goes on to say, "Let me be very clear. If you do not take appropriate action now, my colleagues and I in the U.S. Senate will." There's also a letter that I just talked to Susan Del Bene about from House Democrats, a group of them signing off on a letter to Speaker Mike Johnson, saying Congress has so far completely failed to respond to the threats posed by AI development, and they are calling on the CEOs of the big AI developers to come to Washington to testify, referring to the recent incidents that OpenAI and Anthropic have talked about, where we saw AI models hack other computer systems without direction. Hugging Face, the most recent one. calling these incidents serious, cautioning they may be the canary in the coal mine, warning of much more serious problems if these models continue to advance without regulation. But this is Washington right now, where we can't even pass a budget. And you've got a White House that is, of course, very gung-ho about AI and, in fact, investing in its future. So the political side of this remains gray at best, and our political panel is with us to talk about it. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano join us on this Monday edition. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist and partner at Stone Court Capital. What's your thought on this, Rick, as someone who works with a lot of corporate leaders and, of course, politics? Will Washington get its arms around regulation, a la Bernie Sanders and these House Democrats? Or is it more important for Mark Zuckerberg to have the ear of the president as he does? Remember, he was in the front row at that UFC fight on the South Lawn, and we know that they talk. Which is the most powerful force?
Well, I would say today, in the construct of what you just asked, it's Donald Trump. He controls the House and the Senate. He controls the White House. And by and large, he has a very compliant Supreme Court. So one man can really direct in the fire of what is or isn't going to be a regulation associated with AI. And of course, he doesn't control the governorships. And there's been activity, certainly within the blue states, to try and find state regulation. But I would remind everybody that it's the AI developers themselves who have been calling for government regulation for some time to create, some of the standards with which they need to be able to manage a incredibly growing, fast-paced market. It's unusual, this latest Zuckerberg initiative with the open source, that he would separate himself from some of the dialogue that the other AI developers have had. So typically, when an industry expands this fast, you depend upon the industry for a certain level of self-regulation. And if you don't get that, then the government steps in. I think we're finding more and more that that's where we are.
Jeannie, I know you heard our conversation with Susan Del Bene. Democrats are not a monolith on this, but progressives do appear to be. Will they get AI CEOs to come testify?
I think it depends on who takes the House in the fall. They may, although, Jensen Huang, invited by Senator Warren, did not appear. There is concern, and I think rightly so, looking at some of our leading educational institutions who sent their presidents as to what could occur when you go to testify. But Joe, while you were talking to Representative Del Bene, I went on AI and I asked it, how many jobs are being lost globally as a result of AI? And it gave me a number, 85 million to 300 million. It brought me to Goldman Sachs, says 300 million full-time jobs lost globally. And I could go on and on, but I will save you that. The point is that these are very, very real concerns that Senator Sanders and that the Democrats in the House are raising, and many Republicans as well, because I'm not the only one who can jump on OpenAI and try to see these things. We simply don't know the impact on all of our lives. And of course, job displacement is just one impact. And that's why we do need a conversation at the very least, as the representative told you, and we do need a serious conversation. The problem is that we have a Congress that can't even, to your point, pass a budget. So I don't know how serious a conversation is going to get on AI, but this is why so many people are responding to the talk of moratoriums and all else, because this is impacting our lives, our communities in almost every single way. It's a visceral reaction people are having. There's rightly concern and fear and little education. And by the way, Mark Zuckerberg cut 10% of his employees as a result of AI in just the last year. That was not something he discussed in this very long missive. So that is a concern, not just our competition with China.
Year of efficiency. Rick, would it behoove Altman, Amadei, Zuckerberg at the top of this letter to actually come appear before a congressional committee and testify? Isn't it in their best interest, to Jeannie's point, to educate people and not lose half the country at this critical moment?
Yeah, I think that educating the country and even educating the members of Congress doesn't necessarily require you to come up to Capitol Hill and sit through a hearing. We all know what these hearings are, right? It's 5 minutes for the member to demagogue the issue, and then, you know, a couple of minutes by whoever's testifying to try and defend themselves, even though they really don't care about what the answer is. And I don't mean to be so sarcastic about it, but that's what it's become. And Jeannie pointed to the, you know, hearings with the presidents of the universities, which I think a tongue lashing they sorely deserved. But at the end of the day, it's become a performative art form in Washington to hold hearings on things like this. What we need is real action on the part of Republican leadership and Democratic leadership to come together, making it nonpartisan in an effort to try and be prepared for the change that is coming. When you read and listen to Eric Schmidt about the oncoming super intelligence and the profound changes that'll happen worldwide, it doesn't just have to be about job loss. You're going to have to be ready for it. Right. And the one thing he points out is Congress, the White House, nobody is really prepared for it.
Wait, you know, Jeannie, I just wonder how this became such a partisan issue. And I wonder if it would be if the administration had not aligned itself so quickly and in such a full-throated manner with AI executives, with the companies actually taking stake in a chip maker in Intel for the betterment of the industry, showing up with Sam Altman, remember, to announce the data center project. That was very early on in this administration. And of course, we've seen the president invested in stocks like NVIDIA, where he's made a lot of money like a lot of Americans had. But if this was a different White House, would this be a D versus R issue, or is the Democratic value set simply one that would run counter to the idea of data centers and billionaires enriching themselves with AI?
No, I think this is truly bipartisan. I mean, you look at the governor of Texas. He's been talking about this. Many Republicans, whether they are in Congress or at the state level or voters, are very concerned about this, because I mentioned job loss, but to Rick's point, it's not just job loss. It's these AI systems going rogue. It's bioweapons creation. It's safety issues. Let's not forget, Jeff Bezos' Amazon warehouses are the most automated in the world, many people say, and 3 times more likely you are as a worker to get injured there than you are in less automated systems. These are very real concerns on top of job loss. And Joe, let's not forget, what about pension loss? There's a lot of people who believe this is a bubble. We're at an investment of 1.4 trillion in these things. They're making about 50 billion now. That's not going to be a money winner. So are we going to see a bubble and then we lose both our jobs and our pension? These are real concerns, and they don't just impact Democrats.
Somebody cue the robot anchor. I've got a missing seat over here. Jeannie and Rick, thank you so much. Our great panel with Bloomberg Politics contributors Rick Davis and Jeannie Shanzano. We turn back to the war with Iran and the oil markets next, only here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all in the red. Oil is advancing, but the S&P right now retreating from Friday's record, down 5 points, little change, down under 0.1%, 77.54 right now on the S&P. Dow Industrials down 148 for the Dow, a decline there of 0.3%. NASDAQ down 95 for the NASDAQ Composite Index, down 0.4%. The Bloomberg Mag 7 Index trading lower by 0.2%. All of this with the SOX now down by 2%. Philadelphia's Semiconductor Stock Index. The VIX, Wall Street's fear gauge, holding just above 15. The 2-year, 4.23%, with the 10-year, 4.69%, and the 30-year, 5.24%. We've got gold, spot gold up $21 the ounce now to $43.62. That is a gain of 0.5%. I mentioned the move in crude. WTI, 81.77 a barrel, up 4.6%. Barrel of Brent, 87.33. Brent crude up by 4.5%. Intel says it will begin offering $15 billion in common stock, taking advantage of renewed interest in its business prospects. During the AI data center boom, Intel says the money will be used for general corporate purposes. Today, we are seeing Intel shares slump by 3.3%. Microsoft, meanwhile, higher by 1.6%. Microsoft says it's planning to significantly increase production of its next-generation AI chips, that according to The Information. Recapping, S&P 500 index trading down by 5 points, down under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, live from New York. Thank you, sir. He'll be back coming up at the top of the hour, 2 p.m. Eastern, as we kick off Bloomberg Business Week Daily, following the Monday trade here after the best week for stocks since April. Of course, oil prices pushing higher, part of the issue today, and keeping a cap, I should say, on some of the enthusiasm with gains of more than 4% for both WTI and Brent. West Texas Intermediate's approaching $82 a barrel now, and Brent has topped $87. As the president's posture on Iran changes, what a difference a week has made in the evolution of both rhetoric and action. It was 1 week ago today the president was just climbing down from his threats to obliterate the country at the request of neighbors in the Middle East. Now he says we are only semi-negotiating with Iran. Remembering a week ago he had said we were on the verge of a breakthrough, 1 to 2 days away from a deal. We are low-keying it, is the quote from the president in an interview with Axios. We are just watching Iran with its huge inflation and the fact that they have no money. As reported by Bloomberg, the White House now signaling it is prepared to let economic pressure build on Iran for an undetermined period of time rather than launch fresh military attacks. Now, that has brought a little bit of a bid to oil prices because we don't know how long this could be, weeks, months, maybe longer, as effectively the new normal, waiting for the squeeze to hurt Iran that much more. Before our conversation with Professor Bernard Haeckel from Princeton University, we bring in Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, with his take on this most recent posture and what it might mean for oil and gas markets going forward. Mike, it's great to have you back on Balance of Power, as always. We're back in the 80s here today. A gallon of gas is at $4. Could this be the new sort of neutral position as we wait for this standoff to develop further?
If it is, then Republicans will have a big hurt probably in the midterm elections. Right now, as you mentioned, we don't know how long this is going to take, but the big squeeze is really obviously happening in Europe. Like European gas oil right now, or it's considered diesel, is near its the highest level ever. So they're really getting squeezed, which still mean to be curtailed demand. But you see the juxtaposition in the U.S. The number one measure of heat electricity in the U.S. natural gas, that January contract, which will be front month right before midterms, has dropped 15% on the year. It's not even pricing for a colder than normal winter. So we have a surplus of gas. We're creating increasing surpluses of crude oil, liquid fuels, yet we're exporting it. I wonder if something like that might change before midterms, because desperation might be kicking in for our leaders.
Fascinating. If we stopped exporting, Mike, what would be the impact on prices?
It would be very discombobulating because a lot of this is flowing around. We're finding out there's a surplus of crude oil liquid fuels in the U.S., but not the refined products like diesel, as you mentioned. Diesel's $5.30. That's near an all-time high. Gasoline's around $4. It's not so bad. But it's the rest of the world will have a problem. The key theme, though, is my theme all along is he'll get prices lower by midterms. We have 3.5 months left. What you heard today is kind of dicey. I don't know how long that can last. But what I'm seeing is those growing surpluses in the U.S. One good example is U.S. natural gas is about 6% above an average storage this time of year. We have ample supplies for winter already, and it's only October. Now,
how about that? Yeah, well, you mentioned diesel. We're at $5.29 here. Gasoline's $4 even. If crude keeps in this area, do they keep rising?
Not necessarily. Generally so, but the cracks are so wide already. Generally, they'll narrow, particularly as we get past post-driving season in natural gas. But diesel has a little more of a heating demand for winter. But I point out natural gas has already done it. It's already dropped a lot. It's not pricing for a cold and normal winter. So this is really the U.S. versus the rest of the world in the war and in prices. And it just shows our surplus of supply, which is going to only increase as we stay above cost of production.
Mike, thank you, as always. Getting us started on the Monday edition with us live from Miami. Mike McGlone at Bloomberg Intelligence. Energy shares are doing well today. Valero, if you keep it tabs on refiners, up over 5%. Exxon and Chevron up over 4% each. The XLE is up 4%. OIH up 5%, following the commodity higher. But as you've seen recently, that can change day to day, and we'll see where we're at tomorrow with the impact on interest rates. Of course, very important. When oil starts rising, so too do interest rates. The 30-year at 5.24 today, up 4 ticks. The 10-year is at 4.7 now, up 0.6%. As we consider the politics at hand, the president has not been speaking so much over the past couple of days, but he has been posting quite a bit. And just a couple of moments ago on Truth Social, with respect to the Iran negotiations, he writes, Iran should be responsible for the damages and death caused to the people of Lebanon, Syria, Yemen, and Gaza. And that follows a post earlier, just in the last couple of hours, in which he points to Iran asking for compensation, he says, for the damage done to them during the last 5-month military conflict, even though it was never mentioned in any of our negotiations or meetings. He says it's an interesting idea because now we are going to do the same, demanding in negotiations compensation from Iran for all the people, he says, that have killed and gravely wounded with their roadside bombs and many conflicts for which they are famous. All this coming after his interview with Axios, in which he referred to the fact that we're semi-negotiating with Tehran. Quote, we are low-keying it, unquote, and that we are waiting for economic pressure to build rather than pursue further military strikes. Bernard Hakel is steeped in the culture and politics of the Middle East, and I'm delighted he can join us at this moment. Princeton University professor of Near Eastern Studies. Professor Hakel, it's great to have you. When the regime in Tehran hears something like, we are low-keying it, how does it interpret language like that?
I mean, frankly, I think that they think President Trump is all over the place and says too many things, and that he is not a good negotiator. Historically, the Iranians are famous for being amazing negotiators, and I think they're ratcheting up the pressure on him by making these huge demands over and above the deal that they say they're almost finalized with Oman on the strait, on passage through the strait. Asking for reparations, asking for full withdrawal of U.S. troops from the region. Making just massive demands of the.
Looks like we may have lost our professor here. We'll try to reconnect with Professor Hakel as we consider what the president has said already. Quote, we are just watching Iran with its huge inflation and the fact that they have no money, unquote, saying that the U.S. naval blockade of the country was deepening the financial pressure. And of course, we know as long as that blockade is there, it's much more difficult for Iran to make money. They cannot start getting oil out of the country by train or pipeline very effectively. They need to keep the strait. That's why they're talking to Oman about creating this new order in which there are multiple lanes of travel through the strait. A negotiation that has not involved the U.S. Now, when you also think about the level of munitions that our country, has been managing, it also makes one wonder what the next moves might be, or maybe justify this last one by the president. As the Deputy Defense Secretary Steve Feinberg wrote to the major defense contractors, they had no more than 21 days to submit plans to drive significantly faster, more aggressive delivery schedules. That's from a memo obtained by the Washington Post. And as we reconnect with Professor Hakel, I wonder, Professor, if you can finish your thought there. And let me add the question. We hear a lot about 47 years. Yeah. How many of those 47 years was Iran preparing for this moment?
Okay, so I apologize for the earlier. I'm in the Middle East. I'm in a bad zone when it comes to the internet.
Right.
I mean, as I was saying, the Iranians are trying to rattle the president, and I think they're doing a pretty good job of doing that. And you know, he has to be much cooler in dealing with them. As far as the Iranians and preparing for this, they have been. They're a revolutionary regime. They've been trying to spread their ideology all over the Middle East, and they were trying to build a nuclear weapon. They thought that a nuclear weapon was really the way to create deterrence and to protect their regime and its survival. They've discovered that actually controlling Hormuz is much more effective.
It's an interesting way of putting it here, that this waterway is more powerful in influencing the United States than the threat of a nuclear weapon. That said, why would Iran ever give this up? Why would it ever make a deal with the United States?
I think it also wants to sell oil, so it wants to find some sort of agreement on the reopening of Hormuz. But what it wants to do is toll it. I mean, it wants to generate revenue, and it wants to dominate and control its neighbors, and countries like Saudi Arabia, Kuwait, and so on. And this is one possible outcome of this war that has to be absolutely stopped. I mean, the Iranians cannot control this region completely, because they would have literally the entire world over a barrel. They would be able to control the global economy through oil and gas.
The world over a barrel. Someone's got to write that headline. Professor, Benjamin Netanyahu has rejected the plan for Hamas to demilitarize, to disarm, and have Israel withdraw from Gaza. Could there ever be a deal with Iran without this component of peace between Israel and Lebanon?
Well, the Iranians want to actually bring in as many other theaters of war into this deal. They were trying to include Lebanon. They're trying to include Israel and Gaza. They're trying to include Yemen and Bab el-Mandeb, which is another theater of operation that may heat up very soon, and that would block the passage of oil and other ships through the Red Sea. So the Iranians want to do this, and they have to be denied this. These are separate theaters of operation, especially in Lebanon, where they control the country through a militia, one of these proxy militias that they've developed. And they have them in Iraq and Lebanon and Yemen and amongst the Palestinians. I think what Netanyahu's trying to do is also try to tell President Trump, but mainly for electoral reasons, because he's up for elections later this fall, and Benjamin Netanyahu, the Prime Minister of Israel, and he doesn't want to, basically concede anything to Hamas, because if he does, he looks weak, and that's not good for electoral support.
Yeah, right. So what is this phase that we're entering here, Professor, as the president refers to? We're low-keying it, semi-negotiations. Do we just churn like this for weeks or months at a time?
It's possible. No war, no peace. And, everyone at the beginning of this war was predicting a barrel of oil at 150 to 200 because of the major disruption that Hormuz represented. It turns out that didn't happen, partly because the U.S. is such a major producer now, also because the Saudis and the Emiratis were able to ship some of their oil through their pipelines away from Hormuz, away from the Persian Gulf, and also because the Chinese played a big role in decreasing their demand for imports. Mm-hmm. So all of that combination led to a spike not happening. Now, the big question, I think, is going into the end of the summer and into the fall, if this continues, will we see a spike? Or will, U.S. production and Chinese behavior and the Red Sea remain open so that we don't see a spike? And I think that's really the big question that remains unanswered.
Some very important questions indeed. Professor, thank you. We'd like to stay in touch with you to find answers to these questions. Bernard Hakel is the Princeton University Professor of Near Eastern Studies, and we appreciate your time here on Bloomberg TV and radio. Watching Wall Street, we're slightly negative. The S&P 500 is down 7 points, coming off last week's nice 3.5% bounce, and oil persistently higher. WTI and Brent up more than 4.5% each. This is Bloomberg.
Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody, live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week Daily on this Monday, August 10th, 2026. I'm Tim Stenivek. I'm here with Nora Melinda. She's Bloomberg TV Markets correspondent. Carol Masser is off today. And Nora, we are glad to have you on this summer Monday. How are you?
Happy to be here. I'm doing well.
Well, we're happy to have you. Markets-wise, kind of a chill day. oil market notwithstanding. Oil's a little bit higher. Stocks are wavering. We're all waiting for a key inflation print, two prints later this week. Mike McKee is going to be here in just a second to break down all that. And Charlie Pellet's going to give us an update on everything happening in the markets. We also are squarely focused on everything out of the Middle East and really how that affects inflation. Chris Kennedy is going to be coming by. He's economic statecraft lead for Bloomberg Economics. Also, a check on a couple different companies, publicly traded companies. We got a great duo of CEOs.
We do. We have quite a few coming through. One of them that I want to call out, the CEO of Grindr, is back with us just days after the company upped its forecast for revenue and adjusted EBITDA. And then separate to that, we have U.S. Antimony's Gary Evans stopping by, and just after his visit to the White House on Friday.
All right, looking forward to that conversation a little later this hour. It is a packed hour right here on Bloomberg Business Week Daily. First up, a check of the day's trade and top business stories. Here he is, Charlie.
All right, I thank you very much, Nora and Tim. We have got the Dow, the S&P, NASDAQ. We're all trading lower. Back to work Monday. S&P 500 index, little change, perhaps the key takeaway. Holding very close to a record, but we are looking at a decline right now. If we do turn around, if there is an advance, any move higher today will be another record on the S&P. But here's where we stand now. We're at 77.51 on that index, down now by 6 points, a drop there of under 0.1%. Dow Industrials down 130 on the Dow, a decline there of 0.2%. NASDAQ Composite Index down 0.4%. The NASDAQ 100 Index down 0.3%. All of this with the SOX, the Philadelphia Stock Exchange's Semiconductor Index down 2%. And the VIX right around 15 now. Your 2-year at 4.23%. The 10-year 4.69%. Gold is at $43.62 the ounce, up 0.5%. And West Texas Intermediate Crude 81.94 barrel, up 4.8%. Keeps advancing. We will have more on the crude oil picture coming up here on Bloomberg Business Week Daily. In the meantime, Brent, the global benchmark, 87.53 now, up by about 4.8%. Sources tell Bloomberg a group of U.S. investment giants are nearing a partnership with NVIDIA on $500 billion in funding for the build-out of AI infrastructure. Those sources say Apollo Global Management, Blackstone, BlackRock, Brookfield Asset Management, Goldman Sachs, and KKR are among the firms in talks with NVIDIA on this investment. A formal announcement could come today. NVIDIA shares right now, they're down by 2.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Tim and Nora, that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Our Bloomberg Economics team out this morning writing that the surprisingly weak July jobs report may have knocked down market bets on a Fed rate hike in September. Futures, though, indicate a move could still be on the table. We got market and policymaker discourse over the next move that the Fed is going to make. It's really split right now. There are a couple different camps. One believes the central bank needs to assert its commitment to price stability by hiking in September, particularly to recover some of Kevin Warsh's inflation-fighting credibility. Another camp thinks that price gains are on the way down, and the Fed is correct to stay the current course. For more, we're joined by Michael McKee, Bloomberg TV and Radio international economics and policy correspondent. He joins us here in the Bloomberg Business Week studio. So, Mike, which camp is right?
The one that wins?
I thought you were going to say, I had my money on you saying yes.
Oh, okay. Yes. It's very hard to figure out where we are and where we're going. There's so many confusing crosswinds at this point that either side could turn out to be correct, and that's going to be the tough thing for the Fed, is making a decision on what you do, because there's good arguments on both sides. They're roughly evenly split right now between those who think we probably need a rate increase or very likely could if inflation data that we get this weekend later on continues to show inflation hanging around, and then others who think that they are tight enough right now, that'll do the job, and if we just sit back and wait out the war, I guess, we'll see inflation continue to come down. So it's tough, but they do have till September 16th.
Well, I think the waiting out the war part is difficult, because waiting it out is, we have no idea what the timeline on this will be. And I mean, I would imagine if you were to go back in February and talk to President Trump, or maybe early March, he would have said, we're not going to be talking about a war in August.
Well, the president has to hope we're not talking about a war in October, November, which we very well could be the way things are going now. And the thing to keep in mind is that while oil prices go up and down quickly, gasoline prices go up quickly and down slowly. I was looking today, and when we had the memorandum of understanding in June and oil prices fell rapidly, gasoline prices only went down to $3.80 for their low. So that would still make Americans unhappy, I think, at that level. So you can't really assume what's going to happen as far as prices and affordability.
Well, outside of what's going on in the Middle East and the impact on oil markets, what do you see to be the stickiest part of inflation right now? We've got CPI, PPI coming up later this week. What exactly will we have to see for a hike to be set on the table?
Well, different things in different indexes, but the CPI, what worries the people who want to raise rates is that service prices outside of housing have been relatively sticky, and we are not seeing a quick drop there. So they're going to be looking at that. Remember when we used to do the Supercore Index, and that's going to come back, make a comeback. Everybody's going to be looking at that on Wednesday when they get CPI. But PPI has quirks, and there's going to be some interesting quirks in that to watch. We'll be looking at commodities other than energy, but also what's been going on Wall Street with fund management, because the fund managers, as the banks all told us, made a ton of money in the most recent quarter because they get paid either way. And so that could be a sort of wild card that comes out of PPI and gets put into the PCE, which is the Fed's target index. So there's some things out there to keep an eye on.
I want to just go back to something that you said, Mike, and it was the idea that the president hopes he's not talking about the war in October and November. And it got me thinking, as you were listing off all the acronyms this week of CPI and PPI, that the general American citizen doesn't really care about those numbers. What they care about is when they go to the grocery store, how much, a dozen eggs are, how much a pound of ground beef or a steak is, or, a pound of chicken, those sorts of things. Is any relief coming there?
Not in the near term. You don't see prices go back down again, except for a few commodities. You might see bananas go down if they're cheaper, but what you have to have is a long series of very low inflation and people's incomes going up at the same time, so that they're outpacing inflation, and they remember that steak is $25. Now, meats could come down because as time goes on.
That's not an exaggeration, by the way.
No, that's not an
Quite high.
exaggeration.
Yeah.
And so it's a psychological question for most Americans, because they're looking at the level of prices as opposed to the change. And you need a lot of change to make sure the level doesn't keep going up.
Well, how are you thinking about the job market right now? I mean, I think we've been spending a lot of time talking about the fact that a lot of consumers are tightening their wallets, but we are still seeing them holding up in other areas of spending. So how are you thinking about the broader health right now of the labor market?
Right now, it seems to be relatively steady, and the Fed will tell you that. You look at the unemployment rate, and it is 4.1%. It's near historic lows, and that just tells you that there aren't a lot of people who have been losing jobs and can't find jobs, and therefore are cutting back on their spending. So in that sense, the economy is in relatively good shape. Now, we're not adding a lot of jobs, and we're not seeing average hourly earnings continue to increase. So those are not good things. But compared to where inflation is, the Fed has decided to focus on that rather than those things, especially like average hourly earnings, that they can't affect.
So, Mike, just about an hour ago, we got some news out of Washington that the president has extended a waiver allowing foreign ships to transport oil and other commodities around the U.S. for 90 more days. There's new limits on this, though. We're talking about the Jones Act. And then narrowing of the waiver of the shipping mandates with the Jones Act. This as a result of the war disrupting crude flows and hiking fuel costs. Can you give us a little maritime history lesson with the Jones Act?
Yeah, this is something that comes up every so often, every 10 or 15 years, and people always say this is a terrible piece of legislation, and then they don't do anything about it. 1920 Maritime Act basically required any shipborne transport between two U.S. ports has to be on a ship that is built in the United States, owned by U.S. citizens, flagged in the United States, and crewed by Americans.
It sounds like it could have been written by President Trump.
Yes, there aren't that many ships that meet that criteria, because all those criteria drive up the cost. And so what happens is all the ship owners go over to some other country and flag their tankers or whatever. And so that raises the cost of transporting things inside the United States. So with the war driving up costs, especially for not just energy, but other commodities, the president had waived the Jones Act and said anybody can transport this stuff, which had a minor effect on the cost of energy and gasoline. And now he's renewed it for 90 days, but he's taken some of the commodities that were covered on it out. There are a lot of people who, every time this comes up, say, this is a great opportunity to get rid of the Jones Act forever, but they never do it. So I would assume that this will probably expire at some point and the Jones Act will remain.
But I mean, when you think about the Jones Act waiver, how much can it actually do to relieve pressure when we think about energy prices? Are you hearing anything, or what's the thought there?
Well, it's a little bit more downstream because we don't transport a lot of our crude oil from port to port that we mine here or bring up here. But we do transport things like gasoline and jet fuel and things like that. So in the refined products area, it can have an impact because the shipping costs are going to be lower. And that adds a lot, especially when you consider that the shippers have to pay more for their fuel. So it's a good news thing on the margins for what's going on.
We're speaking with Michael McKee, Bloomberg TV and Radio International Economics and Policy Correspondent. He joins us here in the Bloomberg News Bureau. Mike, it's about that time to start finding the hat box and getting ready for Jackson Hole.
Yep.
It's also time for us to start talking about what Federal Reserve Chair Kevin Warsh might do at Jackson Hole. Can you just, the short history that I have is really Chairman Powell there and the way that he's used the event as a way to communicate what his Federal Reserve thinks, not just about the economy, but also in recent years, he was responsible a few years ago for a huge surge in stock prices as a result of his commentary there. At this point, do we have any idea what Chairman Warsh will say, what he will use this as an opportunity to communicate, anything like that?
We have rough ideas because he talked about it at the news conference. You're right that Chair Powell has occasionally used that opportunity, but it goes back to Ben Bernanke, the great financial crisis, when he came out and announced for the first time QE would be something the Fed was going to do in 2009. And then in 2010, he made the next QE as part of his speech. And that became focus then for Wall Street because, the Fed chairman goes to Jackson Hole and tells us what's going to happen. Well, this Fed chairman doesn't want to tell you what's going to happen. So I don't think we're going to get a speech like that. But I think because of the questions about Fed credibility that have come up recently, it will go beyond what is usually the other type of speech Fed chairs give, which is just something about the background of the topic they're discussing, which this year is payment systems, which would be a major snooze for most people. And I think he will outline the changes that he wants to make, why he wants to make them, and give some more grounding in what he thinks he can accomplish with the task forces. So try to build his own credibility by making a case for the things that he's trying to do.
Okay. I'm into payment systems.
Yeah.
I can get excited about that.
Yeah.
Okay. We do it all with Mike McKee. He does it all. We talk Jones Act. We talk Jackson Hole as well. Michael McKee, Bloomberg TV and Radio International Economics and Policy Correspondent. As Mike mentioned, energy prices front and center in the inflation story, and that brings us to the latest out of Iran. For more, we're joined by Chris Kennedy, Economic Statecraft Lead for Bloomberg Economics. He joins us from Washington, D.C. Chris, we do check in with you. I was going to say periodically, but it's becoming more and more frequently to try to understand what you and the team are seeing out of the region right now. Over the weekend, did we hear anything from the president that would indicate that peace is anywhere close to being on the horizon?
Not really. We did hear that the president is taking a more low-key approach to the Iran war, so that would suggest maybe fewer strikes in the immediate future. Not entirely surprising given the news that we have about the challenge of depleted U.S. stockpiles of both offensive and defensive munitions, but nothing really giving us too much indication on when this conflict might end.
Well, Chris, when we think about talks between the U.S. and Iran that we know have been continuing, how much leverage does the U.S. actually have in these conversations?
So, not much at the moment. Of course, the U.S. is still a superior military power. But we've seen that the U.S. has been unable to prevent Iran from successfully striking tankers as they attempt to transit the Strait of Hormuz outside of Iran's claimed authority. At the same time, the U.S. has been putting strong economic pressure on Iran, not just during this conflict, but for decades. And I find it hard to envision a scenario where increased U.S. sanctions pressure is really going to bring Iran back to the table in the near term. There is perhaps one exception to that, and that is if the U.S. got really tough with China, which is, of course, an ally of Iran. But, we have an upcoming bilap between President Xi Jinping and Donald Trump. And we expect on our team that the U.S. and China both want to avoid any escalation. And so it's a really difficult position for Washington at the moment.
Well, so I'm glad you brought that up, because that was the first thing that I thought of when I saw the headline earlier that President Trump was saying that he's going to let economic pressure on Iran build rather than launch fresh military strikes. Apart from China, is there anything else that the U.S. could do or allies could do to weaken Iran's economic position that hasn't been tried over the last few decades?
Well, of course, Russia is another ally of Iran. It's hard to see how increased economic pressure on Russia, though, would do anything as well. So, it's possible there could be some creative tool that we haven't seen yet. But, the U.S. has really been doing this max pressure for a while. The pressure is as high as it's ever been at the moment. At some point, something might give in the Iranian economy, and you might see some mass civil mobilization against the regime. That's very unpredictable, and it's hard to see right now that the country is headed in that trajectory.
Just quickly, what are you monitoring to get a sense of what might come next?
Yeah, so I've been watching very closely and more interested in the sorts of levers that might bring Washington back to the table. So right now, global benchmark crude prices are relatively low compared to where they were at various other points during this conflict. Pressure on U.S. stockpiles of both crude and products was somewhat relieved after the MOU period, which allowed this glut of crude and products to get out to the global market. That's increasing again. We saw the U.S. Strategic Petroleum Reserve drawdown numbers today. It's crept up a little bit, and I'm going to continue watching those numbers on Wednesday when we get additional data from DOE.
Chris Kennedy watching it all down in Washington, D.C. He's Bloomberg economic statecraft lead, joining us from the nation's capital. Coming up next, the CEO of Grindr joins us, George Erickson. That's next on Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that the White House plans an order splitting the measles, mumps, and rubella shots. President Trump is expected to sign that executive order as soon as today. Stocks are lower. We've got the S&P 500 index fluctuating after a record-breaking run. You run the GIP screen right now, and you can see that we're close to session lows. The S&P retreating from Friday's record now at 77.49, a drop right now of just about 0.1%. Dow Industrials are down 163 on the Dow. That is a drop of 0.3%, while NASDAQ is down 116. The NASDAQ Composite Index down 0.4%. NASDAQ 100 Index down 0.3%, and the Bloomberg Mag 7 Index down 0.3%. All of this with the stocks, the Philadelphia Stock Exchange Semiconductor Index down 1.9%, and the VIX, Wall Street's fear gauge, holding just above 15. The 2-year, 4.23%, the 10-year, ahead of the CPI report Wednesday, 4.69%, the 30-year, 5.24%. Spot gold, meanwhile, up $21 the ounce. Gold, spot gold at 43.63, up 0.5%. Major move for crude continues to advance. Been up just about every single update. Right now, it is advancing by 5.3%. WTI, 82.32 a barrel. Brent crude, 87.89. It is up by 5.2%. All of this as traders, oil traders, and investors assess situations in the Middle East. Again, S&P 500 index down 0.1%. Apple shares are trading lower. We've got Apple down now by 2%. Apple downgraded to an underperform rating at Jefferies due to concerns about the outlook for the company's iPhone. Recapping, S&P down 8, drop there of 0.1% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. Nora and Tim, that is a Bloomberg Business Flash.
Thank you, Charlie. Well, shares of the LGBTQ dating app Grindr fell on Friday after the company's improved full-year revenue forecast still trailed the average analyst estimate. The company said it now expects full-year revenue to be about $540 million, up from the $535 million, and adjusted EBITDA of about $232 million, up from $227 million. It also said it expects to finish the year with, quote, meaningfully fewer employees than we had originally planned. We've got George Arison with us, the CEO of Grindr. He joins us here in the Bloomberg Business Week studio. Hey, George, welcome back. You're about 5 months into the debut of some of these new AI features, some of these new subscription tiers that you're testing out. Can you just update us on how that's going?
So the tests are going really well. The product features are quite popular with users, and they work really well. The product itself is very tested. We're now trying to figure out what the price should be. We've never launched anything at this price point before. That's very premium focused. Small number of users will ever use this product. And so we've been iterating on what's the best way to position the product and explain it to them.
What are you thinking about right now?
Well, we tested $80 as the baseline price, and that did very well.
Annually?
No, monthly.
Monthly, wow.
Yeah,
okay.
which is 2x our previous highest price point. We've tested prices all the way up to $375, and there's a broad range of where it might land. We'll see.
That is extremely premium.
Very premium. Yeah. Tell me about the $80 though. What will that entail if I am paying $80 a month? What am I getting out of it?
So historically, Grindr's premium or paid tiers have given you access to more people. You would see more people based on how much you pay. Extra gets you 500 people. Unlimited gets you unlimited number of people. This one gives you a lot more information about the people you see. So on the profile, you have now AI-generated information about a person. We go through all your messages, and we create a short list of people you should be talking to and summaries of all the conversations that you've had with them, which is like a short list of kind of your prime targets. And then we also give you recommendations of people you should engage with based on what we know about you and we know about them. So it's a very different set of features that we have previously.
Yeah, when you're testing out the different price points, what are you noticing about the way that people are, I don't know, the way that they're thinking about the stickiness of it or just how receptive they are to it? I mean, does it change based on location?
Well, this product is more sticky than other things we thought, or than we thought it would be, which is great. On the price point, now obviously there's elasticity between higher the price, less people tried, But there is also some no elasticity at the top because some people just don't care. And I think that's kind of part of this, like how many people do you want in the product versus how much revenue do you want to make from it in total. And for us, we've said publicly this is going to be the driver of revenue growth in 27 and 28. And so it's a balance of finding like what's the highest price point for the total number of users you want to be in the product.
So when you think about the user base and you dig into those individuals that be willing to pay that price, what demographics come up? Are we talking about younger users, older users? Where does it fall?
So Grindr released some demographic data last year in November. 46% of our users are under 29, so in the kind of 18 to 29 age range in the US. And their pay rates are actually quite low. But we like keeping it that way because we want them to have a really awesome experience in the free product. And then as users age, the pay rates increase significantly and kind of peak at that 40 plus age cohort. This product is very much targeted at the older user who
the ones with more money.
Yes, because they have a lot more disposable income. Exactly.
I'm curious about the way that Gen Z is interacting with the app and the way that you've had to make changes to have Gen Z interact with the app.
And we actually haven't changed anything specifically for Gen Z. We have tried to innovate a lot more in the app overall. My general view is that Gen Z actually is totally fine dating online. They just want products to be innovating and creating new features.
In what way, though?
So we added things like albums. We added saving all your messages so they don't get lost from phone to phone, which was a big deal on Grindr. We added ability to send pictures that disappear as soon as they arrive. Just a few examples of kind of what's happened. And I think people, 46% of our users are under 30. That's not even, like Gen Z is even bigger than that, but just that small cohort of Gen Z is 50% of the product. So we have no issues with getting Gen Z onto the product. It's actually, there's a ton of opportunity with the older user base to get them re-engaged with the product versus worrying about, hey, is Gen Z going to be coming to Grindr or not?
So how are you thinking about AI? I mean, when you think about AI, is it something that you believe can meaningfully improve the dating experience, or do you think that too much AI will actually make that dating experience a little bit less lifelike, I should say?
Look, we are a product that aims to connect people digitally so they can then meet in person, right? So we don't want the in-person thing going anywhere. That's ultimately the core of what Grindr is about. That said, density is an issue for all gay people because outside of New York, you don't have enough people to really match with. And if we can do better matches in a broader geography and people are more willing to take a risk on meeting somebody further away because they know a lot more about what that person's about, then I think AI really helps. So I think AI is going to be ultimately a big benefit to products like us. Obviously, there'll be some growing pain along the way because you'll make mistakes and things will happen that people don't expect, but ultimately users get to decide this kind of stuff.
What about AI and coding? This is something you've talked a lot about. You've written a lot about it. You've communicated with investors a lot about it. The thing that struck me in your most recent earnings report last week was your talk about headcount and the way that you said you're going to end this year with, quote, meaningful fewer employees than we had originally planned. Give us the numbers here, the details, and why you're doing that. Is it AI?
Well, AI has been incredible for coding. We have increased our eng productivity by minimum 2.5x, with a team only growing 15%. So it's like an incredible change. Now, I had an example that I got in my Slack this morning where an engineer saw a bug come in while he was walking his dog, told Devin, which is one of the AI coding tools we use, to go look at the bug. Devin looked at the bug, replicated the bug, wrote the code to fix the bug, and sent the engineer a message saying, hey, it's ready to be checked in. Do you want to go release it? All while he was still walking the dog.
And a human being was walking the dog, not a robot
yes,
walking the dog. That's the only part of this equation that's missing. Okay. So does that mean fewer engineers?
Well, I think we just need less people overall in the company. So we haven't fired anybody, but we're going to hire roughly 20 less engineers than we had planned this year because we are getting so much productivity from the team.
Do you think you will fire or have any layoffs?
I don't think so, not because of AI. I mean, we are always performance managing, but not because of AI. But we will grow slower than we would have otherwise.
You've also invested a lot in product development, especially around the release of Edge. So once Edge is actually fully rolled out and driving revenue in 2027, is there room for product development expense to moderate?
Not really, I don't think, because we want to invest in the future, right? I mean, Grindr already has incredible margins. So I think we're going to, I think we're guiding the year to be like, 42.5. So can we be a little bit better than that? Sure, but I'd rather take the savings that we see from less people and actually invested back into the product and into making the product a lot better, because we want this company growing at the pace that it's growing, not just for the next couple of years, but for the next 10.
Can you just help us understand the competitive landscape a little bit? There was some news earlier this year that Match Group invested $100 million in Sniffies. The investment gives them the option to buy a remaining stake in Sniffies. What's the competition that you're seeing from them right now?
We've had a ton of competition always, both from straight products that have gay users and gay-specific products. Sniffies is one. There's another company called Scruff. There's a company called Toomey. There's a bunch of companies. I'm very glad that Sniffies got the deal done that they did. I think our success in the public market really helped Matchboard become more convinced in doing that deal, which is great for the ecosystem, but I don't really worry about competition very much. I focus on what we can do for the users and how to create a great experience.
But does it show you that other products resonate for certain reasons with a specific demographic? Like, does it make you say, okay, well, wait, why is Sniffies working with this group? What can we adopt that they do and bring it into our app?
I think Match tried to build a product for the gay user base themselves, and they failed, and then they decided to try to have an acquisition from somebody else. I think some of the stuff at Sniffies does make sense. Basically, Sniffies as a product started out because Craigslist shut down personals because of concerns around trafficking of people, and Sniffies replicated a lot of what that offered to the more kind of cruising audience, and that's the product that they have, and that there's an audience for that product, and it seems to work really well.
And how are you thinking about market share scale? Do you foresee any acquisitions down the road?
We are certainly open to acquisitions. I think if we do them, they'll probably be more adjacent to us versus specific to the core use case that we now offer, because we're pretty good at that already. But there are definitely areas that we've looked at. Given that we're the biggest player, most things that are for sale come to us one way or the other, and we take a look at them. But things where we think we could, we, for example, know that health is a huge opportunity for scale and growth, and gay men's health is a unique kind of enterprise. And so if there is somebody that we might, benefit from acquiring in that space, we'll be open to that, but we're not really actively pushing anything.
But also, sorry, go ahead, Nora.
What qualities would these companies have to possess?
I think they need to be doing something that we're not doing and have some expertise and, things that we don't yet know that we would otherwise have to figure out one way or the other. We are a pretty lean organization. We kind of call that Grindr mode. We work pretty hard at Grindr. I don't think we're quite, say, Elon level, but we are more hardcore than not. And that's something that I think companies that we might look at would need to share. But again, that's very secondary. Like, we don't have a corp dev team. It's not something we're really in any way focused on. We're focused on the opportunity that we have in front of us and trying to grow that as much as we can.
George, appreciate you joining us here in person. It's good to see you.
Yeah. Thanks for having me.
George Arison, CEO of Grindr. The company's up about 21% so far this year, market cap of around $2.9 billion. Let's take a look at how stocks are looking on this Monday afternoon. The S&P 500 down just about 0.1%. The NASDAQ Composite down 0.4%. The Dow down about 0.3%. In terms of commodities that are moving, well, you got oil a little bit higher. Futures for Brent up another 5% today, 87.82. WTI at 82.28. It's Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word from the White House that Todd Blanche has been officially sworn in as the Attorney General. That word from White House Press Secretary Caroline Leavitt. Colombia, meanwhile, now reporting 111 deaths from the earthquake. That deadly quake hit Colombia this morning, toppling buildings, burying people under rubble, and causing 111 deaths. Now, Colombia's president says the priority right now is getting people out from under the rubble. And President Trump today extended a waiver for 90 days for foreign ships to transport goods, including oil, fertilizers, and other fossil fuel products among U.S. ports. Equities are trading lower. Right now, we've got the S&P 500 index down 8, drop there of 0.1%. This as oil prices surge. West Texas Intermediate crude up more than 5% right now, $82.20 a barrel. Brent, the global benchmark, $87.78, up by 5.1%. Again, the S&P lower, little change, down 0.1%, retreating from Friday's record. If we do see a turnaround, if we do see an advance, that would be another record. Any gain today will be another record on the S&P. Dow now down by 152 points. The industrials down by 0.3%. NASDAQ down 107 for NASDAQ, a drop there of 0.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 1.9%. The 2-year, 4.23%. The 10-year, ahead of the CPI report on Wednesday, 4.69%. Gold now at up $41 the ounce. That is a gain of just about 1%. The precious metal is currently trading spot gold at $43.82 the ounce. Crude bears repeating. WTI up 5%, $82.15 a barrel. And again, repeating the earlier headline, the White House says Todd Blanche has officially been sworn in as the Attorney General of the United States. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Nora and Tim, that is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Well, you may recall Friday afternoon, it was actually during our program, President Trump touted $3 billion in U.S. investments in critical minerals. Mining. This was at a meeting with top industry executives. It was aimed at weaning the U.S. off supply chains dominated by China. The president was joined by executives from prominent companies, including Rio Tinto, BHP, MP Materials, USA Rare Earths, Energy Fuels, the Metals Company, and more. One of the people who was there at that meeting with the president was Gary Evans. He's chairman and CEO of U.S. Antimony. It's got a market cap of about $1 billion. It refines, produces, sells antimony products. Shares are up around 34% so far this year. Gary Evans joins us from our Miami bureau. Gary, good to have you back with us. I just want to hear your main takeaway from that meeting with the president on Friday. What were your main takeaways?
Well, I think more than anything else, we have an administration that very much recognizes the dire need of critical minerals for our country, for our industries in this country, and obviously our military. So the support that this administration has provided to the mining industry has been immense. And the real event on Friday at the State Department was a $100 million grant that the federal government is giving to universities and schools in order to train new engineers and geologists and the technical people that we need in this industry, because we all are getting older. A lot of people are retiring, and this industry has been, in the doldrums for the better part of 30 years. And so having that kind of financial commitment to the schools, and there were a lot of administrators there. For me, the big takeaway was some incredible contacts that we made at this forum. There were a lot of very influential people involved in the critical mineral space, both from a banking, finance area, as well as some of the administrators, like the Secretary of Interior was there, Secretary of State was there, and we were able to have one-on-one meetings with them about issues we might have. And so I think when I came away from that conference, realizing that if I need help, there's people I can call to get help. And that's very, very important, something we've never had.
Take us into specific conversations that you had. Like, who did you speak to from the administration, and what did you tell them that you needed?
Well, I'll be specifically frank. The Secretary of Interior, Doug Burgum, he and his assistant were there, and he stayed after the forum was over and was talking to people. And I went up to him. We have an issue in Alaska specifically related to the BLM, which is under his venue, and the Department of Transportation, which is not, but he has influence on. And it has to do with a new property we bought in Alaska in January. And we're just getting pushback and slowness from local officials, not understanding that antimony that we're trying to bring out of this mine is needed by the federal government. We have a $245 million contract to fulfill the needs of the military, and we've got local people in Alaska holding things up. So I gave him the information. He took it down. He said, I'll be on it Monday, and I have no doubt he will be. So that's the kind of thing that we express to them.
So when you think about these conversations that you're having and you think about the future of antimony, you're pretty optimistic, it sounds like, coming off of that. Anything other than that you would say concrete that you are looking to see advancements on as it relates to relationships between your company and the U.S. federal government?
Well, we won a $27 million grant last year, and then we won the $245 million contract. We've got, though, over $350 million of additional grant requests in to various departments of the federal government to assist us not only in antimony, but in tungsten and some other critical minerals we're involved in. And what I'm kind of hearing through the conversations is that the president really wants to go more from a grant, which is basically a gift to the companies, to more of an equity component. In other words, we'll give you X amount of dollars, but we also want a piece of your company. He talked at this forum about the success he's had with Intel, the success he's had with MP Materials. And so there was a new fellow that I met there, actually from Dallas, that is now kind of key at the White House and looking at these investments. I also heard very loud and clear they want to do bigger deals, 500 million minimum or bigger. And so we're looking at packaging some things. We're looking at, okay, we can step it up and look at bigger. So that's one of the things that we're doing.
So it raises the question, how much of your company would you be willing to sell to the U.S. government?
Well, that all depends on how much money they're willing to give me. So, we're a publicly traded company with $1 billion market cap. So I have to look at it like any other investment. However, if the government will give you certain additional incentives, say price floors or minimum contracts or other things that would assist your business, you can look at maybe not only just equity, but some warrants that are out of the money, other things that gives the government incentives. So we would look at it like any investment banking transaction. But, people, if you'd asked me this 6 months ago, I said, well, no, I'd rather have the grant. Obviously, the grant is non-dilutive equity. But if you having the government as a shareholder, I would prefer not over 20%, would be fine.
And broadening out just a bit, how quickly, when we think about the U.S. Domestically in terms of our critical minerals supply chain, how quickly do you think that we could actually push forward with those strategies, those plans, and is government support enough to make these projects economically viable?
Well, what's made them much more valuable today is the price of all these critical minerals and rare earths has gone up dramatically. Why has that happened? China, over the last 30 years, has gone around the world and tied up all these critical minerals. For antimony, they own 85% of worldwide reserves. For tungsten, it's close to 90% of worldwide reserves. We have sat and let our country stay behind the 8 ball for 30 years while China has done this. So we're playing catch up, no doubt about that. And it's going to take time. We can't do it overnight. But having the regulations removed so that we can move quicker, we've learned a lot from the past with regarding to environmental issues. We are very big environmentalists in our company. When we dig up something, we try to bury it again, within weeks, not years down the road. So we've gotten some kudos from a lot of the regulatory agencies that, hey, you guys are really doing a great job. And so I'm a big conservationist. I love to hunt. I love to fish. I don't want to leave what we do in ill repair. So we've made sure that we are the type of company that people will wish that we had come rather than somebody else. So, that's a very important.
Gary, we got to go. Chairman Gary Evans, always good to check in with you. Appreciate you joining us, even when you're not here in the studio. That's down in Miami. Gary Evans, Chairman and CEO of U.S. Antimony. Coming up next on Bloomberg Business Week Daily, we got stocks on the move. This is Bloomberg.